Yes, everyone. So, hello, hi, namaskaram, my dear warriors. I hope you guys are doing really, really well. Tabish this side, a chartered accountant, all India ranker, international speaker, passionate teacher, and your faculty and mentor for the subject of AFM. This is going to be a very special video for all of you guys. Because guess what? We have decided that the entire chapter of security valuation, which we have recently recorded for our regular batch, we will be making it available absolutely free of cost on YouTube for all of you guys. Wait till the end so that I can tell you guys exactly how it is going to be. Now, this video is going to be part 1 of the security valuation which we have just recently recorded for our CA Final AFM batch. The same is going to be 100% applicable for CMA Final SFM as well. Perfect, everyone. Now, the notes of this, if you want to take a printout of the same, you can go to our Telegram group Think with Tabish. You will be getting the notes. You can take a printout and see the quality of the notes, how crisp, precise those notes are, how amazing our charts are, and take benefit out of the same. Now, what is going to be our objective when we are teaching the subject of AFM? Our objective is to ensure that we learn the entire subject of AFM with absolutely zero formulas. But sir, we heard that AFM is a subject with somewhere around 200, 300 formulas. Trust me, students, we are just going to understand it logically using simple, relatable, funny stories and ensure that you understand the concept. You solve questions without having the need to even by heart a single formula, my dear students. This is going to be our motto. Yes, this is going to be the most logical, most fun oriented, and 100% exam focused batch in India for the subject of CA Final AFM, wherein our goal is to learn the entire subject of AFM with absolutely zero formulas. Trust me on this, and target 80 plus in our CA Final AFM examination, my dear warriors. Now, applicability. Who are these classes applicable for? These classes are applicable for CA Final students who are giving your AFM examination. Wait, the same is also applicable for the CMA Final students who are giving their CMA Final SFM exams as well. So if you go to our website, we'll be having two different classes. First is a CA Final AFM. Second is going to be CMA Final SFM. This chapter is going to be the same for CA Final as well as for CMA Final. So both the students, CA Final as well as CMA Final students, can refer the same. Now, one very important thing for the CMA Final student, yes, we are coming up with a batch for you guys as well, wherein every chapter which is needed for CMA Final will be done as well. Yes, it's not that we have just given you guys the CA Final AFM recordings, wherein the additional chapters which are there for CMA Final we are not going to cover. It's not going to be that way. Whatever additional questions are there for CMA Final SFM, that we'll be doing. Whatever additional chapters are there for CMA Final SFM, that we'll be doing. Whatever topics of CA Final AFM is there which is not relevant for you, that will not be doing, thereby ensuring that your batch is 100% comprehensive for CMA Final SFM as well. Okay, so we've got two separate batches. One is going to be 100% CA Final AFM batch, which is going to be for CA Final students. Nothing extra is there of CMA Final. One is 100% CMA Final SFM batch, which is going to be for CMA Final students. Is this clear, everyone? Perfect. Yes. Now, you guys watch the class, you guys will fall in love with the class. I genuinely hope so. We've put in a lot of efforts and I'm confident that you will definitely love the approach. If in case you decide to purchase the class, sir, what is the procedure further? Simple, boss. You will have to visit our website www.thinkwithtabish.com or contact us at 83102-46880. We'll share you guys the entire procedure regarding purchase of the classes, my dear students. Now, language, what is going to be the language of the class? Yes, the language of the class is going to be in very pure, simple, plain English. So that students from all across India, you may be a student from the south, you could be from, say, Kerala, you may be speaking Malayalam, you could be from Karnataka, Kannada ಮಾತಾಡೋರು ಆಗಿರಬಹುದು, you could be from Tamil, Tamil pesra, you could be from Andhra, Telangana, Telugu, I don't know much in Telugu, I just know a dialogue, अर्थमाइंदा राजा. You could be from anywhere in the north, हिंदी बात करने वाले लोग हो सकते हैं. This is going to be in plain simple English for all of you from across the country, my dear students. So everyone from every nook and corner of the country can watch and enjoy these classes. Yes, everyone. Now, one very important thing, this is going to be part 1 of the video. Approximately will be around 11 and a half hours, because on YouTube we cannot be uploading a video which is bigger than 12 hours. So approximately around 11 and a half hours will be there. Around 60-70% of the chapter will be covering it. But there will be some more portions which are pending as well. Yes, if you want part 2 of this as well to be uploaded for you guys absolutely free of cost, what is it that you have to be doing? Yes, watch the video completely, take benefit of the same, and please put in your valuable comments. If you want part 2 of this, please do put in your comments that, sir, we need part 2 of security valuation as well. You guys ask, and we will be uploading part 2 for you guys as well. Okay, so if you have loved the video, and I genuinely hope and I'm confident that you will definitely love the video, yes, if you want part of the video, please put in your comments. Point number 1. Point number 2 is going to be, please do share this to all your CA CMA friends. It would really mean a lot to us. And very importantly, if this video has added value to you, the way we explain in a very simple way using simple relatable stories has made you fall in love with learning, has made the subject very simple from, yes, the superficial level from which you had learnt, you used to feel it is very difficult. From there it has become very simple for you guys. What is it that I want humbly from you guys is, please drop in your valuable comments. It would really mean a lot. There is a specific reason why I'm asking you guys to put in your comment. Now say for example a new student comes to watch the video. It's a 10-12 hour video. Will he be watching the entire video? No. What is the first thing he will be doing? He or she will be doing. Even you see a video. What is the first thing you'll be doing? You will see the comments. If there are positive comments, good comments, then they'll decide, okay boss, this class will be good, we'll see that. Or else they'll directly skip to the next video. So yes, to ensure that if in case the video has added value to you, only if in case the video has added value to you, and I'm sure 100% the video will add value to you guys, yes, please do put in your valuable comments. And if you want me to upload videos of other chapters as well, any other difficult concepts as well, please do put in your comments for that as well. And we are having comprehensive, beautiful revisions for the subject of CA Final AFM, CMA Final SFM, CMA Final SCM also. So you guys know where to check it out. Yes, on our YouTube channel, Think with Tabish. So that's all. From here onwards, we are going to start with the regular batch for the chapter Security Valuation. The goal is to ensure that we learn the entire subject of AFM in a very simple, logical, fun-oriented, exam-oriented way, and solve maximum questions, do maximum revisions without having the need to by heart even a single formula. So all the very best for the classes, my dear warriors. Yes, everyone. So now let us start with the first chapter, which is going to be Security Valuation. Now, I am going to start the sessions on the assumption that you guys have no idea in FM. CA Inter FM, you have not studied at all. Yes, you would have studied, but let us try relearning it the right way. Okay. Now, so in your book, there will be something called as Chapter 0, Basics of AFM. Now, that is a chapter wherein everything which is required, which is not there in the syllabus, but which is required to do whatever is required in the syllabus, we would have compiled and put it there. Okay. Now, that I am not going to do it as a single standalone chapter at the start, because as and when things are needed, we'll keep on connecting to it, we'll keep on pulling things from that. So I'll first start with the first chapter. After around 1 hour, I would reach a point wherein from now, okay, discounting, present value, time value of money is needed. That time, okay, I'll go back to there. I'll teach the entire time value of money. Then I'll come here and continue. That way we'll keep on. So chapter 0 is a chapter which will keep going on to, referring on to as and when we need. Is this clear, everyone? So first we'll start with the chapter which is going to be Security Valuation. Now Security Valuation, the entire chapter, we have bifurcated into 2 parts. First is Equity Valuation. Next is Bond Valuation. Okay, there was a small glitch. Okay. Yes, Security Valuation, we have split it into 2 parts. Equity Valuation, Bond Valuation. So we'll learn it as 2 separate chapters. Chapter 1A, Equity Valuation. Chapter 1B, Bond Valuation. Okay. So now let us try opening the presentation and try understanding a couple of things. Okay. Security Valuation. Yes, I've told you Security Valuation. Yes, we are going to learn it in 2 phases. First phase is going to be Equity Valuation. Next phase is going to be Bond Valuation. Okay. Now, every word has a story. Every name has a story. So let us start with the story first. Security Valuation. Okay. 2 words we are having. First is security. Next is valuation. Security, you would have learnt in law. Okay. Companies Act, read with, I guess, SICRA, SCRA. Yes, it is defining what is securities. For us, simple. Security means share is there, debenture is there, bond is there, convertible shares are also there, preference is also there. Everything is there. Security. Okay, enough. Yes, what all is financial instruments, what is not financial instruments, how to recognize, that you will learn in FR. Yes, what is a security, that you will learn there. Here, yes, whose story we are going to understand? Valuation. Most beautiful term that we are going to understand. What is valuation? This one word is going to be the crux of finance, my dear students. Valuation, value. Now, what is value? A small crux, let us try quickly understanding, then properly through a story we'll try understanding it properly. Okay, value of an asset. It is the present value of future cash flows, discounted at required rate. This you would have heard at least. Okay, at Inter FM, value of an asset is the present value of future cash flow, discounted at required rate. Equity means cost of equity, debt means cost of debt, overall means WACC. Yes, and all those things you would have done. Okay, now what is this trying to tell? Every word has a story to tell. Let us try understanding it with the help of a simple, beautiful story. Okay, perfect. Now, imagine. So now we are trying to start with the story. So the first character we are going to bring up is going to be, this is going to be the story of our first hero, Koti Reddy. Okay, now artists will be having a stage name. For you, Koti Reddy is fine, or you want a stage name here? Koti is fine. Okay, now imagine. Koti Reddy cleared his CA final exam. He became a chartered accountant. Maja is coming. Happy or sad? Very happy. Yes, in the office, everyone is there. Koti. Yes or no? At home, everyone is very happy. And imagine that on the same day, yes, Koti had a crush on a girl from a really long time. Yes, that girl also starts messaging Koti the same day. Sir, two lottery, one day only, sir. You don't know Koti Reddy's story. The day Koti Reddy cleared his CA Inter, he got a wedding proposal. What you guys boys are doing? Learn from Koti Reddy. CA Inter, he cleared, he got a wedding proposal. Okay, Koti Reddy is a different book altogether. Someday, if you have time, we'll tell you. Okay, so Koti Reddy had a crush on a girl. Should we name the girl? No, not needed, right? I know, not one. Okay, Koti Reddy's heart is very big. So there's space for so many people. Okay, so Koti Reddy had a crush on a girl. So that day, okay, yes, he was waiting. He was sending messages. It was only single tick till then. Yes, he is sending a happy birthday, good morning, good afternoon, good evening, all those things. He was not getting response. But the day he cleared CA, yes, he is getting messages from the other end. Okay, yes, hi. Okay, Koti Reddy is telling hello. Congratulations for clearing CA. Koti Reddy is telling, oh, thank you. She's only taking initiative. See, okay. So she's asking, "Party le Pushpa." Yes, in different languages. In Telugu, what it is? Party le da Pushpa. Party le da Pushpa. Yes, in Tamil, party le Pushpa. Whatever it is. Is there no party? Okay. Is like, Koti Reddy's heart is always open. Yes or no? Koti Reddy is telling, okay, fine. Tell me where you want to go. Okay. Yes. Girls being girls. She told. Okay, let's go to Starbucks. Okay, Koti Reddy has never been to Starbucks. You've been to Starbucks? No, Koti Reddy has never been to Starbucks. But Koti Reddy is a confident person. He tackles situations confidently. He told, okay, Starbucks only. Tomorrow I will go. No problem. Okay, Starbucks. Too much bucks. Okay, so the next day, Koti Reddy goes there. Okay, yes, there's a person standing. Okay, good morning, sir. What shall we get you? What is it? What shall I get you to get started today? Even I cannot read it. Okay, too complicated, high level, professional English. Okay, Koti Reddy is not understanding a word. He took out the menu card. He's reading. Americano, latte, what on earth it is. Then what all other things are? Cappuccino. Should I get you a cappuccino with sugar, without sugar? Almond milk, rose milk. Is there rose milk? No, there is no rose milk. Normal milk, white milk. Okay. Koti Reddy is not understanding a single word. But confidence. Okay. Koti Reddy asks, baby, what do you want? Okay, strategy. Okay, she tells, I'll take one cappuccino and one double chocolate chip cookie. Koti Reddy is smart. Please make it two for the lovely couple here. Okay, so fine. Yes, he sits. He has a good cup of coffee and chocolate chip, whatever it is. Good time, 1-2 hours they spent. Don't ask me what they were doing for 1-2 hours. I don't know. Okay, but they spent a good amount of time, 1 or 2 hours. Okay, now in Koti Reddy's mind, yes, you go to a restaurant. before you pay the bill, in your mind a bill comes. Ah, this much would be, right? Yes, if you are a middle class, if you are so rich that it doesn't matter at all, then it will never come. But for most of the people, you will have 1,000 rupees it could be, 500 it could be, or 2,000 it could be. Your mind will tell this much it should be, this much it would be, that much I had, that much would come. So quoted is thinking, a nice place, AC is also there, chair is also good chair. 2 hours we spent. Okay, coffee was bad, but still she likes it. What we can do? So quoted is thinking, okay, 500 rupees, I think I can pay for this. Is what he is thinking. Okay, till here things are crystal clear, absolutely no issues. So tell me, students, in Koti's mind, how much money he would be willing to pay? How much money this coffee would be worth? 500 rupees. Yes, for yes 2 cups of coffee and whatever that bread or whatever it is, chocolate chip cookie or whatever it is. Okay, fine. So Koti Reddy goes to the billing counter. How much it is? So he's thinking, okay, 500 it could be fine. Now he goes. He has never been to Starbucks. He doesn't know how much he has to pay in Starbucks. Okay, he asks how much it is. Yes, sir, your bill, sir, it is 2,250 only. He's telling this only. Only. But confidence. So the other place he would have cried, I am just the article. Chiller, I'm getting. But girlfriend, now he has become CEO also in the story. Okay, so can you live? Oh, no. So he makes the payment. So tell me, there is a difference between value and price. Price means how much money I am actually paying. Tell me, in this story, how much money Koti has actually paid? 2,250. Actually, from my pocket, how much I am paying? Value is how much money I should be paying. In his mind, he thought how much I should be paying. 500 rupees worth it was. Yes or no? Why he told 500 rupees worth it is? Because he thinks, okay, 500 rupees benefit I've got. I've got a basic coffee, a space, AC was there. So I think in my mind, for my level, 500 rupees benefit I have got. Yes or no, everyone? Perfect. So value means how much money I should be paying. Price means how much money I am actually paying. Now let's flip it. Here, whether Koti Reddy is happy or sad. Happy or sad? Sad. Why? Koti Reddy is telling, sir, money gone is gone, but the girl is coming, no, sir. We are spending 2 hours, no, sir. Not emotional decision, financial decision. Money. Money wise. Okay? Happy or sad? Ha. Sad. Yes, Koti Reddy is telling, sir, I believe in equality. I'll ask her only to pay. You cleared. You are supposed to pay. Okay, fine. Now, tell me, on a financial level, purely on a financial level, you thought that 500 you should be paying. In reality, 2,250 you paid. Happy or sad? Happy or sad? Sad. Okay, fine. Now let us try flipping the story. Now, after a few days, Koti Reddy has so many friends. Assume boys. Okay, so those boys also tell, okay, yes, we'll have to go out somewhere. Okay, here girls are also there in the picture. Okay, fine. Okay, so they went to a proper local restaurant, a dhaba kind of a restaurant, where they had good food. Everything they wanted, they ordered. Properly they had. They laughed, they shouted. Everyone, yes, around was just seeing them only. What on earth is happening to these people? Okay, properly they had food. So much time they spent, so much conversation they had. Everyone is happy. Tummy is full. Food is great. Everyone is extremely happy. You are supposed to pay the bill. At the end, your mind will give you a small signal. Good food it was. I think so much food we had. Somewhere around 3,000 I might pay. 3,000 could be the bill. Your mind would give you a signal, yes or no. So you're saying, okay, 3,000 could be there. In reality, you go to the billing counter. You ask them how much is the bill. Say, for example, they tell that, okay, the bill is 2,000 only. You would have also experienced that moment. Oh, so much we had. That also we had. This also we had. Sweet also we had. Dessert also we had. In the end, juice also we had. Salad also we had. Yes, this much only. Maja, crazy. This place only we should come. Would have happened at least once with you guys? Yes or no, everyone? Perfect. So tell me. Yes, in reality, how much amount he paid? Actually, how much money went from his pocket? 2,000 only. That is the price. How much money I am actually paying. But what is the value in his mind? Yes, what his mind told, how much money I should be paying? Around 3000. Why? Because in his mind that much benefit he got, that much food he had, conversation he had, so in his mind that much benefit he got, that is why he's telling okay 3000. If he did not get any food at all, will he tell 3000 I'll pay? No. Why his mind is telling okay 3000 I will, because that much benefit he has received. Is this clear, everyone? So look at the moral of the story. Moral of the story, very important. Value versus price. Yes, value is how much benefit that I am getting, that is technically how much money I should be paying. Yes, versus price is how much money I am actually paying. Is this clear, everyone? This is the moral of the story. Any doubts till now? Perfect. Say for example you go to Myntra or you get an ad. Okay, just you're scrolling through, you get an ad of Myntra of a shirt. You see, you like the shirt. Okay, so in your mind you think, nice shirt, it would look good on me. 1000 rupees it might be, is what you think. In reality you go there, assume 4000 rupees it is. So in this example, tell me what is the value, what is the value, what your mind is thinking, how much I should be paying? 1000, that is the value. How much I'm actually paying? 4000, that is the price. Okay, yes, this entire subject we are going to look at the value. Entire subject of finance is looking at the value, not the price. Price in reality, in the actual market you will see it. Is this clear, everyone? Yes, and there's a very beautiful quote of Warren Buffett also. It's not just some random cooked up story that I'm telling to you guys. How much I should be paying, how much I'm paying, okay, tea is there, coffee is there, Starbucks. What Warren Buffett is telling regarding value and price. See this. Price is what you pay, what you're actually paying, that is the price. Value is what you get, how much benefit you're getting, that is how much I should be paying. That is going to be the value of an asset. Yes, the biggest investor, Warren Buffett. Okay, who started investing at the age of 10, right now valued at 90-100 billion dollars. Okay, famous quote. What is value? What is price? Price is how much I am actually paying. Value is how much I should be paying. How much I should be paying is dependent on the how much benefits I am getting. Is this clear, everyone? Any doubts till now? Yes, everyone. So let us continue our discussion. So first let us try understanding what all lessons we have learned from this particular story. Every story has a lesson to teach. In school we were learning, yes, crow was thirsty, it waited for water, it did not get water, it picked stones. Okay, water came up, it drank. Moral of the story is hard work is good in life. Every story teaches you a story. Sorry, every story teaches you a lesson, a moral. So what is it that we have learned from this? Yes, point number 1 is value versus price. Yes or no, everyone? Yes, value, it is telling how much benefit that I am getting, or technically how much I should be paying. If I am getting 500 rupees benefit, that means I should be paying 500. I am willing to pay 500. Yes or no, everyone? So value, what is it telling? Yes, how much benefit I am getting or how much I should be paying. Versus price, what is price? Price is how much money I am actually paying. Yes or no, everyone? Perfect. Point number 1. Point number 2. Any time you are doing an investment decision, you want to purchase asset, we should always purchase the assets where the value is more than the price. Yes or no, everyone? First example, he went to Starbucks. The value in his mind, the value, the benefit he got was just 500, but he had to pay 2250. Is he happy or sad? Sad. Don't tell girl was there na. Financial decision you are taking. Control your lust inside, boys. Financial decisions only we are talking about. Okay. Second situation, the value in his mind, okay, great conversation, great food. The value, the benefit he got was 3000 rupees. So how he got in his mind? That we'll discuss. Okay. But in his mind, he got 3000 rupees benefit. In reality, how much he paid? 2000 only. Happy or sad? Happy. Value should always be more than the price. Yes or no, everyone? So look at the 3 situations. In the first situation, the value in his mind, he's getting a benefit of 1000, but the actual price that he's paid is 800 only. Happy or sad? Happy or sad? Happy. Yes, that means should we accept the decision or reject the decision? Accept the decision. Yes or no, everyone? Just a minute. Okay. Happy. Happy. That means you should accept. Yes or no, everyone? Second situation, the value that you're getting, the benefit is only 1000, but they're asking 1500. Say for example, there is a shirt. You think, okay, 1000 rupees I can pay. But in reality, you see the price. It is 1,500 rupees. Will you purchase that shirt? No. Happy or sad? Sad. Yes or no? Sad. God, I am dying now. She is happy how? Okay, sad. Yes or no? Sorry, I have written sad only. Reject. Every time you sing a breakup song, you lose your senses. So important. Focus on career. Okay. Yes or no, everyone? Third situation. In your mind, you've got a benefit of 1,000. You are paying also 1,000. Tell me, are you extra happy? Oh, crazy deal I got. Will you tell? No. Are you sad? Hey, how much I paid? You're indifferent. Did you get the benefit that you're paying for? Yes. Did you get extra? No. Yes. It is my break-even situation. Yes or no? I am neither happy nor sad. Yes or no, everyone? This is going to be indifferent situation. Can you still be going ahead with that? Yes. You can still be accepting. Or you can be rejecting also. Does not make a difference. Technically, you can accept. Because in your mind, okay, 1,000 rupees benefit I'm getting. He's asking 1,000 only. Will you pay? Yes, you'll pay. As simple as that. Is this clear, everyone? Two principles we've learned till now. Yes. Now it is time to take the discussion further. Okay. So now let us continue the discussion further. For today, our hero is going to be Koti Reddy only. Now, Koti Reddy cleared his CA exams. Okay, all those things happened. After that, okay, he started working. Okay, yes, he went abroad also. Yes, to Uganda he went. He worked there for some time. There's a reference behind Uganda also. Someday we'll tell. He made so much money. He came back to India. Yes, he went to Bangalore one more time. Okay. Yes. There he's sitting one day happily, and he thought, yes, face-to-face students are smiling. Why they are smiling, you don't know. There's a story. I told you. Yes or no? Koti Reddy is a separate encyclopedia for you to learn. Okay. Once AFM batch gets over, we'll give you. Okay, girls, don't take the contact number. Yes. Okay, fine. So he is having so much money. Now he literally wants to purchase assets. What all assets are available? First, yes, assume a Reliance share is available, which is actually trading in the market at 2,000 rupees. Sir, it is not at 2,000 now. Assume. Okay. Tell me whether price, I can just see and understand what is the price. Yes, boss, price is available in the market. Yes or no, everyone? Perfect. Suppose there is a government of India bond. Yes, it is trading in the market at 10,000 rupees. Available, price is available. Yes, boss, price is available. Or Koti Reddy has one more option. Either he can purchase Reliance shares, or he can purchase a bond, or he can purchase a building and give it for rent. Yes, he asked the person how much is a building worth. He told 1 crore rupees you pay, I'll give you the building. So option number 3 is he can purchase a building. How much he will have to pay for that? 1 crore he'll have to pay for that. Okay. Or else he thought we don't want any of these things. Yes, we want some maja in life, some variety in life, so much time. Okay, being a CA, yes, due date, deadline we have done. We want to now start a business. Crazy business. Business that helps people, that gives happiness to people. So Koti Reddy decided, yes, I'm going to start a business wherein I'm selling drugs. Huh? No, drugs means tablets, pharmaceuticals. What you're thinking? You went directly to ganja, wa? Ganja, come back. He went to heroin. Okay? Yes. Some secret business he is going to start. Yes, every person who is depressed, who is sad, he is going to contact Koti. Okay? Yes. So, yes, to start the business, he is telling, okay, 1 crore rupees total investment is needed. Okay, fine. Yes, just randomly by looking at the price, will you start investing in assets? Looking at the price, directly you start, this also I'll buy, this also I'll buy, this also I'll buy. Will you do? No. What is the first thing? Simple, the entire subject. First, understand the value. Once you've understood the value, compare value with price, take a decision. As simple as that. Is this clear? So any investment decision, any asset in the world you want to purchase, price, is it a difficult thing to check the price? No, it is trading in the market. What we have to do, we'll have to understand the value, how much I should be paying. Then you compare with the price, accordingly take a decision. Is this clear? So whether he will randomly tell, okay, this also I will buy, this also I will buy, this also I will buy, this also I will buy. No. First what we'll have to do, we'll have to check the value of every asset. Is this clear, everyone? So shall we start understanding value of each of the assets one by one? Slowly we'll keep doing. Okay, first let us try understanding the value. Now first, Reliance shares he purchased. Tell me, students, what is value? What is value? Value is the benefit that I am getting. Yes or no, everyone? Perfect. Tell me, imagine you purchased a share. what all benefit you are getting. You purchase, suppose today you purchase the share, you made the payment. What all money you will be getting by purchasing a share? First cash flow that you are going to get from a share is going to be dividend. Yes or no, everyone? Perfect. Second cash flow, after 3 years you felt, I don't want this share. What you will do? You will sell the share. So what you will be getting? Sale price you will be getting. Yes or no, everyone? Perfect. Simple situation. Imagine Koti Reddy is thinking, okay, this share, if I Reliance share, if I purchase today, for 3 years I'll hold. After that, he'll change. Koti Reddy is like that. Every 3 years he'll keep changing shares. Don't think anything else. Okay. So Koti Reddy is standing here. This is Koti Reddy. Koti Reddy always stands for photos like this. Okay, how to do this I don't know. Okay, this, how to do this, something, whatever. This is this. Okay, this looks good only on girls and Koti Reddy. Boys, don't try. We don't even know how this comes. Okay, whatever it is. Okay, so he's standing here, he's thinking, okay, if I purchase Reliance share today, what all I will get? What all I will get? What all I will get? Anywhere in life, you should first see what all you will get. What all you are getting. Don't think anything else. When you are purchasing securities, when you are investing in assets, Koti Reddy, in nothing else. So he is telling, okay, today if I purchase Reliance share, what all I will get? Dividend I will get. He's saying 3 years only I will hold. For 3 years dividend he'll get. Imagine he's telling first year he will get a dividend of, say for example, 10 rupees. Second year he will get a dividend of, say for example, 12 rupees. Third year he will get a dividend of, say for example, 15 rupees. Okay, fine. Now end of the third year, he's telling 3 years only I want. Third year dividend he got. What he is planning to do at the end of third year? He will sell. So that means what he will be getting? Sale price also he'll be getting. Yes or no, everyone? Assume selling price at the end of 3 years is going to be, say for example, randomly imagine 2,500. Perfect, everyone. That means tell me what is the value of the share? How much benefit Koti Reddy got from the share? Tell me value. It is the benefit. Tell me what all benefit Koti Reddy is getting. He is getting dividend also, sale price also. Tell me across 3 years how much benefit he is getting, how much benefit he is getting, how much benefit he is getting. 3 years dividend 10, 12, 15. So what is going to be the total dividend he received? 10, 22, 37. Koti Reddy, how much da? 37. Sale price is going to be 2,500. So the total benefit that he is getting from the share is going to be 2,537. Perfect, everyone? Yes or no? Yes or no? Yes or no? No. Why? Because money you are paying today, but money you are getting future, future, future. Suppose I tell you, bro, give me 100 rupees or give me 1 lakh rupees, bro. I'll give it to you. I'll give it to you. When? After 50 years. Today in 1 lakh, okay, today also in 1 lakh you cannot buy an iPhone. Okay, imagine 2 lakh rupees. Today, yes, you give me 2 lakh rupees. I can buy an iPhone. After 50 years in 2 lakh, what do you think will happen? Nothing will happen. Yes, when I was small, okay, 10 rupees we used to purchase 10 eggs. Okay. Now for 1 egg only, I guess it is 9, 10 rupees. Doesn't mean that I'm very old. I've just turned 27 1 month back. Okay, so long as I turn 30, I can confidently tell my age, no problem. Once I turn 30, after it is going to be difficult. Okay, perfect, everyone. So tell me, yes, value of an asset is how much benefit I'm getting. Yes, if I purchase a share, dividend I'm getting, sale price I'm getting. But boss, dividend and sale price I'm getting at different periods now. When I'm putting my money, today I'm putting my money. Yes, golden rule throughout, data has to be uniform. If you have to compare cash flows, means they have to be in the same period. Yes, that means where I am taking decision, today I am taking decision. That means from which day's perspective I should understand the value. Today's perspective, because today I am taking a decision. That means I will bring all the cash flows to the present value. Yes or no, everyone? Perfect. So value of an asset, look at this, value of an asset. Yes, it is the benefit that I am getting from an asset. Yes or no, everyone? Yes, benefit I am getting. Yes, it is the cash flows that I am getting from the project. Yes, cash flows I will be getting in future. Today you purchase an asset, you will be getting in future Yes, but boss, can you add all the cash flows directly? No, boss, you cannot add directly. Why? Because they're in different periods. So I will discount it at the required rate. How much return he wants, at that rate he will be discounting. Say for example, quoted details, he wants 10% return, so we will discount every cash flow at 10%. Sir, how to do discounting? You might be knowing this much basics, but still don't worry, I am there da. Chill. Okay, till here is this fine? Perfect. So that means, look at this. Yes, based on this, what we have learned, I can just add a page. Yes, look at this. Tell me, value of an asset. Firstly, I have told what is value. What is value, students? Value means it is the benefit that I am getting. Yes or no, everyone? Perfect. So value of an asset. You purchase an asset. Yes, you make payment today. What benefit you will be getting? You will be getting cash flows from the asset in future. Yes or no, everyone? But it is in future. I am taking a decision today. So you will take a present value. So it is a present value of future cash flows. In future, what all you are getting from that, you will discount it at the required rate. Yes, whenever I'm scribbling, there is no need. I will have proper notes in that. Anyways, in structured way, it is there. Now tell me. In that case, value of a share. Tell me, students, you purchase a share. Today you purchase a share. In future, what all you will get by purchasing a share? Two cash flows you are getting from a share. What all? Dividend you will get till the time you hold. At the end of the period, sale price you will get. So it is a present value of dividend plus selling price. Yes or no, everyone? Discounted at the required rate. Now tell me, yes, who is purchasing the share? Yes, investor, or yes, equity holder is purchasing the share. So the required rate of return for an equity holder is called as KE, cost of equity. What is it? Simple. The cost for the equity holder, or the return that the equity holder is expecting. As simple as that. Yes or no? Yes, here the required rate is going to be KE. Is this clear, everyone? Perfect. Till here everything is clear. Mansilayo? Arthamainda Raja? Purunjadcha? Malum hua Hindi mein? Gottaita maga? Okay, fine. Now shall we take our discussion further? Okay. Koti is telling, no boss, I don't want to risk. I will purchase Government of India bond. Okay, fine. He decided, okay, there is a 10% Government of India bond, which is having a face value of 10,000 and maturity of 3 years. He's telling, let me try purchasing the bond and see what all I will get. Okay, fine. Yes. First thing we'll have to do throughout is draw a line. And Koti, your straight or not doesn't matter. Line should always be straight. Okay. So, first rule of life. Okay. Your straight or not, personal preference. Line should. Okay, people watching the video also, line should be straight. Okay. Now tell me, today you purchase a Government of India bond. Yes, tell me, you purchase a Government of India bond. Yes, what will bond pay us? It will pay us two cash flows. First is going to be interest I will get. Second, with that, once the life gets over, you will be getting the redemption value, or if you sell in between, you will be getting the sale price, whatever it is. Redemption value. Yes or no, everyone? Yes. Imagine 3 years Government of India bond is there. That is, it is having a 3 years life. Face value is 10,000. Tell me, how much is a coupon rate interest? 10%. So today if you purchase, every year how much interest you will be getting? 10,000 into 10%. 1,000 you will keep getting. Yes or no? Yes. I1. Sir, what is this annotation? I is interest. 1 is first year. Simple. D1. So what? D1, D2. D is dividend for first year. As simple as that. Yes or no, everyone? Fine. So yes, this is going to be 1,000 you will get. Second year again you will get interest. How much it is? Again 1,000 interest you will get. Third year again you will get interest. How much you will be getting? 1,000. Yes, 3 years the bond life will be over. So yes, the government will return your payment. Yes or no, everyone? Yes. What is the face value of the bond? 10,000. So I'm assuming that they are returning 10,000 only. Sometimes it could be premium discount also, but here we are taking a normal case. Assume redemption value is going to be 10,000. Assume you are not taking redemption value. Say for example, quoted is telling, no sir, I will keep for 2 years only. At the end of 2 years I will sell. Say for example at 8,000, random numbers I'm taking. In that case, what is the benefit? This he will get, this he will get, this he will get. Bring it to present value. As simple as that. Yes or no? In this case, yes. Value. Yes, tell me students, what is the total benefit you are getting? Yes, you are getting a benefit of 1000, 1000, 1000 and 10,000. So total benefit you are getting is 1000 plus 1000, 2000 plus 1000, 3000 plus 10,000, 13,000. So value is 13,000. Perfect, everyone. Yes or no? Yes or no? Yes or no? No. Mm-mm-mm. Because sir, these cash flow I am getting in future. Money I am putting today. That means I want the present value of these cash flows. Is this clear, everyone? Perfect. So what I will tell, yes, it is going to be present value of, yes, in case of bond, what all I'll be getting. Look at this, everyone. Yes, in case of, where is the pen? Yes, value of a bond. Present value of future cash flows. You purchase a bond, what all you will get? Sir, interest I will get. Okay. With that, at the end of the life, you will be getting redemption price, or if you sell in between, you will be getting sale price, whatever it is. Yes, which is discounted at required rate. Yes, tell me, in case of debt holder, their cost, yes, the income that they're expecting is denoted as KD. Yes or no, everyone? It is called KD. Is this clear, everyone? Perfect. Yes, or let us go ahead to the third situation. Yes, imagine. Koti Reddy decided, okay boss, I don't want any of these things. Reddy people, we are rich, we will buy full assets. Black full cash you are having. He told building will buy for 1 crore. Okay, one building was available at 1 crore. He thought, okay, we'll buy. Yes, just because he told 1 crore, you will pay 1 crore and buy, yeah? First, you'll have to understand the value, the benefit that you're going to get from an asset. Yes or no, everyone? Perfect. Say, for example, Koti Reddy is again telling, yes, building I'm buying. We are asking how much years you're planning to hold. He's saying 5 years maximum. Beyond 5 years, nothing I hold. Okay. Investments, building. What you're taking, Koti Reddy? You guys don't know, na? Koti Reddy got a wedding proposal just after clearing inter. Koti Reddy is aura. Okay. So yes, for 1 crore he purchased building today. Yes, today you make a payment. Okay. What all benefit you are getting? Tell me, you purchase a building. What benefit you will be getting? Sir, I will give it to rent. That means I will be getting rental income. Yes or no, everyone? Imagine, yes, the rental income is 5 lakh, 5 lakh, 5 lakh. Fourth year 5.5 lakh, fifth year 6 lakh. Okay. At the end of fifth year, what he is telling? Sir, at the end of fifth year I will sell. When you are selling, will you be collecting price for selling the asset also? Yes, boss. You will collect sale proceeds, sale price, whatever you tell. Yes or no, everyone? Perfect. So tell me, across 5 years, what all cash flows you are getting? Rent you are getting for 5 years, and sale price you are getting. So what is the value? What is the total benefit you are getting? 5 plus 5, 10 plus 5, 15, 20.5, 26.5. Yes, is it 146.5? That is 1.46 crore. Yes or no? Yes or no? What is that? Future cash flow. When I'm taking a decision today, uniformity of data, yes or no, I will bring all the cash flows to the present value terms. Yes or no, everyone? Perfect. So in case of building, tell me what all cash flows I'm getting. Suppose I'm telling I want to calculate the value of a building. It is a present value of future cash flows. In future, what all I am getting? Rental income I will be getting. Yes, plus sale price I will get. Yes or no? Discounted at required rate of return. Now generally, when you are investing in a building, majorly will be going for a mix of two. Yes or no? Some amount our own money will be putting equity, some money from debt also will be taking. So yes, ideally we'll be calling it as KO, weighted average cost of capital. Don't worry, we'll come later also, but I'm just brushing up the things. Sorry, should it be weighted WACC cost, overall cost only? No. Imagine you put 100% your money, then in that case it is cost of equity. How much you want? Yes or no? 100% you took from debt and you KD. As simple as that. Yes or no? We only have principles, no set of rules. This only should be there. Principles. Yes or no, everyone? Perfect. Now imagine. Yes, final situation will go for, yes, he is planning to start a secret business. What business he is going to start? Drugs, ganja, tablets. Okay, yes, every person who is having a difficulty, don't worry, Koti Reddy is there to help you guys. Okay, but yes, now good cash flow it will give, but that much only risk is also there. So no, police can come tomorrow, take him. Okay, if Shah Rukh Khan's son could be in police station means Koti Reddy, you can also be if you do business. So illegal business don't do. We are Jumma talking. Okay, yes. Now imagine. He is telling, okay, for 3 years I will do. Okay, value of a business. What all you will be doing? Okay, boss, I will do the business. I will sell goods. Say for example, yes, he is selling next year. Okay, I will sell drugs worth 1 crore rupees. Does it mean that full 1 crore is the benefit that he is getting? No. In that he'll be paying cost also. He'll incur other expenses also. What I want, all decision, ultimately, yes, income, balance sheet, everything is fake. Everything is in the air. In the real, what is there? Only cash is there. 100 rupees there in the pocket means 100 rupees there. 10,000 could be showing in, yes, in your yes valuation or whatever it is. You can tell, yes or no, your income statement, P&L could show that you're having, say for example, 10,000 crore profit. But if in your pocket you're having 10,000, what is real? Only that cash that you're getting ultimately is real. Yes or no, everyone? So throughout, I am going to consider only cash. How much cash I am putting, how much cash I am getting. I am putting my cash today. I am getting the cash in future. Let me bring it to present. As simple as that. Yes or no, everyone? More on this, there's a separate chapter altogether, business valuation. So we will discuss in detail free cash flow to firm, free cash flow to equity, everything in the world will come. But throughout, principle remains same. Trust me, 4 or 5 chapters will learn valuation. Security valuation, equity valuation, bond valuation. Yes, business valuation, derivatives again valuation will come, forex again valuation will come. Mergers it is not there. Mutual funds again a small net asset value is there. Okay, advanced capital budgeting again you are using discounting. Literally 70-80% you're just going to keep doing this. Is this clear, everyone? Okay, so he is telling, okay boss, what all cash flows he is getting by doing the business, he'll be getting cash flows. It is called FCFF, free cash flow to firm. Don't worry, we'll discuss in detail. In simple term, net how much cash I'm getting. Yes or no? Every year he is getting the cash, but that he is getting in future. What he wants to calculate the value today. That means what he'll be doing, present value of future cash flows discounted at required rate. Is this clear, everyone? Give me a confirmation. So look at the thing. In finance, value of any asset in the world, what is going to be the value, students? It is the present value of future cash flows discounted at required rate. Yes or no? Any doubts till now, my dear students? Now let us go to our concept book. Okay, giving you guys a minute just to let this sink in, then we'll take the discussion further. See all the points covered in the note. Then we have some beautiful interesting cases where we think, oh, how they are paying this much. Everything is just an understanding of one word, value. Okay, so just let me take a sip of water. You guys also let the thing sink in. So every time I'll give you guys a small minute. In the recording I would have paused it. You will not be having any breaks, but pause the video for a moment. Just sit, let it sink in. Drink water. If you want to take a small walk, okay, don't take phones. Come back, sit. Yes, everyone. So let us now continue our discussion further. We've understood everything. Yes or no, everyone? Just to sum it up for you guys, 3 pointers. Point number 1, value versus price. Value is how much benefit I am getting or how much I should be paying. If I get 1,000 rupee benefit means 1,000 I should be paying. Price is how much I am actually paying. Point number 2, decision making framework. Always purchase assets where the value is more than price, benefit is more than the price you are paying. Point number 3, value of any asset in the world. You purchase an asset, when you will be getting the benefit in future. Yes, in future you'll keep on getting cash flows, but they are in future. Yes or no? I am taking a decision today. Price is for today. So for comparison, I should bring it all to today. So value of any asset in the world, it is the present value of future cash flows discounted at the required rate. How much return you want. Based on that, you are having your value. If you are an equity holder, that rate. If you are a debt holder, that overall WCC. Yes or no, everyone? Perfect. So let us try seeing security valuation, equity valuation, bond valuation. First, value of an asset. Yes or no? Yes, meaning value of an asset. It is the present value of future cash flows discounted at required rate. Trust me, the most crisp, precise, beautiful notes you're going to get. Okay, everyone. So you guys can highlight whatever is needed. Anyways, it is highlighted also. That thing also we have done for you. Okay, yes, other names. What all other names are there? Value. Yes, it is called value of an asset. It is called fair price. Fair. Correct. What is the correct price? How much I should be paying? Correct price. Fair value or fair price. It is also called as intrinsic value. Intrinsic value. How much benefit I'm deriving. Yes, intrinsically, if I purchase this, how much I'm getting from that. Intrinsic value. Yes or no? It is also called as theoretical market price. Ideally, how much should be the market price? In reality, I'll go to market and see. Yes or no, everyone? Pen. Yes. Theoretically, ideally, I think 10 rupees I should be paying. Value. In reality, I go to market, I understood it is 20 rupees. Yes or no, everyone? Different names, institute can use any of these things. Majorly, we'll be having value of an asset. Some places will have intrinsic value. Some places, this will not be there for us. Fair value sometimes will be there. Yes or no, everyone? One person only, different names. Yes or no? You call Koti Reddy. Yes, you call him, whatever it is, it's all the same only. Yes, you call him a flirt. Yes. Yes or no, everyone? Okay, fine. Now, yes, we'll take a moment. Okay, everything that's happening here before itself, we entered into an agreement that I will troll them. Yes, they have absolutely no problem. No problem, na, Koti Reddy? You have a problem? Go back home then. You have a problem? No problem. Okay, fine. Okay, now, value versus price. Okay, just see, everywhere we'll be putting something called as unit 0. Every chapter will put unit 0. Whatever is there here, now it will not come for exam. Sir, in exam will it come? What is value of an asset? If I write it is a present value of future cash flow, will I get 2 marks? It will not come. But for you to understand all the concepts, this background framework basis is going to be required. Is this clear, everyone? Value versus price. Again, this is not going to be there anywhere in your book. This will not come in the exam also. But for us to get a right perspective, yes, we have put it. Yes, value is yes, how much money I should be paying. Yes or no, everyone? It is dependent on how much benefit I am getting from an asset. Price is how much money I am actually paying. Yes or no, everyone? Perfect. Tell me, value of an asset, on what all factors it is dependent? How much benefit I am getting? Yes, it is dependent on future cash flows. In future, what all cash flows I am getting? Point number 1. Yes. Second, it is dependent on required rate of return. Person is saying 6% is enough. Based on that, I'll be getting 30% I want. Yes or no, everyone? Yes. Third is going to be holding period. I am telling I will purchase a share. I will hold it for only 1 year. That means only for 1 year cash flow I'll be discounting. I will hold it for 20 years. 20 years cash flow will be there. So value is dependent on 3 factors. First, what all cash flows I'm getting. Second, for how much period you're holding. Only for that period you will be getting the cash flows. Thirdly, how much return you want. Yes or no, everyone? Perfect. Yes. Price, on what factors price is dependent? It is quoted in the market. Based on demand and supply, it will keep on varying. Yes or no, everyone? Perfect. Now, understand one very simple thing. Value is different for every person. It depends person to person, depends on their expectation of how much future cash flow we are getting, how much rate I want, how much period I'm willing to hold. But price is generally the same for the entire market. Say for example, yes, there is a Mercedes Benz of 1.2 CR. Okay, it will just take you from point A to point B. It will take you. So for a normal person like me and you, it may not be having much value. 1.2 CR. God has given 2 legs. So if I walk also, I'll reach the other place. Or car is there, bus is there. Just traveling, right? But for a person who is having a good statute, who is telling, doesn't make a difference. Yes, I'll give that prestige. It may be having value. Price is the same, 1.2 CR. For a person, it is valuable. For a person, it is not valuable. Yes or no, everyone? It is different from every person. Say, for example, a coffee at Starbucks for 600 rupees. For a person, coffee is also not good. Chumma, you're going there just to take a picture. They'll do one heart also. Just to post, sticker, put it on your phone. What? Get a life, da. Okay? But for people, Starbucks I went today. Yes or no, everyone? Perfect. Say, for example, same is the case with our class as well. Imagine that our class price is 10,000 rupees. Imagine, it is not 10,000, it is very, yes, economical, but still imagine 10,000 rupees. For a person who learnt it properly, who listened to the class properly, cleared his exam, entered into finance domain, made a career out of finance, okay, is working in an investment firm or went abroad, yes, working in JP Morgan Chase, he's using the valuation principles that he has learned here. Think how much benefit he has received. Worth of crores. One more student, he purchased class. He did not watch. What value you will get? The chumma for purchasing, will you become CA just by purchasing class? Value is different person to person. So I cannot make you see. I will give you the guidance, the knowledge required to build the principles. Watching the class is in your hands. Yes, if you watch the class, I will ensure you understand everything. I'll ensure we solve. I will ensure you revise also. But opening a laptop, playing the video, not any other video. And only one video at a time. One side you're playing class, other side you're taking. Ah, baby, very hectic day I had. I know everything that you guys are doing. Okay? You watch only 1 hour class. I don't have a problem. But watch it with 100%. Don't fool yourself. I am watching class. I'm working very hard. Okay? Yes, everyone. So it is dependent on, it is different for every person. Is this clear, everyone? Perfect. All these are just for knowledge purpose. This is not going to be important. For example, now value of different assets. This also again we have already built. Tell me value of a share. Tell me students, if you purchase a share, what all you will be getting in future? You will be getting a dividend. You will be getting the sale price. So it is going to be the present value of dividend and sale price. Yes, discounted at required rate. In case of equity, the required rate is going to be KE. Is this clear? Now the book is designed in such a way that 90% of the things are already printed, but everywhere we'll keep some boxes empty so that we write it together in the class. It's very simple for me to keep it completely printed also, not a big deal, but we'll not have that feel. It just feel like a printed book. But writing the entire book again is going to take a lot of time. So what we have done is 80-90% of things throughout we would have printed, but important things we would have kept it empty so that we write it together. Is this clear, everyone? Yes. So that is why we do not sell our books separately as such, because for a person who just purchased the book, they'll see, oh, empty, nothing is there. What is there in this? Okay, only for a person who purchased the classes, they'll get the true essence of, okay, what exactly it is, why exactly we've done the way we have done. Is this clear, everyone? Okay. Next, value of a bond or a debenture. You've purchased a bond or a debenture. What all you are getting in future? Interest, redemption price or sale price. So it is a present value of interest plus redemption price. I will keep using shortcuts. Okay. Yes, I have cleared my exams. I have a membership number. Discounted at required rate. You have not. Your paper is yet to be validated, so write it properly. Is this clear, everyone? So interest plus redemption price, because I'm explaining and parallelly writing. Okay. Yes, discounted at required rate. Yes, in case of a bond, what is the required rate for a debt holder? It is called as KD. Yes or no, everyone? Yes, value of a real estate investment or a rental property. Tell me what all you are getting. Present value of rental income plus, say for example, you've sold. Yes, sale price. Yes, or net cash. You sold, on that you paid stamp duty, you paid commission, you paid capital gain. Net cash. I'm only looking at cash, nothing notional. Cash, how much ultimately came to my pocket? As simple as that. Yes or no? Yes. Discounted at required rate. Yes, in bracket you can write. Generally, it is going to be KO. Yes or no? It could be possible 100% equity you paid. KO. Yes or no? KE also is possible. Yes or no, everyone? Value of a business. It is present value of future cash flows. I will just keep it as future cash flows. Every year you will be getting cash flows. It is called as FCFF, free cash flow to firm. Okay, it could also be possible that you're thinking after 5 years I will sell my business. So that time you will get the lump sum also. But generally we are not carrying out business to sell the business. We are assuming it is going on till perpetuity. But it's a simple philosophy. You sell the business, okay, how much you will get by selling? That also you discount. You're taking it to perpetuity. All those cash flows you discount. As simple as that. Yes, discounted at required rate. Generally it is going to be K. Is this clear, everyone? Till here, any doubts? No doubts. Okay. Now decision making is there, and relationship between discount rate and value of an asset. Should we just finish it off? And then yes, some more beautiful cases are there on valuation, that a short video of 20-30 minutes we'll discuss in the next video. Generally I do not want to keep the video length big. Okay, but this point alone, let us try finishing it off. I hope it is fine for you guys. Yes or no, everyone? Perfect. One video adjust. Okay. Anyways, first half an hour was just lecturing, na? Philosophies. Okay. Yes. Now, decision making. How do we take any investment decision? Just by seeing a price. You will, from today onwards, one promise. Just by seeing price, you will never purchase any assets. Yes or no, everyone? Perfect. First, we will try seeing the value. How much benefit I am getting. Yes or no? If the value is more than price, say for example there is a share. Yes, the price of the share is 1000 rupees, but you are getting a benefit of 2000 rupees from that share if you purchase. Good or bad? Good. Happy or sad? Happy. Yes, that means the asset is underpriced. Yes or no, everyone? You're willing to pay 2000 also. Even if you pay 2000, it is worth it. But it is available at 1000 rupees only. Yes or no, everyone? Asset is underpriced. It means NPV is positive. That we'll discuss in future when we are understanding the discounting. Value is your getting a present value of future cash flows. Say for example, randomly I'm telling. Okay. Yes, these cash flows are there. You bring it to present value. Na? Present value of future cash flow is 2000 rupees. Yes, but the actual price you are paying is 1000 only. That means net benefit is how much? 1000. This is necessarily your NPV. So net how much benefit you are getting? Everything in present value terms. Value is more. 2000 benefit I am getting, but 1000 only I am paying. That means my NPV is 1000 positive. Don't worry, NPV also will discuss. Everything will discuss. Plus how it will become minus, minus how it will become plus. That also I will tell. Don't worry. I'm assuming that you don't know anything. Okay, yes, from there we are starting, because the only thing that is needed for us is the basics of the maths. Don't worry, I'm not going to tell you differentiation, integration, calculus, limits. No, that I'm not going to teach. Okay, just the basics which is needed properly we'll study, so that throughout I'll keep on playing with this only. Okay, NPV is positive. Yes, what I will be doing, I will purchase the asset. Yes or no, everyone? Suppose I've already purchased. Say for example, Reliance share is there. I've already purchased. Today I'm seeing, okay, yes, it is trading in the market at 1000, but if I hold it now, I will keep getting benefit of 2000 rupees. So should I be holding or should I just sell it off? I will hold on to that because it is giving me a good benefit. Yes or no, everyone? Perfect. Second one, if value is equal to price, Reliance share is there, it is trading at 1000 rupees. Yes, I did my calculation, how much benefit I am getting. I will also get a 1000 rupee benefit from that. So tell me, if I purchase Reliance share today, how much benefit I will be getting? 1000 rupees benefit I will be getting. That means how much I am willing to pay? 1000. How much they are actually asking also? 1000 only. Will I pay? Will I purchase? Yes or no? Technically yes. Yes, you are not getting extra benefit, but whatever benefit you want, you are getting. Say for example, there is a shirt. Yes, in your mind, 1000 rupees I can pay for the shirt, is what you're thinking. He asked, you ask how much it is. He told 1000. Will you buy? Yes, you will buy. As simple as. Yes, it is not that if it was available at 500 rupees, crazy, in 500 only you got. If you paid 2000, 2000 I paid. 1000, neither happy nor sad. But whether your objective is fulfilled, yes. Objective, is it getting fulfilled? Yes. Extra you are not getting. As simple as that. Yes or no? So you told value should be more than or equal to the price. Even if it is equal, extra you are not getting, but whatever is required you are getting. Yes or no, everyone? Perfect. So asset is correctly priced. Yes or no, everyone? The net benefit, yes, value is 1000, benefit I'm getting is 1000, price I'm paying is also 1000, so the net benefit is 0. Yes or no, everyone? Yes. Still should you be buying? Yes boss, you will still be buying, because whatever is your required rate return that you are getting. Yes or no, everyone? Perfect. If you have already purchased, means you will hold on to this. Is this clear, everyone? Third situation, if the value is less than the price. Yes, Reliance share is there, it is trading at 1000 rupees. You saw what all dividend it is getting at the end of the life, what is going to be the sale price, you discounted it. Yes, so for you, based on your holding period, based on your estimates of cash flows, based on for you how much return you want, you are only getting a value of, say for example, 800 rupees. So tell me how much benefit you are getting from the share? 800 only. That means how much you will be willing to pay? 800. But how much they are asking? 1000. Will you make payment? Will tell, what is it? Yes, in so many places they'll tell. So I don't know how to exactly put it to words. In Kannada they'll tell, more nama. Here is it written that I am mad person, innocent person? No. Okay, yes. So, yes, technically, will you purchase? No, boss. Yes or no, everyone? Yes, the asset is overpriced. Why? Benefit you are getting is 800 only, but they are asking 1000, 200 extra they are asking. Yes or no, everyone? Yes, NPV is positive or negative? Negative. Yes, value, benefit you are getting is 800, but you are paying 1000. That means 200 extra you are paying, 200 negativity is going to. Yes or no? That means, will you buy the asset? No, boss, you will not buy the asset. If you have already purchased that asset, think of it. If you hold the asset in future, now 800 rupees benefit you will get. But today, if you sell it, is trading at 1000 rupees. What you will do? Takka you will sell it off. Yes or no, everyone? Simple. Is this clear? Is this clear? Is this clear? Now, generally, these cases will not be coming, but just from a practical perspective, I have told. Yes or no? Then they will tell, okay, buy, hold, sell. That much only they will be asking. But in reality, if you have not purchased, what? If you have already purchased, then what? I've given you a comprehensive picture. Is this clear, everyone? Perfect. I hope this is clear till now. Whatever we have discussed is clear. Okay. Now let us try understanding the relationship. Okay. Yes. One of the most important things in life is Koti, relationship. In real life, relationship could be so many multiple different ways. One-sided, two-sided, three-sided. For them, I am boyfriend, but for me, I'm not. She is not girlfriend. All those could be there. Yes or no? Yes. Maths knows only two things: direct relationship, inverse relationship. Direct means both are moving in the same direction. One is increasing, other is increasing. One is decreasing, other is decreasing. Yes or no? Start of the relationship. She is happy, you are happy. She is sad, I am also sad. Direct relationship. One more is going to be inverse relationship. One is increasing, other is decreasing. One is decreasing, other is increasing. Yes or no? After a few years of relationship, for few people, Koti Reddy. Yes or no? She is happy. Oh, she is happy. Gone, Damar. She said, this is what we want in life. Okay, everything I'm telling here is just okay to ensure that. See, for me it is just fun. For fun I'm teaching. Okay, yes, I will teach everything, but for me also, I also want some fun. That is why we brought Koti Reddy here, and two more people also. Slowly, slowly, we'll keep bringing everyone. Is this clear, everyone? Now, what is the relationship between discounting rate and value of an asset? Now, there is an inverse relationship. Now, here I will try just giving you a small idea on that, but more on that once we go into time value of money. You will get a complete picture on that. Is this clear, everyone? Simple. I am for a minute. I am assuming that you guys have a small idea on time value of money. Sir, I don't know. Don't worry. We'll discuss. But for a minute, just to show the relationship. Okay, everyone? Yes, sometimes just to show the relationship, you see the photo. See, relationship is there. Just to show, I'm assuming that, okay, you guys know, yes, time value of money or discounting. Okay, now, imagine you purchase an asset. In that, you purchase today, first year end, you are expecting 100 rupee cash flow. Okay, you will have to calculate the value of the asset today. Suppose, three investors are there. Yes, investor number one. Yes, say for example, Kameshwaran is there. Yes, he is one more student. Okay, yes. We'll tell you his story some other day. Okay, we have not taken so much story from him. Now he'll be afraid to tell also his stories, knowing what we have done for Koti. Don't worry, if he tells stories, good, or else I will only cook stories in the air. Okay, so tell me, students. He is telling 10% is sufficient. That means how much he is willing to pay. Yes, cash flow divided by 1 plus discounting rate. Yes or no, everyone? It is 100 divided by 1.1. Don't ask me how it is. We will understand. Okay, yes, how much it is? I guess it is 90.9. Yes or no, everyone? So yes, commission is willing to pay 90.9. Yes, imagine. Koti Reddy is telling he always wants higher returns. He's saying, I want 15%, boss. Yes or no, everyone? Okay, fine. So tell me, yes, how much cash flow you are getting? You are getting 100 only, but now you want 15%. So you'll discount it at 15 percentage divided by 1.15. How much is going to be the 86.956? If you are not understanding this, absolutely all right, but you've cleared foundation and inter. I assume this much at least. This present value means you're pulling back. Yes, discounting divided by 1 plus r, you would be knowing, but still don't worry, no issues. Yes, imagine third investor is there. He's telling 5% is sufficient. I don't want too much in life. 5% is sufficient. So that means, tell me, he is also getting 100 rupees only, but he happy even if he gets 5%. So that means, tell me, 100 divided by 1.05. How much he is willing to invest? 95.23. Yes or no? If you want to verify, you can see. Imagine you invested 95.23 today. You want 5%, add plus 5%, you will be getting 100. Yes or no, everyone? Now look at this. Cash flow is same. Yes, if you want 10% returns means, okay, yes, how much money you will be willing to invest? 90.91. Yes or no? If you want 15% means, you'll be willing to put only 86.95. If you're happy with 5% means, you're willing to put even 95.23. Yes or no, everyone? Perfect. Now let us try looking at the relationship. Yes, one is increasing, other is increasing. What kind of relationship it is? Direct. One is increasing, other is decreasing. What kind of relationship it is? Inverse. Now here I have my, yes, discounting rate, value of the asset. Tell me, when my discounting rate is 10%, value of the asset is 90. When my discounting rate increases, yes, what is happening to value of the asset? Decreases. From 90 it is coming down to 86. Yes or no? She is happy, I am sad. Yes or no? What kind of a relationship it is? The inverse relationship. Yes or no, everyone? Let me go to the other end also. From 10% to 5%, my interest rate is decreasing. What is happening to value of asset? From 90 to 95, it is increasing. Yes or no, everyone? Yes, interest rate is decreasing, it is increasing. Yes, so what kind of a relationship we are having? inverse relationship you are having. Yes or no? Every time you are calculating a present value, you will be having inverse relationship only, because simple was, see, look at this. Yes, cash flow divided by 1 plus r. Yes or no? This I can write it as cash flow into 1 by 1 plus r. Yes or no? If it is multiplying, means it is increasing directly. Yes or no? If it is dividing, means it is going in the opposite direction. Yes or no? Yes, I hope this would have made sense to you guys, or else don't worry, time value of money anyways, we are there, 1.5 hour more. The way we've played with the term value, yes, time value of money, we'll take it to another level, don't worry. Is this clear, everyone? So I will just write it down. Yes, always there is going to be an inverse relationship between, yes, any two factors when you're discounting them. Yes or no? In this case, value of an asset versus the discounting rate. Yes, your discounting rate increases, value of an asset decreases. Discounting rate decreases, value of an asset increases. Is this clear, everyone? So there is an inverse relationship. Discounting rate increases, value of an asset decreases. Discounting rate decreases, value of an asset, I'm writing it as VA, you guys can write it fully, increases. Is this clear, everyone? Perfect. Yes, everyone. So till now, whatever we have discussed, our model is going to be at the end of every video. We're going to keep very short, crisp videos. This is the first video, and because I've given instructions, that is why it came till here. But every video tentatively is going to be 60, maximum may extend up to 75 minutes. I know what your attention is going to be. But at the start of every video, I will revise what we have discussed in the previous video. At the end of every video, I'll again revise. At the end of the unit, I will again revise. At the end of the chapter, I will again revise. Yes, at the end of the concept, I will again revise. Minimum from my end, 10 to 15 times I would have revised. It should register in your mind. Even in sleep, if person asks you value, what you'll tell? Benefit that I am getting. Yes or no, everyone? Perfect. So simple philosophy is we are never going to forget in life. With the repetition, it is going to register here. Okay, yes, everyone. So yes, quickly to summarize what we have discussed. Yes, from a story. Yes or no? Yes, Koti went to Starbucks. Yes or no? We have understood. Yes, 2-3 important lessons. Lesson number 1: value versus price. Value means how much benefit I am getting, or how much I should be paying. Price is how much I am actually paying. When we are investing assets, we should always purchase only those assets where value, that is the benefit, is greater than or equal to the price that I'm paying. Point number 2. Point number 3. Yes, what is value of an asset in terms of finance? Yes, it is the benefit. That is, you purchase an asset, what all benefit you will be getting? It is the future cash flows, but it is in future. You will bring it to present. So value of an asset, it is the present value of future cash flows discounted at required rate. That is why everywhere we are having this definition. Yes, so why this meaning is that is why we have spent 1 hour understanding that. Is this clear, everyone? So value of an asset, it is the present value of future cash flows discounted at required rate. It is called value, fair price, yes, intrinsic value, theoretical market price. We've understood value versus price. Value is how much I should be paying, price is how much I'm actually paying. Yes or no, everyone? Value is different person to person, price is generally same for the entire market. In different cases, we've seen valuation. Yes, in case of equity share, what all I'll be getting? Yes, dividend as well as sale price discounted at required rate, which is KE. In case of bond or debenture, you will be getting interest as well as redemption price discounted at KD. Yes, in case of real estate, you will keep getting on the rental as well as the sale price when you're selling discounted at, yes, required rate. Generally, it is going to be KO. And in case of a business, you will keep getting future cash flows discounted at required rate. Is this clear, everyone? Then we have told, yes, decision making, this I've already told, always purchase only if value is greater than or equal to price. Relationship, what kind of relationship it is? Inverse relationship. When my discounting rate increases, yes or no, my value of an asset decreases. Simple. I am getting 100 rupees in future. I want 10% only. Simple math I'll do. I will be willing to pay 90. I want 50% return. How much money only I am willing to put? 60, 70 only. Yes or no, everyone? Simple. You want more return. That means you will be paying less price. As simple as that. Yes or no, everyone? So there is an inverse relationship. So that's all for this video. Yes, we will continue our discussion in the next video, wherein we'll understand some crazy, beautiful cases, wherein we are going to understand all of that just from a simple perspective, simple term, value. Is this clear, everyone? I hope you guys have thoroughly enjoyed the session. If you guys have, then you can please comment or send a message to me or our team. I'll share you the number if you have loved it. Yes, 83102 46880. Would love to hear your feedback, students. People who have purchased the classes, people who are watching it on YouTube, please put the comment that it is completely free. Okay, yes, and for more Maja discussions, we will be having in the next session. Thank you so much, my dear students. Yes, everyone. So, welcome back after the break. So, it is time for us to take our discussion forward. So, what is it that we had discussed till now? We have discussed the most beautiful term in finance. What is it? Value. Yes or no? Let's quickly recap what we had discussed. Yes, three simple pointers we had discussed. First one is value versus price. Value is how much benefit I am getting or how much I should be paying. Price is how much I am actually paying. Yes or no, everyone? Yes. Second thing, we will always purchase assets where the value is greater than or equal to the price. Price is 1000, but if I'm getting at least 1000 or more than 1000 rupees benefit, only I'll be purchasing. Point number 3, that in a proper definition form we brought it. Value of an asset, yes, it is the benefit means future cash flow. It is the, yes, present value of future cash flows discounted at required rate. Yes or no, everyone? Additional so many points we had discussed, but I hope this much is clear. Now it is time for us to take our discussion forward. So are we ready for some maja? Yes, everyone. So for students who are listening to the class for the first time and who do not know what maja is, so how do you define maja? Maja is a feeling. Maja is fun. Crazy. Maja is coming. Yes or no, everyone? So that's what we have put it here, wherever. Yes, maja is coming. So are we ready for some exciting cases wherein we'll think, okay, how do they actually do that? But in reality, simple. Value. How much benefit I am getting. In future, what all benefit I am getting, bring it to present value, we'll arrive at the value of the asset. Is this clear, everyone? Okay. Yes, situation number 1. Yes, my cash flow can be real or it can be notional also. Say for example, you purchase a home, a real estate, a property. Yes, 1 CR you are purchasing. But your intention is that you will be using it for self-occupation. So tell me, you purchase a home today, you paid 1 crore. Are you getting future cash flows from the home in which you are staying in? No. If you are not staying means you would have given it to rent, rental you would have received, you bring it to present value. If you are staying, are you getting benefit? Yes, you are getting benefit. What? If you were not staying in this home, you would have been staying in a rented home. There you would be paying a rent. Assume you do not purchase a home, you are staying in a rented home, you are paying 50,000 per month rent, or say simple case 1 year 5 lakh rupees rent. Because you purchased home, you are not paying that 5 lakh rent. Yes or no, everyone? So that means you are saving paying that 5 lakh rupees. Cash saved is also as good as cash earned. Yes or no, everyone? So what I'll tell, simple example, imagine 1 crore you paid. Yes, otherwise you'd have stayed at a rented place wherein you have paid 5 lakh per annum rentals. Yes, so now what you're doing is you're saving that 5 lakh rent. Yes or no? That is my benefit. Yes or no, everyone? So I'll tell 5 lakh, 5 lakh, 5 lakh. Imagine till whatever years you want to keep. Yes, at the end of it, you are selling, you will get the sale price, bring it to present value at a required rate, you will arrive at the value of the asset. Is this clear, everyone? Simple, perfect. Now, some beautiful cases. Okay, first is the story of IPL broadcasting rights. Yes, IPL, you guys would have at least heard. Yes or no? Isala Kappu Namdu. Yes or no, everyone? After 18 years. Okay, we can finally tell. Okay, now Geo Hotstar purchased, yes, the IPL rights at a whopping sum of 48,390 crore for 4 years. Let this number go through your mind again. 48,390 and then crore, that means 7 zeros. 1 2 3 4 5 6 7. Okay, and you are earning an articleship 2000 per month. Yes or no, everyone? So think, such a big organization, do they think chumma they'll randomly go for the bidding table, they'll tell I'll pay? No, I want to buy, I'll pay. Will they do that? Business, boss. What they see before going there for the bid, they would have estimated how much benefit they are going to get. Tell me, you get the IPL broadcasting rights. Suppose, imagine I'm Geo, I got the IPL broadcasting rights. What I will do? Yes, I will broadcast, people will watch it. How I will be getting money from that? Point number 1 is going to be advertisement. Yes or no? At the end of every over, they keep showing the advertisement. Why? They could have shown players only, na? Why? They're doing all of this service for free, that they're charging whooping money. Yes or no? Jio may be charging a subscription from you, monthly subscription from you. Yes or no, everyone? Yes. In between, yes, Jio came. Jio told we are not charging subscription. We are putting it free. Why? More people will come. More is a crowd. More is advertisement revenue from you. You will pay 399. You will watch it pirated. You will do everything. Business people will pay. More people are there. They'll get a reach. They'll be paying it. As simple as that. Yes or no, everyone? So simple two revenues that they're getting: ad revenue, subscription. They'll see, okay, boss, how much ad revenue we are getting every match, every break. Yes or no? 10 wickets are there, 20 overs are there. In the between, strategic timeout is there, long break is there. Throughout, how much duration will be having? Every slot at what price we're giving? How much money I am getting? Say for example, for 4 years I am having year 1, 2, 3, 4. Random numbers I'm putting. Say for example, year 1 I would get, say for example, 30,000 crores. Random numbers I'm putting. Year 2, say for example, 28,000 crores. Year 3, say for example, yes, 17,000 crore. Year 4, say for example, yes, 50,000 crore. And say for example, they are telling we want a 20% return. So what is the value of the broadcasting rights? This is the future benefit I'm getting. Yes or no? Discounted at required rate. You will arrive at the value, how much I should be paying. Say for example, randomly I'm telling, they understood that, okay, 50,000 crore is a value. That means this much I can pay. In reality, they went for the bidding. Before they go for bidding itself, they'll know, boss, maximum is 50,000. Because if I pay more than that, I will not be getting my required rate of return. As simple as that. Yes or no, everyone? Perfect. Yes. Now, valuation of an IPL team. Yes. Now, after RCB has won the trophy, there are talks that RCB is planning to sell the franchise. Yes, there are quotes for $1 billion valuation. I am not very sure with respect to the numbers. Will any person, yes, you think of it, yes, Ambani has built a IPL team. He may be having zero knowledge on cricket. He has knowledge of finance. So he doesn't come. Lita Ambani, you go. You watch match. You wear clothes. You wear ornaments. You send kids. You do their wedding. I will see money. Yes or no? Would there be any damn reason they are putting in so much money? Let players see. Let the country people watch, cheer. Let them have a happy time. Everything is money. Why you are putting the money? For the benefit you are going to get. As simple as that. Yes. Why are so many, yes, businessmen investing in IPL teams? There is a benefit, enormous benefit. So what all cash flows you're getting? Suppose you've purchased an IPL team, you're running. Every year you'll have to be paying for the cricketers, all those things you're doing. Okay, all those you're doing. Yes, what benefit you'll keep getting? Yes. Now, mainly you'll keep getting sponsorship deals. Yes or no, everyone? T-shirt, jersey, there, here, advertisements you'll be doing, and for those 2 months, yes, those players will also be with them. So from them also advertisement, they'll be doing all those things. Yes, they'll be getting a share of the ticket revenue also, whatever home matches are happening. Yes, from that revenue also they'll be getting merchandise, they'll be selling. Yes or no, everyone? If they win prize money, they'll be getting, but prize money is not a big thing. Prize money is anyways a small jujube thing. People think, okay, yes, this team has never won, RCB never won a cup for 18 years. Still it is valued so high. Why? That is not the game. Yes, we chumma are fighting RCB, CSK, Delhi, Mumbai. That is never the game. Game is something which is happening separately. Yes or no, everyone? How much benefit I am getting? Yes or no, everyone? So by running an IPL team, say for example, they are getting sponsorship amount. Okay, yes, ticket sale revenue from that. Okay, merchandise sale. Yes, the valuation of their brand, the brand value that they've built. Okay, so all those things, yes, will be giving them cash flows. Yes or no, everyone? Yes, they have created RCB, they are having their own, yes, I guess fitness app also, all those things are also there. Yes, they are having their own RCB cafe also. Yes, mad RCB fans will go anywhere. Yes or no? They will mint money from that. Yes or no, everyone? Yes, imagine they are telling you are taking a business. Yes, we are assuming that, okay, it goes for a really long amount of time. Let me take 6 years. At the end of 6 years, they are willing to sell. Say for example, tomorrow Koti Reddy becomes very rich. He wants to purchase, yes, RCB team. So now what he will think? Will he tell, let me play? He'll see what benefit I will get. Sponsorship revenue I'll be getting, advertisement I'll be getting, yes, revenue share I'll be getting, merchandise share I'll be getting, what all additional source of marketing I'll be doing, from that I'll be getting benefit. All those things I'll be doing. And Koti Reddy is thinking, for 6 years I will hold. At the end of 6 years I will sell it off. So for 6 years he'll keep getting the cash flows. At the end of 6th year he will sell it off. That cash flow also he will get. Bring it to present value. It is the value of the IPL team. This is how much you should be paying. Yes or no, everyone? And obviously, they are businessmen. They will not be paying more than that. As simple as that. Is this clear, everyone? Perfect. Now, value of a business or valuation of a startup. You would have seen, yes, Shark Tank India becoming famous. Yes, from the past 3-4 years, therein they'll tell, yes, I am asking 10 lakh for a 10% equity. Yes, there they'll show that means, okay, value of a business is 10 lakh divided by 10%. That means it is going to be 1 CR. Yes, on what basis they are telling? Value. Yes, it is how much future cash flow I will get. Simple, boss. Yes or no? Say, for example, I manufacture a pen. I sell a pen. Yes, every year, how much cash I am getting? Net cash, nothing income, nothing. Cash, ultimately cash. How much I am getting? Discounted required rate. Discounting we will learn. As simple as that. Yes or no, everyone? Perfect. Now, other person may tell, he's saying, I want more return. Then they'll not be willing to pay that much. As simple as that. Yes or no? And I guess if you're doing CA means you would have heard of this. BB virtuals, BB sir. Yes, I guess around some time back they got merged. No, they got acquired by Veranda. Yes or no? I guess at a valuation of 250 CR, something of that sort. Yes or no? I'm not very sure with respect to the numbers, but value. How do you understand the value? What is value? Present value, future cash flow. Yes or no? BB virtuals is there. Yes. So it's in the valuation report also, secret thing. Okay, but understand what all we will be getting. Say, for example, coaching institute we are running, BB virtuals they are running. Yes, future cash flows, future will be running business. Yes or no, everyone? Is coaching, CA CMA coaching will be doing. From that, what all cash flows will get? Sale of classes, sale of books, test series. Then what else could be there? Say, for example, face-to-face batches you are doing. From that also you're getting courses. Global courses, CFA, ACCA, that also doing, you're getting courses. Say, for example, you're thinking, okay, after 3 years, once our brand becomes big, we'll start for MBBS also. That also you can be doing. Yes or no, everyone? Future cash flows. Anything you can do in future. Yes or no? So future, what all you're expecting. Okay? And doesn't necessarily mean that, yes, you tell, oh, tomorrow I will do that also, this also, this also. The investor will come, take. They will know. They are also intelligent people, people who are having money. Do you think, we will do? They will know world more than you. They are paying. Yes or no, everyone? So it is going to be the present value of future cash flows. Yes, every year, how much is going to be the cash flow? They'll be taking a steady, yes, increasing growth rate. All those things, yes, will come slowly to that. But every year, how much cash you are getting? Yes, you bring it to present value terms. You arrive at the value. Is this clear, everyone? Yes or no? Yes or no? Yes or no? Yes, perfect. Yes, now value of a star. Yes, that's why I written Rajni, or else my mind here would have got stuck. Star, how do I value a star? What star is giving me? I wrote Rajnikant, that's why. Because in the class, sometimes in flow, you will forget. Okay. Say, for example, yes, Rajni is coming for a new movie. Say, Coolie 2. Okay, Rajni is telling, I will do the movie, but you have to pay me 50 crore. Is what Rajnikant is telling. Should we take Rajnikant or should we not take Rajnikant? On what basis? You will see how much value, how much benefit he is giving. Yes or no, everyone? Now, say, for example, movie I can do even if Rajnikant is not there. Yes or no? Say, for example, tomorrow I take Koti Reddy and we make the movie. Yes, he'll do Yena Raskala, mind it. All those things Koti Reddy will also do. But who will go to watch? Yes or no, everyone? Say, for example, I make the movie with Koti Reddy. Say, for example, I am getting 100 people to watch the movie. I make the movie with Rajnikant. I get 1,000 people to watch the movie. Yes, that means what is the benefit that Rajnikant is giving me? That 900 people extra who go to the theater, that is what Rajnikant is giving me. Yes or no, everyone? From that, what is the ticket sale? I'm not telling numbers, I'm giving you a feel. Yes, if Rajnikant is there, okay, we've produced that movie. Once we give it to OTT, how much price they will give me? For the music right, how much I can quote? Yes, in the marketing, there will be sponsors throughout during their marketing also. They, how much they will be giving me? Yes, that I will bring it to present value. That is the value of a star. Yes or no, everyone? Perfect. Yes, so summary of the story. Again, I am bringing it to you guys. Yes, value, value, value anywhere in the world. Value is how much benefit I am getting? Recording is on, right? Okay, fine. Value is how much benefit I am getting. Yes, that tells me how much I should be paying. Yes or no? Versus price is how much money I am actually paying. Yes or no? Yes, we'll always be buying assets where the value, that is the benefit, is more than the price. In finance, value of any asset, it is the present value of future cash flows discounted at required rate. I hope the discussion till here was absolutely fine, crystal clear. You guys have thoroughly enjoyed. Yes or no, everyone? Perfect. From here, we'll take the discussion forward. We have so much more interesting things for you. Next, in order to take our discussion forward, now we'll have to enter into the discounting, time value of money. Okay, we'll be spending around 1.5 hours to understand that, because trust me, once you spend time there, okay, then question solving will happen in the simplest way possible. Okay, yes, there we are not going to take time because our solid foundation is strong. So throughout, you know exactly what is happening, why it is happening the way it is happening. Is this clear, everyone? So I hope you guys have thoroughly enjoyed. So now what we are going to do is we are going to take a short break, and then we'll continue our discussion. Thank you so much, my dear students. Keep studying, keep smiling, keep working hard, keep making your parents proud. Yes, everyone. So hello, hi, namaskaram, and good morning, students. Good morning, students. I hope you guys are doing really, really well. So let us continue our discussion forward, my dear students. So what is it that we are discussing? We have started with our journey on finance, and till now our main journey was on understanding one word, the most beautiful word. If someone asks you, yes, what is the most beautiful word? What are you going to tell? I love you. Value. Yes or no, everyone? What is the benefit I am going to get? So value of an asset. So first three pointers. Yes, I know we've repeated multiple times, but still one more time now, finally, for me. Okay, yes. Point number one, value versus price. Value means how much benefit I am getting. That is how much I should be paying. Yes or no, technically. Price is how much I am actually paying. Point number two, we will always invest only in those assets where the value is greater than or equal to the price. Third, yes, we've told, yes, what is value? It is the present value of future cash flows. You purchase an asset, in future you will keep getting benefits. That is a cash flow, but it is in future. Yes, price is today, so I want to bring all the cash flows to today. So it is present value of future cash flows discounted at the required rate. Yes or no, everyone? Perfect. Now we are going to take a journey further. Yes, so now it is time for us to get into some basics. So from here, some basics are needed. Whatever basics are needed, as and when they are needed, we'll keep on taking them. Okay, in installments, we'll keep taking them. Now, so let us start our journey further. Are we ready, everyone? Yes or no? Class? Class? Okay, so let us take our discussion further, my dear students. So first point we are going to understand is going to be the principle of cross multiplication. One of the most beautiful, interesting things, okay, in the entire subject. 99.9% of questions I will solve just using this cross multiplication technique. What exactly is this? Let me try understanding in a very simple way. Imagine I decide once and for all that I'm going to stop teaching. Why, sir? No maja only in life, da. So no, morning you wake up, you stay up till 5 a.m. ensure everything is set, then you go to sleep. In 4 hours sleep you wake up, again you open the laptop, okay, system is hanging. Students are telling, I don't want, I decided to quit teaching. Sir, then what you are going to do? Simple life. I will sell tomato. Tomato. 1 kg 50. Tomato. Lelo, tomato, lelo. Okay. Yes. So, I told I'm going to sell tomato. Tell me what is the price of tomato? 1 kg is 50 rupees. Now, imagine. I'm selling tomato. There also Koti is coming. Whether Koti will come alone, no. Koti is coming with his girlfriend. So now his girlfriend is telling, baby, we want tomato. Okay, Koti is saying, yes, we will buy tomato. Okay, yes. So, yes, now two situations. First, simple, plain, third standard student answer you will tell me, then I will show you a technique also to do that. Okay. Imagine. Koti is telling that he wants to purchase 10 kg tomato. Can you guys tell me how much price Koti should be paying? For 1 kg tomato, the price is 50 rupees. That means for 10 kg tomato, how much Koti should be paying? Simple. How much is the price? Tilda, 500. No doubt in this. No doubt in this. If there is doubt in this, I can't help. 1 kg 50, 2 kg 50, 3 kg 50, 4 kg 50, like that. 10 times 50, 50, you pay 500. Yes or no, everyone? Perfect. Now the same thing I will try writing it in a cross multiplication table. Look at this, everyone. So what I am telling is kg price. Tell me what is the equation I am having. I know that for 1 kg the price is 50 rupees. Yes or no, everyone? Now I want to know the price for 10 kg. So I will write 10 kg is how much? Question mark. And what I am going to do? A cross multiplication. Whichever, yes, I will be creating a cross pair. Whichever pair is having a question mark will come in the denominator. The other pair will be coming in the numerator. Third standard maths. Yes or no? Yes. So whichever pair is having a question mark will come in the denominator. Yes, it is basically 1. So only 1 will come in the denominator. The other pair will go to the numerator. It is 10 into 50. So I will write 10 into 50, which is going to be 500 rupees. Yes or no, everyone? But sir, 1 kg is 50, 10 kg is 500. We know na, sir. This only when we give $2 is equal to 300 rupees. $5 is equal to how much? You'll tell, oh, Forex is difficult. Forex, so much formulas. A cross multiplication. See how I am going to use this. 99.99% of questions, I will just be using this. Into divide, whatever it is, I will just be using this. Okay. Now shall we flip the story a bit? Okay. Koti is telling, yes, that he is having, imagine, 250 rupees. How much kg tomato I will give him? Tell me the equation, everyone. 1 kg tomato is how much? 50. Koti is telling that I have 250 rupees. How much kg tomato you will give? Simple. Third standard student will also answer. If this you don't know, I really can't help. Okay. But 5 kg, sorry, 250 rupees. How much kg tomato? 5 kg tomato. Clear, everyone? Simple. Yes, he gives 50, I give 1 kg. He gives other 50, I give 1 more kg. He gives 1 more 50, I give 1 more kg. Duda, 1 more 50, I give 1 more kg. 1 more 50 gives, he gave 250, I give 1 more kg. 5 kg I have given. Yes or no, everyone? The same I will write it in a cross multiplication table. Look at this, everyone. Yes, kg price. Yes, for 1 kg, how much is the price, students? 50 rupees is the price. Yes or no, everyone? Now what is Koti asking? Koti is telling I have 250 rupees, boss. Rupees, okay, 250 rupees I have. How much kg will you give me? Cross multiplication. Yes or no? Yes, the pair which is having a question mark will come in the denominator, which is 50. Yes, the other pair will go to the numerator, which is 1 into 250, which is 250. 250 divided by 50 is 5. What am I finding? What am I finding? I am finding how much kg tomato I got. So it is 5 kg tomato. Yes or no, everyone? In Forex, when they are doing conversion, students don't know. Hey, this is dollar. Am I standing in dollar or rupiah? Why? Chumma, into, yes, this means into, this means divide, that means 1 by divide, this means 2 into. So much nonsense students are doing. Pure cross multiplication. Till here, are we ready, everyone? Any doubt till now? Give me a confirmation, students who are doing online live. Okay, perfect. So now let us take our discussion further. Pay attention, everyone. Now, if this is clear, I have created one more example in our book. I have not written much about cross multiplication, but 2 simple examples are there. Let us try solving this. Now, if the price of one shirt is rupees 1000, tell me, everyone, price of one shirt is rupees 1000. Then answer the following. Find the total amount payable for 10 shirts. So tell me, everyone. One shirt is 1000 rupees. That means 10 shirt is how much? Cross multiplication. Don't skip this telling, okay, this is basic GGBI, no? Then after some 3-4 months, you will tell, why this formula came? This only I did. Yes or no, everyone? I am taking a cross multiplication. The pair having a question mark will come in division, which is basically 1. Yes, the other pair will go to, yes, numerator. 10 into 1000 is going to be 10,000 rupees. Yes or no, everyone? Perfect. Second situation, find the number of shirts that can be purchased for 5,000 rupees. Tell me one shirt rupees. One shirt is going to be how much, students? 1000. Tell me how much money I am having. 5,000. That means how much a shirt I will be getting? 5 shirts. Yes or no? Cross multiplication. 5,000 will come in the numerator. divided by 1000 will come in the denominator. What answer I'm getting? Question mark is what I'm searching. Shirts. 5 is going to be the shirts. Yes or no? So it is going to be 5000 divided by 1000. 5 shirts. Yes or no? Perfect. Now example number 2. Look at this, everyone. If the price of two identical shirts is 1000, the price of two shirts is 1000. For how much? For how much? Two shirt is 1000. That means technically one shirt is 500. As simple as that. Yes or no, everyone? Find the amount payable for 10 shirts. First tell me, without doing this also logically tell me. For two shirt it is 1000. That means for one shirt how much? 500. That means for yes 10 shirts it is going to be how much? 5000. As simple as that. But see, let's how we are going to do it. I will tell. Yes, boss. Two shirts amount. Two shirt is going to be how much? 1000. Yes, I want to know for 10 shirt is going to be how much? Yes or no, everyone? Cross multiplication. So it is 10 into 1000 divided by 2. Yes or no, everyone? It is going to be how much? 5000 rupees. Yes or no? It is the amount. Is this clear, everyone? Absolutely no doubt. Give me a confirmation, online live students, people who are watching recorded at home also. Simple, absolutely no doubt. Okay, now second case is find the number of shares that can be purchased for 7500. Let's see. Tell me. Yes, shirts price. Two shirt is going to be how much? Scribble, everyone. I have cleared exam. I have membership number. Still I'm doing. Okay, at home, if you are putting your leg on your leg, lying on the bed, watching at 2x, sitting boyfriend girlfriend together, you guys are sitting. 1 year's one guy, the other year's other guy. All those you do separately. In movie theater you do. Class you watch properly like class. Tell me, for two shirts it is going to be 1000 rupees. I want to know for 7500 it is how much shirts? Cross multiplication. Yes or no? So it is 7500 into 2 divided by 1000. Yes, what is going to be the value? 15. Yes, what is 15? 15 what? It is the value of 15 is a unit of the shirts. That is 15 shirts I'll be getting. Is this clear, everyone? Any doubts till now? No? Crystal clear, yes or no, everyone? This is one fundamental throughout. Yes, 90% formula derivation I will tell cross multiplication. I will show it to you guys. Is this clear, everyone? Throughout. Yes, it may seem as most biggest formula. Cross multi. Ultimately, what is happening? Either into is happening, divide is happening. That is what you will learn, how to do into, how to do divide. As simple as. Yes or no, everyone? Yes. Let us take some more examples. Look at this, everyone. Yes. 5 books cost 10 rupees. I want all of you guys to quickly scribble and let's try doing the calculation. Okay. 5 books cost 100 rupees. That means for 40 books, the price is going to be how much? 40 books is how much? Yes, do this cross multiplication table always. 5 books is 100. That means 40 books is how much? Cross multiplication. It is 40 into 100 divided by 5, which is going to be how much? 800 rupees. Yes or no, everyone? If you want to verify, simple. For 5 books, it is 100. That means for one book, it is how much? 20. So for one book, it is 20. That means for 40 books, it is going to be how much? 20 into 40, 800. As simple as that. Say, for example, I am telling I have, say, 16,000. How many books can I purchase? Tell me, 5 books is how much? 100. That means for 16,000 rupees, I'm doing it fast. How many books I can buy? Cross multiplication. 16,000 into 5 divided by 100. It is going to be how much, students? 800 books. Yes or no, everyone? Perfect, everyone. Yes. Now comes Forex. Forex again I will be doing, but still. For all the people who are telling Forex, the base currency denominator into price currency multiply. So much nonsense you guys are doing. Simple quote. $1 is equal to rupees 90. That means if I give $1, how much rupees I'm getting? 90 rupees I'm getting. Yes or no, everyone? Yes. If I want to purchase $1, how much I should be paying? 90 rupees I should be paying. Simple. Yes. Now, $1 is equal to 90. Then calculate the value of the following. I'm giving you guys a minute. $10 is how much? Yes. Rupee 450 is how much? Rupee 18,000 is how much? $75 is how much? Giving you guys a minute. Try this, then we will do it. Yes, everyone. Are we ready to solve? I hope online live students, You would have tried by yourselves. Okay, a simple principle. Yes, students who are watching it as a recorded. If you do not try, the net result is going to be a big zero. Doesn't matter whose class you see. You will have to practice. Doesn't matter you watched 1,000 hours of classes on how to bat like Virat Kohli. If you do not bat, you cannot become. As simple as that. Okay, so look at this. I'm going to do it very fast. Yes, tell me $1 is equal to rupees 90. Now individually all these things let me try doing. Yes, $10 is equal to how much? Cross multiplication, yes or no? So 10 into 90, it is going to be 900. Yes or no? Divided by 1, it is going to be 900 only. Tell me, what am I calculating? What am I calculating? For $10, how much rupees I am paying? Yes or no? So it is going to be 900 rupees. As simple as that. Yes or no? Or I can write it this way also. This is dollar, this is rupees. That means $10 is equal to how much? Look at this, everyone. It is going to be 900 rupees. Perfect, everyone. Okay, situation 2. I have 450 rupees. I go to forex dealer. I tell boss, I have 450 rupees. How much dollar will you give me? Simple. $1 is 90 rupees. I have 450 rupees. How much dollar is he giving me? Cross multiplication. Yes, 450 pair is coming in the numerator, so it is 450. Yes, divided by 90, it is going to be 5. What? 5. What am I calculating? Value of dollars. Yes or no? It is going to be $5. Yes or no, everyone? Perfect. Third situation. Tell me. Yes, 18,000 rupees I'm having. I'm telling boss, I have 18,000 rupees. Suppose Koti Reddy decided he wants to go to US. Sir, he's having so many fans, girlfriends and all in India. He wants in US. Someone tells, Kati, how are you doing? How was your day? Okay, he decided 18,000 rupees he will convert. He went to currency exchange dealer. He's telling $1 is 90 rupees, boss. Koti has taken 18,000 rupees. Tell me how much dollar he will get. Simple. $1 is 90. 18,000 is how much? Yes or no, everyone? Yes, cross multiplication. 18,000 into 1 goes to numerator, divided by 90. So it is going to be 18,000 divided by 90. It is going to be how much? 200. What am I getting? $200 it is going to be. So it is going to be $200. Yes or no, everyone? Next. Yes, Koti is having, yes, he went to US. His girlfriend gave him $75. Keep it. It should always be in your pocket. It is for my memory, she gave. Okay, but Koti is Koti. He values money only. He came, the first thing he did, $75 I'm having, I will convert. You tell me how much cash you will give. Yes or no? He told $1 is 90. He's telling I have $75. So let us try converting. Yes or no? Cross multiplication. So it is 75 into 90. How much it is going to be? 6750. Yes or no, everyone? Shall we take the game one level up? That is going to be the end. Now, yes. Now both are different currencies. Students will get literally screwed up. Oh my God, what is happening? Cross multiplication only. Yes. Pound 2 is $2.5. Okay, pound 2. Pound is UK's currency. Dollar is US currency. Okay. Pound 2 is $2.5. In that case, yes, you will have to calculate the following. Yes, pound 10 is equal to how much? Dollar 375 is equal to how much? Pound 70 is equal to how much? Dollar 25,000 is equal to how much? Giving you guys a minute. Do that. Do the cross multiplication table. Do not miss out. Or else you will again go to Forex. Again you will keep by hearting. If base currency, if quote is base currency, given is base currency, multiply. If quote is base currency, given is price, divide. Keep doing that. Okay? Don't by heart. Yes. Giving you guys a minute. People who are watching recorded, humble request. All I can do is request folded hands. Please don't jump down. Yes, everyone. So I hope you would have solved these situations. Let us quickly try doing. So first, let me try writing down the quote. Look at this, everyone. What all currencies are given? Pound is given. Dollar is given. Yes, pound 2 is equal to dollar 2.5. Situation by situation, let us try doing. First situation is pound 10 is how much? Cross multiplication, yes or no, everyone? This is one pair goes to the numerator. It is a 10 into 2.5. The other pair comes to the denominator, divided by 2. It is going to be how much? 12.5, yes or no? So I will be getting the answer as 12.5. What? 12.5. Dollar 12.5. Yes or no, everyone? Okay. Situation number 2. Pound 2 is dollar 2.5. I am doing it slightly faster. Yes or no, everyone? Yes. Dollar 375 is how much? Dollar 375 is how much? Dollar $375 is how much? Cross multiplication, yes or no everyone? Yes, this pair goes to numerator, 375 into 2. Yes, the other pair comes to denominator, divided by 2.5. How much is the answer I'm getting? 300, yes or no? What 300? Pound 300, yes or no everyone? So it is going to be 300 pounds. Yeah. Oh, it is happening. Okay. Pound 300, yes or no? Third situation, yes, 2 pound is equal to $2.5. I want to know 70 pound is how much? 70 pound is how much? 70 pound is how much? Cross multiplication, yes or no? Yes, first pair goes to numerator, 70 into 2.5. Yes, the pair which is having a question mark comes to denominator, divided by 2, which is going to be how much? 87 point. Yes, what 87.5? It is going to be dollars, yes or no everyone? Perfect. Yes, last situation, $25,000 is going to be how much? So I will tell, yes, 25,000 is going to be how much? Cross multiplication, yes, this pair, 25,000 into 2 goes to the numerator, 25,000 into 2 goes to numerator, other pair comes to denominator, divided by 2.5. It is going to be how much? 20,000, yes or no everyone? It is pounds, yes or no? Yes, the number numerical accuracy, I'm trusting these people. Yes, if it is wrong, you scold them. I don't know. Yes or no everyone? Perfect. Till here is it fine? Okay, now let me take one more situation. Okay, there is a car covers 100 kilometer in 2 hours. Okay, yes, Koti is going on a long drive with girlfriend. Yes, 2 hours they've covered 100 kilometers. He's telling, I can drive till eternity if you are by my side. All those nonsense blatant statements and all he is making. Okay, yes, imagine, yes, Koti drives this way for 8 hours. How much kilometer he will cover? Point number one. Point number two, their dream destination is 600 kilometers in total. That means total how much time they'll be taking. Quickly takka you guys do, giving you guys a minute. Yes everyone, let us try doing it. Very simple, very simple, very simple. Yes, 2 hours means 100 kilometers. 8 hours means how much? Cross multiplication, 100 into 8 divided by 2, it is going to be how much? 400 kilometers, yes or no everyone? Situation number 2, 2 hours is 100 kilometers. That means 600 kilometers is going to be how much? Yes, cross multiplication, it is 600 into 2 divided by 100. Yes, it is going to be in terms of hours. How much hours it is going to be? 12 hours, yes or no? How many hours you want, you can keep creating stories. Okay, next, if a student takes 30 minutes to solve 5 questions, Koti Reddy is now fully focused. First he has to clear CA final. He told, okay, question will solve. Yes, in 30 minutes he solved 5 questions. Okay, suppose Koti Reddy wants to solve, say for example, 30 questions is the target for his day. Total how much hours or how much minutes he has to study? Point number 1. Or point number 2 is he is telling, okay boss, I will study for say 130, or let me here, let's keep this full number only, 150 minutes. How much questions he can solve? Giving you guys a minute, try it by yourselves. Online live students, sorry, students who are watching recorded classes at your home, yes, every time I'll tell, yes, students, try it by yourself. It means you'll have to pause, try. We've set the rules, you will try the questions first. Okay, yes everyone, so let us try doing this as well. Tell me, yes, 30 minutes for 5 questions. Questions, minutes, yes or no? 5 question is 30 minutes. Yes, that means 30 question is how much minutes? Yes or no everyone? Perfect. Cross multiplication, so it is going to be 30 into 30 divided by 5. It is going to be how much? 180 is in terms of minutes. Yes or no everyone? Perfect. Situation number 2 is going to be, yes, in 150 minutes how much questions he can do? In 150 minutes how much questions he can do? Cross multiplication, this pair goes to numerator, other pair comes to denominator. It is going to be 150 into 5 divided by 30. I hope, yes, I'm scribbling it right. Yes or no everyone? So it is going to be how much? 25 questions. Yes or no everyone? Perfect. I'm trusting you guys for the numerical accuracy. Okay, perfect. So with this, phase 1 of the discussion is over. One of the most important things, jujubest things, but still trust me, the way I teach, this is going to be the first thing, and till the last this is going to be majorly the only thing, because every formula is literally either you are doing into or divide. That's all we are doing. Yes or no, everyone? So giving you guys a minute, let this sink in, then we'll continue our discussion. So what is it that we have learned in terms of cross multiplication? Now, one very important thing, this cross multiplication will work only in case of, yes, direct equations. In case of inverse relationships, it will not work. What that is not needed for you. For us in final, we are only having direct, even at final level. Sufficient for us. Yes or no, everyone? Perfect. So what we have learned, yes, whatever is a given equation, yes, I will write it down properly. Yes or no? Yes, I will write, yes, what is getting equated to what. Say for example, yes, $1 is equal to rupees 90. Dollar rupee. Then I will see what is the next data that is given. Okay, rupees 450 is how much dollars. That means firstly I know that my answer is going to be in terms of dollars. How much? Take a cross pair. The pair having question mark comes in the division. The other pair goes to the multiplication. This gives you the answer. As simple as that. Yes or no, everyone? Perfect. Giving you guys a minute. Let this sink in. Then we'll continue our discussion and go ahead to a beautiful point, which is going to be time value of money. Yes, everyone. So let us continue our discussion. So we have understood cross multiplication, yes or no, one of the foundations using which we will be explaining the entire classes. Now going ahead to the next point, which is going to be the time value of money, the core base of finance, time value of money. Yes, you would have already learned it at foundation, already learned it at inter, you would have cleared inter, but still, once the right way, let us try learning it so that you never have to by heart a formula. We know logically why it is happening. Then question solving is going to be very simple. Trust me when I'm telling this. The entire chapter of security valuation, equity valuation, bond valuation, once this time value of money gets over, then there's nothing much left. Questions will keep on solving. Okay, even business valuation also majorly it is going to be that only, whenever, yes, we are discounting valuation comes into picture. Is this clear, everyone? Okay, fine. So time value of money is one of the fundamental concepts in finance and forms the basis for all financial decision making. Let us try understanding in a very simple way for you guys. Okay, now this is a master chart for time value of money. Right now you may not understand much. In time value of money there are two techniques. One is compounding, that is you are calculating future value, you are going front, that is how I'll tell. One more is discounting, that is you are calculating present value, that is you are bringing your cash flows back. Yes or no, everyone? Yes. Compounding means you are standing here, you are taking your cash flows front. Discounting means you are bringing your cash flows back. If you are taking your cash flows front means you will include the interest. You will be doing into 1 plus r to the power of n. Yes. If you are discounting means you will eliminate the interest, that is divided by 1 plus r to the power of n. Yes or no, everyone? Yes. This is going to be the essence. This is what we are going to learn. This here now I have not explained. Don't worry. At the end we'll again come back to this. So let us start from scratch. Very simple story. Imagine. This is me. I decided we are going to stop teaching. No, maja only da. Yes or no? So much technical glitches and all are coming. So we decide no. I have so much money that I've earned and I've kept. I will invest it. Okay, imagine after so many years of teaching, after so much hard work, I have finally saved 1,000 rupees. Okay, this I want to invest. So, yes, I take this 1,000 rupees. Yes, I go to bank. Yes, we have the banker, money bhai. We call him money bhai. Okay, so I go to him, I tell my lifetime earnings, 1,000 rupees I earn. I want to invest. He's asking, firstly, for how many years? I tell for 2 years. He'll tell, okay, I'll give you a 10% interest rate. Is this clear, everyone? Yes, we'll have to understand at the end of 2 years how much we are getting. Is this clear, everyone? Okay. Tell me what is going to be the story. We invested 1,000 rupees in bank for 2 years. Rate of interest is going to be 10%. Calculate value after 2 years. We are at the final level. Needless to say, yes, throughout we'll be using compound interest only. Is this clear, everyone? Okay, very simple. Now tell me. Firstly, you have the formula. Yes, what is the formula? Future value is equal to present value into 1 plus r to the power of n. Yes or no? Present value is going to be 1,000. Yes, 1 plus r is how much? 10%. In terms of decimal it is 0.1 to the power of n. How many years? 2 years. So 1.1 whole square into 1,000. I guess it is going to be 1,210. Yes or no, everyone? Perfect. This is the formula. Okay, yes, but why exactly this formula has come? Cross multiplication only, nothing else. Why came cross multiplication? It came. Don't worry, we'll explain. That is why I'm here for. Okay. Now let us try doing it in a slightly different way. Okay. Logically, let us try slowly building. Okay. First. Let me try drawing a line. Koti, irrespective of how you are, line should always be. Oh, this is not straight, Koti. What to do? Being with you, iPad also become like you only, I guess. Anything is fine for the iPad is what it's telling me. Huh? What is happening? Okay, fine. Line should always be straight. Is this clear, everyone? Perfect. Now tell me. Where we are standing. Today we are standing at t is equal to 0. I am standing. With the quote and all. Okay. Okay. Imagine this is me. Okay. Today I am investing. Yes. How much rupees I am investing? 1000 rupees I am investing. Yes or no? For how many years? For 2 years. Yes or no, everyone? At the end of 2 years I'll be receiving my money. Yes, I went to money buy. What is money buy telling? How much interest he will give me? 10% per annum. How much money I've put on that? 10% he'll give me. So first year, tell me how much money I have invested? 1000 rupees I've invested. On that 10% he will give me. That is going to be how much? Technically 1000, 10 percentage of that is going to be 100. Any doubt in this? No, right? This also, why sir 1000 into 10%? That also I can tell. See, percent. That is for 1 rupee, 10%. Yes or no? That means for 1 rupee, yes, principal, percent, interest, percent. Per for 1, yes, how much cent? 10%, 0.1. If you put 1000 means how much? Everything is cross multiplication only ultimately. Yes or no, everyone? Perfect. But I hope this much you know. Okay, 100. At the end of first year, if I am removing total how much money I should be getting? 1000 I put. 100 interest I have got. That means it is going to be how much? Yes, now it may seem to be nonsense for you guys. But please, this 1 hour alone you give it to me. Okay, 1 hour maximum. Then never we are going to touch anything. I will just draw a line, from there we'll keep pulling. That's all. Okay. So the total value is going to be how much, my dear students? 1100. Yes or no, everyone? Tell me, do I want the money now? No. I'm telling money buy. I'm putting it for 1 more year. Money buy, don't worry, I'll give you interest. I ask how much interest is? 10%. So 100 rupees interest. I told, wait. How much money I have deposited? Originally 1000 I have deposited, but now I'm standing here, boss. I have reached here. So my original 1000 is also there. 1 year's interest also I've got 100. So total my how much money is with you? 1100. So you should be giving me interest on 1000 rupee or 1100. On 1100, how much interest I want? 10% of that. That means my interest is going to be how much? 10% of that, which is going to be 110 rupees. That means at the end of second year, how much I will be getting? 1210 rupees. Yes or no, everyone? Same answer only I've got. Perfect. Now let me try doing it in a different way in order to derive the formula, exactly how the formula has come. Now imagine, I am telling I am investing 1 rupee only. How much I will get at the end of 2 years? Let me try doing. Okay. Yes, very important philosophy in life. Koti, line should always be whether you are straight or not. That is up to you. Line should always be straight. Yes or no, everyone? I am telling today I invested 1 rupee. That is the present value is 1. Yes or no, everyone? How much interest I am getting? 10%. That means for first year, how much interest I will get? 0.1 rupees. Yes or no? 1 rupee into 10%, 0.1. So at the end of first year, how much it will become? 1.1. Second year, again I'm investing, but second year, how much money I'm investing? 1.1 I'm investing. So how much interest I will get? 10% of that, it is going to be 0.11. So at the end of second year, how much value I'm getting? 1.21. So can I tell my future value is going to be 1.21? Yes or no? Yes or no? Yes or no, everyone? Perfect. If present value is 1, future value is 1.21. Future value I can also write it as 1 plus r to the power of n. For 1 rupee principal, 10% to the power of 2. 1.1 whole square is also 1.21. I'm just keeping things here inside. So understand what is happening. Look at this, look at this, look at this. Present value, future value. I've told you throughout this entire subject, I'll just keep playing with cross multiplication. Today, if I put 1, at the end of 2 years, I'm getting 1.21. But tell me, how much money I gave to money buy? I gave 1000 rupees, now boss, to money buy. That means how much I should be getting at the end of 2 years? Yes, it is going to be 1000 into 1.21. So at the end of 2 years, I will be getting how much? 1000 to 10. Is it the same answer only? Yes or no, everyone? Now, let me create formula also using this. Tell me what I got, what I got. I got the future value. Yes or no? Yes. How did I get 1000? What is 1000? It is a present value. Today, how much I invested? Yes or no? On that, yes. Into 1.21. What is 1.21? Yes, here I've shown 1.21 is nothing but 1 plus r to the power of n. Yes or no, everyone? Yes, it is a factor. 1 plus r to the power of. Is this clear, everyone? Yes or no? Yes or no? Yes or no? Perfect, everyone? Okay, perfect. Now, this is a very detailed way of doing. Yes, every year you're adding interest, you're calculating principal, you're adding interest, you're calculating principal. Yes or no? In a very simple way also I can do. Look at this, students. 0, 1, 2. We are slowly building. Tell me 1 rupee is there. First year you're adding interest. Yes or no, everyone? How much is the interest? 10%. So on 1 rupee you add 10%. How much it will become? 1.1 it will become. So into 1.1 you reach first year. Yes, on that amount. Again you're adding interest. So if you had 1 rupee here, you're adding interest. 10% is interest. Yes, how much it will become? 1.1 it will become. So 1.1 into 1.1. It is going to be 1.21. Yes or no, everyone? Perfect. So every time I'm telling yes, we are going front. That means I'll keep on adding interest. I'm telling we are coming back. That means I am eliminating interest. Yes or no, everyone? Perfect. Till here, whether things are fine. Now, you might be having a fundamental doubt that, sir, we were very happy just knowing FV is equal to PV into 1 plus R to the power of n. This, yes, it is good only, but this much was not needed. You will tell now. After, yes, 3, 4, 5 concepts, when yes, valuation will come, you are not exactly understanding what is happening. Tell, sir, why we are doing there, sir? So I am going to spend some more time here, but trust me, throughout the entire journey, you will never feel a sense of difficulty. That is why we are spending. That is why I'm telling this is the most crucial 1 hour. Please do bear with me. Okay? Yes, everyone. I know you guys know it already, but still, for my satisfaction, please. 1 hour only I'm asking. Okay, till here, is this clear, everyone? Give me a confirmation, students, online, live, or recorded, people who are watching it in your homes. Yes, everyone. So now let us continue our discussion. Pay attention, pay attention, pay attention. Okay. Now we have seen from today how to go into future. I will be including interest. Yes or no? So I will tell yes into 1 plus r to the power of n. Now I am coming back. Discounting. Simple example. We know the answer already, but still I am telling. Yes, this is not me. This is Koti. Koti is telling, sir, after 2 years I'm planning to get married, sir. I told, great, da Koti. Finally you are settling. Sir, marriage too much expense, sir. I'm telling, okay, fine. No, sir, I want to invest some money today so that after 2 years, by including interest, I will get the marriage equal to how much I want for marriage. I told, okay. Yes, he's telling, sir, I made all calculations, sir. After 2 years, for wedding, for reception, for honeymoon, sir, that is most important, sir. People will come, they'll eat food, they'll talk bad and go. Huh? Pre-wedding shoot, everything you want. Okay. For all those things, he is telling, okay, sir, I did all calculation. I want 1210 rupees. Assume. Okay. Yes, after 2 years. I told, okay. Yes, he decided today he will deposit the money in the bank and earn interest for 2 years, so that at the end of 2 years it becomes 1210 rupees. I told, okay, fine, boss, no issues. Now he went to bank. Money buy is there. Money buy is there. Yes. He told, boss, I'm investing money today. He told, great. He's the least interested. He's telling how much rate of interest you'll give. He's asking how much money you're investing. He told 2 years. He told 10% I'll give. Okay, fine. Now tell me, students, yes, how much money he should be investing today. Now, firstly, yes, draw a line to understand what exactly is it that I want. 0, 1, 2. Yes or no, everyone? Koti Reddy wants 1210 at the end of 2 years. I want to know how much he should invest today. That means this I will bring back 1, 2 times. Yes or no, everyone? Perfect. Now first let me try understanding the normal way. Okay. Tell me, students, if I invest 1 rupee, quoted is telling, boss, if I invest 1 rupee today, say for example, let me do it properly, only 0, 1, 2. If I invest 1 rupee today, for 2 years he'll keep getting interest. Yes or no? Let me go, friend. At the end of 2 years, how much that money will be? On first year he'll get 10% interest, second year again he'll get 10% interest, into 1.1, into 1.1, how much it will be? 1.21 it will be. Yes or no? So I will tell present value, future value. Today, if Koti Reddy invests 1 rupee, at the end of 2 years, how much it will become? 1.21. How much Koti Reddy wants at the end of 2 years? 1210. That means how much he should be putting it today. Yes or no? Cross multiplication. It is 1210 divided by 1.21. It is going to be 1000 rupees only. Yes or no? The first example we did, 1000 I invested 2 years, I got 1210 at 10%. 1210, I'm bringing back 2 years, it is going to be 1000 only. Now if you want to write it in the form of a formula, yes or no everyone? Yes, I got 1000. What is 1000? It is the amount that I should be investing today. Present value is equal to 1210, which is future value. Yes or no? I am bringing it back, divide, eliminate interest. How much interest? 1.21. Yes or no? Which is nothing but 1 plus r to the power of n. Is this clear everyone? Formula chumma for time pass I am writing. I am never going to use the formula throughout. I will draw a line. I am going front means include interest into 1 plus r. I am coming back means eliminate interest, divide by 1 plus r. As simple as that. Is this clear everyone? Perfect, perfect, perfect. Okay. I hope a surface level understanding you guys have got, yes or no everyone, not a depth, simple surface level as to why the formula has come. Okay, now the maja has just begun. We'll keep on playing for the next half an hour just with these. Yes, we'll draw a line, we'll keep playing. Yes or no? Only thing is line should be straight. Whether you are straight or not, doesn't matter. Okay, yes everyone. Now tell me. I'll give you different cases. I want you guys to quickly be doing it. Okay, without taking formula, just using a line. Okay everyone? Okay, perfect. Now imagine 0, 1, 2, 3. Imagine you invest 60,000 today. Okay, rate of interest is, say for example 8% per annum. How much you will get at the end of 3 years? You're going front. If you put 1 rupee means at the end of 1 year how much you will be getting? Yes, 1 plus 8%, 1.08. So into 1.08 you will arrive at value here. Into 1.08 you will arrive at value here. Into 1.08 you will arrive at the value here. Yes or no everyone? So do it. 60,000 into 1.08 into 1.08 into 1.08. How much is going to be the value? Or into 1.08, 1, 2, 3 times you're doing. It is going to be how much? 60. Last value, third year. Yeah. 583. Something of this sort. Yes or no everyone? Perfect. Now you would be telling, sir, it is very simple for me. I would have directly done into 1.08 to the power of 3. Formula I know, na. Varying interest rate question gives you. What you will do? That is, you will tell, sir, different interest rates. Sir, I don't know what to do only. This only you are doing. You exactly don't know why the formula has come at the first place. That is why chumma you are by heart at cap. That is why when it changes, you don't know what to do at the first place. Is this clear everyone? You will do. But simple, see, from here, even if you don't do it this way, you know. 8%, 1 time, 2 time, 3 time. Yes or no? So 60,000 into 1.08 to the power 3. Is this clear? Now same story, I am flipping. Yes, I want 75,583 at the end of third year. How much should I invest today? Yes, that means I am bringing it back. Yes or no? How many years I am bringing it back? Once, twice, thrice. I am going front means I will include interest 1 into 1 plus r. I am coming back means I will eliminate interest divided by 1 plus r, divide by 1.08, divide by 1.08, divide by 1.08. So it is 75,583. If I'm not wrong, divide by 1.08 to the power of 3. I guess you should be getting close to 60,000, 59,000 something, 900 something you will be having. Is this clear everyone? Perfect. I guess you guys know how to calculate factors on the calculator. Yes or no everyone? Yes, this calculation if you want to be doing. Yes, let me show that as well because it is the basics. How to do it on your calculator? Tell me. 75,583 divided by 1.08 3 times I should be doing. So I'll do divide by 1.08 equals. First time is over, equals, second time is over, equals, third time is over. I should be getting close to 60,000. Yes or no everyone? Is this clear? Is this clear? Any doubts till now? Give me a confirmation, students. Yes everyone, one final example with that this basics we'll go ahead, discuss some more things on the, yes, time value of money. Yes, Rajnikant is there. And Raskala, mind it. Yes or no? I don't know if it is his dialogue. God knows. Okay. Now, Rajnikant is investing 100 crore in a movie today. 100 crore his fund he put in a movie. Chumma will he put? No, he would be expecting return, yes or no, everyone? Yes, he is telling that today if we start doing the work, now at the end of 3 years, movie will be over. Yes, he requires 30% return. Yes, movie will take 3 years for completion. Calculate the required collection that he wants to make this project viable for him. Yes, can we do this? Can we do this? Yes or no, everyone? Simple. What we should do? Koti, line. But line should be straight. Whether you are straight or not. Yes or no, everyone? Tell me how much Rajnikant has invested? 100 crore. When? Today he invested. Yes or no, everyone? When I want the value? I want the value for here. That means I should go front. Yes or no, everyone? I am going front means I am including interest. Yes or no, everyone? Perfect. So tell me what is my interest rate? 30%. So if I put 1 rupee at the end of first, it will become 1.3. So into 1.3 into 1.3 into 1.3. Yes or no, everyone? How much is going to be the value I am going to get at the end of third year? 219.7 crore at least collection they should be making at the end of third year. Yes or no, everyone? Perfect. Now how do we do this calculation? Look at this, students. Yes, either you can write it this way, 100 into 1.3 to the power of 3, or 100 into 1.3 into 1.3 into 1.3. Now in case of multiplication, see this factor I am multiplying 3 times. Yes or no, everyone? So this I will write it first, 1.3 into equals second time equals third time. I got the factor for third year. Into 100 you do, you will be getting the value. Yes or no, everyone? In detail, constant function for multiplication division we'll discuss some other time when it is needed. Right now I'm not touching multiple things together. Is this clear, everyone? Okay. Now Rajnikant is making a movie. Rajnikant is telling, boss, I know 3 years later, 3 years we'll have to work on the movie. At the end of 3 years, movie will release. I know that, boss, it is my movie. It will make 500 crore. And I want 30% return. That means how much maximum money I can invest today. Simple, simple, simple. Anything in the world you have to do. What you should do, the Koti? Line. But line should be whether you are class. People are watching at home. Tell. Anyway, see, you have to solve. While drawing line, I can't do anything else. At least let me keep telling the dialogue. Tell me, movie is expected to make 500 crore. When I will get 500 crore? Third year I will get 500 crore. But I want to calculate the value when? Today. Today how much I should make? Here I am standing and seeing how much I should make. So I'll have to come back, yes or no, everyone? How many years I'll have to come back? 1, 2, 3, yes or no, everyone? I am coming back. That means eliminate interest, yes or no? What is the interest? 30%. That means divided by 1.3, divided by 1.3, divided by 1.3. So 500 divided by 1.3, divided by 1.3, divided by 1.3. How much is it going to be? 227.583 crores. Yes or no? Yes or no? Yes or no, everyone? Perfect. So understand this one simple point, students. Any question on valuation, I will always draw a line. And the most important thing you guys should know is a line should always be straight. You do whatever in your real life, doesn't matter. But here line should be straight. Yes or no, everyone? Yes. And you are going front means you are including interest into 1 plus r you will do. You are coming back means you will eliminate interest divided by 1 plus r you will be doing. Till here whether things are clear. Yes or no, everyone? Perfect. So look at this, just a simple summary of what we have discussed till now. This much only we are having. Look at this, students. Time value of money, TVM techniques. First is future value. From here I am going front. If I am going front, yes, from here I am standing, I am going front. Yes or no? If I am going front means I will include interest. Yes or no? So it is into 1 plus r to the power of n. Yes. Future value is present value into 1 plus r to the power of n. Yes, from future I am coming back. That means I will eliminate interest. Yes, it is going to be divided by 1 plus r to the power of n. Yes, future value divided by present value, sorry, 1 plus r to the power of n. This is the formula. Trust me, I myself don't know the formula. Just for writing purpose I have written. 99% of the case I myself don't know the formula. Okay, in some cases when it is time for me to see the formula, I will in fact open the book and write also. Why? Because I don't remember. What is the need for us? Is this clear, everyone? Simple line. Line should be straight. Where you are standing, where you want to go. Go front means include interest. Come back means eliminate interest. As simple as that. Is this clear, everyone? Perfect. Giving you guys a minute just to let this sink in. Then we have two more beautiful concepts. Yes, two more beautiful phases of this discussion of time value of money. Yes, you guys are going to have a maja time. Okay. Yes, everyone, shall we continue our discussion? So we've had a basic discussion. It's a phase one, surface level discussion of present value, future value. I am not going to keep using the terms, jargons, formulas, nothing. For me, I will draw a line. I am going front means I will include interest into 1 plus r. I am coming back means I will eliminate interest, divide by 1 plus r. As simple as that, plain vanilla. Yes or no, everyone? Perfect. Now let us try understanding what exactly are these required rate. Okay, interest rate, what exactly is it? Let us try understanding the required rate of return. Not important from exam perspective, but still, all these are just basics. Now imagine. Yes, I am having 1000 rupees with me right now. I have two options. 1000 rupees surplus I am having with me right now today. I have two options. Either I can go to bank. Who is there waiting at the bank? Money buy is there. Yes or no? I can tell for 2 years this fund is free. I will invest. He is telling how much rate of return he is giving me. 10%. Yes or no, everyone? Perfect. That is one option. Yes, the moment when I was about to go to the bank, okay, yes, a friend comes. We'll all be having a friend who will take money from you, will promise you, bro, yes or no? And the moment you get the call itself, you'll know, oh, this is also bad debt, yes or no? He'll call, bro, too much fund issue, bro. Bro, please, bro, 2 days only, bro. Bro, I'll give you pakka, bro. Has it ever happened that I have not paid you? Always. Bro, I'm in serious emergency. I know you're going to take your girlfriend out. Bro, you're the only person I can help. I know you'll never remember me after this. But still, he's your bro. So you, despite knowing that you're going to lose the money, you give the money. That is boys' friendship. Sir, no. Fine. So, okay, but here we are not talking in terms of friendship. Only financial. Yes or no? Friendship separate. Lust separate. Only pure relationship separate. Pure money only in the class. Yes or no, everyone? Koti? Yes. Now, friend is telling, bro, that 1000 rupees you give it to me. I need it. Yes. I will give you the return. Okay. Firstly, tell me. Yes. This 1000 rupee, if I had invested in bank, how much return I would have got? 10%. Is there any risk involved in that? No. It is risk free. I'm assuming it as risk free, yes or no, because it is, yes, for to a certain level, okay, it is government backed, insurance is there, all those things are there. Government will not run. I'm telling it is risk free. Okay, fine. Now, friend is telling that, boss, 1000 rupees you give it to me. Will I give that 1000 rupees free of cost and at the end of 2 years, I will receive back 1000 rupees? No. Bare minimum, I've told you keep friendship aside. Yes or no? In friendship, you lose money also. Yes or no? Yes. Your friend will tell, Macha, I like the girl. Come, I want to go and speak to her. Come, we'll go. You will go. Yes. Her brother would be there. Okay. They will hit not just the guy who is in love. They'll hit you because you're the friend. You know you will get hit, but still you will go. Friendship rules are different. I'm talking finance. Okay. Yes. You are investing. You're putting your 1000 rupees with him. Tell me, bare minimum, how much you want? Bare minimum, how much at least you want? 10% at least you want. Why? Because in bank you are getting 10%. Yes or no? This is my opportunity cost. At least 10% I want. Yes or no? Everyone. Perfect. Imagine friend is telling macha. Yes, macha is a Kannada term. I guess it is used in Tamil also, right? All languages. Macha is macha. Okay, macha is macha. Macha doesn't have. Macha is a feel. Macha is like bro, kind of. Huh. Okay. Yes. So it all macha. In bank they'll give you 10%. Nah, I will also give you 10%. Give it to me. Will you give it to him at 10%? Understand, if you invest at the bank, it is risk free. At the end of 2 years, you have absolute guarantee. Whether you are there, not there, money will come back at the end of 2 years. Here, you are there, not there, money may not come. Yes or no? So whether you will be, is it a good advice, financially a good decision to give it to your friend at 10%? No. Why? You are taking a risk here. That means to compensate for the risk, what you want, at least some extra return you want. Yes or no, everyone? So here the required rate is going to be, the required rate of return is always going to be the risk-free rate of return plus the risk premium. Yes or no, everyone? There is only one way in the world to earn a return, that is by taking risk. If you do not take risk, put in government securities. You will be getting only risk-free rate of returns. If you want a higher return, it is only possible by taking a risk. But again, yes, in subsequent chapters, we'll get to know yes, what is systematic, unsystematic, what is controllable, all those things we'll discuss in detail. But for the time being, is this clear, everyone? Say, for example, friend is telling, bro, you have fear, don't worry. 10% it is giving you, I'll give you 5% extra, I'll give you 15%. Yes or no? In that case, we'll consider. Is this clear, everyone? Perfect. Simple. My required rate of return, it is always going to be risk-free rate of return plus risk premium. Is this clear, everyone? Perfect. Premium. Yes, why am I earning this money? Why am I earning this extra? Yes, this is the extra income I am earning for taking up the risk. Is this clear, everyone? Now tell me, why on earth am I earning risk-free? Bank, I gave 1,000 rupees. Is there a risk? No. Then why on earth bank is telling after at the end of 1 year, I'll give you 1,000 plus 10%. Why on earth am I earning the risk-free rate of return? The risk-free rate of return is given to compensate for, to combat for the inflation. It is not essentially my return. It is just a compensation for inflation. Is this clear, everyone? Say, for example, today if I had 1 lakh rupees, imagine, yes, I can purchase an iPhone. Imagine. Yes, after 10 years, I keep it in bank. They'll tell after 10 years also I'll give you 1 lakh rupees only. At the end of 10 years, can I purchase iPhone for 1 lakh rupees? No. Yes, prices will keep increasing, yes or no, everyone. To compensate for that, I am getting my risk-free. Is this clear, everyone? Risk-free rate is always earned only and only for compensation for inflation. Is this clear, everyone? So the required rate of return anywhere in the world, it is consisting of two components. One is risk-free, one is risk premium. Without taking risk also I am earning. Why I am earning that? To compensate for the inflation, because my money is stuck. Extra risk premium I am getting. Yes, why am I getting premium? Because I have taken extra risk. As simple as that. Is this clear, everyone? So additional insights, yes. Story is we can earn extra return only by taking risk. There is no concept of I want return but I won't take risk. Not possible in real life. You can earn extra return only by taking additional risk. And why on earth am I getting the risk-free rate? It is given as a compensation for inflation. Is this clear? Is this clear? Is this clear, everyone? Perfect. It's all these things from exam perspective is not important, but still you should have it on the back of your mind. Is this clear? Yes. Now we have the final thing, which is going to be a detailed understanding of time value of money and the straight line concept. What is straight line? Line should always be whether you are straight or not. Yes or no, everyone? Yes, giving you guys a minute just to let this sink in. So what we have discussed, first we have discussed basics, wherein yes, reasonably we have understood what exactly is happening. Yes or no, everyone? Yes, I am going front means include interest into 1 plus r. I am coming back means eliminate interest, divide by 1 plus r. Yes or no? Next I have understood required rate of return. It is risk free, that is for inflation, plus risk premium, extra return for yes, taking the risk. Is this clear? Now we have a beautiful concept coming up ahead for us. Yes, giving you guys a minute. Take a pause, let this sink in. Then we'll continue our discussion further, my dear students. Yes, everyone. So let us continue our discussion. A beautiful, interesting discussion coming up for you guys. This is going to be one of the most detailed, comprehensive, beautiful Maja discussion. After this, never ever I am going to touch upon this point again. And throughout everywhere valuation, I will just draw a line. I will finish it off. Is this clear, everyone? Perfect. Now, golden rule, golden rule, golden rule. I can only compare cash flows in the same period. Yes or no, everyone? Simple. Yes, 0, 1. I put 100 rupees today. I am getting 102 rupees in future. Can I compare? Can I tell, 2 rupee profit is there now, good? No. 100 rupees I have put today. 102 I am getting after first year. Yes or no, everyone? It is not comparable. That means to compare, what you have to do? Simple. All cash flow should be in the same period. Any period it can be. Either you take this cash flow here. So all cash flows are available here. You compare. Or you bring this cash flow back. All cash flows will be available here. Now, generally 99% of the cases will be calculating present value. We'll bring all cash flows here. Why? Because decision I am taking today. So the net benefit I want to know today. That is why I am doing. Or else from the decision perspective, now anywhere you take, I will show it also. We'll keep playing. Okay, it is going to be the same thing only. So simple philosophy we are going to do is cash flow is should be in the same period. All cash flow should be in the same period. And if you want to go front means you will include interest into 1 plus r. If you want to come back means you will eliminate interest divided by 1 plus r. Yes or no, everyone? Perfect. So let us try understanding this in a very simple way. Now, short-term decision making is done using the technique of marginal costing. For long-term decision making, yes, that is when my time value of time value of money, advanced capital budgeting concepts comes into picture. Simple example, I'm telling you. Imagine this calculator I purchased today. Tomorrow, quoted is coming and telling, sir, I want to purchase this calculator, sir. I don't have this calculator. Bare minimum, how much money I should be getting by selling this calculator? Tell me, at what price I have purchased? 100 rupees. Imagine, he is telling, sir, your friend, sir, I have come all the way, sir. Don't charge profit and all from me, sir. Tell me how much money I have paid to purchase 100. That means bare minimum, at least how much I should get? 100. As simple as that. Is there a concept of interest, dividend, discounting, compounding? Nothing. Why? Today you purchased, today only you are selling. Yes or no, everyone? Today you paid money 100. Today you received money 100. Everything is happening today only. Comparable. Yes or no, everyone? Perfect. But imagine. Yes, second situation I'm telling. Yes. You purchased a calculator today, you're selling also today. 100 rupees is sufficient. There is no need for interest, compounding, discounting. No nonsense. No headache only. Finish. Marginal costing. Complete chapter we did. Did we anywhere add interest, eliminate interest into 1 plus? Nothing we did. Why? Short-term decision making. Yes or no, everyone? But when it comes to long-term decision making, when cash flows are in different periods, then interest comes into picture. Slowly, we'll again start developing. Imagine. I decided once and for all. What? We are going to stop teaching. Why? No maja only in life. Yes or no? So what we decide? We'll do one maja business. We'll start manufacturing wines. Maja wines. Maja will come. Yes or no, everyone? Okay. So say for example, today, yes, I know the secret process to manufacture wine. Okay, I have the formula patented. Crazy level maja will come. Okay, so yes, imagine I will incur a cost of 100 rupees to manufacture a wine. Okay, boss, today I incurred 100 rupees. I manufactured wine. There is one peculiar nature regarding wine. You will have to store it for a period. For simplicity, I am assuming that I'll have to store it for 1 year. And imagine that this 100 rupees, I was not having the money. I got it from bank at 10% interest. Or else if I had that money, I could have invested in bank and got 10%. In any case, yes or no? You are not having money, you are borrowing. That is the cost. You are having money, you could have invested, but you are not investing. That is your opportunity cost. Both are same only. Okay. Imagine I am telling, okay, boss, I have purchased at a loan of 10%. So that means bare minimum at least 10% I want. Yes, end of first year. I am now ready to sell. Koti Reddy is coming. Sir, my 10th girlfriend. How much girlfriend? Till 10th, okay. Not 10th, till 10th standard. I'm telling 1, 2, 3, 4. The number. Okay. Okay, yes. Sir, my dad girlfriend also left me, sir. Sir, so much tension, sir. Sir, give me bottle, sir. I want to drink. I told, okay, take. He's telling, sir, 1 year back at what cost you had manufactured, sir? I told 100. Sir, take 100 rupees, sir. Sir, you don't remember, sir? I came all the way 25 hours on train to watch your classes, sir. Even though your classes was not good. Will you tell like that, Koti? I will kick you from here. Okay? Sir, no profit from me, sir. I told, okay, Koti, don't worry. Sir, take, sir, 100 rupees. Now will I accept this? Yes or no? No. Why? Because, boss, 100 I paid in first year. I am receiving 100 in first year. Whether first year 100 and 0th year 100 is comparable, not comparable. If I have to compare, what I will have to do? I'll have to bring cash flows to same period. Either this I can take, friend, or this I can bring back. Anything in the world I can be doing. Yes or no? First, let me try taking this cash flow to front and see how much it is going to be. Bare minimum, how much I want. Look at this, students. First, let me try taking it to the front. Tell me how much bare minimum I want. Tell me 0th year, how much money I have put? 100 rupees. I am telling bare minimum how much return at least I want 10% because I've taken a loan. Yes or no, everyone? So I am going 1 year front. Yes or no, everyone? Okay. So into 1.1, that means bare minimum at least how much I should be getting? 110. 100 rupees is a cost. 10 rupees is a loan. So at least 110 I should be getting. Yes or no? Bare minimum 110 I should be getting. Is this clear, everyone? Perfect. Now, or else let me try bringing my cash flows back and see if it is a worth decision or not. Say for example, I'm telling 0, 1. Quoted it is telling, sir, don't cry so much, sir. 100 was your cost, na? I will give you 5 rupee profit. Sir, eat a munch in 5 rupees. I will give. Eat, sir. Don't worry. From my end, party, eat, sir. Will I accept it or not? Now tell me. 100 I am paying in the first year. Yes or no? 105 I am getting in the, sorry, 100 I am paying in the 0th year. 105 I am getting in the first year. Can I directly compare it? Oh, 5 rupee profit is there. Can I do? No. Why? Cash flow timing is different. Okay. Now I am telling I want all the cash flows here. Okay, let me try doing. Yes or no? Let me bring the cash flows back. Here I am assuming my required rate is 10 percentage. Yes or no, everyone? So 105 I will get it in the first year. Let me bring it back. Divided by 1 plus 1. It is going to be how much? 95.45. Yes or no, everyone? So at the end of first year, that 105 that I'm getting, it is as good as 95 rupees that I'm getting today. But tell me how much money I've paid. 100 I paid. How much only I'm getting? 95 only I'm getting. That means I'm having a loss of some 5.55. Yes or no? Will I be willing to give it to him? No. He'll tell, sir, don't worry, sir. 108 I will give. Yes, tell me. 108 I'm getting at the end of first year. I want to bring it back. So let me bring it back. Divided by 1.1, it is going to be how much? 98.18. Still is it worth? Yes or no? He's telling, sir, 110 I'll give, sir. Tell me, let me try bringing it back. Yes, divided by 1.1, how much it is going to be? 100. Yes or no, everyone? My cost I have recovered. Yes or no, everyone? Perfect. Quoted is telling, yes, sir. He wants the bottle in any case. He's telling, sir, I want the bottle, sir. I'll pay 150 rupees, sir. I told, okay. Tell me, cash flows are in 2 periods. Can I compare? No. All cash flows should be in the same period. Yes or no, everyone? Either I can take this front or I can bring that back. Okay, fine. This, let me bring it back and see. Divided by 1.1. How much is it going to be? 136. So tell me, in today's perspective, today if I'm standing, I have paid 100 and I'm receiving 136. That means net benefit is how much? 36. That means will I be willing to sell it to him? Yes. NPV is positive. Yes or no, everyone? Alternatively, I can take my cash flows front and also take the same decision. Look at this, everyone. I'm telling, okay, boss, let me take a decision from this perspective. At the end of first year, how much I am getting? 150. How much I have paid? 100. But that 100 was in first year. So let me bring it front. If I'm bringing it front means I will include interest into 1 plus R. Yes, which is going to be 10%, 1.1. It is going to be how much? 110. So I will tell minus 110, which is going to be how much? 40 rupees. So I have a benefit of 40 rupees at the end of first year. So will I be willing to sell it to him? Yes. But sir, in the last case, our answer was some 35 something. Yes, 36 something, I guess. Yes. Why? Yes, correct. Because this benefit is at first year. That benefit was at 0th year. If I want to come back again take it back. No issues. We are just playing. Time pass we are doing. 40 rupees benefit I will get first year. Let me bring it back to 0th year. Divided by 1.1. How much is it going to be? 36.36. Is it tallying? Yes or no? However you do. You are going front, include interest into 1 plus R. You are coming back, eliminate interest, divided by 1 plus R. Is this clear, everyone? Give me a confirmation. Perfect. Now, same situation, but here I had only recovered my cost. I told 10% loan, but I also want a profit. Say for example, I am telling, okay, I want 2% profit. That means now my required rate of return is 10 plus 2%, 12%. Accordingly, I'll be discounting. Is this clear, everyone? Till here, whether things are clear? Fine. So look at this: present, future. Yes, from present, if I am going to future means I am going front. Yes or no, everyone? I am going front. That means I will include interest. Yes or no? That means what I will do? Into 1 plus R to the power of n. From future, if I am coming back, that means I am eliminating interest. Yes or no? Yes, discounting, compounding, future value, present value, simple. I am including interest. I am eliminating interest. Or here it is, I am adding interest, I am subtracting interest. That is the essence. But if I tell I am adding, you will do plus. I know you guys. That is why I am just telling including and eliminating. Is this clear? Yes, I am coming back. That means I am eliminating interest. That means it is going to be divided by 1 plus R to the power of n. Is this clear, everyone? Perfect. Okay. Now, look at this. All these are going to be coming in different chapters. Yes. Once this gets over, then we will calculate, okay, bond valuation, equity valuation. Everywhere this only will come. Okay. Just that in case of equity, yes, they'll give instead of cash flows, dividend, sale price. In case of bond, they'll give interest, redemption value. In case of business value, they'll give free cash flow to firm. As simple as that. Yes or no, everyone? Now look at this. There is a project. Are we ready? Yes, everyone. There is a project. We are going to play with the numbers throughout. Okay, timeline. I hope you guys are ready. Okay. There is a project. In that, I have to invest 1,000 rupees today. Okay, great, boss. If I invest 1,000 rupees today, I am expecting to receive 400, 600, 800 and 300 in the first 4 years. calculate the present value of all cash flows if the required rate is 10%. Yes or no, everyone? Perfect. The first thing we'll have to do is what? Kote, draw a line. Line should always be straight. First thing that I'm going to do is, let us draw a line. Maja is coming, coming. Hello, honey bunny. 0, 1, 2, 3, 4. And let me try writing down all the cash flows. Tell me. Today, how much I am investing? 1000 rupees I invest. Minus 1000. Yes, if I invest 1000 today, how much money I am getting? 400 in the first year I will get. 600 in the second year I will get. Yes. 800 in the third year I will get. 300 in the fourth year I will be getting. Yes or no? Tell me, what is the required rate of return? 10% per annum. Every year I want a 10% return. Yes or no, everyone? Yes, what they have asked us to calculate, they've asked us to calculate present value of all the cash flows. Yes or no? You guys can just draw this and do the calculation. Okay, yes, everyone, pay attention. Yes, so I want to bring all the cash flows here. Are we ready, everyone? Yes or no? Slowly, I'm not going to do any table, any formula, nothing. We are just going to feel what exactly is happening. I want all my cash flows here because I'm taking a decision here. Are we ready, everyone? Okay. Yes, case number 1. Tell me, students, this 1000 rupees, is it already in the 0th year? Yes. I also want it to be in the 0th year. Do I need to do anything? No. Chill. This 400 rupees, when am I getting? First year. When I want 0th year, that means how much years back I should come? 1 year back I should come. Yes or no, everyone? That means I will eliminate interest for 1 year. I will do it divided by 1.1. Yes or no? 400 divided by 1.1, how much is the number? Can you guys just tell me? 363.63. Yes or no, everyone? Now, second year cash flow. Second year, how much I'm getting? 600. But when I want, boss, I want for 0th year, boss. That means how many years back I should come? 1, 2. Yes or no? The way we do in 3rd standard, I'm explaining. Yes or no? 2 years back I'm coming. That means 2 years interest I should eliminate. So it is going to be divided by 1.1 divided by 1.1. As simple as that. Yes or no, everyone? So I will tell divided by 1.1 square. It is going to be how much? 495.86 or 87. Yes or no? I'm not going to think too much about the numerical accuracy. Just look at the feel. Okay. Now, third year cash flow. 800 I'm getting at third year. But boss, where I want all the cash flow? I wanted the 0th year. So how many years back I should be coming? 1, 2, 3. Yes or no? So divide by 1.1, divide by 1.1, divide by 1.1. That is, I will write as divided by 1.1 to the power of 3. Yes, it is going to be how much? 800 divided by 1.1 equal 601.05. Okay. Fourth year I'm getting 300 rupees. Yes, but I want all cash flows where? At 0th year, same period I want. That means how many years back I'm coming? 1, 2, 3, 4. 4 years back I'm coming. Yes or no? That means it is going to be divided by 1.1 to the power of 4. It is going to be how much, dear? 204.90. Yes, if I add all of this, 1000 I paid, I am getting 363.63, 495.87, 601.05 and 204.90. What is going to be my net benefit in terms of 0th year? Can you guys tell me the value? How much it is, da? Quickly, da. $665.45. Yes or no, everyone? 665. Whatever, I will keep it as 665, round figure. Yes or no, everyone? Perfect. That is going to be the net benefit. That means, should I be accepting or not? Yes, I should be accepting. Yes or no, everyone? Perfect. So let me just write net benefit at 0 is somewhere around 665. Is this clear, everyone? Perfect. Yes, giving you guys a minute just to let it sink in. Then this same table, I will just keep playing around with the cash flows. Every other period, I'll keep trying to calculate the cash flows. Yes, just a minute to let this sink in. Yes, everyone. Now I want to do the same set of calculation, but I'm telling boss, 0 is not my lucky number, boss. I want to take all cash flows to second period. I told, okay. Jujubi. What is it? Jujubi. Simple. First tell me, second year I'm getting 600. Do I need to do anything for that? No. Yes, these two cash flows, I have to take it front, that means I will include interest. These two cash flows, I need to take it back, that means I have to eliminate interest. Let us try doing quickly. Tell me, 400 I am getting in the first year. I want to take it front, that means I will include interest. For how many years I want to take it front? 1 year, that means 1 year's interest I will add into 1.1, yes or no? How much it is going to be? 4? 440. Now, 0th year I am having 1000. How many years front I'll have to take it? 2 years front. That means 2 years interest I will have to add, yes or no, include, yes, into 1.1 whole square. It is going to be how much? 1210. Now, third year cash flow I am having. I want to bring it to second year. That means I have to come back. How many years back I should come? 1 year back I should come. That means divided by 1.1. It is going to be how much? 727.27. Yes, 300 I'm having. It is in fourth year now, boss. Where I want second year? 2 years back. That means it is going to be divided by 1.1 whole square. It is going to be how much? 247 point. Yes, can you guys tell me what is going to be the net benefit? 600 plus 440 minus 1210 plus 727.27 plus 247.93. How much is it? 805.2. Yes or no, everyone? Perfect. Yes. Now tell me. Yes, whether the numbers are tallying or not. No, obviously it cannot tally because this is a benefit of second year. Yes. Now this benefit I want to take it to 0th year. That means how many years back I should take it? From second year I want to take it back 2 years for comparison purpose. 1, 2. So what I will be doing? Yes, this is just time pass I am doing, nothing else. Divided by 1.1 whole square. Yes, 805.2 divided by 1.1 divided by 1.1. How much you guys are getting? Somewhere close to 665. In that range only you will be getting. Yes or no? Same number only. You take all cash flows to 4th year. Bring it back to 0th year. Same number? Pakka. Same number only you will get. Yes or no, everyone? Is this clear, everyone? Perfect. So the only thing we'll be doing is, yes, we'll draw a line. Yes, we'll say where we want to take the cash flows. Now, generally for us, 99.9% of questions, we will be calculating present value only because we are taking decision today. So in today's terms, I want to know how much is the benefit. That is why I will be bringing all the cash flows to today's terms. Is this clear, everyone? Yes, few cases, yes, we want to know, okay, if today if I invest this much, in future how much I'll be getting. Yes, in that case, we'll be taking future value. Is this clear, everyone? Perfect. Now there is one more thing that we have, which is in case of different interest rates. We will do one thing. I guess this video is of approximately 75 minutes. We will stop this. Next discussion, much more beautiful. Almost end of the time value of money in case of different interest rates. Otherwise, you have to sit and yes by heart. Yes, your FV is equal to PV into 1 plus R to the power of n. It will work when the interest rate is same. If it will change, what to do, God only knows for you. If you draw a line, whatever happens, line will be straight only. Your decision making is also going to be simple only. Is this clear, everyone? Okay, perfect. So let us quickly try, yes, summarizing what we have discussed till now. Yes, time value of money. Yes, simple. Whenever we are taking a decision, long-term decision, I will be having cash flows in a different periods. And tell me, is it possible to directly compare the cash flows of the different periods? No, boss. So for that purpose, we have a technique. Simple rule is all cash flows should be in the same period. So either I will be taking my cash flows to the front, which is I will be taking my cash flows to the future value. It is also called as compounding. I am going front. That means I will include interest into 1 plus R to the power of n. So my future value is present value into 1 plus R to the power of n, but we will never be touching this formula. Or we will be coming back. I will eliminate the interest. Yes or no? Divided by 1 plus R to the power of n. So that is why I am having present value is equal to future value divided by 1 plus R to the power of n. Trust me, we are never going to use this. The only thing we'll be using is, yes, we will draw a line. We will see all the cash flows. We will see where we want. If I want my answer in the future, I will include interest. I will do into 1 plus R. If I want to come back, I will eliminate interest. As simple as that. Trust me, entire subject will be halwa. Unless you complicate things. Yes, the subject is very simple. Unless you decide to complicate it by sitting, by hurting formulas, by cramming things. Yes, so let us keep it simple. I hope you guys have thoroughly enjoyed this discussion. Yes, for some of you guys, you might have felt so much was not needed, but trust me, I know the entire syllabus. This was just day one for you guys. I know the entire syllabus. I know if I'm investing 1 hour, on explaining you guys just time value of money, it is because it is going to save you minimum 6, 8, 10 hours when we are solving questions. Trust me on this, my dear students. Is this clear? So that's all for this session. See you guys in the next session. Yes, immediately after a short break, we'll go ahead to continue our discussion. Thank you so much, my dear students. Yes, everyone. So hello, hi, namaskaram, and good morning, students. Good morning, everyone. I hope you guys are doing really, really well. Students, it is late in the evening. From morning, I've just been standing. But when the energy is very low, you'll have to give that artificial push from within to get that energy. So we have approximately 1 hour more of recordings for the recorded students. You can watch it anytime. You are sitting, sleeping, watching. Okay, fine. So we are in the middle of a very interesting, beautiful Maja concept. Time value of money. Very simple. My cash flow should be in the same period. If I have to take my cash flows front, means I will include interest. I will do into 1 plus r. If my cash flows I'll have to bring it back, means I will eliminate interest, divide by 1 plus r. As simple as that. Is this clear, everyone? Okay, now let us try seeing in case of different interest rates, what is it that we'll be doing? Okay, beautiful, beautiful, beautiful. Yes. Now, what is it that, okay, I guess I've come to another place. Okay, fine, 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 fine. Okay, in case of different interest rates, first let us begin it very simple. Imagine I go to bank today. I am telling boss, I want to invest 100 rupees for 2 years. He told, okay. I ask how much is the interest rate. He'll tell whatever is the prevailing rate every year, we'll give it to you. I told, okay, fine. So today I am standing. Maja is coming, hello honey bunny. Okay. Tell me. Today how much I invested? 100 rupees I invested. Yes or no, everyone? Perfect. Now, today I see for the first year, the rate of interest is going to be 10% per annum. Tell me how much I've invested? 100 rupees. 10 percentage rate of interest means for the first year, how much interest I will get? 100 into 10 percentage, 10 rupees. That means how much I will be getting? 110 at the end of first year. Yes or no, everyone? Perfect. First year end. Now total how much money is with the bank? 110. I ask boss, second year what is the interest rate? They tell boss, today prevailing interest rate is 12%. That means for the second year I will be getting interest at 12%. Yes or no, everyone? Perfect. That means tell me students, on 110 12 percentage is going to be how much? How much? 13.2. So 110 plus 13.2, it is going to be how much? 123.2. Yes or no, everyone? This much at least from second, third standard we were doing. Or if you want this, you can do as a table also. Opening balance plus interest, closing balance, year 1, year 2. Who wants this? Draw a line, sufficient. Is this clear, everyone? Now, the same thing I will try writing in a slightly different way. Pay attention. Same thing only. Look at this. But I need not do it for every year. Tell me 0, 1, 2. How much I am investing today? 100. Where I want the value? At the end of second year, this is where I want the value. Yes or no? Tell me students, first year what is my interest rate? Rate of interest is 10%. Second year what is my rate of interest? 12%. Yes or no, everyone? Now tell me, first year I am going front. Include interest into 1 plus r. But first year what is the interest? 10%. So into 1 plus 10%, 1.1. Yes or no, everyone? Perfect. Second year again I will include interest. But boss, second year what is my interest? 12%. So into 1.12. So tell me what is going to be the value? 100 into 1.1 into 1.12. 123.2 only. Yes or no, everyone? Simple. Okay, now let me try coming back. Again, here if you want to have formulas, I can give you formulas. CF5 divided by 1 plus R4 into, 1 plus, no, 1 plus R4 plus 1 plus R divided by 1 plus R3. So some nonsense happens. Who knows? Who cares? Draw a line. In third standard, why did you learn to draw a line? Because you should know your line should always be straight. Okay. Yes, everyone. Now I am reversing the situation. I am telling that boss, at the end of 2 years, now I want 123.2 rupees. First year interest is 10%. Second year interest is 12%. How much I should be investing? I know my answer should be 100 only. Yes or no, everyone? Now let me try doing it. Obviously no formula, nothing. Simple. Only one thing we'll do throughout in 180 hours of classes. What is it, Dakoti? We will draw line. But I'll teach you how to draw a line which is straight. Tell me where I want 123.2. second year I want, yes or no everyone? Yes, I want to know how much I should be investing today. 0th year, yes or no everyone? Perfect. Tell me, first year how much is my rate of interest? 10%. Second year is how much is the rate of interest? 12%. Yes or no everyone? Now previously I could directly pull off divide by 1 plus r to the power of n because interest rate was same. Here I'll have to do individually. Aram se. I am coming back means eliminate interest. Yes or no everyone? Perfect. Tell me. First year I'm sorry. Second year to first year I'm coming. This year what is the interest rate? 12%. So that means divided by 1.12. I will arrive at first year. From first year again I want to come to 0th year. There what is the rate of interest? 10% divided by 1.1. So 123.2 divided by 1.12 divided by 1.1. How much you guys are getting? 100 you guys are getting? Yes or no? Yes or no? Yes or no? This was a basic example. Now let us add some maja. Yes or no? Different cash flows, different periods, different interest rates. Let us try having one hell of a maja. Are you guys ready? Yes or no? Class, are we ready? Perfect. Okay. Now for me, last 2 days I have not slept. Okay. I guess I have slept at I guess around 5 or something. So 4.5 hours sleep I've survived. 2 days. Today after setting everything, apart from looking at this background, setting this background image, everything I did, 5 o'clock I slept. 9 o'clock I woke up. So 2 days I have just slept for 4 hours each. So literally I'm like flying in the air, half. So that is why I'm trying to put more energy than what I normally do because I have to push myself for 1 hour. Okay, fine. Now look at this, very simple, my dear students. Look at the example. We are investing 1,000 rupees in a project today. Correct, boss. We expect to receive 400, 600, 800 and 300 in year 1, 2, 3, 4 respectively. Great, boss. Calculate the present value of all the cash flows if the required rate is 10%, 12%, 14% and 20% for 1, 2, 3, 4. That is first year if I would have invested, nah, bank would have given me 10%. I'm just assuming bank. Second year they would have given me 12%. Third year they would have given me 14%. Fourth year they would have given me 20%. That is my required rate of return. That means tell me what is going to be the present value. We'll do everything in the world. First step is what? Line. Line should always be straight, whether you are straight or not. Koti. Ha. 0, 1, 2, 3, 4. Let me write down the cash flows. Tell me, I am investing 1,000. That means I am putting 1,000. Cash outflow, I am paying 1,000 today. Yes or no? Perfect. I am getting, how much I am getting? 400 I am getting. 600 I am getting. 800 I am getting. 300 I am getting. Perfect. Yes. Now tell me what is the interest rates for each of the years. First year my interest rate is 10%. Second year it is 12%. Third year it is 14%. Fourth year it is 20%. Yes or no everyone? First what we'll do is we'll try bringing all cash flows to 0th year. Then we'll play also. That way this we also will play. Now giving you guys a minute. If you want you can try it, or else we'll do one thing. It's anyways late now. We'll do it together only. No issues. Color. Which color do you want? This color. Let us choose. First. Pay attention. Easy everyone. Perfect. Now look at this. 0th year cash flow. I want to bring all my cash flow where? 0th year. This 1,000 is already where? 0th year. Do I need to do anything? No, boss. Chill panunga. Okay. 400 I am getting in the first year. Where I want to bring my cash flow? 0th year. Yes or no everyone? That means I have to bring it back. Yes or no? How many years I need to bring it back? 1 year I need to bring it back. Yes. What is the interest rate? 10%. That means I will do divided by 1.1. How much is it going to be? 400 divided by 1.1. Students, 363.63. Is this clear? Now slowly, patiently. Second year, how much cash flow I am getting? 600 I am getting. Yes or no everyone? But I want to bring my cash flow where? 0th year. How many years back I should be bringing it? 1, 2 years back I should be bringing it. Yes or no? But I will eliminate interest, but very careful, very simple. Look at this. Yes, here I am eliminating for 1 year. I should eliminate 12% divided by 1.12. Here again I am eliminating 1 year. Here it was 10% divided by 1.10. As simple as that. Yes or no? So this I will show it this way only. So here it was divided by 1.12. Here it was divided by 1.10. 600 divided by 1.12 divided by 1.10. How much is going to be the number? 487.01. Is this clear, everyone? Third year cash flow, third year cash flow, third year cash flow. How much I'm getting in third year? 800. How many years back I have to bring? 1, 2, 3, because I want it to 0th year. Okay, let us do it. Jujube, yes or no, everyone? Tell me, from here I'm bringing. From third year to second year, what was the interest rate? 14%. So I will bring it back 1 year, divide by 1.14. Again, one more year I'll bring it back, divide by 1.12. Again, one more year I'll bring it back, divide by 1.10. Yes, can you guys tell me 800 divide by 1.14, divide by 1.12, divide by 1.10? How much is it going to be? 569.60. Now, fourth year I'm getting 300. From fourth year, where I want to bring it to? 0th year. Okay. Okay. How many years I should bring it back? From 4 to 3 to 1, 0. 4 years back I'll have to bring it. Simple. Yes or no, everyone? So tell me. Let us try doing it. From fourth year to third year, 20% divide by 1.2. Again I'm coming back, divide by 1.14. Again I'm coming back, divide by 1.12. Again I'm coming back, divide by 1.10. What is going to be the value? 178. If I add all of that, minus 1000, yes, 363.63, 487.01, 569.6, and 178. What is going to be the summation of the value, students? 590. 598.24. Yes or no, everyone? Perfect. Absolutely clear. No doubts at all. Yes or no? Perfect. Now the same thing, let me try with another period as well. Okay, I will take all cash flows to second period. For you guys, assignment, take all cash flows to first period and do. Take to second and do. Take to third and do. Take to fourth and do. What is there? Draw a line, take front, bring back. As simple as that. Then your net value, you can again play it. If you want to take it, bring it to 0th period. Everywhere you can keep playing around. Okay. Yes. Now again. Let me draw a line, or let me copy this one only, or let it be there. Let me draw a fresh line. Okay. There should be no hesitation in drawing a line, so long as your line is straight. 0, 1, 2, 3, 4. Tell me how much money I'm putting? 1000. How much cash flow I'm getting? 400, 600, 800, 300. 400, 600, 800, 300. 400, 600, 800. Okay. 10, 12, 14, 20. 10, 12, 14, 20. We'll select another period. Which period we'll select? Second period is fine. We'll bring all cash flows to second period, so that too much calculation is not there for us to play along. Okay, fine. Now I am telling boss, 0 I don't like. I want all cash flows to second period. Okay, let us do. What is a big deal? Yes or no, everyone? Now tell me, firstly, 600 I am receiving in second period. I want cash flows also for second period. Is there any tension? No tension, boss. Jujibi, sit aram se. 400 I am getting in the first year. Where I want to take it to? Second year I want to take it to. That means 1 year front I need to go. Yes or no, everyone? Perfect. Yes, tell me. Yes, 1 year front I'm going, means I will include interest. What is the interest rate there? 12%. So into 1.12, it is going to be how much? 400 into 1.12, 448. Yes or no? 0th year I am paying 1000. I need to take it front. How many years? 2 years front I need to take it. That means 2 years interest I will include. First year is 10%, so into 1.1. Second year is 12% into 1.12. It is going to be how much? 1000 into 1.1 into 1.12. 1232. Yes or no, everyone? Perfect. Yes, third year I am getting 800. I want to bring it back to second year. How many years back I am bringing it? 1 year back I am bringing it. So 1 year interest I will eliminate. Yes or no, everyone? What is the interest rate? 14% divided by 1.14. How much is it going to be? 701.75. Yes or no? I'm trusting you guys. In the end, if it doesn't tally, means I will make you guys run from here. See? Yes. Fourth year I'm getting 300. Okay, how many years back I have to come? 2 years back I have to come. From fourth to third, third to second. Yes or no, everyone? Perfect. Yes. So from fourth to third, interest is 20%. That is 1.2 divided by 1.14. Tell me how much is it? 300 divided by 1.2 divided by 1.14. 219.298 or 29. Yes or no? Yes. Add all of them. 600 plus 448 minus 1232 plus 701.75 plus 219.29. How much is it going to be? 737 point. The what you guys are doing, da? He's only telling. And because he is quoted, he is only telling, I'm afraid also. Correct, right? Okay, fine. Now, 737.03 is the benefit. When? Second year, yes or no? I am telling, I want to calculate this benefit to 0th year. Okay, done, boss. No issues only. GGB. From second year, 2 years back I will go. Yes or no? Here it is 12%. Here it is 10%. Divide by 1.12. Divide by 1.10. How much is the value going to be here? 598.24. Here also I guess 598 point. Oh, crazy. You told same number, huh? 598.24, 598.24. Is this clear, everyone? Perfect. Absolutely nothing there. Okay. With this, if cash flows are for limited period, same rate, different rate, from front, back, front, anything in the world. Simple philosophy. If you have to take your cash flows front means include interest into 1 plus R. If you have to bring your cash flows back means eliminate interest divided by 1 plus R. As simple as that. Draw a line. Line should always be straight. Yes or no, everyone? Till here, whether things are clear. Everyone give me a confirmation, students. Online live students. Yes, everyone. So let us continue our discussion, students. Pay attention. Yes, with this, we have finished a good detailed discussion on time value of money. Yes or no, everyone? Very simple. Time value of money is telling that, boss, cash flows in different periods you cannot compare. That means we have to bring all the cash flows to the same period. How you do? Either you are taking cash flows to the future. It is called future value or compounding. Or you are bringing your cash flows back to the present. It is called present value or discounting. Yes or no? The way we have told it, we will draw a line. Yes, I have to take my cash flows front. Means I will include interest into 1 plus R. I have to bring my cash flows back. Means I will eliminate interest divided by 1 plus R. Same interest rate, different interest rate. Same cash flow, different cash flow. Whatever happens in the world, we know how to do it. Is this clear, everyone? Perfect. Now, some additional pointers. Let us try doing it. Yes, this is going to be the summary. You guys can write it down in your book. Now, generally, what I will be doing is, yes, so many charts are there. I generally do not prefer writing all the charts. Yes, first header I will be writing. What happens is, see, all these things I feel it is needed for you based on our classroom discussion. But all these things, if I handcraft and keep it, it will not look as good as that as required. So I generally leave space so that we guys write it together in the class as well. Okay. But sometimes once I've discussed this I've discussed, written so many times, at the end I will not again write it here, because again I'm writing, again I'm spending time. That time I'll give you time. You guys can pause the video, write it down. Is this clear, everyone? Perfect. Now for online live students, you can take a screenshot or I'll share the PDF with you guys. Don't worry. Okay, everyone. So now, yes, a simple final thing. Yes, I want to calculate present value. 99% cases will be calculating present value. Why? Because decision I am taking today. So different cases can be there. Yes, cash flows, they can either be for the limited period or cash flows can be for unlimited period. That is perpetual cash flows. How to do this? This is done. Story is over. Yes or no? First, let me try understanding if cash flows are for limited period, how to do. Now, in that case, again, two bifurcations could be there. Either it could be uneven cash flows or it could be even cash flows. Let me try showing. Imagine you invested in a project. Three-year project it is. Situation 1. Every year you are getting, say for example, 500, 500, 500. You invest in a project, you are getting same cash flow every year. You are getting equal cash flows or even cash flows. Yes or no, everyone? Yes, even cash flows or equal cash flow means you are getting same cash flow every year. Uneven cash flow, you invested in a project. First year you are getting, say for example, 400. Second year you are getting 800. Third year you are getting 1200. Random numbers. Every year you are getting different cash flows. Yes or no, everyone? Sir, where will we be getting different cash flows? Suppose you invest in a business. Suppose you purchase the share. Whether it is necessary that you should be getting the same dividend every year? No. If they want, they'll distribute. Okay. Yes. You purchase the bond. 10% bond having a face value of 1000. Every year you will get 100 only. There's absolutely no change. Yes or no, everyone? Perfect. Whatever it is, let us try seeing how do we calculate present value. The philosophy principle is going to be the same only, but in case of even cash flow, there's a shortcut to do it faster. That we'll be discussing. Is this clear? Okay. Now, Uneven cash flow, it refers to a situation where cash flows are different every year. Every year I'm getting different cash flows. Even cash flow, it refers to a situation where cash flows are same every year. Let us try understanding more on this through an example. It is example 1. Now we have something called as a workbook. In workbook, before we solve questions from the institute, I would have handcrafted some questions. It will include sometimes basic questions, sometimes comprehensive questions, all those things. We will be doing it before going to the main question discussion, so that once we do this, once we are doing the main questions of institute, it becomes very simple for us. So look at this everyone. Time value of money, first example, in case of uneven cash flows. Maja Limited, imagine we started a company, Maja Limited. We start a new project that is expected to generate the following cash flow. This much cash we are expecting. What all? Year 1 we are expecting to receive 1000 rupees. Year 2 we are expecting to receive 3000 rupees. Year 3 we are expecting to receive 10,000 rupees. Calculate the present value of all cash flows. If required, it is 10%. Yes or no, everyone? Perfect. Do we know how to do this? Simple. What we have to do? Present value. For that, what is the first thing we should do? Draw a line. People at home, what do we have to do? Draw a line. Line should be straight. Yes or no, everyone? So always first thing I will be writing is pictorial representation. Now even for solution, when I am doing it in the class, I would have kept all these headers the way I explain. Why? Because I don't want to be spending more time drawing columns and all those things. But when you're getting your book, your workbook will be having only examples. Is this clear? Because in the exam format will not be there, and even in the format nothing is there, just these tables are there so that answer looks more clean, or else I have the tendency of just scribbling. Is this clear, everyone? So first step, always what we have to do? Kote, draw a line. Should always be straight. Tell me how many years I'm getting cash flow? 3 years. So 0 today I'm standing 1, 2, 3. Tell me how much? 1000, 3000, 10,000. Yes or no, everyone? Perfect. Tell me what is the rate of interest? 10%. Every year it is same. I need not write it, but still okay, let it be there. Tell me where I want all the cash flows to be. Yes, I want to calculate the present value of all the cash flows. That means I want my cash flows to be here. Yes or no, everyone? Perfect. Slowly let us try pulling it off. Yes, first I have my first year. First year I'm getting 1000. Yes, I want to bring it back. How many years I'm bringing it back? 1 year back. So I will write it as 1000 divided by 1.1. Yes or no, everyone? Yes. 90. Okay, fine. Let me write down the values also. 909.09. Okay. Second year, I'm going to get how much? 3000. How many years I have to bring it back? 1, 2. Do not miss at all. Simply, aram se you see how much? 1, 2. Yes or no? 2 years back, I'm going to bring it back. That means it is divided by 1.1 divided by 1.1 or divided by 1.1 square. So I will write 3000 divided by 1.1 square, which is going to be how much? 3000 divided by 1.1 square. 2479.33. Koti, what happened? Okay, fine. Okay. Third year, how much you are expecting to receive? 10,000. That is third year, na sir. Where I want? 0th year, na sir. How many years back I should come? 1, 2, 3. So it is going to be 10,000 divided by 1.1 to the power of 3, which is going to be how much? 7513.15. Yes or no, everyone? Perfect. Tell me 909.09 plus 2479.33 plus 7513.15. How much is the total value? 901.57. Yes or no, everyone? Till here things are clear. If we want, we can write it as a formula also. Simple. Yes, this is, first I will write the answer. Yes, throughout my calculation is such that first I will write the answer, then I will write the formula reverse. Okay, look at this. If you want, this is cash flow 1. First year how much you are getting? How many years back you should bring? 1 year back, divided by 1 plus r. Yes, 3000 is cash flow 2. Second year how much you are getting? Yes, how many years back you are bringing? 2 years, divided by 1 plus r square. Yes, plus 10,000 is cash flow 3 divided by 1 plus r to the power of 3. Yes or no? So on and so forth. If I do, I will be arriving at the present value of all the cash flows. Is this clear, everyone? Simple. Absolutely no issues. Yes or no, everyone? Perfect. Now, this we did it directly, either using a formula or by looking at a line. There is one more way to do it. It is using a table. Generally most of the questions will be adopting the table approach. I will be drawing a line so that I get to know exactly what it is, and then I'll be using through a table approach. Now how exactly we'll be doing using a table approach? Look at this, 4 columns I'll be having: year, cash flow, present value factor, present value. Tell me year 1, 2, 3, 4. Cash flow is going to be how much? 1000. 3 years only da Koti. 1000, 3000, 10,000. Yes or no, everyone? Now understand, students. Here, 1000 divided by 1.1. Can I write it as 1000 divided by 1.1? Can I write it as 1000 into 1 by 1.1? Yes or no? Second year cash flow, I guess, is 3000 by 1.1 square. So 3000 into 1 by 1.1 whole square. Yes or no, everyone? Third one is 10,000 divided by 1.1 to the power of 3. Can I write it as 10,000 into 1 by 1.1 whole to the power of 3? Yes or no, everyone? Perfect. So here what I will do, these are called the present value factors. Yes or no? From foundation days you have been studying. Yes or no, everyone? Present value factors. It is technically 1 divided by 1 plus r to the power of n. Yes or no, everyone? So tell me, for first year, how to calculate present value factors on your calculator? Yes, 1 divided by 1 plus r equals, one time if you press, you will be getting the factor for first year. How much it is? 0.909 equals 0.826 equals 0.751. And here I will multiply these. Yes or no, everyone? Why am I multiplying, sir? There we were dividing now. This is what I've done. Yes or no? 1000 divided by 1.1, I wrote it as 1000 into 1 by 1.1. Yes or no? Basic. Yes or no, everyone? Yes. So it is going to be how much? 1000 into 0.909, 3000 into 0.826, 10,000 into 0.751. Add all of that, give me the total value. 10,901.57. Is this clear, everyone? Yes or no? Yes or no? Yes or no? Simple. In case of uneven cash flows, every year there will be different cash flows. What you'll have to? You'll have to discount them. Is this clear, everyone? Yes. Either you can directly discount using the formula CF1 divided by 1 plus r plus CF2 divided by 1 plus r square plus CF3 divided by 1 plus r to the power 3, so on. Or you can use a table wherein you write year, cash flow, present value factor, present value. Is this clear, everyone? I hope this is clear. Absolutely no doubt. Yes or no, everyone? Perfect. So look at this. I have written things down here. Yes. Here I will discount each year's cash flow separately and add them. Every year's cash flow separately I will keep on discounting. Yes or no? So formula is going to be first year cash flow divided by 1 plus r, second year cash flow divided by 1 plus r square, so on till nth year cash flow divided by 1 plus r to the power of n. Or alternatively, we can go for a table, wherein how we'll be drawing a table: 4 columns, year, cash flow, present value factor, present value. Yes, year 1, 2, so on, it will go up to n. Cash flows I will write. Present value factor, it is nothing but 1 divided by 1 plus r to the power of n. Yes, I will multiply the two. Cash flow into present value factor. I will get this. I will make a summation of this. This is going to be the, yes, total present value of all the cash flows. Is this clear, everyone? Perfect. Now coming to, in case of even cash flows, say every year I am getting same cash flow. How to do, sir? Let us try seeing an example. Okay. So let us come to example number 2 from our workbook, wherein we are getting the same cash flow. Look at this, students. Maja Limited starts a new project that generates cash inflows of 1000 rupees per year for 4 years. Every year, how much cash I'm getting? 1000 I'm getting. For how many years I'm getting? For 4 years I'm getting. If the required rate of return is 10%, calculate the present value of all the cash inflows. I know that you guys know this already, but still, okay, from my end, one time only we are anyways doing it. So look at this, look at this, look at this. What is the first step? What is the first step, Kote? Line, should we? Whether you are straight or not. Yes, everyone. So look at this. So I will tell 0th year, first year, second year, third year, fourth year. Fine. So now tell me, every year how much I'm getting? 1000, 1000, 1000, 1000. Yes or no? Yes, I want to bring all my cash flows to 0th year. So tell me, first year cash flow, how many years back I should pull? 1 year back. So divide by 1.1. Either I can tell 1000 divided by 1.1. Second year cash flow, how many years I need to pull it back? 2 years. So it is going to be 1000 divided by 1.1 square. Yes, third year cash flow, how many years back I need to pull it back? 3 years. So 1000 divided by 1.1 to the power of 3. Fourth year cash flow, how many years I need to pull it back? 4. That means 1000 divided by 1.1 to the power of 4. Yes or no, everyone? Yes, do this and tell me what is going to be the value. 369 something. 3000. How much? 31 sufficient. Yes or no, everyone? This we know. Nothing great in this. From past 1.5 to 2 hours, we are doing this only. But let us try doing something else as well. Yes, everyone. Look at this, look at this, look at this, students. Now pay attention. Assume I am having a simple equation. 2 into 5 plus 2 into 8. Both the places you see, 2 is getting multiplied. So you can take 2 out as common. Into, you can do 5 plus 8. So 5 plus 8 is 13. 13 into 2 is going to be 26. 2 5s are 10. 2 8s are 16. 10 plus 16 is also going to be 26. Yes or no? Now in case of same cash flow, look at the beauty. Look at the beauty. Every year you see this. Let me rewrite the cash flows as follows. 1000 into 1 divided by 1.1. Second year, 1000 into 1 by 1.1 square. Yes or no? Plus 1000 into 1 by 1.1 to the power of 3. Or a second, directly write in the denominator also. It is not going to make a difference anyways. It is 1 in the numerator. Plus 1000 into 1 by 1.1 to the power of 4. So if you clearly observe here, 1000 is getting multiplied everywhere. Yes or no? So I will take it out as common. Okay. Square. Okay. Sometimes I intentionally commit mistakes just to see if you are doing it right or wrong. Recorded students, chumma you were writing, na? I came to know. See what all I'll have to do for you guys to ensure you guys are alert in the class. Okay, now look at this, look at this, look at this. 1000 into, first figure is 1 by 1.1. Second figure is 1 by 1.1 square. Third figure is 1 by 1.1 to the power 3. Fourth figure is 1 by 1.1 to the power of 4. Yes or no, everyone? Yes. Now 1000 into, how to calculate these factors on the calculator? Now technically I want you guys to be having a calculator which has the following functions: plus, minus, into, divide should be there in the calculator. All numbers should be working. It should not happen that 8 is not working. Okay, and then m plus, m minus, mrc, that is one function you should be having. Yes, grand total function you should be having. gt you should be having. Second thing, square root option you should be having. Sufficient. Okay, now how do we take it? Yes, 1 divided by 1.1 equals, once if I press I will get year 1 factor, twice if I press I will get year 2 factor, 3 time I press year 3 factor, 4 time I press 4th year factor. Now I've got all the 4 years factor. I want to take a grand total of that. I will press a GT. It will give me the factor. Yes or no? It is going to be 3.169. Yes or no, everyone? Perfect. So 1000 into 3.169, it is 3169. Yes or no? And this factor is called the present value annuity factor. Individually those factors are called present value factor. 1 divided by 1.1, 0.909. This is called present value factor of 10% for 1 year. Yes, this is called present value factor, PVF, of 10% for second year. This is called PVAF, present value annuity factor. Yes or no, everyone? Perfect. So that means what I can be doing is, yes, instead of doing all these individually, yes, alternatively, yes, this I have just shown it as a proof. Yes, I am erasing it, or could have been there, I guess. Yeah. Alternatively, let me just write alternatively. Every year I am getting cash flows 1000 into, I want present value annuity factor for 10% for 4 years. Yes or no? Yes. Present value annuity factor 1 divided by 1.1 equal. Grand total it is 3.169. 1000 into 3.169. It is going to be 3169. 6. Yes or no, everyone? I hope this is also clear. Perfect. Now I can do this in the form of a table also. Now in the table, if you want, you can write 1, 2, 3, 4. You can write the cash flow. That way you can do long approach. But what I am going to do is, whenever I'm having same cash flows, tell me year 1 to 4. I know every year I'm going to get 1000 only. So I will do it in the form of a table, but I will write my cash flows like this. Year 1 to 4, every year I'll get 1000 rupees cash flow. Here I'll have to write the present value factor and tell me here I'm getting it for multiple years. So I'll be using the present value annuity factors. Yes or no? Present value annuity factor for 10% for 4 years, which is going to be 3.169. So 1000 into 3.169 is 3169. Is this clear, everyone? Till here, absolutely no issues. Chill. Now, if that is the case, we will take one step further. This is going to be the last step. Pay attention, pay attention, pay attention. Maja Limited starts a new project. Great. That generates cash inflow of 1000 per year for 4 years. First 4 years, how much cash inflow I'm getting? 1000, 1000, 1000, 1000. Additionally, company can sell all its asset and realize 10,000 at the end of 4th year. Oh. 1000 anyways I'm getting, but at the end of 4th year extra 10,000 also I'm getting. If required rate is 10%, calculate present value. First thing, most important thing is draw a line. Line should be straight. 2, 3, 4. Now tell me every year how much I'm getting? 1000, 1000, 1000, 1000. Additionally, 4th year, how much extra I'm getting? 10,000. Yes or no? Every approach, let us try doing it off. First detailed approach, let us use annuity factors, do it. All those things we'll do it. Now, first, tell me individually, let me do it. First year, 1000 I'm getting. How many years back I should bring? 1 year divided by 1.1. Second year, I'm getting 1000. How many years I have to bring it back? 2 years, 1.1 square. Third year, I'm getting 1000. How many years back I'll have to bring it back? 3 years. Fourth year, I'm getting 10 plus 1, 11,000. 1.1 to the power of 4. Yes, can you guys do it individually, discount this and tell me the total value, students? Yes, everyone, you are going to get a value of 10,000. Yes or no? Perfect. Now, alternatively, in a very simple way, I'm going to show it to you guys. Pay attention, pay attention. Slowly, phase by phase, let me pull it off. Tell me, year 1, 2, 3, 4, every year, I'm getting 1000. So, first, let me take care of that. So, I will tell boss. Yes, year 1 to 4, every year, I'm getting 1000. This comes every year, so I'll be using present value annuity factor. So I want a present value annuity factor for 10% for 4 years. It is going to be how much? 3.169. Yes or no, everyone? So it becomes, I guess, 3169 something. Now, apart from that, is this the only cash flow? No, sir. 4th year end, again 10,000 extra also I am getting. Okay, boss, which year? 4th year end, again 10,000 also I am getting. Yes, this has to be brought back how many years? 1, 2, 3, 4. So it is going to be, yes, present value factor of 10% for 4 years. 1 divided by 1.1 equal 4 years. What is the value you are getting? 683. Yes or no? You add all of that, you should again be getting 10,000. Don't tell me, sir, I'm getting 9,999.999 only. I'll come to your home and Koti Reddy will hit you. I won't do anything. I'm Papa person. Is this clear, everyone? So simple. Yes, when I'm having one cash flow which is same throughout, for that I will use PVAF. For all other factors, I will be using the PVFs. Is this clear, everyone? Same with the slightly different numbers. Look at this, everyone. Tension Limited starts a new company that generates cash inflows of 50,000 per year for first 5 years. Additionally, it can sell assets and realize 60,000 at the end of 5th year. If required, it is 20%. Calculate present value. I will just draw a line and directly in the table finish it off. Look at the students. 0, 1, 2, 3, 4, 5. But this is important. Always have this line so that you get to know what exactly is happening. Tell me every year how much you are getting. 50, 50, 50, 50, 50. Additionally, 5th year and extra how much you are getting? 60. Yes or no, everyone? So first let me take this same cash flows. I will tell boss, year 1 to 5 I am getting 50,000. Can you tell me the present value annuity factor of 20% for 5 years? It is 20%, right? 20% for 5 years. Can you tell me the value? 2.9906. Fifth year, additionally, how much you are getting? 60,000 you are getting. That also let me discount. This is one time cash flow. Let me discount individually. Yes, 1 divided by 1.2 to the power of 5. You will be getting one figure. Multiply, add, give me the total value, final value. How much you guys are getting? Not 0 point, the final total value of the asset. What is happening, guys? Into 60,000. Okay, how much you guys are getting? 643. Yes or no, everyone? Now, how do you guys take these values also? Here also there is a shortcut in which again you can save some 10-20 seconds. Look at this. You guys are taking your present value annuity factors. Now, 1 divided by 1.2 equal, 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 equal. You press equal 5 times. Now, if you press GT, you will be getting present value annuity factor. You also want the present value factor. So, what you do is, first you write the present value factor. It is 0.4019. Then you press the GT grand total. You get the present value annuity factor, which is 2.9906. If you are not having grand total, you can go for M plus also. But it is unnecessary waste of time. Go for a calculator which has M plus. Sorry, grand total GT. Is this clear, everyone? Give me a confirmation. Is this fine? Perfect. Yes, with that, in case of cash flows for limited period, what is the approach that we will have to follow is completely over. Yes, everyone. So look at this, look at this, look at this. Yes, if cash flows are same for all the years, then cash flows are same for all the years. We have two options. Either I can discount separately or I can use present value annuity factors. Either you discount separately or you do cash flow into PVAF. And if you are going to planning to use the table, yes, it is going to be same table only, but how we are going to write? Year cash flow present value factor. Okay, just a minute. Present value. Yes, I will write year 1 to n. I will write down the cash flows. I will write down the present value annuity factor here, and then I will multiply, arrive at the present value, and I will do a summation. Is this clear, everyone? Perfect. Yes, I guess right now it's slightly blurred. Morning, this issue was not there, right? Right now only it has started. Huh? Is it there? Huh? Yes, everyone. So with this, we have finished the basics of time value of money. Then, if cash flows are for limited period, be it same cash flows or different cash flows, what is it we'll have to do? We have completely understood. Is this clear, everyone? Let us quickly summarize whatever we have discussed from the start till now, from the very scratch. First, we have started the story with value, understanding value. Yes or no, everyone? So there are three simple principles we understood. First is value versus price. Value means how much benefit I am getting. That is how much I should be paying. Price is how much I am actually paying. I will invest only in assets where the value is greater than or equal to the price. Third, what is value? It is, yes, how much benefit I am getting. That is future cash flows. Bring it to present. It is present value of future cash flows discounted at required rate. Okay, point number one, we passed. Then we went to cross multiplication. Yes or no? Basic technique wherein, yes, we'll multiply in cross. The pair having a question mark comes to denominator, the other pair goes to numerator. Yes or no? Then we went to time value of money. Yes, there we have understood a very simple thing. I want to take a decision, compare. I want all my cash flows in the same period. But when I'm getting cash flows in different period, yes, either I will take my cash flows to the future period, compounding, yes or no, everyone, or I'll bring my cash flows back to the present period, discounting. I am going front means I will include interest into 1 plus r. I am coming back means I will eliminate interest divided by 1 plus r. Yes or no, everyone? Perfect. Yes, based on that, we've understood that if cash flows are for limited period, how do I do it? Yes, either cash flows are going to be same or cash flows are going to be different. If cash flows are different, anyways, I'll have to individually discount that. Yes or no? Either you write down using formula or use a table. Both are going to give you the same answer only. Perfect. But if cash flows are same, there's a shortcut. I can take the cash flow into multiply by present value annuity factor. That gives me a summation of all the year's cash flows together. Is this clear, everyone? I hope whatever we have discussed till now was absolutely crystal clear. Tomorrow we'll take a journey further. Now, just using this discussion, If you guys go to equity valuation, initial 2-3 example questions are there. Share is there, you purchase share, year 1, year 2, year 3, year 4, dividend is there, 5th year end, your selling, sale price is there. You can calculate value of the share. There is absolutely nothing there to discuss. Okay, but still, yes, either I'll give it to you guys as homework or tomorrow anyways, all the questions will be doing it in the class. Okay, so that's all for today's session. See you guys in the next session. Until then, go back, revise, scribble things by yourself. If you want to create an example, multiple year, multiple cash flows, multiple yes, interest rate, play for some time, because that's all that is going to matter for us actually. If you are good with respect to your time value of money, nothing else in this entire subject is going to haunt you ever. So see you guys tomorrow. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you guys for the next session. Take care. Bye. Yes, everyone. So hello, hi, namaskaram, and good morning, students. Good morning, everyone. I hope you guys are doing really, really well. So we are going to start our journey forward to this beautiful journey of CA Final AFM. So before we go further, let us first quickly revise whatever we've discussed in the previous session. So now what I'll generally be doing is every once in a while, I'll keep taking a blank piece of paper and scribble down whatever we've learned. I want you guys to scribble it down as well. Have a separate book. It's just going to be a rough book wherein all you're going to do is scribble. Every time I'll ask you guys to scribble the revision, we'll scribble the revision together. Every time I ask you to try by yourself, you're going to scribble there. Have a book. It's of absolutely no use, but the value you're going to get from that is going to be great. So have a separate book for scribbling purpose, and every time I ask you guys to scribble, humble request, please do it. Writing is the only way you etch the concept in your memory forever. Okay? Yes. For me, it is very simple. I can just go forward. But why am I doing is to ensure that you guys never forget it. Yes, the same thing that I'm repeating, I would have repeated 10, 12 times. Why? So that in any damn case, you should not forget it. So please, 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 every time I ask you guys to scribble it down. Quick. Your handwriting doesn't matter at all. The only thing is, okay, your hands should be working. Yes, everyone. So let us quickly revise whatever we've discussed till now. First, yes, we started with the chapter Security Valuation. There we understood the main core principle, which is value. Regarding value, we've understood 3 points. Point number 1, yes, was value versus price. Yes or no, everyone? Yes, value is how much benefit I am getting, which is basically how much I should be paying, versus price is how much I'm actually paying. Okay, fine. You guys write it down clean. Yes, I'm going to scribble. Yes, second principle. We will always purchase assets. Only those assets whose value is greater than or equal to price at any point in time. Yes or no, everyone? And principle number 3 is going to be value of any asset. What is the benefit I'm getting from an asset? It is going to be the future cash flows. But I want to take a decision today. So it is going to be present value of future cash flows discounted at required rate. Yes or no, everyone? Yes. Principle 1 is over. Then we went into basics of AFM. Therein we had discussed cross multiplication. Yes or no, everyone? 1 kg tomato is 50 rupees. That means, say for example, 10 kg tomato is how much? Cross multiplication. Take a cross pair. The pair having a question mark will come in the denominator. The other pair will be going to the numerator. Yes. And what is it that I'm doing? Question mark is what I'm getting. That is rupees is what I'm getting. Yes or no, everyone? Perfect. Then we went into time value of money. Yes. There we have told the time value of money. Yes, there two techniques basically we are having. Yes, either I am going front, which is going to be compounding or future value, or I am coming back, discounting or present value. Simple principle. Why on earth am I doing time value of money? Yes, whenever I am taking a decision, my cash flow should be in the same period. But in a project, I have cash flows in different periods. So I'm bringing them to the same period. Yesterday we've seen, however I want, I can play. I can take to future, back, past, keep it in middle. Anything in the world I can do. Okay, but for simplicity, yes, majorly we'll be bringing our cash flows to present value terms. Okay, future value means I am going front. I am going front. That means I will be including interest. Yes or no, everyone? Perfect. That means it is going to be into 1 plus r to the power of n. Yes, present value means from future I am coming back. I am coming back. That means I am eliminating interest divided by 1 plus r to the power of n. Yes or no, everyone? Then we have seen present value in a different cases. We have told I want to calculate present value if cash flows are for a limited period. or if cash flows are for unlimited period. If cash flows are for limited period, two situations were there. First one was in case of uneven cash flows. Every year different cash flows I'm getting. Or second is in case of even cash flows. Every year same cash flow only I'm getting. Tell me there is a project. Yes, and here one very important thing we have told is every time you are solving a question, what you should do? Draw a line. A line should be whether you are straight or not. Yes or no, everyone? Every freaking question I will draw a line. Yes, I will write down the cash flows. I will accordingly see. Most of the times I'll have to bring it to present value, but I will accordingly see what is needed in the question. Is this clear, everyone? Okay, perfect. Now accordingly, yes, cash flows are for uneven period. Sorry, limited period cash flows, uneven cash flows. Every year different cash flows. That means I'll have to pull them individually only. Yes or no? Draw a line. Yes, either pull them individually or you can go for a table wherein you write year, cash flow, present value factor, present value. Yes or no? 1, 2, so on up to n. You add, you will be arriving at the present value. Or in case of even cash flows, option number 1 is individually you can pull. But oh, boss, same cash flow I'm having. If I want, what I can do is I can do cash flow into present value annuity factor. Yes or no, everyone? That way we can be doing it easily. Or using a table, year, cash flow, present value factor, present value. Here I will write year 1 to n. Whatever is the annual cash flow, I will write. Factor, I will write the annuity factor, present value annuity factor. I will multiply. I will accordingly arrive at the present value. Is this clear, everyone? Any doubt till now? Give me a confirmation, students. Accordingly, we'll proceed further with our discussion. Paka? Okay, great. So with this on the back of our mind, let us continue our discussion further, students. With this much background, now only one more point is required to be done in terms of basis, which is if cash flows are for unlimited period. That will come later. Before that, let us come back to our chapter, equity valuation. Equity valuation, unit 0 we have understood, value versus price we have understood. Now let us take our discussion slightly forward to unit number 1, which is going to be valuation of equity shares. So I want to calculate value of equity shares. Tell me, students, now or not, it will not take anything. Okay, yes, Koti is there. Koti is thinking, okay, boss, I want to purchase a share of Reliance company. Koti is having too much money. Rich person he is. Yes, we'll tell you someday how Koti became rich. It's a different story altogether. History tells us that powerful people come from powerful places. History was wrong. Powerful people are planning to marry powerful people. To become powerful. Crazy story. We'll tell you someday. Okay. So, Koti Reddy decides, okay, there is a Reliance share which is currently trading at 2000 rupees. Should I buy? Should I not buy? How am I going to take an investment decision? Just by looking at the price, will I ever take a decision? Step 1, I will calculate the value. Yes or no? For that purpose, what I'll be doing? First, draw a line. Line should be straight. This is not straight. Koti, like you. This is running behind money. Okay. And power also. Yes. So look at this, everyone. What is happening? Okay. Now, Koti Reddy is thinking that, okay, I will purchase Reliance share. Great, boss. Today I will purchase Reliance share. Great, boss. For how many years you are planning to hold? Koti is telling, sir, anything 3 years only max. Beyond that, I don't keep, sir. Okay, great. So 1, 2, 3. I'm telling, okay, boss, you purchase the share today. What all you'll be getting? Sir, company, I'm equity holder. Every year, company will be giving me dividend. Yes. Expected dividend, yes or no, everyone? Is it certain? No. Company may announce, may not announce. But we are expecting. Yes, assumption. He's saying, sir, first year I might get 50 rupee dividend. Second year I might get 100 rupee dividend. Third year I might get 75 rupee dividend. Yes, one cash flow. Tell me, is this the only cash flow? No, sir. At the end of second year, I will sell also, na, sir. That time selling price also I will be getting. Yes or no, everyone? So I will write down, okay, selling price, sale proceeds. Say, for example, at the end of 2 years, he's planning to sell it off at, say, for example, 3000 rupees. Yes or no, everyone? Perfect. That means what is the value of a share? It is the present value of future cash flows discounted at required rate. Yes or no, everyone? In case of share, what all cash flows I'm getting? Dividend, sale price. I've written it already. Yes or no? So whatever cash flows I'm getting, I will discount it. Whatever is the amount, that is going to be the value of the share. As simple as that. Yes, we've learned what is value of an asset. We've learned how to discount. Now what we are going to do? Discount. Simple. UGB. Life is over. Yes or no, everyone? Perfect. Okay. So now, yes, simple story. Let us just take, not necessary, but still let it be there. I guess this one was over yesterday already. Yes, perfect. Now imagine. Yes, this is me. Yes, imagine. Yes, I decide once and for all what? That I'm going to stop teaching. Why, sir? No maja only in life, da. Yes, I'm waking up early, I'm staying up late. Yes, I come to the class correctly at time. Koti Reddy and his gang, they are coming 20 minutes late. And for them also, I'm only setting up their tables and all. See the level treatment these people are getting. Koti, if you come late tomorrow, pakka from here to Ongol, I will kick you. Okay. So he said, who wants this headache? You don't want. So students have said, then what are you planning to do? There's no maja only. So we thought we'll do one thing. We'll start a business. I have a super business idea. Crazy maja business idea. So what you're going to do, sir? Yes, I told, yes, my childhood dream that I want to start a sugarcane juice manufacturing company. Maja sugarcane. Simple. No tension. No need to wake up on time, wait for students, all of that. Chill. You stand there. No need to tell, learn, revise, scribble. Yes, don't sleep and watch. Sit, have a pen, recorded students. Ah, I know. 2x. If you want to come, I will put in machine. I will put juice. I will pay. You do GPay. Simple. No tension, baby. Yes or no, everyone? Beautiful business model. But every business has some risk. This business also has a risk. What is the risk of a sugarcane business? We are planning, yes, that all over India we'll open our sugarcane outlet, Maja Sugarcanes. Okay, with my photo. This way, Maja is coming. Maja Sugarcane, whichever way. Yeah. Yes. Beautiful business, but there's a small risk. What is the risk in case of a sugarcane business? Rainfall, material supply, all those are simple GGB risk, but there's a very big risk. Yes. It is the risk of obsessively loving couples. I will explain to you. So it happened with me once. So I went to a nearby shop. It was summer season. So I thought we'll take sugarcane. So I went to the shop. Immediately after I went, a fresh couple. Looking at them, you can see just 2 months after love. And looking at boy's eyes, I could see he is literally freaking desperate. Desperation at its peak. Yes. Couple had come to also drink sugarcane. Okay. So I came, I went, I ordered 1 glass sugarcane. There, 2 people have come. When I'm telling couple, it was a boy and a girl, Koti, not like you. Okay. Yes, boy and a girl it was. Technically, how much sugarcane they should have ordered? 2. But they are in love. Yes, that means how many glass of sugarcane they're going to order? 1. Yes. So they ordered 1 glass. Okay, the person went to prepare sugarcane. He's putting it in the machine. Now, generally, you should not involve in other people's personal affairs. Very bad, Shantam Papa. But I am sitting there idle. I have no work to do. They are speaking. And I am not doing anything. My ears is there. It is its duty to listen. It is listening. Okay. So something conversation and all is going on. Baby, you didn't wish me good morning. Because of that, my day was very bad, baby. How can you do this all? Yes, nibba things and all are happening. Okay, all those things happen. Okay. Yes, got the sugar cane. I got a glass of sugar cane. They both also got a glass of sugar cane. Yes, I got my glass of sugar cane. Yes, in 3 seconds, I drank the sugar cane juice. Yes, and how much time will it take? Yes, any other day, I would have left the place. Maja is important in life. That day I waited. Let us see. Something comes up. Okay, so they both ordered 1 glass sugar cane. Yes or no? Yes. First, the boy drank the sugar cane juice. He took the glass. Imagine this is a glass. Yes, this is just black coffee. For students who are watching it online, don't tell sir is drinking beer and all in the middle of the class. Okay. The boy took the glass. He took a sip of sugar cane juice. He kept it down. He told, baby, this sugar cane juice is not sweet only. She told, is it? Let me see. So she drank it. She told, no baby, it is sweet na. Now he turned the glass towards the area wherein she drank. Exactly from that spot, picked it up. Now he drank the sugar cane and tan tan, baby, it is sweet now. I am like, I will kill you now. The Mandu sir, sugar cane is a thing from which sugar is generated. All juices come from that. It is not sweet. She drank, it became sweet. So that is one risk. You'll have to keep seeing those stories and try to ignore. And knowing the kind of person I am so much interested in gossip. I'll keep seeing, oh, something. Let us leave work. Work will keep. Let us focus on that. Okay. So we decided we are going to start a sugarcane manufacturing company, Maja Sugarcanes, all over India. We are going to start our outlet. Okay, fine. Now, Koti Reddy is an investor. Yes, he wants to purchase shares of Maja Sugarcanes. Now, what all situations can be there? Now, either he is planning to hold the shares for limited period or he is planning to hold the shares for unlimited period. Yes, if he is planning to hold the shares for limited period, say for example, Koti Reddy is telling, okay, I will purchase shares of Maja Sugarcane. He will hold it for 3 years. 0, 1, 2, 3. Every year, what all he'll be getting? Dividend he'll be getting, say for example, D1, 10, 12, 15. At the end of third year, what he'll be getting? Sale price. So what is value of an asset? It is a present value of future cash flows discounted at required rate. Yes, if cash flows are same, directly you can use PVAF. If cash flows are different, individually you discount. Is there anything to be explained? No. So shall we solve one or two example questions and come back here? Yes or no, everyone? Perfect. So here, value of a share, it is the present value of future cash flows. In case of share, what all I'll be getting? Dividend and sale price discounted at required rate. In case of a share, what is my required rate? It is going to be cost of equity. Yes or no, everyone? Here we will individually discount the future cash flows at required rate. That is the first year cash flow divided by 1 plus r to the power of 1 plus second year cash flow divided by 1 plus r whole square, so on. In the nth year, I will get dividend also, sale price also. I will discount it. Accordingly, I will arrive at the valuation. This chumma for time pass I have written. We are not going to refer it anywhere. The only thing we want is a straight line. Yes or no, everyone? Now let us go ahead to our workbook. Have a look at example number 1 and 2. Yes, everyone. So now let us have a look at example. 1 or 2 example questions are there. Simple, Jujube, absolutely nothing to worry about. So let us quickly have a look at the question. Okay. Unit 1, valuation of equity shares, dividend based valuation. Example number 1. An investor intends to purchase shares of Maja Limited. The following data is available. Expected dividend for 5 years. Expected dividend. I am expecting. That means present or future. In future, what all I will get? Yes, D1, first year I'm expecting 100, second year 110, third year 120, fourth year 130, fifth year it's going to be 150. Great. Sale price at the end of 5 years is 1200. At the end of 5 years, I'm planning to sell it off at 1200. Great, boss. You're required to calculate the following. Value of a share if the required rate of return is 10%. And second, is it worth investing in the company if shares are currently trading in the market at 900 rupees? Yes or no, everyone? Yes, giving you guys a minute to try. What is the first thing I want you guys to do? Whatever data is given, draw a line. Line should be straight. Plot your cash flows, then pull it off. As simple as that. Yes, giving you guys a minute. Yes, recorded students, please pause. Try the question once by yourselves. Yes, everyone. So let us try solving the question. Pay attention. Very simple. How we are going to do? Yes, what we are going to do first? Draw a line. Koti, line should be straight. Whether you are straight or not. 0. Total how many years cash flows are there? 5 years, na? Okay, 5. Tell me, I purchase a share today. Here I am standing. La 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 la. I purchased a share. I am going to get cash in future. What all I will get? First year 100 I am getting. Second year how much I am getting? 110. Third year how much I am getting? 120. Fourth year how much I am getting? 130. Fifth year how much I am getting? 150. Yes, with that fifth year I am also getting the sale price, which is going to be 1200. Yes or no, everyone? Yes, I want to take a decision today as to how much I should pay. That means I want all my cash flows today. Yes, but cash flows are in future, na sir? Bring it back, da. Discount it. Yes or no, everyone? As simple as that. So I will write down. Look at this, everyone. Year 1, 2, 3, 4, 5. First year I'm getting 100 cash flow, second year I'm getting 110, third year I'm getting 120, fourth year I'm getting 130, fifth year I'm getting 150 also, 1200 also, that means I'm getting 1350. Yes or no? Present value factor, I guess it is at 10 percentage. That means 1 divided by 1.1 equal 0.909 equal basics, present value factor, everything I've told already. So when I'm solving, yes, these basic things which we have already done multiple times, this I will not be playing. I guess I'm getting value of an asset is equal to 1199 or 1200. Yes or no, everyone? Now you might have got 1199, 1200 for 1 rupee. Don't fight. Chill. It is not going to make any difference. Is this clear, everyone? Perfect. Now tell me. Yes, imagine Koti is an investor. What he is telling, boss, if I purchase this share, in future these cash flows I'm getting. Yes, the net benefit in present value terms, how much benefit I'm getting from the share? 1200 rupees. He went to the market to see, okay, boss, in reality at what price it is available? In reality, the share is trading in the market at 900 only. Good, bad, good. The share is undervalued. Yes, I'm willing to pay 1200 also, but it is available at 900 only. So the share is undervalued. That means it is advised to buy the share. Yes or no, everyone? I will write down the comment. Decision making. Yes, the value of a share is 1199.02. However, the same is available in the market at 900 rupees. The share is underpriced. This is going to be a keyword for you guys. Yes, hence it is recommended to buy the share. Is this clear, everyone? Perfect. Now coming to one very important thing. Yes, it is regarding the workbook as well as the question bank. Whenever we are solving questions in the class, for my convenience, I would have created these formats and kept it. Because otherwise what happens is I have to explain also, solve also, and some students have a habit. They will not write down. In the end, when they'll tell. Yes, when it is literally fire, they'll tell, sir, I did not write only, sir. I told you should have written. Sir, I'm very sorry, sir. But now you give some PDF. So in the end, we'll have to give it. They'll read the PDF I would have scribbled in the class. They'll not understand anything at all. I myself won't understand. So for that purpose, to ensure that, yes, whatever we are writing is clean, presentable. That is why what we do is, whatever headings are there, all those things we keep it well in advance. Nothing is there, chumma. Heading calculation of value of a share. That is how you would have written. Yes, pictorial representation. We do it here. Yes, calculation of a value of a share. Year, cash flow, present value factor, present value. We calculate it here. Yes, decision making. A small comment is there. We'll be writing it here. Is this clear, everyone? Generally, wherever writing things are there, I avoid writing them in the class. Okay, I comment it before. Yes, I write it down before, so that here I can just explain and save that time. Okay, but for you guys, for you in the exam, will you be having these formats? No. So don't ask this format. Sir, if I could get that format also, sir, easily I can do, sir. Don't do. Work a bit, okay? Is this clear, everyone? I have told you. Yes, it is just going to be plain, just lines, spaces, all those things. You're not going to gain anything. Yes, maximum, yes, 30-40 seconds you will take to write this. Okay, so do it by yourself. Even when you're solving practical questions also from the question bank, I would have created a framework before only. Why? Because otherwise, in the moment, based on my mood, I can solve a question in 10-20 different ways. I don't want every question to be solved in a different way. So I'll maintain that same consistency throughout in all the questions. Point number one. Second, point number two, I want to ensure that whatever I write also is reasonably presentable. That's all. It is not a substitute for you writing. Then don't tell, sir has written beautifully. Sir will give, we will see later. I will send a flying chappal to your home. Write it down properly. Okay, recorded students, I'm sorry, you made payment, but you have to study also. Okay, doesn't mean that I told I will send flying chapel means I will send flying chapel. Yes, I will send a flying heart to you, flying wishes to you. What all I'll have to do for you guys. My life. Okay, shall we go ahead to the second example, everyone? Perfect. Example number 2. Maja Limited just paid, it just paid. Means already paid. Suppose I am purchasing a share today. Dividend is already paid. Will I get this dividend? No, already paid. Done da. Yes or no? What I will get? Future only I will get. Is this clear, everyone? Okay. So Maja Limited just paid a dividend of 10 per share. Mr. X intends to buy shares for a period of 4 years. He is planning to hold it for 4 years, he expects dividend to increase by 10% every year. He's telling boss, every year company will pay 10% extra dividend. Okay. And expects a price of 125 at the end of 4th year. Great boss. At the end of 4th year, he's telling 125 would be the price. At that price, I will sell it off. Okay. Risk-free rate is 6% and market rate of return is going to be 12%. You're required to calculate required rate of return. Yes, if beta is going to be 1.5, calculate intrinsic value and advise whether to purchase the shares or not if the share is trading at 150 rupees. Now here one more small point has come, which is going to be calculation of required rate of return. Again, in your CA inter, so much time you have spent on that, and trust me, yes, whether you know the logic or not doesn't matter. Portfolio management chapter will come. There beautifully 3 to 4 hours we are going to spend on this. Doesn't mean I'm going to explain this formula for 4 hours. Yes, there's so many things which are going behind. There's a history. Okay, doesn't mean I'm wasting time on the history. All that is important for us to solve questions at every point. Yes, that evolution is going to be there for us as well. So beautifully will be explaining. But now, in 1 minute, let us try understanding what exactly is required rate of return. So let us come back to our concept book, everyone. Yes, here additional notes. We are having required rate of return as per CAPM. Okay. Okay, simple, very simple. Now imagine. Risk-free rate is 6%. Market rate is 12%. There is a security which is having a beta of 2. What exactly is beta? There beautifully we are going to discuss. Okay. Now we have to calculate the required rate of return. Now imagine. Yes, Koti Reddy is an investor. Koti Reddy is telling, I don't want risk only, sir, in life. I don't take risk only. In that case, how much return only he will be getting? 6% return only he will be getting. Yes, Koti Reddy is saying, sir, 6% is very less, sir. I will take some risk. Yes, but I will invest in the market. Now, market is taken as a base. Yes, when you are comparing anything, there should be a base with respect to which you are comparing. Yes or no? I am taller than him. Yes, I am more intelligent than him, her. I am more beautiful than her. Yes or no? There should be a base. Without that, there is no comparison. So whenever we are comparing here, yes, we will be taking market as a base. How much risk is there in the market? In relation to that, we will be taking a comparison. Okay, fine. Now, quoted is saying, I don't want any risk at all. Go invest in risk-free securities. FD, government bond, you invest. How much return only you will get? 6% only you will get. It's like, no, sir, I want slightly more return. We've understood the principle yesterday. Yes, there is only one way to earn more return. That is by taking risk. Yes or no? He told, no, sir, I want more return. I'm willing to take a risk. Imagine he invested in the market. Market doesn't mean, yes, your vegetable market. We are talking about securities market. When I'm talking about market as a whole, it is either Nifty or Sensex. I hope you would have heard these terms. Otherwise, don't worry, portfolio. Again, how the Nifty index was born, what is the concept of index points, everything will come. Don't worry. Okay. So if he invests in the market, how much return he is getting? 12% return he is getting. Yes. And we assume that the risk of market is 1. Because only in relation to that we can see how many times more risky or less risky. Yes or no? Yes, I am earning 2 times of my friend. I have taken his base as 1. So I am earning 2 times of that. Yes or no? There should be a base. So we are assuming that, yes, the risk of market is 1. That is, beta of market is going to be 1. In relation to that, let us try doing. Now tell me students. Koti Reddy does not take any risk at all. Risk is denoted as beta. Koti Reddy does not take any risk at all. How much return only he will be getting? 6% only he'll be getting. He wants to earn more return. That means what he'll have to do? He'll have to take a risk. Yes, he'll have to take a risk and invest in the market. Yes, assume he invests in the market. Yes, beta of market is always going to be equal to 1. If he invests in the market, how much return he is getting? 12% return he is getting. So what Koti will tell? Koti will tell 6% anyways I'm getting. So for taking 1 unit of risk, for taking extra 1 unit of risk, extra how much return I am getting? Extra how much return I am getting? Extra 6% return I am getting. Yes or no, everyone? Perfect. Now I tell Koti, why you are investing in market da? You have come here, you've been with me for 30-40 days, you know I am a genuine person. I started a company, Maja Sugarcane, you purchase my share. He is asking, sir, how much time risk is there, sir? I am telling, da, beta of my security is 2. That means my security is 2 times more riskier than market. Market goes up 1%, my stock goes up 2%. Market comes down 1%, my stock will come down 2%. Okay, we'll understand more of beta later. So I'm telling, sir, yes, Koti, my security is having a beta of 2. That means it is more riskier than market. Tell me whether Koti will be happy to invest in my share and get 12% return. No, any person would not invest. Koti will never invest because Koti's everything is running behind money only. We'll tell you someday Koti's all stories, explorations of Koti, how Koti is planning to become a multimillionaire. Koti's business plan. Okay, yes. So what Koti is telling? Koti is telling, sir, see, sir, I don't take any risk. How much I am getting? 6% I am getting. That any case I want. Yes or no? Perfect. Yes. If I take 1 unit extra risk, now if I take 1 unit extra risk, how much extra return I am getting? I am getting 6% extra return from the market. In your case, I will invest. But how much extra risk I am taking? 2 unit extra risk I am getting. That means how much extra return I want? How much extra return I want? 2 into 6, 12% extra return I want. Yes or no, everyone? That means total how much I want? 6 plus 12, 18 percentage is going to be the required rate of return. Yes or no? If I'll have to write it down in the form of a formula. Yes, 6, it is the risk-free rate of return. Yes, plus 6% extra I am getting for 1 unit of risk, which is RM minus RF. Yes or no, everyone? Yes. If I invest in market, I'm getting 12. Risk-free, I was getting 6. That means for 1 unit of risk, how much extra I'm getting? 6%. That way, how many unit of risk I have taken? 2 unit. That means how much I should be getting? 12%. So it is risk-free plus beta into RM minus RF. Yes or no, everyone? I hope this level of explanation is more than sufficient for us for now. Because in portfolio anyways, don't worry, we will be spending a good amount of time. And anyways, from inter days, you've been playing along with this formula. So let us quickly write down the formula. Required rate of return. A required rate of return, which is denoted as KE. Yes, it is the risk-free rate of return plus the risk premium. Yes or no, everyone? Perfect. Risk-free rate of return. It is written as RF. Risk premium, how much extra I want for taking the risk. Tell me, if I take 1 unit of risk now, how much extra return in our example? 6% extra. That is RM minus RF. But we are taking how many times extra risk? 2 units of extra risk, that is beta. That means I want 12% extra risk. So it is RF plus beta into RM minus RF. Yes or no, everyone? This is going to be cost of equity. You guys can highlight this. Yes, where RF is going to be the risk-free rate of return, RM is going to be market rate of return, beta is going to be beta of the security or portfolio. Yes, RM minus RF. What is this? Yes, this is market risk premium. That is, if I invest in market, how much extra I want. Yes or no? Risk-free was giving me 6, market was giving me 12. That means if I invest in market, 6% extra I am giving. Beta into RM minus RF is security risk premium. That is, in my case, in my company, if he is investing, risk-free anyway 6% extra is getting. If he is investing in my company, how much extra he wants? He's telling, boss, if I invest in market, 6% extra I'm taking. Yours is 2 times risky. At least 12% extra I want. How I got 12% extra? Beta into RM minus RF. Yes or no, everyone? Basic formula, again, should have learnt in the inter days. Yes, I've explained it reasonably sufficient here. In portfolio, again, beautifully, more things are also going to come about that. Okay, everyone, perfect. With this on the back of our mind, let us come back to the workbook. Now, giving you guys 2 to 3 minutes, not more, quickly solve the question. Firstly, I want my required rate of return to discount cash flows. Calculate that. Then draw a line, plot all your future cash flows. Okay, D0 should not be taken because it is already paid. It is present value of future cash flows. Future what I'm getting? Pull it back to present value at the required rate. Okay, giving you guys 2 minutes. Recorded students, please pause. Try the question. Yes, everyone. So let us try doing the calculations. First, what I'll be doing is required rate of return is not given in the question. Let me try calculating that. Yes, required rate of return, which is going to be KE. It is risk-free rate of return plus beta into RM minus RF. Yes or no, everyone? Tell me, even if I don't take any risk, how much return I will be getting? 6% I will be getting. Yes or no, everyone? But if I invest in market, that is take 1 unit of risk, how much extra return I'll be getting? 6% extra return I'll be getting. But boss, my security is 1.5 times riskier. That means I want 1.5 into 6, that is 9% extra plus the basic 6%, I want a 15% return. That is going to be the required rate of return. Point number 1 is over. Perfect. Next, going ahead to point number 2, which is going to be calculation of value of a share. How do you calculate value of a share? Yes, draw a line. Line should always be a straight. Yes or no, everyone? Tell me for how many years we are planning to hold the share, everyone? 4 years. Tell me the cash flows. Yes, D0 is given here. Just paid a dividend of 10. That is already paid before I buy. If I buy, will I get that? No, I will only be getting in the future. Tell me every year how much percent extra dividend I'll be getting? 10% extra. That means in first year how much dividend I am expecting? 11 rupee dividend. Second year how much dividend I am expecting? 12.1. Third year how much dividend I am expecting? 13.31. Fourth year how much dividend I am expecting? 14.64. Now generally whatever values we are having now, we will keep it up to 2 decimals, okay, unless otherwise specifically given in the question. In some places some specific things will have to be doing. Say for example, in case of present value factors, I'll always be taking 3 decimals. Okay, that in the respective places I'll keep telling you guys exactly what should be done. Is this clear, everyone? Perfect. At the end of 4th year, I am getting selling price also. At what price I am planning to sell this? 125 rupees. Yes or no, everyone? Now value of an asset, it is the present value of all these cash flows discounted at required rate. Tell me how much rate, how much return I want for the risk I am taking. 15% I want, so I'll be discounting the cash flows at 15%. Is this clear? Now from examination perspective, your presentation, if you do this line and show these D1, D2, D3, D4, it is more than sufficient. But if you are not very happy, no sir, as I want to write it again, okay, then what you can do, maximum what you can do is you can just write it below D3, D4. Yes or no, everyone? This is 1.1 into 10, 11, 1.1 into 11, 12.1. Similarly 13.31, yes, 13.31, 14.64. Yes or no? Now even these calculations which you are doing in your calculator, yes, constant function I will not tell right now, but yes, you can, every year it is increasing by 10%. That means first I will write 1.1, yes, into, yes, 10 equals 11 equals 12.1 equals 13.31 equals 14.64. Directly you will get those numbers. Is this clear, everyone? Now calculation of value of a share. Tell me first year how much I am getting? 11. Second year how much I am getting? 12.1. Third year how much I am getting? 13.31. Fourth year how much I am getting? 14.64. Also I am getting 125. Also I am getting, that means I am getting 139.64. Yes or no, everyone? Perfect. Yes, present value, I am going to discount my cash flows at 15%. Write down the present value factors, multiply and tell me the value of the asset. Yes, what is going to be value of the share? Give me the number, students. How much it is, da? 107.305. Yes or no, everyone? Yes. Now numbers could be slightly up or down because numbers I am picking from them. Okay. And looking at them, looking at here, I know they are only not confident. Okay. But I am looking at the comments as well. Somewhere in the range of 107 that number is going to be. So recorded students, if you have tried, great. Numbers could be slightly up or down, absolutely no issues. Is this clear, everyone? Perfect. But generally present value factors I will always be taking up to 3 decimals. Okay na? And even once you write down the present value factors, I've told you how exactly to write also. Again, one final time I'm telling. 1 divided by 1.15 equals, you write down the first number, equals, you write down the second number, equals, you write down the third number, equals, you write down the fourth number. Once you have written it down, yes, this into this equals, this into this equals, this into this equals, this into this equals grand total. You will write down this value. There is no point of unnecessarily pressing AC every time. Is this clear, everyone? Perfect. Now we'll have to take a decision. Tell me at what price the share is trading? 150 rupees it is trading. Tell me, if I buy the share, how much benefit only I will get? 107 rupees benefit only I will get. It is trading at 150. Will I purchase? No, boss. First principle, only purchase those assets where value is more than or equal to price. Yes or no? It is overvalued, so I will not be buying. So look at the decision making, everyone. Okay, I have not written, then I will write it down. Okay, share is overvalued. Hence advised not to buy. Yes, one single line will be sufficient. You need not write too much. When I am writing here, I will be writing a bit more of explanation. But for us, yes, we only want two keywords. Overvalued, do not buy. As simple as that. Is this clear, everyone? Perfect. Okay. Now, with this, we have finished off the first situation. Yes. Here I am having an example number 8 also. It's just a basic jujube example. We'll do that as well. Calculation of RF. Let us finish it off. Example 8. Let us come to workbook. Example 8. Just a minute. Here, okay. Now in the workbook, in some places what I have done, even in the question bank you will find how I have kept the question numberings is that question 1, 2, 3. Say for example, there is a question which is exactly similar to question 3. No new adjustments only. Just numbers are slightly different. What I will do is I will write it as 3A, 3B, 3C, 3D. Why? Point number 1, those questions I will not be doing in the class. Point number 2, those questions you know by default in revision you are going to skip. But for your first time learning, when you're doing it in the class, for you to get the confidence, for us to ensure that we practice in a way that we cannot commit mistakes at all, you will be doing that by yourself. Confidence comes only by practice. So for that purpose, those questions I have kept, but throughout I would have kept the numberings this way. Here also a similar example is there. If you want, you can try this. Yes, Thala Limited just paid a dividend of 12. It plans to hold the share for 5 years. Yes, growth is going to be 8%. At the end of 5 years, share price is 140. Risk-free rate is 7%. Market is 13%. Beta is 1.2. It is trading at 135. Same data, just numbers are slightly different. Calculate required rate, intrinsic value, and should we buy or sell it. If you want, you guys can try this question once by yourselves. Recorded students, I would recommend, please try it once. Is this clear, everyone? Perfect. Now some small simple jujube examples are there on calculating required rate of return. Let us try doing that as well quickly. Is example 8 from our workbook. Okay, fine. Here there is, okay, only for one situation we have done. Okay, fine. Okay, example 8. Look at this, students. Investor wants to analyze the required rate of return based on the following information. Risk-free rate is 6%. Market rate is 12%. Okay. Calculate the required rate of return if beta of security is 0. Investor is saying, I don't want a risk only. How much only he will get? Risk-free only he will get. Yes or no, everyone? Yes, it is RF plus beta into RM minus RF. 6 he will get, but he is not taking risk only. Yes, that means he will be getting 6% only. If he is willing to take only 1 unit of risk, how much return he will be getting? 12% only he will be getting. Yes or no, everyone? I will just keep on putting the numbers. RF plus beta into RM minus RF. 6 anyways he will get. Yes. If he invests in market, he will be getting 6% extra. He is also taking 1 unit of risk only. That means he will be getting 12%. Yes, if he is taking 1.5 units of risk, so it is going to be 6 plus 1.5 into 12 minus 6. It is going to be how much? 15%. Yes or no, everyone? Perfect. Now, final situation, pay attention. Calculate the required rate. If beta of the security is 1.5 and inflation increases by 2%. Oh. Day 1, basics. I have told you one thing. Why on earth does bank give me the risk-free rate of return? To compensate for inflation. Originally, question told me risk-free rate is 6%. On what basis? On the basis that inflation is going to be 6%. So if my inflation increases by 2%, my risk-free also increases by 2%. My market rate also increases by 2%. Yes or no, everyone? So I will tell, yes, my revised risk-free rate. 6 plus 2, 8%. Yes or no, everyone? Now the investor who is investing in the market, he is telling, boss, risk-free I am getting 8%. Yes, I am investing in a market taking 1 unit of risk. I want 6% extra. Yes or no, everyone? Yes, revised RM. Existing was 12 because of inflation. That extra also I'll be getting 14%. So now I'll calculate, yes, cost of equity. It is 8 plus 1.5 into 14 minus 8, 6,998, 17%. Yes or no, everyone? Or else in my final answer, even if I add 2% is also fine. Original answer, I got 15%. In that also, if I add 2%, I'm getting 17% only. However you want, you can do it. Is this clear, everyone? Perfect. Now, this much is over. Giving you guys a minute to just let this sink in. Nothing we did. Just if cash flows are for limited period, how to calculate value of a share we have done. Sir, do we have any question on this from the question bank? Yes, CA Inter question bank. If you do, you will get. Final, you are not having that. Is this clear? But still, whatever variance could be possible, we have incorporated examples so that you have some basic practice of this. Is this clear, everyone? Now, after a pause, we'll be going ahead to the next discussion, which is value of an asset in case of perpetual cash flows or unlimited cash flows. Beautiful discussion is going to be there. Giving you guys a minute to let this sink in, then we'll continue our discussion, students. Yes, everyone. So now let us continue our discussion, students. We've understood how to calculate present value of cash flows in case of limited period cash flows. That is, I'm getting cash flows for 1 year, 3 year, 5 year, 10 year, 15 year. Suppose I'm getting perpetual cash flows. How do we calculate present value of that? Yes or no, everyone? So look at this, look at this, look at this. Yes, cash flows. Okay, yes, look at this calculation of present value. What all situations can be there? Yes, calculation of present value. If cash flows are for a limited period, if cash flows are for unlimited period, that is, I am getting perpetual cash flows. Okay, in case of limited period, I have in case of uneven cash flows, every year different cash flows I'm getting. In case of even cash flows, in case of perpetual cash flows, again 3 bifurcations are there. Firstly, there is no growth. Secondly, there is constant growth. Third, there is going to be variable growth. In unit 0, yes, that is basics of AFM. These pointers I have not explained. Why? Because these points are coming again in my share valuation. So these 3 things are there. So from this perspective only we'll explain, and there we will just write that formula. Is this clear, everyone? Perfect. So that is what we'll be doing. Look at this. Yes, if shares are held for unlimited period, that is till perpetuity. Yes, either there is no growth, or there is constant growth, or there is variable growth. I guess all these models you've already seen, but still properly let us try understanding. First, let me just write down the formula in a minute. Yes, in case of no growth, yes, value of a share. Yes, it is the dividend that I'm going to get in the first year. Yes, capitalize it divided by KE. Yes, in case of constant growth, yes, it is a D1 divided by KE minus G. Variable growth, we will try understanding it later. Is this clear, everyone? Now, what exactly is this? What on earth is this formula trying to tell me? Yes, let us try understanding quickly in a very simple way. So, are we ready, everyone? Yes or no? Class? Class? Students who are watching recorded, I hope you guys are ready for a maja discussion. Yes or no, everyone? Okay, perfect. So, perpetual cash flows without growth. Yes, it is first year cash flow divided by G. So say for example, we invested in a share. Yes, suppose Koti purchased shares of Reliance. Yes, he is planning to hold it for perpetuity. Something should be there, na, perpetual, which goes on and on and on. Okay, and he is expecting that he will get a dividend of 10 rupees per annum till perpetuity. That means if he purchases the share today, tell me what is going to happen. First year, how much dividend he will get? 10. Second year, how much he will get? 10. Third year, how much he'll get? 10. Fourth year, how much he'll get? 10. So till on up to infinity, he'll keep getting 10. Now we told boss, I want to take a decision here. Yes, I want to take a decision here. I am getting cash flows in future. Yes, I am getting cash flows in future. Yes, let me pull it off to present value. Yes, let me pull it off to present value. But sir, if it is for 1 year, 3 year, 5 year, 10 year, 20 year, I can pull it off. This is going till infinity. Till when should I do? Now, if you want, you guys are at the final level. Yes, if you want, you can take an Excel, write down the cash flows, just copy, drag it down. Yes, take up to around 100 years, put 1 divided by 1.1, drag it down, multiply, drag it down. You can, yes, mathematically verify also. But there is a formula. They are telling, yes, what is the first year cash flow divided by required rate? Yes or no? Required rate. Tell me in this case, first year how much I am getting? 10 rupee. And tell me how much percent return I want? 10%, which is 0.1. So 10 divided by 0.1, it is going to be 100 rupees. This is the formula. But we do not by heart formulas. We'll have to understand formulas. Now there are two different approaches to understand the formula. One is the mathematical proof, one is the logical feel. I believe more in the logical feel of the formula. But once I tell you the logical feel, it will only take you 2 minutes. You'll tell, sir, this much only, yes, sir. Sir, we want something more. Sir, something that should go beyond our head. We should feel, oh, Amma, something is happening. So I told, okay. I also know to give mathematical derivation. I will also give a mathematical derivation. So the next 5 minutes, yes, you can just watch it like a movie. Recorded students, now you can put at 2x. Aram se, keep brain aside, just see, enjoy. Okay, chill. Absolutely no use. Okay, but still, okay, sometimes see, I believe if you want to impress someone, you make it complicated. That is also, this is also, oh, so much person knows. If you want to help someone, you make it simple. But sometimes when you make it simple, they'll say, ah, this particular, till some more time, feel I did get. So let me just take 5 minutes. I also show you derivation, then I'll come and explain GB halwa. Okay, fine. Now, back in your school days, you would have heard GP, geometric progression. Yes, what is GP? Where, yes, there is a common factor which is multiplied, yes or no, 1, 2, 4, 8, 16, 32, yes or no, 64, so on and so forth, yes or no. There is a common ratio, say for example, 1, 2, 1 into 2, 2 into 4, sorry, 2 into 2. 2 is a common ratio which is getting multiplied, yes or no, everyone. Now, yes, there is a formula for calculation of summation of a geometric progression where this ratio is less than 1. If the ratio is more than 1, it tends to infinity because there is no end, and again it is becoming big only. But if it is less than 1, yes, there is a formula for us to calculate the summation of the entire GP series. Okay, yes, say for example, I am having 1, 0.1, 0.01. Here I am multiplying it by 0.1, again by 0.1, again by 0.1. Yes or no? In this case, there is a mathematical formula for calculation of summation of GP. Yes, the formula is A divided by 1 minus R, where A is going to be the first term, R is going to be the ratio. In our case, first term was 1, 1 minus ratio by what factor it is getting multiplied, 0.1. So 1 divided by 1 minus 0.1, 0.9. Yes, when you do this, 1.1111 something you will be getting. That is going to be the summation of the GP. Is this clear, everyone? Sir, how do we believe that? Don't believe me. Firstly, I have taken the formula from ChatGPT for your proof. A divided by 1 minus R. Sir, but how we got this formula, sir? You know limits, differentiation, integration. Yes, it is going on up to infinity. It is going to the limit. You differentiate it, you get it. To be very frank, I also don't know how this formula has come. Okay, if you want, ChatGPT is there, not like previous day. Yes, give me a mathematical proof of how summation of GP is equal to A divided by 1 minus R. Make it as detailed as possible. Also put as complicated as possible. It will give you 10-20 pages. Read. Go to mental hospital next day. Yes or no? If you won't do it. Okay, but I am just stopping here. Formula is A divided by 1 minus R. Yes or no? Summation of a GP. Now let us try seeing our situation. Yes, I want to calculate present value of this cash flow. How it is going to be? Yes, tell me students. Yes, what is my required rate of return? 10%. Now let me try discounting it individually only. Look at this, students. First year cash flow 10. I will bring it back one time. So it is going to be 10 divided by 1.1. Second year cash flow, I'll have to bring it back 2 times. So it is going to be 10 divided by 1.1 square. Third year cash flow, I'll have to bring it back 3 times. So 10 divided by 1.1 to the power of 3. So on up to infinity. Yes or no, everyone? I guess I've written down here. If I add all of this, it is going to be a, yes, total present value I will be getting. Till here it is fine. Fine. Now I want to see if it is a geometric progression. Geometric progression means there is one factor which is multiplied throughout. Now this I will just rewrite and show what is the factor which is multiplied, but otherwise there is a formula for that also. Now this one I will write it as 10 divided by 1.1. 10 divided by 1.1 square. I will write it as 10 divided by 1.1. 1 by 1.1. Yes or no? This I will write it as 10 by 1.1 square into 1 by 1.1. So if you correctly observe which is a factor which is getting multiplied, 1.1 divided by 1.1 is a factor which is getting multiplied. Yes or no, everyone? So A, first factor, is 10 divided by 1.1. R, Yes, it is 1 divided by 1.1. Or there is another way to do it as well. It is second term divided by first term. There is a GP 1, 2, 4, 8. Second term divided by first term 2 divided by 1, 2. Or third term by second term 4 by 2 is 2. That way also you can do. That also. Let us make it more complicated. You have fun. Na? What is there for me? Okay. Tell me what is second term? Second term divided by first term. Yes, second term here is 10 divided by 1.1 square. First term is 10 divided by 1.1. Yes or no, everyone? Yes. In this case, I'll have to do an inverse. So 10 divided by 1.1 square. And again, one important caveat, if you're not understanding, doesn't matter. Chill. Into 1.1 divided by 10. Yes or no? This is gone, this is gone, this is gone, this is gone. So you're left with 1 by 1.1. That only I wrote in simple terms. Yes or no, everyone? Perfect. Now let me try calculating summation of a GP. Yes, summation of a GP is A divided by 1 minus R. My A is 10 divided by 1.1 divided by R is 1 minus R is 1 by 1.1. Yes or no? Some my basics of maths will get brushed up with this. 10 divided by 1.1 whole divided by. Here I'll have to take a LCM. Yes or no, factor. So here it becomes 1.1. Yes, here it is 1. So I'll be multiplying. It becomes 1.1 minus 1. Yes or no, everyone? So it is 10 by 1.1 divided by 1.1 minus 1 is 0.1 divided by 1.1. So this I'll again write divided by 1.1 into this becomes inverse. Yes or no, everyone? 1.1 divided by 0.1. This gone, this gone. 10 divided by 0.1. Woohoo! Which is 100. Oh my the god. Yes or no? So see, 10 is my first year cash flow. 10% is the discounting rate. So because of this, yes, value of my asset up to perpetuity is CF1 divided by discounting rate. Nonsense. But you like it. You want things to be complicated. Okay? If you have understood things till here, great. But how on earth does it give me a feel of what exactly is a perpetuity and why exactly the formula of perpetuity is, yes, even I forgot the formula. Okay, cash flow divided by required rate. Doesn't give me. Chumma you did something. I can also do. Even differentiation also I can do and show. What big thing is there? You put it on ChatGPT, it will give you. You write it down in the class again. What value addition did you get? Did you get a feel of why exactly it is that? No, chumma you did something mathematically. Okay, but let it be aside. Giving you guys a minute. Let this get down. Let this go out from your brain. Then I'll tell you the logic. Simple. Cross multiplication. Okay, giving you guys a minute just till this sink in. Yes, everyone. So now that I've made it a bit complicated, now that you got some important thing is happening, let us make it juju. Okay, simple example I'll give. I went to bank. Who is sitting there? Moneybai is sitting. Moneybai is sitting. I told Moneybai, I have 100 rupees. I want to invest. Tell me how much return you'll give. He'll ask for how many years. He's telling, mine is retirement plan, boss. I will not take the money. But every year I am only removing the interest from that. Tell me how much interest you'll give. He'll tell 10%. I'll give you. That means try understanding the transaction. Let me try calculating. Yes. Look at this. Today I went. 0 I went. I paid 100 rupees. Yes or no, everyone? First year, how much interest I will be getting? 100 into 10%. 10 rupee interest. Yes or no, everyone? Second year, how much interest I will be getting? 10 only I will be getting. Compounding happens when I keep the interest there. I'm bringing it back. Yes or no? Your good old days. Opening value, year, what was it? Year, opening value, interest, yes, closing value, yes, or total minus any cash flow you've removed, you will be getting the net value. Yes or no? So first year, at the start of first year, 100 rupee was there. Yes, we kept it for 1 year. He gives me 10% interest, 10. So it becomes 110. But I tell boss, that interest I want it back. So I take back that 10. At the end of the year, how much only is there? 100 only is there. Next year again they will invest 100 only. They will earn 10% on that 10. It becomes 110. He's asking, should I keep this 10 also? I told, no, that money I want. Yes, bring it back. You keep 100 only. So this way every year I'll keep getting 10 rupees interest. Yes or no, everyone? Absolutely no doubts in this. Yes or no, yes or no, yes or no. Perfect. third year 10 I will get, fourth year 10 I will get, fifth year 10 I will get, so on. Perfect. Is this clear, everyone? Okay. Now, can I tell? Yes. 100 rupees I'm investing, 10% every year I'm getting. That means 10, 10, 10, 10. I can keep on getting till perpetuity because my 100 rupees lying there. Every year they'll keep on giving me 10, 10, 10 rupees till perpetuity. Is this clear? Now let me just flip the story. Pay attention. Very simple cross multiplication. I go to money buy. I tell boss, I'm doing my retirement planning. Every year I want 10 rupees to take care of my expense. If I invest money, tell me how much return you are going to give me. He told that 10% return I'll give you. That means how much should I invest? I know the number should be 100 only. Yes or no, everyone? Now, simple philosophy. Investment, income. My interest rate is how much? 10%. That means if I invest 1 rupee, the only cash flow I'm going to get is interest. I'm not getting back my principal. If I invest 1 rupee at the end of first year, how much I am getting? 0.1 I am getting. Yes or no, everyone? How much income I want every year? I want 10 rupees every year. That means how much I should be investing? 10 divided by 0.1. 100 I should be investing. Juju B. 20 seconds only it was. Chumma. Because if I tell in 20 seconds, this much only you will do. Yes or no, everyone? Yes. 10 rupee. It is how much cash flow I want. How much money I want every year. And to get this, yes, this is how much percentage of my investment divided by, yes, required rate. Yes or no, everyone? As simple as that. There is absolutely no need. Yes, the logic is also clear. We've got the feel exactly why am I doing. Yes or no, everyone? Perfect. Now with this, let us try playing with some numbers so that we get more feel of this. Look at this. I want to invest in a stock that pays 100 rupees per annum dividend till perpetuity. Calculate value of the asset if required rate is 10%. Tell me students, every year how much I want, 100 I want. Yes or no, everyone? Perfect. Till perpetuity. So how much I should invest? So tell me 100 rupees I want. If I invest, how much percentage only return I'm getting? 10% only I'm getting. Yes or no, everyone? That means how much I should be investing? 100 divided by 0.1000. Yes or no, everyone? Second situation. In case of 15%, I'm telling boss, 100 rupees I want. 100 rupees return I want. Yes. If I invest 1 rupee, how much only I'm getting? 0.15 only I'm getting. Yes or no, everyone? Yes. If I invest 1 rupee, 0.15 only I'm getting. I want 100. That means how much I should invest? 100 divided by 0.15. Yes or no, everyone? 20%. Okay, boss. I invest 1 rupee. 0.2 I'm getting. I want 100 rupees. That means how much I should be investing? 100 divided by 0.2. Yes or no, everyone? Perfect. Absolutely no issues. Chill. Okay. Now let us come in case of a share. Yes, Koti. Koti, you have come in the book also. Koti Reddy. Yes, is earning 8% interest from an FD. 8%. For you, risk free FD also should give you 50% return. There also you try. See if there is a rich bank manager. If he is having a daughter, you try falling in love with her. Try getting 50% risk free. Koti Reddy. Now Koti Reddy is telling boss. He went to bank. He asked. He's getting risk free 8%. Every year he wants 10 lakh rupees income. That means how much he should be investing. Very simple. Tell me. Investment, income. I invest 1 rupee. How much I'll be getting? 8% of that 0.08. Tell me, Koti Reddy, every year how much he wants? 10 lakh. That means how much he should be investing? 10 lakh divided by 0.08. It is going to be how much? 1 crore 25 lakh. Yes or no, everyone? Yes. I will first write the answer. Then I will write the formula if it is needed. Cash flow 1 divided by discounting rate. Yes or no? This however I want I can write. See, either I can write cash flow divided by discounting rate. Yes, in case of interest, I can write it as interest divided by KD, required rate for debt holder. In case of equity, I can write it as dividend divided by KE. Yes or no? Same thing only. Is this clear, everyone? Every year, how much dividend I'm getting? Divided by required rate. As simple as that. Is this clear, everyone? Perfect. Any doubt in this? Absolutely no doubt. Clear? So we have our formula. Value of an asset is the dividend divided by KE, which is basically we are trying to capitalize that. We have one simple example on this. Let us try doing that example question. Also, yes, I guess the example is example number 3. Okay, after that we'll take a break. Okay. I hope the screen is clear reasonably. Give me a confirmation. A bit more zoom. Okay. Now, look at this, students. RCB Limited. Aha. RCB Limited intends to pay a dividend of 100 rupees every year to its investors till perpetuity. RCB Limited is there. They are telling you buy our share. Every year 100 rupees dividend will give. Okay. Risk-free rate is 9%. Okay. Market rate is 15%. Okay. First, calculate required rate of return if beta of the security is 2. Security is 2 times riskier. That means tell me 9% risk-free I will be earning. Yes or no, everyone? Yes, if I invest in market 15 minus 9, 6% extra I will be getting. But I am having 2 times risk. That means I want 2 times return. So, yes, RF plus beta into RM minus RF. Yes or no, everyone? Yes, perfect. So, it is going to be how much? 6, 12, 21 percentage. Yes or no, everyone? Perfect. Second, calculate intrinsic value of the share. Tell me, students. Yes, if I purchase the share every year, 0, 1, 2, so on up to infinity. How much dividend I am getting? 100 dividend I am getting. Yes or no, everyone? Tell me. Yes, as an investor, investment income. I am telling, boss, if I purchase a share of RCB Limited, how much return I want for the risk I am taking? 21% I want. That means if I invest 1 rupee, 0.21 income I want. Tell me, they are willing to give me every year how much income? 100 rupees. That means how much I am willing to invest. It is going to be 100 divided by 0.21. What is going to be the value? 476.19. Yes or no? Yes. Now I will write the formula. Now I have this limitation. I will not write. In the end, again, I will go back and chumma write for time pass sake. Because I don't know the formula. After this, I'll see 100 is what? Okay, 100 is dividend. That way I'll be writing. Why do you want the formula, dear? Is this clear, everyone? Perfect. Now comes the third situation. If the current share is currently trading at 500 rupees, advise, should he buy or sell? Should he buy or not? Okay, fine. Tell me, yes, what is the value of the share? 476. That means benefit I'm getting is 476 only. Will I be willing to pay 500 rupees? No, boss. I will tell, yes, do not buy because it is overvalued. Don't buy. Is this clear? Is this clear? Is this clear, everyone? Perfect. So I hope the discussion till now was crystal clear. All the online live students give me a confirmation. Perfect. Shall we continue our discussion, students? Okay. Now what we'll do is balance discussion will continue after the break. Okay. Now in this session, technically what all we have discussed. Quickly, let us try summarizing it down. We had already discussed, yes, what value of an asset is, how to calculate present value if we are having cash flows for limited period. Using that, we have seen in case of share, if it is held for limited period, how to calculate value. Technically, you see for how many period you are holding. Question will give you dividend, question will give you sale price. Bring it to present value terms. If required rate of return is not given in question, how do I calculate required rate of return? It is RF plus beta into RM minus RF. Here one extra adjustment we had seen. If inflation is there, overall all the things will increase by that respective percentage. Risk free will also increase, RM will also increase. That was one thing we had seen. And then we had seen in case of perpetual cash flows. Yes or no? How do I calculate present value of all the cash flows? It is cash flow 1 divided by required rate. Yes or no? In case of a share, it is a dividend divided by. In case of a share, the required rate is cost of equity. This is the formula, but we will not be using the formula. I will just tell investment income. If I put 1 rupee, how much required rate I want? If I want this much return, how much I should be putting? As simple as that. Is this clear, everyone? Perfect. So with this, we end this session. Lot more things now. Now we have completely finished the base. From here onwards, we'll be discussing, yes, constant growth model. We have questions on constant growth model. Few questions are there in the question bank also. But variable growth model, good amount of questions are there. And trust me, variable growth model, nothing is there. If no growth is over, constant growth I was told, variable growth directly questions only I'm doing because there is absolutely nothing to be done. Is this clear, everyone? Okay, so 15-20 minutes more of discussion, then we'll be fully into our CA final zone, picking questions from study material, past paper, RTP, MTP, solving them one after the other. It is going to be so much more of fun, but in the next video. So take a small break and go ahead to the next video, my dear warriors. Yes, everyone. So welcome back after the break, my dear students. So we are going to take our discussion forward. So what is it that we have discussed? We have started with chapter 1, equity valuation. In that we are currently in unit 1. which is calculating the value of equity shares. We have seen if cash flows are for limited period, we will draw a line, pull all those cash flows to present period. Done. Cash flows are for unlimited period. In case of no growth, I will only get my dividend throughout. In case of perpetual cash flows, we are assuming that I will never get my principal back. I am only getting the income. So yes, what is going to be? Yes, present value of perpetuity. Yes, it is first cash flow divided by required rate. Yes, in case of share, it is a dividend divided by KE. Yes or no? There is no need for a formula. I've shown you exactly how to be doing it. Now comes the maja. Okay, from here we have questions in CA final also. Yes, based on this we'll be going for variable growth also, which is in case of constant growth. For this we have Gordon's growth model. Yes, you would have again learned this in inter. Let me write down the formula. Yes, understand exactly what is it trying to tell. Based on that we'll anyways be solving good amount of questions. First, yes, value of a share as per Gordon's growth model, it is a D1 divided by KE minus G, where D1 it is the expected dividend at the end of first year, KE it is the required rate of return, G is going to be the growth. Yes, so quickly write it down. Yes, value of a share it is a D1 divided by KE minus G, wherein D0 it is the dividend just paid by the company. D1 it is the expected dividend at the end of first year. How do I get it? Last year dividend plus growth, that is D0 into 1 plus G. G is the growth rate, KE is the required rate of return for the investors. Is this clear, everyone? Perfect, we have written it down. So let us try understanding exactly what is this trying to tell me. Now, okay, fine. Yes, everyone, value of an asset as per Gordon's growth model or constant rate, it is a D1 divided by KE minus G. First, one example is there. First, let me just put it into the formula, try getting the numbers, then we'll try understanding what exactly it is trying to tell. Maja Limited just paid a dividend of 10 rupees. Just paid, hot, already paid. If I buy the share now, will I be getting that? No. I will only be getting in the future. Its dividends are expected to grow at 10% per annum till perpetuity. Calculate value of an asset if the required rate is 20%. Let me write down the data. D0 just paid is 10 rupees. D1 next year how much I'm getting? 10 rupees I got. On that 10% extra I'll be getting. So I'll be getting 11 rupee. That is one way of writing. Or you can write it as 10 into 1 plus 0.1. Yes or no? D0 into 1 plus G. Yes, that will also give me 11 rupees. Okay. Yes, required rate KE is going to be 20%, which is going to be 0.2. Yes or no, everyone? So value of an asset is D1 divided by KE minus G. 11 divided by KE is 0.2 minus growth is going to be 10%, 0.1. It is 11 by 0.1. Is it going to be 110 rupees? Yes or no, everyone? Perfect. That is going to be the answer. But before we answer, we should exactly know what exactly is happening. Yes or no, everyone? So let us try getting into the logic. Again, two logic could be there. Mathematical logic is also there. Then logical thing is also there. Feel. Again, if I tell you quickly in 2 minutes, you'll tell, what is there in this? So, okay. Yes. So, I'll give you quickly the mathematical logic. Same story. Yes. Present value up to perpetuity. It is summation of a GP series. A divided by 1 plus R. Quickly in 2 minutes, I'm going to show it off. Keep your brain aside. Put it at 2x. Finish it off. As simple as that. Look at this, everyone. Mathematical proof. Tell me. I purchased a share. Yes. It already just paid a dividend of 10 rupees. Every year it is growing at 10%. That means first year how much dividend I will get? 11 rupees. Second year plus 10%, 12.1. Third year plus 10%, 13.31. So on up to infinity. It will go. Okay, great, boss. So what is value of an asset? It is present value of all cash flows. My required rate is 20%. First, I will pull, yes, 11 rupees for 1 year. So it is 11 divided by 1.2. Second year, I will pull 12.1 for 2 years. So it is 12.1 divided by 1.2 square. Third year, I will pull 13.31 by 3 years divided by 1.2 to the power of 3. So on. Now this how I will write is 11 divided by 1.2 I will write. Next factor, I will write it as 11 into 1.1. That is how exactly I got 12.1. 1.2 whole square, I will write it as 1.2 into 1.2. Yes or no? So I will write it this way. Yes, 11 divided by 1.2 into 1.1 divided by 1.2. Why exactly on earth am I doing? To get my R. common factor which is getting multiplied. In my numerator 1.1 is getting multiplied, denominator 1.2 is getting multiplied. Next year factor again 11 into 1.1, 12.1 was there, 1.2 whole square was there, into 1.1 divided by 1.2, so that I know that my R is 1.1 divided by 1.2, or else I can do the long approach also. Okay, so my first term A is 11 divided by 1.2. R, either I can do it this way only, yes or no, it is 11 divided by 1.2 into 1.1 divided by 1.2. This is the factor which is getting multiplied, yes or no everyone. That is going to be my R, or else you can do it this way also. Second term by first term. What is my second term? 12.1 by 1.1 square divided by first term is 11 divided by 1.2. So it is 12.1 by 1.2 square into 1.2 divided by 11. Yes, this one goes off, this one goes off. This 12.1 I will write it as 11 into 1.1. 11 goes, 11 goes. So what is left is 1.1 by 1.2. Is this clear everyone? Perfect. Yes, now summation of a GP, it is A divided by 1 minus R. Yes, A is 11 divided by 1.2 divided by 1 minus R is 1.1 divided by 1.2. Yes or no everyone? Yes, so 11 divided by 1.2 divided by, yes, 1.2. Yes, it is 1.2 minus 1.1. Yes or no everyone? So it becomes 11 divided by 1.2 whole divided by 0.1 divided by 1.2. This 1.2 1.2 gets cancelled. What is left is 11 by 0.1. So it is going to be 110. Yes or no everyone? Yes, what exactly is 11? It is D1. Yes or no everyone? Yes, what exactly is 0.1? Total return is 0.2. In that growth is 10%. That means balance it is KE minus G. So value of a share is D1 divided by KE minus G. Mathematical proof. I guess I have not taken much of your time. Anyways, of no use. Is this clear everyone? Yes. Now pause the video, take a deep breath, put it out of your system. Absolutely no value addition from this. Is this clear everyone? Yes, we'll understand the logics, don't worry. Yes everyone, so now let us try understanding the exact logic, the feel as to what is this trying to tell us. Very simple thing. Okay, let us try understanding with the same set of numbers. Suppose I purchased a share today by paying how much? 100 rupees. I am expecting that first year I will get 10 rupees dividend. Okay, and at the end of first year my price will become 105. I will have to calculate my expected return. Yes, how much return I am getting as a percentage. Now tell me return percentage I want to get. Tell me, you are purchasing a share. Two returns you will be getting. What all you will be getting? First, you will be getting dividend yield. That is dividend income you will be getting. Second, you will be getting capital appreciation. Yes or no? You put 100, it has become 105. Yes or no? Capital appreciation you will be getting. Yes or no, everyone? Perfect. Now tell me. Today, how much you have put? 100. How much dividend you are putting? How much dividend you are getting? 10 rupees dividend on how much investment? On 100 rupees. That means 10% dividend you are getting. Yes or no? So can I tell, boss, I invested 100 rupees, on that I'm getting 10 rupees dividend. That means my dividend yield is 10%. Perfect. That is one income. But boss, there is one more income. What is the other income? Capital appreciation I'm getting. Boss, today I put 100. At the end of first year, how much it became? 105 it became. So how much gain I got? 5 rupees on the investment of 100. Yes, that means 5%. That gain also I got. Yes or no, everyone? Capital appreciation. Yes, my 100 became 105. Yes or no, everyone? So that gave me 5%. So the total return, expected return is 15%. Yes or no, everyone? Perfect. So look at this. I can write my cost of equity. How much return my investor is expecting as follows. Investor is expecting dividend yield also. He is expecting capital appreciation also. Perfect. Yes, dividend yield. How much dividend I got? First year, how much dividend I got? 10 rupees I got. I will write it as a D1. How much I invested? How much I invested today? 100 rupees, which is my P0, today's investment. Yes or no, everyone? If I'll have to show you guys, is in a line. 0, 1. Today I invested 100. Using this, first year I got a dividend of 10, and first year end my price became 105. Yes or no, everyone? Perfect. So I can tell D1 divided by P0. Yes or no, everyone? Yes, 100 I invested. On this 100 I got 5 rupees dividend. Perfect. 100 I invested, this 100 became 105. That means 5 rupees income I got. This only we are having, yes, capital appreciation, which is written as P1 minus P0 divided by P0. Yes or no, everyone? You would have seen this already. Yes, I had put 100, it became 105. So 5 rupee income on 100. Yes or no, everyone? Perfect. Cost of equity. Till here, whether things are fine? Perfect. So I am telling, boss, as an equity holder, how much return I am expecting? Two returns I am expecting. One is the dividend income. Second is the capital appreciation. Yes or no, everyone? Perfect. So the capital has appreciated. The share value has appreciated. That is what has brought the growth in the company. Yes or no, everyone? So this factor of capital appreciation, this only is called as growth. This is bringing the growth. My share value has grown. That means next year I want more income on that. Yes or no, everyone? Company is having more fund. They'll be giving me more income on that. Yes or no, everyone? So this only I will be writing it this way. KE is equal to D1 divided by P0 plus this capital appreciation part. Yes, always remember what is bringing the growth. Yes, my capital value has increased. Yes or no, everyone? Yes, that is bringing me the growth. It is written as G. So now I can play with the formula. Yes, look at this, look at this, look at this. Yes, G is plus here. I will take it to the other side, becomes minus. So I will write it as KE minus G is equal to D1 divided by P0. P0 is the price I am paying today or value that I am investing today. Now I want to know P0. Yes, that is how much I should be paying today. Bring it here. Yes, so it becomes P0 into KE minus G is equal to D1. Yes or no? I want to know the value of P0. So I will take it P0 is equal to D1 divided by KE minus G. Yes or no, everyone? Yes, this is exactly what this is trying to tell me. Perfect. So understand, I hope you guys know the basic. Yes, plus goes to the other side becomes minus. Minus goes to the other side becomes plus. Into goes to the other side becomes divide. Divide goes to the other side becomes into. If there is anything in power, goes to the other side, it becomes inverse of the power. Say for example, x to the power of 3 is equal to 5 randomly. Yes, I have to cancel this power. That means x is equal to 5 to the power 3 goes to the other side, it becomes inverse 1 by 3. Yes, I think there is no need for me to explain the logic, but still okay, let me just take 2 minutes and explain that. Okay, now say for example, simple. Why exactly, sir, plus becomes minus, minus becomes plus? Very simple thing. Say for example, I am having an equation a plus b is equal to c. Okay, I want to know the value of a only. So I'm telling b, I will take it to the other side, plus becomes minus. Why it is happening? Simple example. Imagine cricket match is happening. Team A, Koti Reddy's team, is having 8 players. Team B, Kameshwaran's team, is having 8 players. Now tell me whether both are equal. Perfect. Yes, they are at equation. Now imagine for Koti Reddy's team, one more person has come. Now are they equal? No. That means in order to equate the same, what I should do? There also I should add one more person. Yes or no, everyone? Assume Koti Reddy's team, one person left. Now is it same? No. In order to equate, I should remove this also. Is this clear? Now understand the logic as to why I am doing. Look at this. A plus B is equal to C. I am telling I want A only. I don't want B. That means what I will do? I will reduce B from my LHS. So I will do A plus B minus B. That is why it gets nullified. But tell me, if I just reduce B from there, I just remove one player from the other team. Is it still in equation? No. That player I should remove from this team also. So it becomes C minus B. So this gets nullified. That is why it becomes A is equal to B plus goes to the other side becomes minus. That is why it becomes minus. Is this clear, everyone? Perfect. Similarly, yes, minus becomes plus, into becomes divide, divide becomes into. Similarly for the power, power is only place wherein students may not be knowing. 3 to the power 5 is equal to, say for example, x, or else x to the power 5 is equal to 3. Sorry, 3 or 10. Now I want to calculate the value of x. Tell me, power goes to the other side, it becomes inverse of the power. Yes or no? That is, x becomes 10 to the power 5 goes to the other side, becomes 1 by 5. Why exactly is it happening? Look at this. X to the power 5 is equal to 10. Now I want to equate the same, but I don't want the power here. So I will do here 1 by 5 in the power. Yes, or that means here also I should do 1 by 5. This gets cancelled. 5 into 1 by 5 is 1. So x becomes 10 to the power 1 by 5. Is this clear, everyone? Perfect. So that is what we have done. Even the basics plus minus also I have told, because that's only the thing that we are going to use it throughout. Okay, fine. This we have done. Till here, any doubts? No. So to a reasonable extent, we have tried understanding why exactly my price of a share is d1 divided by ke minus g. One more next level understanding is there. Very simple, cross multiplication only. That we are going to do it now. Pay attention, pay attention, pay attention. Yes, we understood that as a shareholder, I will be expecting two returns. What all are those two returns? First is the dividend yield. Second is the capital appreciation. The capital appreciation only I will call it as the growth. That brings the growth in the company. Is this clear, everyone? Okay, perfect. Now phase 2, next level, let us try taking it. Pay attention, everyone. Yes, I hope you guys know the logic of no growth. Yes or no, everyone? Simple. Yes, I invest in a bank. Yes, I want 10 rupee income per annum till perpetuity. Interest rate is 10%. How much I should invest? Simple, boss. Investment, income. I invest 1 rupee, 10%, 0.1 I'll be getting. I want 10 rupee. How much I should be investing? It is 10 divided by 0.1, 100. Yes or no? Yes, that is, I have value of an asset. It is D1 divided by KE. Till here it is there. I only want to know why it is KE minus G. That is only logic I want to know. Yes or no, everyone? Perfect. Now understand. Let us come to a share. Yes. Investor is investing in a share where he will be getting D1 of 10 rupees. Sorry, D1 is 10 rupees. At the end of first year, he will get 10 rupees. 20% is the return that he wants in total, and growth is going to be 10%. Is this clear, everyone? Perfect. Now, very simple logic. Jujubi halwa. 2 minutes only it will take you to get the feel. Tell me, I am the investor. For the risk that I am taking in this company, suppose Maja Sugarcane, Koti Reddy is investor. He is telling, boss, risky security it is. For taking the risk, how much return I want? 20% return I want. Koti is telling, boss, 20% return I want. I told, okay, da, 20% return you want. We'll give you, don't worry. But the return that I'm going to give you from a share, in two different ways I'll be getting the return. What all you will be getting? Dividend also you will be getting. Capital appreciation also you will be getting. This capital appreciation only I'm telling it as growth. Yes or no, everyone? Your principal value will grow. Tell me, total 20% return you want. In the form of growth, how much percent you will be getting growth every year? Every year 10% growth will be there. Your value will keep on increasing. Your capital base will keep on increasing 10% every year. Yes or no, everyone? That means tell me, Koti Reddy is telling, boss, I want 20% return. Da, 10% growth you are getting, capital appreciation you are getting. That means how much income only you want from dividend. From dividend, how much income is sufficient for you? 10% income is sufficient. Why? 10% growth I am getting, capital appreciation I am getting. Yes or no, everyone? Till here it is fine, till here it is fine, till here it is fine. So what I will tell, boss, I want to buy a share which gives me a dividend of 10 rupee. 10 rupee dividend I am getting. 10 rupee dividend I am getting. And my dividend income should be how much percent? It should be 10%. That is why I should be investing 100 rupees. Yes or no? Yes, 10 rupees dividend I am getting, D1. My dividend income should be how much? Total income is 20%. In that growth, capital appreciation in 10% na, boss. So dividend 10% is sufficient. Yes or no? Total I want 20%. In that 10% capital appreciation I got na. So yes, for me dividend 10% is sufficient. That is why D1 divided by KE minus G. Is this clear, everyone? I hope the logic is crystal clear as to why I am doing. Yes or no, everyone? I am telling, boss. Yes, again, investment income. This also let me show. I invest 1 rupee. Yes, total income 20%, 0.2 I am expecting, but 10% comes in the form of growth, capital appreciation. Dividend income, how much only you want? Dividend income 10%, 0.1 only you want dividend income. Yes, that means if company is giving me a dividend income of 10, how much I should be investing? 10 divided by 0.1, 100. Yes, that is why, yes, my price of an asset or value of an asset is D1 divided by KE minus G. What is this trying to tell? total return, in that some portion I'm getting in the form of capital appreciation. Balance only I want dividend. That is what is the field this is trying to tell. Is this clear, everyone? Give me a confirmation. Perfect. Now I'll give you an alternate parallel also. Look at this, students. Look at this. I go to a bank. Who is waiting there for me? Moneybai is waiting for me. Yes, I tell Moneybai, boss, I have 100 rupees waiting with me. I will invest it. How much return you are going to give? He told, boss, 20% return I'll give you. Okay, I am telling, wait, I want a simple arrangement to be done. 20% you are giving me. Okay. So every year how much it becomes? 20 rupee. First year it becomes 20 rupee. I want 50% of that money for me. 50% you reinvest. You grow it. Yes or no, everyone? Perfect. So you give me 10% only. That means tell me 100 rupees I have put today. First year, how much income he will earn, generate on that? 20 he will generate on that. But I will take how much only? I will take 10 only. 10 will be with him. So at the end of first year, what is going to be the value which is there with him? 110. 10% capital has appreciated. Yes or no, everyone? Perfect. Accordingly, this keeps growing. Next year 110 on that 20%, 22 he'll earn. Yes or no? 50% of that 11 he will give it to me as dividend. So on, this story keeps continuing. So if I want to understand how much I should invest, I will tell, yes boss, how much income I am getting. How much income I am getting every year? 10 rupees I am getting. Yes or no, everyone? Perfect. Tell me total how much return I want? 20%. That is total. Yes or no? In that, yes, 50% is kept there. Only 50% I am receiving. Yes or no? Only 10% I am receiving. Yes or no, everyone? So I am telling 10 rupees divided by 10%. 100. That is my answer here. Is this clear, everyone? Total return from a share. I want dividend also, capital appreciation also. Yes or no? Yes, I want to know. Yes, a dividend this much if I am getting means how much I should be investing. So when the cash flow is a dividend, my denominator should also be the required rate of dividend only. That is why I'm doing total minus growth. Is this clear, everyone? Perfect, perfect, perfect. Yes, I can prove it to you how my value is appreciating at the end of year also, but that is not needed. Yes, here only you have seen my value has appreciated here. Yes or no? By 10%. 100 became 110. Accordingly, it will keep on growing. Is this clear, everyone? Perfect, perfect, perfect. Now, yes. So the complete sum and substance of this, yes, what all we have discussed. Look at this. Let us quickly try scribbling it down. Pay attention. Yes, we are here trying to understand to calculate a value of a share. Which all cases can be there? If cash flows are for limited period, if cash flows are for unlimited period. Cash flows are for limited period. I will be discounting my cash flows individually. Yes or no? Draw a line, see all the cash flows, bring it to present value. Yes, cash flows are there for unlimited period. Yes, in case of no growth, yes, it is a D1 divided by KE. In case of constant growth, yes, it is a dividend growth model, constant growth model, Gordon's growth model. Yes, it is a D1 divided by KE minus G. Yes or no? This is a total return. In that this much percent I'm getting capital appreciation. Only balance dividend is sufficient. So how much dividend I'm getting? Dividend should be how much percentage? That is what is giving me this. Yes or no, everyone? Perfect. If this is clear, let us try solving some example questions. So we are having good number of example questions on this. We have example 1, 2, 3, and 4. So giving you guys a minute to let this sink in, then we'll go ahead to question solving, my dear students. Yes, everyone. So shall we solve some example questions on this? Are we ready, everyone? Perfect. So look at this. Small examples we have created, wherein some data is there, some data is missing, there missing, there missing. We'll keep on playing. Okay, so look at this. Case 1. D1 is 10 rupees. Okay, sir. Yes, required rate is 15%. Okay. G is 5%. Calculate value of the asset. Simple, boss. Value of an asset in case of constant growth, it is going to be, what is happening? D1 divided by KE minus G. Yes or no, everyone? Tell me whether D1 is available. Yes, boss. 10 rupees. K is how much? 15%, 0.15. G is how much? 5%, 0.05. That is, it is a 10 divided by 0.1. It is equal to 100 rupees. Yes or no, everyone? Perfect. Case number 2. Look at this, everyone. D naught is 10 rupees. That is, we have just paid 10 rupees. KE is 15%. G is 5%. Yes, value of a asset. It is D1 divided by KE minus G. Tell me whether D1 is directly given. No, sir. But D0, I have just paid 10 rupees. Yes, into 1.05. Next year it will increase by 5%. So it will become how much? 10 into 1.05? 10.05 up. Okay, 5%. Okay, fine. So it is going to be 10.05 divided by KE, total 15%. Even that's what I'm thinking. 10 into 1.05, 10.5. What the Koti, what you are doing? Huh? Final answer also, how you will get 10.05? 10.5 divided by total I want 15%. In that growth only I'm getting 5%. That means from dividend I want 10 percentage only. So it is going to be 105. Yes or no, everyone? Perfect. Case number 3. Look at this. D naught is equal to 10. Growth is equal to 5 percentage. Calculate KE if price is 105. Now there is another separate formula for calculation of KE. I guess the formula goes as KE is equal to D1 divided by P naught plus G. Something of this sort, one formula is there. Absolutely not needed. Just this one formula will keep. Yes or no? Whatever is there we'll write. Whatever is missing we'll do. Yes or no, everyone? Look at this, everyone. Yes. Value of an asset or P naught or V naught, whatever you want to, you can tell. It is D1 divided by KE minus G. Tell me, price is given as 105. That means today I am paying 105. Tell me whether D1 is given directly. No, sir. But D naught is given. Yes, 10 we paid. Yes, it will grow by 5%. So it will become 10.5. Yes or no, everyone? Okay. Yes. Do I know cost of equity? No. Let me keep it as it is. Or let me write it as X. How much is my growth? 5%. So I'll write as minus 0.05. Yes or no? Now I'll just take it to the other side. Slowly play it along. Now look at this. 105 into KE minus 0.05 is equal to 10.5. Yes or no, everyone? Here it is there in the multiplication, goes to the other side, becomes a division. So I will tell KE minus 0.05. It is 10.5. This is into, becomes a divided by 105. Yes or no, everyone? Which is 0.1. KE minus 0.05. I want the value of KE. Minus goes to the other side, becomes plus. It is 0.1 plus 0.05. Therefore, KE is equal to 0.15. Yes or no, everyone? Is this clear? Give me a confirmation. Okay. Yes, we'll be spending a good amount of time when we are understanding the concepts. But question solving, I want to do it slightly faster. Okay. This is how it continues here. Okay. From here only it is continuing. Okay. Next. D naught is equal to 10. KE is equal to 15 percentage. Here, calculate growth. Same. Put it as missing figure. Yes or no, everyone? If price is 105. Now look at this, students. P naught is equal to D1 divided by KE minus growth. Okay. Whether D1 is directly given? No, sir. D1 is not given. But I know D1 is nothing but D naught into 1 plus G. So I will write it this way. Look at this. Here, let me push it here. Okay. Yes, I will write it this way. It is D naught into 1 plus G. That gives me D1 divided by KE minus G. Gives me P naught. Tell me what is the price that we are paying? 105. Whatever data is there, let me write it down. Yes, what is D naught dividend just paid? It is 10. 1 plus G divided by how much is my KE? 15 percentage. 0.15 minus G. Is this clear, everyone? Slowly I'll play along. Yes, and try. Yes, arriving at the value of G. Now look at this, everyone. 105. Division is there, goes to the other side, becomes multiplication. 0.15 minus G is equal to 10 into 1 plus G. Now here I'll have to multiply and accordingly only try playing it around. Yes, however I do, I'll have to do that. Yes, 105 into 0.15. It is 15.75 minus 105G is equal to 10 plus 10G. Yes or no, everyone? Yes, bring this 10 to the other side, becomes minus 15.75 minus 10 is 5.75. Minus goes to the other side, becomes plus 105 plus 10 is 115G. Therefore, G is equal to 5.75 divided by 115. 5.75 divided by 115. It is 0.05. Yes or no, everyone? Simple. If you want, there is formula for this also, but who will keep on by hearting? Yes or no, everyone? If you just know the base, accordingly you can just keep on playing throughout. Okay, everyone? Is this clear? Is this clear? Is this clear? Okay. Now final situation. Yes, D1 is equal to 10. KE is equal to 15 percentage. Calculate growth if price is 105. Here D1 is given, so it becomes even more simpler. Previously only D0 was given. So two things were there. I had to do more things. Here it is very simple. P0 is equal to D1 divided by KE minus G. Yes, it is 105. D1 is 10 divided by K is 0.15 minus G. I will take it to the other side. Yes, 105 into 0.15 minus G. Now, at what pace you do these calculation, into, plus, minus, into, divide, that depends on your comfort. If you are very comfortable in a single step, you can jump it off, finish it off. Yes or no? If you are not comfortable, slowly do. Absolutely no hurries. Okay, perfect. This is into, comes to the other side, becomes a divide. 10 divided by 105 is 0.15 minus G. 10 divided by 105, it is 0.09. 0.095. 0.15 minus G. G goes to the other side, becomes plus. Yes, it is minus 0.15. It is 0.054. 0.054 or 0.055. Yes or no, everyone? Therefore, G is equal to 0.055. Is this clear, everyone? Perfect. So whatever permutation combination could have been there, using this concept, we have already done it. Is this clear, everyone? I hope the pace of solving questions was not a problem. Recorded students always suggested that first you do. So when we are coming into solving of questions, for every question I will tell is, before we solve every question, what I want you guys to do is first try it by yourself. The objective is not to get the right answer. The objective is to try. It is to commit mistakes. See, we will commit mistakes. If we commit mistakes here, we won't repeat them in the exam. If we don't do it here, we will go there and write exam, commit mistakes and come back. So every time, every question, I will ask you guys, pause. Try it by yourself. Commit mistakes. Commit as many blunders as you want. From that only we'll be learning. Yes, the learning that you get once you commit a mistake and then you see what is the right approach, that is not comparable at all. You will never forget that again. So I want you guys, I'm inviting you. Yes, the way we invite for an event, for a function, I'm inviting you. Come, commit mistakes here. Because every question I'll be solving. But before that, I want you guys to try, commit mistakes so that we get to know, okay, what is wrong, what has to be done right. Is this clear, everyone? Perfect. Yes, everyone. So now it is time for us to solve questions. Questions from study material, past papers, RTP, MTP, everything together. Okay. Now look at this. Some additional notes which is required. Firstly, required rate of return. We've already discussed. Calculation of D1. If D0 is given, yes, you know how to calculate it, D1. It is D0 into 1 plus G. Yes or no, everyone? Yes, everyone. So calculation of D1. If D0 is given, yes or no? Yes. Company just paid a dividend of 10 rupees. Growth is 5%. Calculate D1. How do you do it? Yes, D1 is equal to D0 into 1 plus G. That is 10. It will grow by 5%. So it will become 10.5. Yes or no, everyone? D1 is equal to D0 into 1 plus G. That is one formula. We'll just have it, yes, on the back of our mind. Yes, where D0 is going to be the dividend just paid by company. D1 is expected dividend at the end of first year. Company just paid a dividend of 10 rupees. Yes, calculate expected dividend if growth is 10%. Yes, D1 is equal to D0 into 1 plus G. Yes, 10 into 1.1. It is going to be 11 rupees. Yes or no, everyone? Perfect. Now, a very important confusion which students will be getting throughout. Dividend value will be given in the question. Whether is it D0 or D1, which one should we consider? Because based on that, our answer is going to differ. So how exactly institute does and what is it that we have to be doing? Specific wordings will have to be seen. Yes, if question is using the term dividend paid, dividend paid, dividend paid, already paid by the company, in that case, what kind of dividend it is? It is a D0, already paid. Perfect. Or if dividend is given in the income statement, question tells following is the income statement for the year ended 31st March 2027. Income statement, sales, cost, profit, everything is given. Yes, their dividend is given. That means the year is already over. For that, I have prepared income statement. For that year, dividend is given. That means it is already paid. So it is again D0. Yes or no, everyone? Yes. In this case, consider it as D0. Yes. In all other situation, question tell company pays a dividend of 10 rupees. Yes, nothing is given. In all other situations, default assumption by ICA is that yes, we are going to assume it as the expected dividend. Is this clear, everyone? Only in these two cases, either yes, question gives the term dividend paid by company or it is given in the income statement. Only then we'll be considering it as a D naught. In all other cases, we'll be considering it as a D1. Is this clear, everyone? Consider it as D1. Okay. And then is in case of ambiguity, you are not getting a clarity. Is it D0 or D1? What we'll have to be doing? Yes. Assume it as D1, but it's always better that we give a note and accordingly solve. That was we assumed it as D1 and accordingly solve. If we assume it as a D0, the answer is going to change accordingly. So it is always better that we give that one note. Is this clear, everyone? Perfect. Now, one more point is there. Calculation of cost of equity. Different cases, all of them we've compiled and brought it into one place. How all will have to calculate cost of equity. Now, if beta is given in the question is telling risk free is 6%. If I invest in market, it gives me 12%. Beta of the security is 1.5. How do you calculate the required rate of return for the equity investor? CAPM is there. I will tell RF plus beta into RM minus RF. Yes or no, everyone? So if beta is given in the question, then how will I be writing it? Yes, I will write it as cost of equity is equal to RF plus beta into RM minus RF. Is this clear, everyone? Perfect. Yes. In case of Gordon's growth model, suppose, yes, question has given me P naught. Question has given me D1. Question has given me G. Only K is missing. What I can do? I can take it as missing figure. Yes or no, everyone? Yes. In case of Gordon's growth model, calculate P naught as missing figure. Yes, that is we have the formula price. Sorry, KE as a missing figure. Yes, we know price is nothing but D1 divided by KE minus G. Yes, this is going to be the missing figure. Is this clear, everyone? Perfect. In all other situations, yes, in all other situations, how we will be calculating KE? Yes, we will use interpolation technique to calculate KE. Yes, using interpolation technique, we will be calculating it. Sir, how exactly to do it? Don't worry. Time will come at that particular point in time. I will explain it to you guys. Is this clear, everyone? But all different possibilities, all different adjustments, we brought it in one single place. Is this clear, everyone? Perfect. So now we are going ahead to question solving. Now, generally, yes, in our classes, what we'll do is question solving, we'll keep it as a separate video, so that subsequently you have doubts, you can come there, all those things you can be doing. So now what we'll do is we'll quickly revise whatever we've discussed till now, important from start of equity valuation till now. End this video, next video we'll go on to solve questions. Is this clear, everyone? Perfect. So let us quickly revise what all we have discussed. We started with equity valuation, calculating value of an equity share. We've understood that in what all cases we'll have to be calculating a value. If cash flows are for limited period, if cash flows are for unlimited period. Cash flows are for limited period. Every year dividend will be there. At the end, sale price will be there. I will calculate present value directly. If cash flows are for unlimited period, three situations can be there. Either there is no growth, or there is constant growth, or there is variable growth. No growth, it is simple. It is dividend divided by KE. Yes or no? In case of constant growth, we have a D1 divided by KE minus G. This we have discussed. With this additional pointers we had discussed. First one, yes, we had discussed D1 is nothing but D naught into 1 plus J. That was one point we had seen. Yes or no, everyone? Then we have told whether dividend given in the question is D naught or D1. If question uses the term dividend paid, or it is given in income statement, that means it is D naught. In all other situations, it is D1. How do we calculate KE? It depends on what data is given. If beta is given, I will go for CAPM, that is RF plus beta into RM minus RF. Yes, if all other data of Gordon's growth model is given. Yes, then I will directly apply this equation and accordingly calculate my KE as a missing figure. Yes, in all other situations, there are some more situations as well, wherein multiple cash flows I am getting in future. Today's price is given. What is my required rate? Discounting rate, I don't know. I will go for interpolation technique. Yes, IRR, CA interview had done. When the question comes, when the time comes, we'll explain that again as well. Is this clear, everyone? Perfect. So with that, we will end this session. Students who are watching recorded, do not end the video. Immediately next video, some 4, 5, 6 questions we are having on constant growth rate, that is Gordon's growth model. We'll be solving them together. So thank you so much, students. See you guys in the next video. Yes, everyone. So hello, hi, namaskaram, and good morning, students. I hope you guys are doing really well. So welcome back to question solving series. We are in chapter 1A, equity valuation. We are discussing unit 1, which is valuation of equity shares. Yes, in that we've discussed if cash flows are for limited period, we will discount them. If it is for unlimited period, no growth, means it is a D divided by KE. If it is constant growth, means value of an asset, it is a D1 divided by KE minus G. Using that, what all questions we are having in the study material, past paper, RTP, MTP. Let us quickly see, let us quickly try solving this. Now, giving you guys a small intro to the question bank, how it is structured, what all things are there. Quickly, let me tell and finish it off. First you will find the chapter heading, chapter 1A equity valuation. Then you will find the unit heading. The formatting, final formatting may slightly vary. Yes. Now, every concept is written. Even in concept, if there are further different types of questions, that is also written. Now say for example, valuation of equity shares. We have some questions on constant growth, some questions on variable growth, some questions may be special. So what I've done, type 1 constant growth model. So in this, what all questions are there, we've put it. From where all we've picked questions? All questions from the study material. All questions from past papers from 2018 till date. All questions from the recent 8 attempts RTP, and all questions of recent 8-9 attempts MTP. That is technically from new syllabus, I guess we have picked all the MTPs. That is what I think. Okay. Now, color coding is also done. Yes, first version when students are getting it will be black and white. Subsequently, we are having plans of releasing it as color. If you get color, great. Otherwise, black and white. In the website, it will be given how the books are going to be dispatched. Now, if you guys see how questions are given, question 1. In the right hand side, reference is given from where this question is picked. Okay, the entire question is given. Below that you will find a box wherein we have written LEC, which is a lecture number, time, which is timestamp, page, which is page, star, which is a rating. Say for example, this question we are discussing right now. Yes, we are discussing this question, I guess, in lecture number 3C, if I am not wrong. So when we are solving itself, you will write, okay, this question was discussed in lecture 3C. What is the respective timing? Say for example, you can tell 2 minutes or whatever it is. Yes, what is the page number in which you are writing it in your answer book? Solutions you will be writing in a separate book. You can write down the answer number, say randomly. What is a rating? 1 star, 2 star, 3 star, 4 star, 5 star. It will take you 5 to 10 seconds to do this. But if you do this, subsequently when you are revising, say for example, after 6 months, after 8 months, after 10 months, after 1 year, 1.5 years, you're looking at this question again. Say for example, you have a doubt. Absolutely no worries. You know where to come. Lecture 3C. Okay, what is the time? 2 minutes. You come, you play there, you will understand it. Okay, this is an attempt to ensure that if in case you are having a doubt, yes, you can go back to the lecture, immediately watch that, get an immediate response. Yes, obviously you can be asking it with me as well. But the way we have solved, the depth with which we have explained here, that obviously in an audio message I cannot be putting it to you guys. Point number 1. If you do this, any point in time you can do, you will be getting this. And on a real time basis, you will be getting your answers also. So please do this. It is a humble request. Yes, this is one extra thing that we have done. Solution, if you see whatever keywords are there, headings are there, we have done it bold. Yes, key answers, we have highlighted it. All those things we have done. Now, one more thing. If you see the question numbering, you will find first question as question 1. Second one, you are finding something as question 1A, and it is in a slightly different color. What exactly is this? Everywhere where the question is exactly similar to the previous question that we have done, I will not continue the numbering. I will not put 1, 2. If it is exactly similar to the previous question, I will write it as 1A, 1B, 1C, 1D and use a slightly other color here. Why? Two reasons. Point number one, in the class I will not be solving that question. Then sir, why have you kept it? For practice. I have told you our intention is clear. We are going to practice not until we get the answer right, but until we can't get the answer wrong. So these questions are going to be exactly same except for changes in the numbers. What institute does is if it has a reference question, it will just change the number, give it in another exam. Okay, so those questions have kept it here. Questions I have kept it. Answers also currently here in the class I'll be displaying, but when you are getting your books, these answers will be in a separate book, so that your main question bank is not very bulky, or else if you see one chapter only 100 pages, you'll, oh, so much is there. So for similar repetitive questions, question will be kept, but for the answer a separate small handbook will be given, that anyways you need not be using it at all. But if in case you're solving this question, you want to cross verify with the answers, you can be referring it. Okay, point number 2. And anything else I had to tell with respect to the question bank? I guess currently I'm not getting anything on the back of my mind. If I get anything, I will definitely tell you guys. So with this on the back of a mind, and yes, one more thing, when I am solving questions in the class, I will be using certain formats. Yes sir, why these formats are? To ensure that first our answer looks more presentable, second, so that I can save some time when I'm doing. So basically all these headings, otherwise also will write basic data, I will keep on writing. But here because this heading is there, I will save some time so that I can focus only on explaining. And even subsequently you guys want to refer this, it is there beautifully written so that you understand. Or else if I scribble, you may not be in a position to exactly understand it. Is this clear everyone? Perfect. Now with this on the back of our mind, yes, let us start with the first question everyone in 3, 2, 1. Let the maja begin. Yes everyone, so question number 1 we are having. ABC Limited has been maintaining a growth rate of 10% in dividends. Tell me everyone, how much growth rate we are maintaining every year? 10% growth rate we are maintaining. Great boss. Company has paid. That means what is it? D naught or D1? D naught. A dividend of 3 rupees per share. So D naught is 3. Okay. The rate of return on market portfolio is 12%. Market is giving me 12%. It is return of the market. And the risk-free rate of return is 8%. RF is 8%. Great. Beta coefficient of the company is 1.5. The security is 1.5 times riskier than market. Okay. You are required to calculate the expected rate of return on company shares as per CAPM model. I know how to calculate expected rate of return. Yes, RF plus beta into RM minus RF, and calculate the equilibrium price as per dividend growth model. Even if that is not given, yes, I know looking at the growth, that is what I should be doing. Is this clear everyone? Now one very important thing for all the questions, before attempting any question, either a similar question we would have already solved in our concept solving series in the workbook, or if there is anything new, yes, before I solve the question, that particular adjustment I will explain it to you guys. Meaning every question I want you guys to try it first. Students who are watching recorded, trust me, if you are just playing the videos, it is going to add absolutely no value. Not my class, you take any person's class. The practice is something you have to do it by yourself. So for every question I will ask students, pause, try the question. Here when we are taking the live classes, yes, offline as well as online live, I will be giving them the time to solve. But in recording, what I will do is I will trim those time. So for you, you will not be finding the breaks. It doesn't mean that you don't solve the question. You will have to pause the video, try the question by yourselves. I'm inviting you guys, all the questions, to commit mistakes. Commit as many mistakes as you want, because if you commit mistakes here, you will not be repeating them in the examination. Is this clear everyone? So with that, let us try solving the question everyone. Perfect. So first step always is going to be for us to write down the basic data. Tell me what all data is given in the question, students. What all is given? Growth is going to be 10 percentage. Dividend paid by company D naught is going to be 3. Okay. Market return is 12%. RF is going to be 8%. Beta of the security is going to be 1.5. Yes or no? So the first thing that we'll have to be calculating is expected return or required return or CAPM return. All are same only. Yes or no everyone? Yes. K is RF plus beta into RM minus RF. Risk free I'm getting 8%, but boss I'm taking 1.5 times risk. It is 12 minus 8. How much is it going to be? 14%. Perfect, everyone. Yes. Second step is calculation of price of a share. Tell me. Yes. Growth is given. Yes or no, everyone. So I'll be applying Gordon's growth model. Price of a share or value of a share. It is D1 divided by KE minus G. Tell me, D1, is it directly given? No. D0 is 3, but it will increase by 10%. So it is 3 into 1.1. 3.3 divided by cost of equity is 0.14 minus 0.1. Yes or no, everyone? So what is going to be value of the share? 3 into 1.1, 82.5. Yes or no, everyone? Perfect. So I will tell yes. In the end, if it is needed, we can just put a small comment. Expected rate of return is 14% and equilibrium price of the share is 82.5. Is this clear, everyone? Perfect. Now one very important thing, question solving videos are going to be crisp, to the point and fast. Every bit of explanation is already done. So question solving, it's not going to happen that I'm going to go very slow. Here I would intentionally want to solve the questions fast, on the assumption that you have seen concept videos, there everything we have done, plus you would have read the question first by yourselves. Is this clear, everyone? Perfect. Question number 1 is over. Now we are going ahead to question number 2. Before 2, I guess we are having question 1A. We can quickly have a look at the question. See this question. Exactly same. Yes. Mrs. X Limited has paid a dividend of 2.5 per share. Paid. Yes or no, everyone? That means it is going to be D0. D0 is going to be 2.5. Okay. On a face value of 10 rupees. Okay. Details are given as follows. Current market price is 60. It is the price at which it is actually trading in the market. Yes or no? Growth is going to be 10%. Beta is 0.75. Market rate is 15% and risk free is 9%. Calculate the intrinsic value of a share. This is actual price. I have to calculate a value. Step 1, I will calculate cost of equity. Yes or no, everyone? Risk free is 9 plus beta is 0.75 into 15 minus 9. What is going to be my cost of equity? 13.5 percentage. Using this, let me try calculating value of the share. D1 divided by KE minus G. D1, have they given me D1? No. D0 is given. 2.5. Paid 2.5 into 1.1 divided by 0.135 minus 0.1. What is going to be value of the share? 78.57 is going to be value of the share. Now if they ask you, comment, yes, tell me how much benefit I'm getting from the share. 78.57. Yes, but how much only I'll have to pay? 60 only I'll have to pay. That means whether the security is undervalued or overvalued. Undervalued, underpriced. So it is suggested to buy the share. I can give that comment as well. Okay, exactly same question, just the numbers were slightly different. Yes or no? So that is why we've kept it as question 1A. Next onwards, whenever I'm getting 1A, 1B, that kind of questions, I will not be doing it. Is this clear, everyone? Perfect. So now it is time for us to go to question number 2. Before we solve, I want you guys to take a minute, read the question, try understanding. Recorded students, try solving, then we'll together solve the question, students. Yes, everyone. So I hope you guys have read question number 2. So let us quickly read and solve question number 2. Yes, pay attention, everyone. Beautiful question. Company pays a dividend. Company pays a dividend of 2 per share with a growth rate of 7%. Tell me whether question has specifically given me a clue that it is a D0. Did it tell company paid? Pays. Is it given in income statement? No. So I've told if nothing is given, what is going to be our default assumption? That it is going to be D1. Is this clear, everyone? Perfect. I will assume it as a D1 and accordingly give a note in the question. Perfect. With a growth rate of 7%. Perfect, but 7%. It is growing. Great. Risk-free rate is 9%. Market rate is 13%. Okay, great, boss. Company has a beta factor of 1.5. Yes, beta is 1.5. 1.5 times riskier than market. Perfect. However, due to a decision of a finance manager took a decision, brought some changes. What happened? The beta is likely to increase to 1.75. Oh, risk is going to increase. That means my required rate of return is also going to increase. That means the value of the asset is going to decrease. Basics, inverse relationship. Yes or no, everyone? What are they asking? Calculate the present as well as the likely share. That means right now what is my price, after decision what is my price. As simple as that. 2 times I have to do calculation. As simple as that. Right now what is my beta, What is my required rate of return? What is the value? After decision, what is the beta? What is the required rate of return? What is the price? As simple as that. GGB, yes or no, everyone? Perfect. So let us try doing. Yes, give me the basic data, students. Yes, D1 is equal to how much? 2. Then what else is given? Quick. Yes, growth is 7 percentage. Have they? Okay, we have assumed as expected dividend only. Okay, fine. Yes, growth is 7 percentage, right? G is 7 percentage. Then what else is given? RF is how much? 9 percentage. RM is 13 percentage. Beta is 1.5 existing. Now I'll have to calculate value of the share in two situations. Yes, in present situation, in proposed situation. I have done it in the form of a table, so that then and there only we can keep on doing it. Tell me, students, right now beta. Yes, right now what is the beta of the security? 1.5, yes or no? That means, can I tell what is the required rate of return, which is KE? KE is equal to RF plus beta into RM minus RF. Yes, risk free is going to be 9% plus 1.5 into 13 minus 9, which is 4. 15%, yes or no, everyone? Perfect. So can I also tell what is going to be the value of share? Yes, P naught. It is D1 divided by KE minus G. Yes, D1 is already given, yes or no, 2 divided by 0.15 minus G is going to be 0.07. Yes, it is 2 divided by 0.08. It is going to be how much? 25. Perfect, everyone. Yes. Now, in the proposed situation, finance manager took a decision because of which risk increased. Yes or no, everyone? Beta became how much? 1.75. Yes or no, everyone? Risk has increased. It became 1.75. Now, in this case, my risk has increased means the required rate of return by investor will also increase. Let us see how much he wants now. K is equal to RF plus beta into RM minus RF. Yes, it is going to be 9 plus 1.75 into 4. How much is it going to be? 16%. Yes or no, everyone? Now again, my required rate of return has increased. That means, will I be paying to pay more money now? Less money only I want. Yes or no? Because I want more return. So let me try calculating value of asset again. D1 divided by KE minus G. It is 2 divided by 0.16 minus 0.07. It is going to be 22.22. Yes or no, everyone? Perfect. Now I have done it this way in the form of a table, so that you can parallelly keep applying the same set of steps. In the exam you can do it this way also. First, present situation. Yes, calculate K value of asset. Proposed situation, calculate K value of the asset. It is not going to matter. The only thing that is going to matter is your answers and you highlighting the key answers. In this question, suppose this question comes in your exam, it will come for 4 marks, where you will be having those 4 marks. See, your formula, none of those things is going to matter. Mark 1, mark 2, mark 3, mark 4. And if you see, exactly those 4 spots I have put it inside a box, highlighted and kept it. For us in the CA examination, presentation is very simple. You have to make things simple for the examiner. Okay, yes. And previously somebody had asked me a doubt, sir, you are explaining everything logically. Okay, we are getting the answer without having the need to by heart formulas, but sir, in the exam should we write formulas? My answer is no. But sir, formula, I have cleared my exam, I have secured a rank. Same approach it was. I've been teaching for 5 years. I have been seeing, yes, papers of students have secured ranks. I know how the paper valuation works. I know how the step marking schemes are. Okay, you can trust on me. You will be having marks for the answer. Okay, even, okay, you are not having marks for the formula. Point number 1. Point number 2, for a particular concept there can be 5-6 different formulas. It could be possible in the suggested answer they are having one formula, but you have written other formula. Does it mean that you are going to lose marks? No. Why? Because for formula there is no marks. Yes, the only thing that they are seeing is the final answer. That should be tallied. That's all. As simple as that. No, sir, we still want to by heart. Sit and by heart. As simple as that. Your life, your rules. Is this clear, everyone? So let us try comparing. Look at the students. Yes, the answers. Are we tallying things or not? Look at this. 25, 15%. This was on the other assumption. that if they assume that d naught is equal to 2, yes or no everyone. Second situation, our answer is going to be 22.2 to 16%. It is tallied, as simple as that. Life is jingalala. Is this clear everyone? Perfect. Now we are going ahead to question number 3, again giving you guys 2 to 3 minutes. Quickly read, try, get the answer, get it right, get it wrong, try, think, then we'll solve it together, my dear students. Yes everyone, so shall we solve question 3 right now? Beautiful question. Okay, this is actually a beautiful question. You can put 1 or 2 stars. Not a very big question, but okay, fine, let it be there. Okay, X Limited just declared, just declared, hot declared. What kind of dividend it is? D naught, yes or no? Just declared a dividend of 14 rupee per share. That means it is going to be D naught. Okay. Mr. B, an investor, is planning to purchase the share of X Limited. He's telling, okay, boss, this share is good. I want to purchase. Okay, great. He is anticipating an increase in growth rate from 8% to 9%. Till now, growth was 8%, but he's telling, boss, after I buy, the luck will change. In future, growth will be 9%. That means, tell me in future, what is his expected growth? 9% I'll be taking. Yes or no? 8% was in the past. It is absolutely freaking relevant for me. Okay, he's telling 9% growth will be there, which will continue for 3 years. He's telling for 3 years that growth will be there. Great. Yes, he also expects the market price of the share to be 360 at the end of 3 years. He's telling 3-year end it will be 360. Great, boss. You're required to determine maximum amount B should pay for the share if he requires a 13% return. Yes or no, everyone? Is he holding it till perpetuity? No, only for a limited period. See the cash flow, bring it to present value. As simple as that. Yes or no, everyone? Perfect. So let me try doing the calculation. Look at this. Always, whenever we are having cash flows for a limited period, Koti, what we should do? Draw a line. Line should be straight, whether you are straight or not. Yes or no, everyone? 1, 2, 3. Tell me, company has just paid a dividend. D naught was how much? How much the Koti? Oh, D naught. 14, nah? Okay, perfect. Okay, yes, tell me. Every year, what is the expected growth rate? 9% is the growth rate. That means, tell me, first year it is going to be how much? 15.26. I will take it up to 2 decimals. Perfect. Second year it is going to be 16.63. Third year it is expected to be 18.13. Is this clear, everyone? At the end of third year, I will sell also. So I'll be getting sale price also. What is the sale price that I'm expecting? 360. Is this clear, everyone? This is D1, D2, D3, P3. Yes or no, everyone? I want to calculate value of a share. How much return I want? 13% I want. What I'll have to do? Bring it to present value. As simple as that. Yes or no? Year 1, 2, 3. Yes, it is 15.26, 16.63. Third year I'm getting 18.13 plus 360. It is going to be 378.13. Discount it at 13%. Write down the factors. Yes, you will arrive at the present value. Yes, what is going to be the present value, students? It is going to be how much da? 288.56. Cross verify with question bank once also. Don't tell me wrong numbers. Is this clear? Students, this is something, into is something, you will have to do it. This is something you will have to write. I will just be writing the final answer. So many times we've done it already. Is this clear, everyone? Perfect. Now comes the second situation in the question. Okay, look at this, beautiful. The maximum price B will be willing to pay for the share. How much maximum he'll pay? How much benefit he'll get? He'll pay maximum value of the share. Okay. If he is of the opinion that 9% growth rate can be maintained indefinitely and he requires 13% rate of return. So what he is telling is, okay boss, I am planning to buy the share. Where we are standing? We are standing here today. 0. Is this clear? Yes. What investor is telling? Tell me, what was a D naught? 14 rupees. Yes or no, everyone? He is telling every year how much growth will be there? 9% growth will be there. And till when it will be there? He is telling till perpetuity this will be there. That is till infinity it will be there. Yes or no, everyone? So cash flows are going till infinity. That means which model will be applying? If yes, Gordon's growth model, because they've given me constant growth rate. Yes or no, everyone? So I will tell value of an asset. It is a D1 divided by KE minus G. I've already declared 14, but it will grow by 9%. So first year will be 14 into 1.09 divided by cost of equity is 0.13 minus 0.09. Can you guys tell me what is going to be the value of the asset? What you guys are doing there? 14 into 1.09 divided by 0.04, 381.5. Yes or no, everyone? Is this clear? Is this clear? Is this clear? Any doubt in this? No, sir. Jujube only. Now let's come to the third part. This is beautiful. Calculate the price of the share at the end of 3 years. Where I want to calculate the price of the share? Where am I standing right now? Third year end I am standing. Today, how much I should pay? Yes or no, everyone? When I want to calculate the price at the end of third year. Okay. Yes. If 9% growth rate is achieved and assuming other conditions are same as 2 above. Yes, what conditions they are given into? That growth rate is going to be 9% till perpetuity and required rate of return is 13%. Using this data, calculate the price at the end of 3 years. Okay, let us do it. Simple only. Now tell me. Yes, any question you are having in life. Koti, what you'll have to do? Well, first draw a line, then you will think. But your line should always be straight, whether you are straight or not. Yes, everyone. Now tell me. D naught was how much? D naught was how much? 14. G was how much? Growth is 9%. Perfect. Can you guys tell me the cash flows for every year? Yes. First year it is 1.09 into 14, 15.26, 16.63, 18.13. Fourth year also, if I want, let me write it down. 19.76. Yes or no, everyone? So on it goes. Is this clear, everyone? Now tell me. Where on earth am I standing? Don't tell me I am standing in Chennai, Bangalore, Delhi. In terms of the question, I want to calculate the price. When? At the end of third year. Here I am standing. Is this clear? So third year, this is third year. Here I am standing. From here I am seeing in the future value of an asset. It is the present value of future cash flows. In future, how much I am going to get? Discounted at the required rate. Yes or no, everyone? Perfect. I am standing in third year. That means the next dividend that I am going to get is going to be when? In the fourth year. Yes or no, everyone? So if I'll have to calculate value, price at the end of third year. Third year I'm standing. Yes. What is the first dividend I'm going to get? It is the fourth year dividend. Yes or no, everyone? So I can write it as a D4 divided by KE minus G. Yes or no, everyone? Tell me what is going to be my D4. 19.76 divided by KE is 0.13 minus G is 0.09. Yes or no, everyone? So 19.76 divided by 0.04. Is it 494? Yes or no, yes or no, yes or no, everyone? Perfect. Now this, look at this, students. You can by heart and keep it also, but there's absolutely no need. Look at this. P naught is equal to D1 divided by KE minus G. If you have to calculate P10, 10th year I'm standing, the next dividend, which is D11 divided by KE minus G. Yes, I'm standing in 20th year, P20. Next year what I'm getting? D21 divided by KE minus G. But absolutely nothing to be by hearted. Just see, draw a line, see where you are standing. Only from here, future cash flows I'll be getting, that you are discounting. Is this clear, everyone? Perfect. So with this, we have solved the question also. Let us try tallying the numbers also. Look at this. Okay, here that given the factors, is it? Okay. If question gives the factors, ideally we'll be using the factors, but it's okay. All right. Not a big deal. Is this clear? I guess our answer should tally. 288.56, first one, right? Second one was 381.5. Third one was 494. Yes or no, everyone? Perfect. Yes, question number 3 is also over. Now we are having question number 4. Beautiful question. So giving you guys a minute again, read the question, try understanding, we'll quickly solve. And with that, all the questions from this particular type is going to be over. Yes, everyone. So let us go ahead to one more beautiful question. Question number 4. Again, a question from the study material. But this exact same question with slightly different numbers has come in MTP also. You will file question 4A. So let us try reading the question. Aram se beautiful Jujubi question. Tell students Jujubi. Okay, everyone. Pay attention. Yes, risk-free rate of return RF is 9%. Okay, sir. The expected rate of return on market portfolio RM is 13%. Okay, they've told RM. Great. Expected rate of growth for dividend of Platinum Limited is 7%. Yes, growth is 7%. Great. The last paid dividend, what is it? D not. It is 2 rupees. Great, boss. Beta of the share is 1.2. Okay, perfect, boss. What is the equilibrium price of the share? Yes, we'll have to calculate the equilibrium price of the share. Perfect, everyone. Now, yes, beta is given, so I'll be calculating KE. Yes or no, everyone? If that file was there, okay, fine. Yes. Tell me the data, tell me the basic data. Koti. D naught was? Okay, next what else is given? 9%. RM is? Okay. Growth is 7%. Beta is 1.2. Okay, first, let me try calculating the cost of equity. Yes or no, everyone? It is RF plus beta into RM minus RF. How much is it going to be? Yes, 9 plus 1.2 into 4. Yes or no? It is going to be 13.8%. So can I calculate the value of the asset? It is a D1 divided by KE minus G. Yes, 2 is a D naught. There will be a growth of 7% into 1.07 divided by KE is going to be, which one is KE? 13.8%. 138 minus growth is going to be 0.07. It is going to be how much, my dear students? 31.47. Yes, recorded students, I'm solving the questions fast on the assumption that you have tried. Trust me, if you have not tried, there is absolutely nothing I can do about it. Trust me, students. I'm telling this in the most humble way possible. You have to try. You have to commit mistakes. I've told you the intention is not to watch the class. It is to learn. And learning happens once you try, once you commit mistakes. So I'm inviting you guys, come, commit mistakes. So please do that. It's a humble request. So that is why you find me when I'm solving questions, I try to be slightly faster. Why? Firstly, yes, explaining the concepts, you spend a lot of time. And in the meantime, you are having expectation that the overall duration of the course is also less. So question solving, because it tends to be repetitive, I'll solve it fast. Second, I am solving on the assumption that you have read the question once already and you know what is there in the question and you have committed the mistake. Is this clear, everyone? Okay. Now comes the second situation. This is beautiful. This will have to highlight and keep. Yes. This is going to be important. Okay. Now, how much would the equilibrium price change? What did they ask? How much would the equilibrium price change? By how much it will change? Equilibrium price is nothing but a value. Correct price, which is nothing but the value. When inflation premium increases by 2%, if growth rate increases by 3% and beta rises to 1.3. Now, question should have been more specific, that should I consider this plus this, or situation 1 when inflation increases, situation 2 when growth changes, situation 3 when beta changes. Here there is nothing to worry, because if you see institute's answer, they have given everything. Yes, first they have taken if all of them change together. Yes, if all of them change together, what is the story? Alternatively, if I'm taking separately, what is the story? However you want, you can do. But similar question had come in MTP. Look at this, 4A. Inflation increases 2%, expected 1.3%, 1.3. Here they have not done it that way. They have taken all factors together. So what we are going to do, we are going to consider all factors together and accordingly only we'll be answering. Is this clear, everyone? Perfect. So let us do it that way. Look at this, look at this, look at this. What all factors are changing? Let me write down the basic data again and accordingly do the calculations. Tell me students, my D naught, is there any change in my D naught? No, it is going to be 2 rupees only. Yes or no, everyone? Risk free rate of return, tell me what all changes question has told. Inflation is 2%. Then growth is 3% increase, na? Okay, then beta has become 1.3. Okay, okay, fine. Tell me risk free rate of return. Previously, how much was my RF? 9% was my RF. Yes, I have told you already. Why on earth? Yes, government is giving me risk free rate to compensate for inflation. So when inflation was 9%, they were giving me 9% return. Boss, now the inflation has increased by 2%. That means the return that I'm going to get should also increase by 2%. It should become 11%. Yes or no, everyone? Perfect. Market return. Tell me how much return market was giving me previously. 13% return. Yes or no? But boss, now inflation has increased. So market should also increase by 2% plus 2. So market will be giving me 15%. Yes or no, everyone? Perfect. Growth. Previously, growth was how much? 7%. Yes, 7%. Now it has increased by 3%. That means my growth has become 10%. Beta of the security. Previously, how much it was? 1.2. Now it has increased by 1.3. So it has become 2.5. Yes, sir. Hmm? I know. Everywhere it is add, so you added, na? Read the question properly. What is given? Yes. Beta of the platinum limited rises to. It is increased by. Yes or no, everyone? Foundation things. Yes. So beta has become 1.3. Yes or no, everyone? Perfect. Using this revised data, let us try calculating again. Cost of equity. It is RF plus beta into RM minus RF. How much is it going to be? RF is going to be 11 plus beta is going to be 1.3 into RM minus RF. RM is 15 minus 11. So how much is going to be cost of equity? 16.2 percentage. Yes or no, everyone? 4 into 1.3 plus 11. 16.2 percentage. Price of the share. It is D1 divided by KE minus G. D0 is 2 rupees. It is expected to now grow by how much percent? 10%. 1.1 divided by K is 0.162 minus 0.1. So 2 into 1.1 divided by 0.062. It is going to be 35.48. Yes or no, everyone? Perfect. So let's come to the question bank. First case, I guess previous case, the answer is this one. Original case. Second case, the answer is going to be 35.48. They have given so many alternatives. Okay, yes, first alternative, yes, they've assumed that inflation increase. Yes, 9% was there. From 9% it increased 2%, something of that sort they've assumed, I guess. Okay, from 9 it has increased to 2%. 9 plus 2% if you do it on your calculator. Yes or no? It is not 2 whole percent. It is 2% extra on the 9%. That way they've assumed. Okay, yes, but if you see throughout in the MTP question that was there, they've kept this approach alone, the approach that we solved. That is why we are keeping this alone. In your question bank also, if you are having confusion, this you can strike it off. This also you guys can strike it off. Is this clear, everyone? Perfect. Exactly same question, change numbers. Yes, recently. Okay, not so many years back. Yes, MTP March 2025, it has come for 4 marks. Yes, same data. First situation, they have given all the data. Yes, inflation increases by 2%, growth increases by 3%, and beta rises to 1.3. This question is going to be something that you will have to practice by yourselves. Is this clear, everyone? Yes, with this question 4 is also over. So in case of constant growth, what is to be done? We've discussed it, students. So we will continue further in the next video. So a simple crux of this, we have understood. Yes, in case of no growth, value of the share is D1 divided by KE. Yes, in case of constant growth, it is D1 divided by KE minus G. Is this clear, everyone? Perfect. That's all for this video. See you guys in the next video. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud. And see you in the next video. Take care. Bye. Yes, students, one small point I missed out in the last question. Okay, they have not given it in the solution, but still, if you read the question properly, okay, thanks for a student for telling me. Yes, how would the equilibrium price change? How would they have not asked what is the equilibrium price? They was how would the equilibrium price change? Tell me what was the existing price? 31.47. How much it became? 35.48. That much. How would it change? Yes, my equilibrium price would increase by price would increase by 4.01. Okay, but you have also ignored, institute has also ignored. So if you have also ignored, institute has also ignored, no problem. But if you have ignored but institute has considered, full problem. Okay, everyone. So because it was there in the question, even though it is not there in institute solution, but still we thought let us explain it. Okay, as simple as that. Bye. Yes, everyone. So hello, hi, namaskaram, and good morning, students. Good morning, everyone. I hope you guys are doing really well. So let us take our discussion forward. So we are currently in chapter number 1, which is going to be equity valuation. In that, till now, what all we've discussed, a quick mind map. Yes, we've started with valuation of a share. In that, we've understood what to do if cash flows are for limited period. Take all the cash flows, discount, bring it to present value. Then we told in case of perpetual cash flows, what is to be done. We understood if there is a no growth, then it is going to be d divided by k. Whatever is annual cash flow, you bring it to present value divided by k. Yes, if there is constant growth, Gordon's growth model, constant growth model, yes, it is going to be d1 divided by ke minus g. Yes or no, everyone? Perfect. Now we are taking one step further into, in case of variable growth, what is to be done. One of the most simplest things in the world. Why? Because our base is strong. There is no need for any explanation here. We will directly pick an example, we'll do it. But before that, there's a small point which I want you guys to know. Now here we have always been solving questions on the assumption. In case of perpetual dividend, we have always been solving on the assumption that investor is holding the security forever. But in reality, is it that way that is happening? No. Investor will not be holding the security forever. He will be holding it for a limited period. Yes, share will be there forever. Company will go on. But investors will keep changing. Then, sir, how this model will work? Try understanding one very beautiful thing. Okay, this can serve as an introduction to your variable growth model also. In case of perpetual dividend, whether the only cash flow is dividend, yes and no, because your sale price is already adjusted in the dividend. How is it? Let us try understanding. Pay attention, pay attention, pay attention. Yes, d naught is equal to 10 rupees. Cost of equity, the return that an equity holder wants, is going to be 20%. Growth is going to be 10%. Yes, let us try calculating. Firstly, let us forget everything. Let me put the formula, get the answer. Tell me, students, price of a security. Yes, it is going to be d1 divided by ke minus g. Yes, it is 10 into 1.1 divided by 0.2 minus 0.1. Yes or no, everyone? So how much is it going to be? Is it 110? Fine. Now, assume Koti Reddy is an investor. There is a security of Maja Limited. We are telling that, boss, just now, hot, today I paid a dividend of 10 rupees. And I am telling that, boss, in our company, every year my dividend will grow by 10%. Koti Reddy is an investor. He wants to purchase the share. Now, he don't want to hold it for perpetuity. Koti Reddy's philosophy is simple. Anything in life, share, relationship, anything, maximum 3 years only. Beyond that, Koti Reddy won't go. Okay, yes, Koti Reddy is telling 3 years I will hold. At the end of it, I want to sell. Okay, fine. So let us try see. Yes, this is the share. This is our company, Maja Limited. Okay, today, Koti Reddy is standing here. Perfect, everyone. Yes, year 1, year 2, year 3. Tell me every year what is the growth rate in the dividend. 10% is the growth rate in dividend, if I am not wrong. Yes or no, everyone? Perfect. So tell me just immediately what is the dividend that we have paid. 10 rupee was the dividend we have paid. First year it will increase by 10%, it will become 11. Second year it will again increase by 10%, it will become 12.1. Third year it will again increase by 10%, it will become 13.21 or 31. 31, right? Yes. Is this clear? Koti Reddy is telling, I want to hold for 3 years only. Sir, share our relationship. For me, 3 years only maximum. I can't bear it more than that. Okay. At the end of 3 years, what Koti Reddy is planning to do? He is planning to sell the share. Okay. So now one more person will come. He is telling, boss, I want to buy. Is this clear, everyone? Assume Kamesh is there. Yes or no? Kamesh is late. Yes, he falls in love with the person after some time. Yes or no, everyone? So after 3 years, he's like, Maja share this is. I'm talking about shares, nothing else. You should fall in love with your shares also. Only then your money will multiply. Okay? Yes, everyone. Not Koti Reddy style of multiplication of money. Koti Reddy has a crazy style of multiplying money. We'll tell you someday. Fall in love with a rich girl. And ensure that she is the only daughter. No brother, no sisters. By default, you become rich. Koti Reddy style. Okay. Yes, everyone. Now, Kameshwaran is there. Yes, Koti Reddy is planning to sell. Now, tell me one very simple thing. Koti Reddy is planning to sell. Will he give the share to Kameshwaran for free? No, he will not give. What will tell? Macha, I want money. Yes or no, everyone? Now, let us try seeing what is Kameshwaran's expectation. From here onwards, tell me, I as a company, Company is going concern. Every year I'll keep paying 10%, 10% extra dividend. Yes or no, everyone? Tell me, commission is telling, boss, okay, I'm standing in the third year. From next year onwards, how much dividend I will be getting? Tell me, students. Fourth year, 10% extra growth will be there. That means what is the dividend expected in fourth year? 14.64. Yes or no, everyone? For the risk that Maja Limited is having, Kameshwaran is expecting 20% return. Yes or no, everyone? That means, can you guys tell me how much is the price that Kameshwaran is willing to pay? Yes, what is Kameshwaran telling? Okay, boss, I am purchasing the share today. That means in future, what is the dividend I will get? 14.64 I will get. Yes or no, everyone? The total return that we want, I guess, is 20%. Yes, in that growth in the form of capital appreciation, I will get 10%. That means net I want 10% only. So can you tell me what is the price P3? 146.41. Yes or no, everyone? Till here, is this clear? Perfect. So Kameshwaran, when he is purchasing the share, he will give Koti Reddy 146.41. Koti Reddy will receive the money. Yes or no, everyone? D3 is there. P3 is going to be 146.41. Is this clear, everyone? Now, from Koti Reddy's perspective, what all cash flow he got? First year he got 11. Second year he got 12.1. Third year he got 13.31 as well as sale price. Let me try calculating value of the share. 1, 2, 3. Cash flow 11, 12.1. Tell me 13.31 plus 146.41. How much is it going to be? 159.71. Yes or no? Present value factor at the rate 20%. Overall 20% is required. Yes, do and tell me the values. Quickly do it. 0.833, 0.694, 0.579. 11 into 0.833, 12.1 into 0.694, 159.71 into 0.579. Yes, add MRC. How much you are getting? 110.03. Yes or no? Which is nothing but 110 and 10 la. What's the answer? It is the same da. So what exactly is happening? Yes, your dividend is adjusting for the sale price by default. Yes or no, everyone? Is this clear? So yes, even when we are telling in case of perpetual cash flow, it is not necessary that investor will hold it on for perpetuity, but whoever will purchase from the investor, he is again looking at the future. So all that ultimately we are getting from the company is dividend only. That is getting discounted. Is this clear? So next investor goes, he will look at the future dividends and buy. Next investor he goes, he will look at the future dividend and buy. So in one single shot, if you discount and buy, that is going to reflect the price. Is this clear, everyone? Perfect. Absolutely not important for examination perspective. Chumma, if you guys had a doubt, no sir, but I will purchase for 3-4 years only, na sir. This is how you are going to estimate. Now using this in reality, in real life also you can estimate. You can pick shares of Reliance Limited. The actual price, say for example, it is trading at 2,500. You can just go, you see what is the immediately paid dividend per share. You can see normally what is a growth rate. Based on that, assume you are planning to hold it for 5 years. You can estimate, okay, every year this could be the growth in dividend. What is going to be dividend you are going to get for 5 years? At the end of it, what is going to be the price? That also you estimate. Bring it to present value, get the value. As simple as that. Yes. Once 3 chapters are over, equity valuation, equity and bond valuation, chapter 1, business valuation, mergers and acquisition. I am planning, we'll see how it goes off, to take off balance sheet of a company, do all the ratios, all the calculations, so practically how things are going to work. We will see. Yes, now we are recording. Yes, if you are running short of time, now I will not do. Subsequently recorded, I will be uploading it to you guys. Is this clear, everyone? This background is clear for you guys. This much is sufficient for us to get into variable growth. Variable growth is very simple. Every year, we have assumed same growth. Now, growth is going to be changing. So, in that case, how to do? Directly, let us pick a question. Pay attention, pay attention, pay attention. Yes, example number 5. Dividend just paid by company is 100 rupees. Is this clear, everyone? We are Maja Limited. We have just declared and paid a dividend of 100 rupees. Okay. Growth is expected to be 12% for 3 years and 8% thereafter. Okay. Oh, till now, throughout the growth was same. But here now what their company is telling is for first 3 years, we are estimating how much the growth is going to be. After that, yes, we are telling, okay, 8% growth could be. Is this clear, everyone? Even when you are estimating also, in the real life also, this is going to be more relevant. See, the nearest factors you can estimate well. The further factors you cannot estimate. Say for example, you purchase a share today, or else say tomorrow what you are going to do, you can plan. Day after tomorrow also you may plan. Next week also you may plan. After 2 years what you are going to do, can you plan today? No. But you will tell, okay, something I'll be doing. I've taken C, I'll have to complete it off. I'll be studying only. Yes or no, everyone? Perfect. So same thing is happening here. As an investor, I've purchased the share. Looking at the data for the closer years, I will be having a better estimate. Okay, next year 10% it may grow, 15% it may grow, 12% it may grow. Okay, there is another benefit coming which is impacting the industry. 20% may grow. After that, I don't know. I'm assuming a constant growth throughout. Is this clear, everyone? Okay. So let me try calculating the value of the share if cost of equity is going to be 15%. Simple, simple, simple. First step, Koti. What is to do? Draw a line. Whether you are straight or not, line should be straight only. Yes or no, everyone? Perfect. So let us try doing this. Pay attention, pay attention, pay attention. Okay. Where am I standing? Here at t is equal to 0. We are standing. Yes. Growth is expected to be 12% for 3 years. So 1, 2, 3. From there onwards, till infinity, we are having a constant growth. Is this clear, everyone? Okay. Now let me try doing the pictorial representation here because I will be taking slightly more space. Okay, fine. Tell me, students, what is the dividend just paid by the company? Company has just paid 100 rupees. And for the first 3 years, what is the growth that I am expecting? 12%. That means first year, can you guys tell me how much dividend I am expecting? 112. Second year, huh? Second year, it is going to be 125.44. Third year, how much dividend I am expecting? 140.49. Is this clear, everyone? Perfect. Now imagine. Koti is the investor. He is planning to purchase the share here. Okay. He is telling, boss, next year, my dividend will increase by 12%. That means how much dividend I'm planning to get? Okay, 112. Second year, again it will increase by 12%. Third year, again it will increase by 3%. I'm asking Koti, at the end of third year, what is happening? He's telling, boss, till perpetuity, I cannot keep telling, 10th year, 20th year, 50th year, 100th year, I cannot keep telling. So what he'll do? He'll tell, after third year, I'm just assuming that the dividend will keep on growing for 8%. Is this clear, everyone? Is it necessary in real life it happens that way? No. But is there any other way? No. So I'm taking a constant grade too. Okay. So that means, tell me, Koti is standing here right now. From here onwards, every year, growth is going to be how much? 8%. That means standing at the end of third year, can he tell what is going to be the price of the share at the end of third year? Yes or no, everyone? Yes. So Koti will tell P3. It is nothing but D4 divided by KE minus G. Yes or no, everyone? Koti is telling, boss, third year end, I got 140.49 dividend. Now from next year onwards, at a constant rate only my dividend will keep growing. Perfect. So in that case, tell me, fourth year, by how much percent my dividend will grow? 8% dividend will grow. That means how much is going to be my dividend? Can you tell me? 140.49 into 1.08. Yes or no, everyone? Perfect. Tell me what is the total return that Koti wants? 13%, if I'm not wrong. Sorry, 15%. Yes or no, everyone? Yes. In that, how much percent is growth? 8% is growth. That means effectively from dividend he wants 7% income. So what is going to be the price at the end of third year? 140.49 into 1.08 divided by 0.07. It is 2167.56. Yes or no, everyone? 2167.6032, is it? Okay. There could be a small rounding off error. Absolutely no issues. Till here, is this clear? So what I am going to do? Step number 1. I will estimate the dividend for uneven growth. Question can tell you, however, question can tell first year 10%, second year 20%, third year 50%, 4%, anything. Individually, I will calculate. Okay, I have calculated. Step number 2. At the end of this uneven growth, from here onwards, it is going to be constant growth. So I can calculate the price at the end of uneven growth. Step number 2, I will calculate price at the end of the uneven growth. Yes or no? Now, simple. So tell me from Koti Reddy's perspective. Yes, what all he is getting if he purchases the share? First year he is getting dividend. Second year he is getting dividend. Third year he is getting dividend. Fourth year onwards also he is getting dividend. But all these dividends accumulated together, the price is going to be 2167 point whatever it is. Yes or no? That means the net cash flow I'm going to get is 3 dividends and price. Value of a share, it is present value of future cash flows discounted at required rate. Can I pull it and calculate value of an asset? Yes, simple jujube. Yes or no, everyone? Perfect. So look at this. I hope you guys will do this, or you guys have done this already. Okay, now step by step. Step 1, calculate dividend for uneven growth. Why is this happening with me? Okay, let me write it here only. Step 1, calculate dividend for uneven growth. Now, if I have drawn a line in that only, I would have done it already. But still, in your examination, to ensure that you don't take any risk, see here also you've highlighted and kept it is sufficient, but still let us do it. How much time we are taking? Anyways, we just have to write the numbers. D1, D2, D3. Tell me, Koti, read the numbers. 112, 125 point, and 140.49. Yes or no? Step 1. Yes. Step number 2, calculate price at the end of uneven growth. Yes, when my uneven growth will end third year, so price at the end of third year. Yes, future dividends, D4 divided by KE minus G, 140.49 into 1.08 divided by 0.15 minus 0.08. It is going to be how much? 2167.70. Yes or no? 697056, whatever it is. Don't keep fighting over pennies. Is this clear, everyone? Yes. Now, third step, step number 3 is calculate value of a share. Yes, if you have drawn a line, you know exactly what is happening. You have absolutely no doubt. Present value factor, present value. Tell me. Come back to this. Always keep coming to this. Tell me, you purchase the share. What all you are getting? 3 dividends, price at the end of third year. Yes or no, everyone? So it is 112 year 1. It is 112 year 2 is how much? 0.44. Year 3 it is going to be 49. Sorry, you are getting two cash flows, right? 140.49 plus 2167.60. Yes or no, everyone? 2167.60. What is going to be the total value, my dear students? 2308.19. Yes, you get the present value factors at 15 percentage discount, and tell me the value of the asset, everyone. How much you guys are getting? Quickly do the calculations. Yes, everyone, if you add all these, I guess you will be getting a value of 1709 or 1708 point something, in that range. 5-10 rupees if there's a rounding off. Recorded students, don't ask, sir, 1 rupee difference is there. Is it okay? Yeah, I will give you that 1 rupee. Don't worry. Okay, don't send me that message. Okay, it is absolutely all right. And in the exams, when you're coming to the exam, simple point to be remembered: present value factor, if nothing is specified in question, you will take up to 3 decimals, okay, to have the uniformity. And these values, wherever it is there, you will be taking up to 2 decimals. Is this clear? This is how generally I say this, so that to the maximum possible extent we try tallying with the institute's answers. Is this clear, everyone? Perfect. As simple as that. Yes, with this, variable growth model is over. Students find it to be one of the most difficult thing, and trust me, every second or third attempt a question will be there on variable growth model. This we have just taken 5 minutes to explain. Why? Because we have spent a good amount of time building the basics. Is this clear? So always know that the time we have spent there is never going to be wasted, because all the advanced topics will get over quickly because we have spent time there. Is this clear, everyone? Perfect. So let us come back to our concept book, my dear students. Yes, everyone. So let us have a look at variable growth model. Now, different names can be there for this. Yes, variable growth model. You can call it as two-stage growth model or multi-stage discount model. All are same only. All you are doing is you will see what all cash flows you are getting, bring it to present value. Is this clear, everyone? Now, we know that value of a share is the present value of future dividends and sale price discounted at required rate. Yes or no, everyone? Perfect. So here how we will be writing is, for the uneven growth we will calculate dividends and we will discount. At the end of uneven growth, what is the price we will calculate, and then accordingly we'll discount. Yes or no, everyone? So look at this. This is how we'll be doing. Yes, for uneven growth, say for example, D1 divided by 1 plus KE plus D2 divided by 1 plus KE square plus so on till the time my uneven growth ends, nth year, divided by 1 plus KE to the power of n. At the end of uneven growth, dividend also I'll be getting. I will calculate the price also. That price also let me discount, plus Pn divided by 1 plus Ke to the power of n, where Pn, price at nth year, it is a next year dividend, that is a dividend n plus 1 divided by Ke minus G. Absolutely no need to for by heart write it down also. Chumma once for time pass sake I have written it down because I'm never going to see it again. I will draw a line, see for how many years I'm getting dividend, what is going to be the price at the end of it. As simple as that. Is this clear? Yes, this is a framework with which we will be solving. This is what formula is written and all those things they have done. Seems to be very overwhelming, but it's very simple. 3-step framework, very simple. Step 0 is draw a line. Line should be straight, whether you are straight or not. What is the first step? Step number 1 is I will calculate the dividend for uneven growth period. That is for how many years ever. Yes, variable dividend is there. Every dividend we will estimate. Okay. Step number 2, I will calculate the price at the end of uneven growth. At the end of that growth, from next year onwards, it is constant only. So this price I can be calculating. Yes or no, everyone? That if you want, you can just write it. Again, not needed. Pn is equal to D n plus 1 divided by Ke minus G. For example, if you want say P4, that means it is a D5 divided by Ke minus G. So on and so forth. Is this clear, everyone? Perfect. We have done this. Next, I know my uneven dividend and price at the end of it. These are the cash flows I'm going to get. I want to calculate value of the asset. What I need to do? Bring it to present value. Calculate value of your dividend and price. Year cash flow, present value factor. Present value. Add them. You will arrive at the value of the share. Is this clear, everyone? Perfect. The concept is clear. One example we have solved. Now let us try solving some more examples. Beautiful examples we'll do. Then we'll go to question bank. Question bank is going to be one of the jujubest thing ever. Because we know the base, we have done so many work, question bank solving is going to be very simple. Shall we go ahead to the next question, students? Yes or no? Give me a confirmation, everyone. Perfect. So let us go ahead to the next question, which is going to be example number 6. Yes, example number 6, let us quickly read, then I'll give you guys some time to solve it as well. Company just paid a dividend of 10, just paid. What kind of dividend it is? Da D0 is going to be 10. Perfect, everyone. Growth estimate is as follows. Question is telling we will have 10% growth for first 3 years. I told great. 8% growth for next 2 years. I told amazing. And 5% growth thereafter. Yes or no? In the book it is there as multi-period growth model. All those things. 3-stage growth model. Ooh, answer. Draw a line. See what all discount you are getting. Bring it to present value. 3-stage, 4-stage, 10-stage. What is it? Cancer to keep tracking. Yes or no, everyone? Keep it very simple. Is this clear? Yes. First 3 years, 10% growth. Next 2 years, 8% growth. From there on, 5%. Calculate value of the share if cost of equity is 15%. Okay. Step 1, step 1, step 1. Most important, Koti, what we are going to draw? Line. But line should always be straight. Yes or no, Koti? Perfect. Koti has now understood. Why all these things are happening? What keeps happening with the application? Okay, fine. 0, 1, 2, 3, 4, 5, and I guess from 5 onwards it goes on up to infinity. We'll see slowly. Tell me what is my D naught. D naught is going to be how much, students? 10 rupees, I guess. Yes, company just paid a dividend of 10 rupees. Yes or no, everyone? Perfect. Tell me what are the growth estimates looking? 10% growth for the first 3 years, 8% for the next 2 years. Yes or no, everyone? 10%. 1.1 into 10. Yes, first year I am expecting a dividend of 11 rupees. Let us change the color. 11 rupees. Second year I am expecting 12.1. Third year I am expecting 13.31. First 3 years was 10% growth. Next 2 years, how much growth I am expecting? 8% growth I'm expecting. Okay, so I can do plus 8%. It is 14.37 plus 8%, 15.52. Yes or no, everyone? Yes, this is going to be respectively my D1, D2, D3, D4, D5. Is this clear, everyone? Now, where is my variable growth ending? Where is my variable growth ending? Fifth year, my variable growth is ending. Here I am standing and I am seeing front, future. Yes, sixth year onwards. Sixth year, how much percent growth it is? 5%. Seventh year, 5%. Eighth year, 5%. 10th year, 50th year, 100th year, 1000th year, 5% only. Can I pull off all those cash flows? Yes or no, everyone? Aram say I can do. So I can also calculate a price at the end of fifth year. Yes or no, everyone? I can tell P5. It is a next year dividend divided by KE minus G. Is this clear, everyone? Tell me, fifth year, how much dividend I got? 15.52. Next year, how much growth will be there? 5%, 1.05 divided by KE is, I guess, 0.15 minus growth is 0.05. Yes or no, everyone? So it is 15.52 into 1.05 divided by 0.1, 162.96. Yes or no, everyone? Perfect. Now see how simple it is. Day one, what I have done, the same thing I am doing throughout. Yes or no? Now exactly tell me how many cash flows I am having. 5 dividends I am having, price I am having. What I need to do? Bring it to present value. As simple as that. Yes or no, everyone? Perfect. This is going to be the last question in which I will separately write. Step 1, calculation of dividend, D1, D2, D3, D4, D5. Step 2, calculation of price at the end. Step 3, calculation of value of a share. From next question onwards, I will just show the drawing. Below you will write. That is going to be just from exam perspective. Is this clear, everyone? For us to understand, to solve, to ensure what is happening, to ensure we do not commit mistakes, is going to be this line graph. Is this clear, everyone? Perfect. So let us write it down. Step 1. Now these steps you will not be finding in the institute. Yes, these I have created. So these steps, it is better we write it. Without that also in the exam, if you do, it is absolutely all right. But for us to understand, for us to ensure that throughout all questions on variable growth, I will be doing in 3 steps. Step 1, calculate dividend for uneven growth. Step 2, calculate price at the end of uneven growth. Step 3, calculate value of a share. So that there is absolutely no doubt at all. Is this clear, everyone? Calculate dividend for uneven growth. Yes, D1, D2, D3, D4, D5. If you want, you can show the calculation also. 10 into 1.1, 11, 12.1, 13.31, if I'm not wrong, 14.37, 15.52. Yes or no, everyone? Yes. Step 2, calculate price at the end of uneven growth, or in our case, at the end of fifth year. Yes or no, everyone? P5 is equal to D6 divided by KE minus G. Yes. 15.52 I got. There is going to be a 5% growth in that. Yes, divided by 0.15 minus 0.05. I guess it is going to be 162.96. Okay, students, after doing all this, they will not be knowing, okay, from here, which all I should consider, this from where I should consider. Some students will ignore this. Chumma, they'll bring it, they'll think this is from P0. All those nonsense they'll be doing. Why? Yes, it's not that we don't know, just that we have no idea what exactly is happening in this question. Yes or no? I am standing here. This I'm getting. This also I'm getting. I want to bring all of them here. As simple as that. Yes or no, everyone? So step 3, calculate value of a share. Step 3, calculate value of a share. Year, cash flow, present value factor, present value. 1, 2, 3, 4, 5, 11, 12.1, 13.31, 14.37. Fifth year dividend also I'll get, price also I'll get. Total is going to be how much? 15.52 plus 162.96. It is 178.48. Yes, discounted 15% rate and calculate and tell me the present value, students. Do the calculations. Recorded students, just because you're watching recorded, you're not in front of me, doesn't mean that you can just sit. I know you're also waiting. This PV factors and also will only do now this. I know from basics why I should do. Don't do all that. Try calculating. I guess we are getting 124.38. Slightly up or down could be possible. So I will tell. Therefore, value of a share of the share is equal to 124, na? The most important thing for us, doesn't matter whether you write step 1, step 2, step 3 or not, doesn't matter whether you put formula or not, doesn't matter whether you draw the line or not. Line is important as per our understanding. For examiner, what is important? For examiner, what is important is this. You highlight this. Suppose this question comes for 6 marks, where you will be having marks. You will have, I guess, around 2 or 3 marks for this. I guess you might be having around 2 marks. Okay, you might be having 2 marks for this value. You will be having 2 marks for this number. You will be having 2 marks. As simple as that. Make things easy for the examiner. Every key answer highlight. As simple as that. Nothing more is needed. Is this clear, everyone? Perfect. Any doubts till now, my dear students? No. So I guess in that case, it is time to take our game to the next level. Beautiful question. Crazy. I guess a question like this in our question bank we are not having, because we have picked questions only from 2018 onwards. From that till now, this kind of question has not come. But previously, 1 or 2 places this question was there. So if in case it comes, going to be beautiful. Okay, yes, it may seem to be very difficult, but trust me, if your basics is strong, it is jujube. Tell me, students, what kind of a question it is? Jujube, halwa, bacha question it is going to. Is this clear, everyone? Yes, here what is happening is I am having different cost of equity also. That is different discounting rates. I know I have played in basics with multiple interest rates. I know it's not a big deal for me. Is this clear, everyone? Perfect. So let us try reading the question. Yes, beautiful, beautiful, beautiful. You can highlight and keep this. Yes, where is the question? Let us try reading the question. Company has just paid a dividend of 50. Okay. Cost of equity and growth rate estimate is as follows. For the first 3 years, growth is going to be how much? 10%. Okay. Cost of equity is going to be how much? 15%. Yes. 4th year onwards, growth is going to be how much? 5%. And cost of equity is going to be 13%. Yes or no, everyone? Assume I am an investor. Yes. Company is there. Assume, yes, this is the company. Just now, how much dividend they have paid? 50. You're asking, okay, how much growth will be there in the dividend? They're telling first 3 years dividend may grow by 10%. After that, we don't know. So let us assume by 5% it keeps on growing. Even my requirement, I'm telling first 3 years I want 15% return. Thereafter, I don't know. Now, in the long term, what happens to inflation, what happens to country, we don't know. So I'm assuming, okay, at least 13% I would be getting. Based on this, let us try doing the calculation. Very simple. You should know your basics. Draw a line. Line should be straight, whether you are straight or not. Yes or no, everyone? So with this on the back of our mind, let us try doing, yes, step 0, which is going to be pictorial representation. Yes, let me try drawing a line. This is very fat. Okay. Pay attention. Be careful. Let us try doing it. Okay. Where I am standing? I am standing here at t is equal to 0. Yes. 1, 2, 3. Only for 3 years, I guess I'm having uneven growth. 4th year onwards, it is going to be constant growth. Yes or no, everyone? Perfect. 4, infinity. First, let me estimate the dividends. Yes or no, everyone? Tell me, what is my D naught? 50 rupees. First 3 years, how much percent my dividend is expected to grow, students? 10%. That means, tell me, first year, what is going to be my dividend? 55 rupees. Yes or no, everyone? Perfect. Second year, how much it is going to be? 60.5 it is going to be. Third year, how much it is going to be? 66.55 it is going to be. Till here, are we having any doubts? No. Clear? Absolutely clear. Perfect. Now tell me one thing. For the first 3 years, what is my cost of equity, required rate of return for the first 3 years? How much return I want? 15%. So I'm telling boss, if I put fund for first year, how much return I want? 15%. Yes or no, everyone? Second year, how much I want? 15%. Third year also, how much I want? 15%. Till here, are we having any doubt? No. Here, the only thing that is needed is cautious, being cautious and being present. Understand what is happening. You are standing here. Third year got over. You are now looking at the future. In future, how much growth rate you are expecting? 5% growth you are expecting? Yes or no, everyone? Constant, constant. That means, can I calculate price today? Yes, boss, I can calculate the price today. So let me calculate P3. Yes, next year how much dividend I am getting? Tell me this year how much dividend I got? I got 66.55 dividend. Next year how much growth I am estimating? Next year how much growth I am estimating? 5%. So it is going to be into 1.05. Till here is it fine? Yes or no, everyone? Divided by KE minus G. Yes or no, everyone? Perfect. Tell me, I am standing in third year. So I am now looking at my future value of an asset. It is the present value of future cash flows. In future, how much I am getting? That I want to discount. In future, how much I want? Tell me, I am standing at the end of third year. In future, how much return I want? In future, how much return I want? 13% only I want. Yes or no, everyone? People who are watching, yes, online or recorded, don't think, okay, Y person is turning already. Okay, I'm just showing future. Okay, here for you guys, is it coming inverted? I don't know. But okay, yes, that's how. I cannot keep this on the back of my mind. Okay, however it is, it doesn't make sense, I guess. Okay, fine. Anyways, let's leave it. Coming back to the core discussion. Third year I'm standing. Let me show this one. Third year only I'm standing. Yes, fourth year. How much growth will be there in the dividend? 5%. So today, yes, company has just paid 66.55. Next year I'm expecting 66.55 into 1.05. Numerator it's set. Yes. Denominator. Yes, tell me, third year I'm studying. I'm expecting from future. From fourth year onwards, how much return I want? I'm telling 13% is sufficient. Yes or no? And in that, how much is growth? 5%. That means from dividend, how much percentage is sufficient? 8% net is sufficient. So I will do 0.13 minus 0.05. Yes or no, everyone? So what is going to be the value into 1.05 divided by 0.08? Is it 873.47? Yes or no, everyone? I have not written down the formula. If you want, you guys can write the formula also, because formula is just a time pass. Yes or no? Whenever you want, you can create. P3 is equal to D4 divided by KE minus G. Yes, I've got P3 price at the end of third year is 873.47. Is this clear, everyone? Slowly, slowly, slowly. Now, 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 come back. Pay attention, everyone. Pay attention. Now it's a very simple plain GGB question. Tell me, for how many years only cash flows are available? Only 3 years. First year dividend, second year dividend, third year dividend. I also have a price at the end of third year. Now tell me one thing, with which percent I will discount these cash flows? For first year, second year, third year cash flow, how much return I want? 15% is a return I want. That means with which percentage I will be discounting? I will be discounting it with 15% only. Okay, the only thing is draw a line, see where you are standing, see which year cash flow it is, see for that year what is the discounting rate. If I want, I can give you, yes, so much nonsense formula. If I want, I can create and give you. There is absolutely no point. See, if you want present value of this, I can tell it is a D4 divided by new KE minus G whole divided by 1 plus old KE, yes, to the power of whatever it is I can do. What is there to make you confused? Nothing is there. Keep it simple is what I'm telling. Is this clear, everyone? Okay. So ultimately, 3 dividends, price at the end of it. Draw a table, arrive at the value of the share. Is this clear? I've told you from this question onwards, I will not be writing step 1, step 2 separately. You will have to write step 1 calculation of dividend for uneven growth, D1, D2, D3. Step 2 calculation of price at the end of uneven growth. This you will show. I will just keep it in the line. Yes, step 3 we will calculate calculation of value of share year cash flow, present value factor, present value. 1, 2, 3. Tell me first year 55, second year it is 60.5, third year 66.55 plus 873.47. Yes or no? It is going to be 940.02. And tell me first year, second year, third year, how much return I want. I want 15%, boss. That means I will be discounting using 15%. Is this clear? We have spent so much time in the basics. Same interest rate, different interest rate, present value we took, future value we took, everything in the world we did. Why? So that we don't break our heads here. I'm not going to explain again. Yes, if you have not listened, there is absolutely nothing we can do here. Things are only going to get complicated if you are not strong with your basics, or else sit and keep by hearting. Is this clear, everyone? Okay, perfect. I know there is absolutely no value addition in by hearting also. Yes, so can you guys tell me what is going to be the value of the asset? Add all and give me the number. Is it 711.04? I guess Srinivasan has told 0.870, 0.756, 0.658. Recorded students, you guys are chumma sitting and watching entertainment, na? Let sir write, then we will write. 940.02 into 0.658. 712.12. 711, 712, 710. Absolutely no problem. Is this clear, everyone? These are anyways just examples. Is this clear? Yes. And majorly for us, when we are solving in the exam, na, what institute does in the exam is the paper, the people who evaluate papers have absolutely no idea on the concept. They don't know what is happening. They see the number, they try tallying with the number. Okay, institute, instead of trying to upgrade the quality of examiners, what institute did? It did a strategy. Oh, because of rounding off error is coming, institute will tell in question, please round off decimal to 2 digits. Please use these present value factors. So most of the questions in exam, question will specify. You just have to follow that. Present value factors, 90% questions question will give. We will close our eyes, use that. Yes, even if that is wrong, don't go and tell wrong present value factors are given. 10% for 1 year is 0.909. They've given 0.8. Do not question the question. If question tells dog has 2 legs, you'll tell, okay, boss, dog has 2 legs, because you have to pass your exam. As simple as that. Is this clear, everyone? Yes. Most of the questions, question will tell for how many digits you have to round it off. Or else standard, keep it 2 decimals, unless I tell you anything else. Present value factors will be given in the question, most of the questions. Otherwise, we will be taking 3 decimals. Is this clear, everyone? Yes. Perfect, everyone. So with this question is over. It is one of the complicated questions, but here we have covered, I guess, the entire concept, plus we have solved 3 different questions in 40 minutes. Why? We have spent a good amount of time there. Okay, everyone, perfect. So we have one more question, I guess, on similar lines only. 7a. It is just for you guys for your practice. Yes or no, everyone? Here I have done for 4 years. I have given, yes, variable growth as well as variable cost of equity. 5th year onwards, yes, I have made it constant. So this is something for you guys for your practice. Recorded students, pause it now. Try it now. Yes, don't wait. Is this clear? Oh, we are getting the majada without touching formula, without complication. You ask others. Okay, what is variable growth discount model? Oh, so much is there. That we have to do, this we have to do. All those things. UGB. Yes or no, everyone? Now, one more point I would like to tell you guys. Okay, imagine. You have missed calculating price here. You calculated, assume D4 here, and you calculated P4 here. Will it make any difference? It will not make any difference. Okay, you can go 1 step front, 2 step front, any step front. It is automatically adjusted. That is the game, boss. It is automatically getting adjusted. It will not make any difference. So, yes, it's absolutely all right. No issues. Is this clear, everyone? Perfect. So we have solved 3 questions, understood a heavy concept. Yes, giving you guys a minute to let this sink in. Then we'll continue our discussion further, students. Yes, everyone. So with this, we have finished the concept of variable growth. So let us quickly summarize what we have discussed quickly in a very short span. Pay attention, everyone, from scratch. Let us try scribbling. Pay attention, pay attention, pay attention. Yes. We have started with chapter 1A, equity valuation. In that, we are in the first unit, which is calculating the value of an equity share. We told boss, value of an asset, it is the present value of future cash flows, which we are discounting at required rate. So, two key situations can be there. Either share is held for limited period or share is held for unlimited period. I have told you, in essence, even unlimited period, it is only from company's perspective. For investor, it is limited period only, how that magic happens. Okay. If share is held for limited period, whatever dividend you are getting and price you are getting, you will calculate present value of that. Yes or no, everyone? Perfect. Simple. Juju. In case of unlimited period, in case of no growth, I am only getting dividend. Yes or no, everyone? So it is a dividend divided by cost of equity. In case of constant growth, every year by a constant rate, growth is going to increase. So it is going to be D1 divided by KE minus G. Accordingly, for any year, I can calculate P5 is equal to D6 divided by KE minus G. P10 is equal to D11 divided by KE minus G, so on and so forth. Then came, yes, variable growth. Here, the most important thing, first draw a line which is straight. Estimate, calculate dividend for uneven growth. Yes or no? It can give you 10%, yes, same rate, 2 times different rates, year 1, year 2, year 3 different, anything in the world it can give you. Calculate dividend for uneven growth. Yes, all these uneven dividend is over. Now at the end of it, from future, I am only getting a constant growth. Calculate price at the end of it. Yes or no? Calculate price at the end of uneven growth. So these are going to be the cash flows that I'm going to get. In the line you plot it down, these dividends I'm going to get, this is going to be the, yes, price that I'm going to get. Bring all of that to cash present value. Yes, value of an asset. It is the present value of the dividend plus price at the end of the uneven growth. Is this clear, everyone? As simple as that. In that we had seen a question wherein at the end of uneven growth, my cost of equity is also changing. That also how to do we have seen. If you want, I can give you for every year different discounting rates. Year 1 different growth, year 2 different growth, year 3 different growth, next constant growth, here different discounting rate. Everything I can give you, but that is not there. Even if that comes, your basic is strong. You know how to do it. It is just, yes, draw a line. Line should be straight. As simple as that. Okay, now we'll be going ahead to solving of the questions. Beautiful questions we are having. Almost every second or third attempt we are having questions on this, but that is going to be in the next video. For students who are watching recorded, yes, you can either start that video immediately. Yes, we'll keep on solving it together. Before I solve, yes, you can try it by yourselves, or alternatively what you can do is initially you can try by yourselves, commit mistakes. Yes, question bank you are having, solution also you are having. If it is telling, chinchak, or else we are there. Don't worry, as simple as that. So see you guys in the next video for question solving. Thank you so much, my dear students. Yes, everyone, so welcome you guys to our question solving series. So we have now finished calculation of value of a share in case of variable growth or two-stage growth or multi-stage growth. So simple, I've given you guys a 3-step framework. Draw a line. Step number 1, calculate dividend for your uneven growth. Step 2, calculate price at the end of your uneven growth. Step 3, all the dividend as well as price, bring it to present value, calculate value of the share. Yes or no, everyone? Simple. Step 1, calculate dividend for uneven growth period. Step 2, calculate price at the end of uneven growth period. If you want, you can use the formula, but that is not needed. Step 3, calculate present value of dividend and price. Now from here, the real maja is about to start. We have got beautiful number of questions. We are going to solve it. We are going to enjoy it thoroughly. Okay, trust me, it is going to be very simple. We are going to thoroughly enjoy, my dear students. Okay, the approach is going to be very simple. Yes, I will first tell the question number. Yes, we will read the question together. Yes, I want the recorded students to try the question first. Yes, I want you guys to try. I want you guys to commit mistakes. Commit as many mistakes as you want. Commit as many blunders as you want. You will commit. But, okay, you should never feel discouraged by committing mistakes. Your mindset should be, now that I committed mistakes here, I will not repeat the same in the examination. I've learned. Every mistake is making you a better person if you rectify. Okay, yes, so with that on the back of our mind, let us quickly have a look at the question. Let us try solving it as well. Okay, in case of variable growth, yes, this question has come, is there in the study material. Exactly same question has come in MTP September 24 for 2 marks, small question. MNP Limited has declared and paid an annual dividend of 4 per share. Declared and paid 4. Great. It is expected to grow at 20% for the first 2 years and 10% thereafter. Okay. The required rate of return for equity investors is 15%. Calculate the price at which equity shares should sell. And look, note, present value interest factor for 15%. Year 1, year 2 is given. I've told you whenever factors are given, we will use the factors. Is this clear, everyone? Perfect. So with this on the back of our mind, let us start solving the question. Question number 5. Yes or no, everyone? For us, always the first thing that we are going to do is going to be pictorial representation. Yes. Tell me, students, what is going to be D naught? 4. Yes. What is going to be the growth for the first 2 years? 20%, 1, 2. So can you guys tell me what is the first year's dividend? 4 plus 20%, 4.8. Second year's dividend, it is going to be plus 20%. How much it is? 5.76. Yes, I will calculate price at the end of my uneven growth. Third year onwards, it is constant growth only. So can I calculate the price? Yes, boss. So P2, it is nothing but D3 divided by KE minus G. Tell me second year, what is going to be the dividend? 5.76. Next year, what is going to be the growth in the dividend? 10 percentage, yes or no, into 1.1. Cost of equity is going to be how much? 15% minus 0.1. So can you guys tell me what is going to be the price? 126.72. Yes or no? P2 is 126.72. So now I have altogether first year dividend, second year price. I will bring it to present value. Value of the asset is done. Is this clear, everyone? And I'm again making it clear. So many basic questions workbook I've showed you complete presentation. Now, if you guys ask me, is this more than sufficient for us in the examination? I would say yes, because you have specified and told D1, D2, P2. This is what you're having the marks for. But still, I don't want you guys to be taking even the slightest bit of risk. So what you will do, separately you will write calculation of dividend for uneven growth period. Yes, you will just give the heading D1 and you will quickly just write the numbers. That's all. D1 is equal to 4 into 1.2, 4.8, and highlight the answer. D2, 4.8 into 1.2, it is 5.76. Highlight the answer. This much only. Don't take pencil, pen, 10,000 things. The same pen, you are not going to leave it. Is this clear, everyone? Yes. Step 2, calculation of price at the end of second year. P2 is equal to D3 divided by KE minus G. There you would have done already. Write down just the number. What is the number? Price at the end of second year, 126.72, right? Yes, 126.72. Now, calculation of value of the share, first year, second year. First year you are getting 4.8 dividend. Second year you are getting a dividend of how much? 5.76 as well as 126.72. Yes, how much it is going to be? 132.48. I will be taking the present value factors. What is my discounting rate? 15%. Huh? Yes, so I will be doing 1 divided by 1.15. Yes or no? Yes or no? Yes or no? No. See the question. Question has given me the factor already. I will use that factor which question has given, and accordingly I will arrive at the value of the share. So please do multiply and give me the value of the share, students. What is going to be value of the share? 104.34. Yes or no, everyone? Perfect. Is it tallying with the institute's answer? Okay. They have done 4.8, 5.76. This was 126.72, 104.34. Is this clear? For this is what we are having the marks for. Perfect. Question 5 is over. Now we are going ahead to question number 6. Let us see where this question has come. Yes, PY means past paper. When? May 18. How many marks? Sorry, May 19. How many marks? 8 marks. 8 marks question it came. Let us see what is there in this question. Okay, are we ready, everyone? Yes or no? Perfect. Shares of G Limited are currently being traded at 46 rupees. Tell me what is the current price? 46. They may ask also in the end, is it trading at premium, discount, should I buy, not buy? Okay, we'll do that, not a big deal. Okay, the company published its result for the year ended 31st March 2019. Published, done. Yes or no, everyone? And declared a dividend of 5. In this case, what kind of a dividend is it? Is it D naught or D1? It is going to be D naught. Yes or no? It is already declared. Yes or no? Past dividend. Okay, fine, boss. This is a D naught. Okay, company made a return of 15% on its capital and expects that to be the norm in which it operates. That means company is giving 15% return to its investors. So for the risk, yes, 15% is what investors are expecting. That means my cost of equity is going to be 15%. Great, boss. Yes, also expects dividend. G Limited also expects dividend to grow at 10% for the first 3 years. First 3 years, 10% it will grow, and thereafter at 5%. Great. You're required to advise whether the share of the company is being traded at a premium or discount. Yes or no, everyone. Actual market price, for that purpose they've given. We'll calculate value of the share. Present value annuity factor at 15% is given. Factor is given. We will be using the factor. One of the simplest questions. 8 marks. Halwa Jujibi Pro Max it was. Giving you guys a minute. Quickly try solving it by yourselves. Yes, everyone. So let us try solving the question. Let us try seeing what all data is being given. Tell me, students, what is a dividend which is declared by the company? 5 rupees. Yes or no, everyone? Yes. First step we are going to do is draw a line. Line should always be straight. Yes or no, everyone? Perfect. Now tell me. 15% is going to be cost of equity. Okay, let me just park it here. Okay, now tell me what is question telling. Yes, dividend to grow at 10% for the first 3 years. First 3 years it will grow by 10%. Okay, boss. Year 1, year 2, year 3. How much percent it will grow? 10%. So it will become 5.5, 6.05, 6.655 or 66. Anyhow you can write. Is this clear, everyone? Now 3 years is going to be the variable growth. Yes, at the end of 3 year, in future, how much is the growth that we are anticipating, students? 5% growth is what we are anticipating every year. Yes or no, everyone? So can I calculate price at the end of 3rd year? Yes or no? Yes, sir, I can calculate. So it is going to be D4 divided by KE minus G. Tell me, 3rd year how much we have given? 6.66. Next year how much growth will be there? 5% into 1.05. Yes, total our required rate I guess is 15%. Yes, in that from growth we are getting 5%. So into 1.05 divided by 0.1, it is 69.88. Yes or no, everyone? Perfect. Yes. So now what all cash flows I am getting? 3 years dividend I am getting. At the end of 3-year price also I am having. What I'll have to do? I'll have to bring these cash flows to the present value. That will give me the value of the share. Yes or no, everyone? 5.5, 1, 2, 3, 5.5, 6.05, and 3rd year I am getting two cash flows, 6.66 as well as 69.88. It is going to be 76.54. Present value factors are given in the question. I will use the same multiply. I will arrive at the present value, which is going to be value of the share. Please do multiply and give me the value, students. How much is the value? 59.72. Perfect, everyone. Yes, everyone. So I hope you would have got the value of the share as 59.72. The question is not over. At the end, it is always important for us to see again what the question is asking us. Look at the question again, students. Yes, they're telling share is trading at 46. Okay. Advise whether the share is being traded at a premium or discount. That is the requirement. Tell me, students, tell me, what is the value of the share? What is the value of the share? Value of the share for us is how much it was? 59.72. That means I am willing to pay 59.72 because that much benefit I am getting. But tell me, in reality, at what price that share is being traded in the market? At 46 only. That means tell me whether the share is traded at premium or at a discount. It is traded at a discount. Yes or no, everyone? That means should we buy? Yes, if given a chance, we will obviously be willing to buy the share. Yes or no, everyone? Perfect. So we will write yes, intrinsic value of the share is 59.72. However, the same is trading in the market for 46. Yes, hence the share is being traded at a discount. This should be highlighted because this is what is asked. That is, the share is undervalued. Is this clear, everyone? Such a simple question. You have seen how many marks it has come for in the examination. 8 marks. Yes, the difference between 4 months. Yes or no, everyone? Perfect. Could be possible. So, yes, it is very important that we try solving each and every variety of questions. Now, one more question, beautiful question. Are we ready for the maja? Yes, beautiful question, crazy question. Yes, giving you guys 2 to 3 minutes. Read the question, try making sense of it, and try solving it first by yourself. At least try doing the pictorial representation. Then we'll do it together. Don't worry. Is this clear, everyone? Giving you guys 2 minutes. It has come in the November 20 exam for 8 marks. Yes, everyone. Yes, yes, yes. Pay attention. I hope you would have tried question number 7. And if you would have tried, you would have at least for a minute thought, okay, what is happening? The question is not very clear because the framing of the question is not very clear. Now, generally, institute should be checking you on the level of concept. But what institute does is it does something ambiguous and tell things. Institute will have one approach. Completely ambiguous, vague question. Institute will have one approach. Institute will check, did you also follow same approach or no? If you followed another approach, which is logical, but not telling here, institute will not give you marks. Crazy. Yes, there will be some relationships wherein, yes, your partner will keep waiting. Okay, you are having a bad day. Yes. Come, let me make it even more bad. That kind of behavior institute is having. Okay, so it is very important. Let us try understanding what exactly institute is trying to tell. Recorded students, again, I'm asking, try, commit mistakes. Okay, now I can solve this question very slowly, take 1 hour to explain this. It is not going to make any much value addition. If you try the question first by yourselves, then you see you are just looking at that one place wherein you are having a doubt. Okay, is it being solved properly or what is it? That's all. Okay, so let us try understanding the question. Beautiful question. Yes, you have to revise it one more time. You have to solve it one more time. One day before examination also you should be doing it. An investor is considering to purchase the equity shares of LX Limited, whose current market price is 112. There is a share right now at what price it is trading? 112. Great, boss. The company is proposing a dividend of 4 for the next year. Point number 1, very important. 4 rupees. Is it D0 or is it D1? Read the wordings properly. Company is proposing. Is it done? No. Future. Dividend of 4 for the next year. Clearly given. In any given case, it is going to be D1 only. There cannot be an alternative assumption for this. Okay, I am presuming that you guys have read the question once, recorded students, or else please pause and try reading it once at least. Okay, LX Limited is expected to grow at 20% per annum for the next 4 years. For the next 4 years. From where? From today or from first year? It's not clear. So default assumption is going to be from today only it should be there. Yes or no, everyone? Okay. Yes. Here in the next line they have tried making it a bit more clear also. Look at this. The growth will linearly decline to 16% per annum after the first 4 years. That means tell me, dividend in the first 4 years is going to be how much? 20%. After that, it will decrease to 16%. Will it happen that 4th year growth is 20%, 5th year growth is 16%? Will it happen that way? No. Linearly, slowly, 1, 1, 1, 1. The way you climb down from steps. 1%, 1%, 1%, 1%. So 5th year it will be 19, then 18, then 17, then 16. Yes or no, everyone? Yes. Then thereafter, it will stabilize at 16% per annum infinitely. From there onwards, what is going to happen? Throughout, the growth will be 16% only. Perfect. The investor requires a 20% return per annum. Perfect, boss. You are required to calculate the intrinsic value of the share. Value of the share and suggest, is it worth to purchase the share at this price? Okay. The most important thing is how am I going to do my drawing? how your line is going to be, that is going to determine your answer. Pay attention everyone. Question number 7 is what we are going to solve. Yes, once our line is ready, trust me, the answer is ready. There is absolutely nothing more left. We'll try making it as comprehensive as possible. Okay, now pay attention, pay attention, pay attention students. Where am I standing? Here I am standing today. Yes. Now tell me whether question has already given me dividend. Yes or no? Yes. Which dividend has the question given me? Question has given me D1. It is absolutely clear. Company is proposing dividend of 4 for the next year. There cannot be any doubt that it is going to be D1. Is this clear everyone? How much is D1? Tell me. 4, right? Perfect. Any doubt in this? No. Now, the biggest area where students may be having a doubt is with respect to the growth rates, growth percentage. Yes, what is question telling? Question is telling growth is going to be 20%. Dividends are expected to grow at 20% for the next 4 years. Okay. In the next line, they are telling, yes, after the first 4 years, that means growth of 20% is going to be for the first 4 years. Yes or no, everyone? So look at this. This is how it is going to be. Yes, for first year, my growth is going to be 20%. It doesn't matter how much my growth is, because first year dividend they've already given. Yes or no, everyone? Second year, again, my growth is going to be 20%. So can you tell me what is going to be my second year's dividend? 4.8. Yes or no? Third year, again, my growth is going to be 20%. So can you tell me what is my dividend in third year? 5.76. Fourth year, my growth is again going to be 20%. So can you tell me what is going to be my growth? Oh, sorry, dividend? 912. Perfect. Till here, is this clear? This was one big chunk. Firstly, knowing that, yes, this is D1. See, if you draw a line, slowly start doing it, things will start making sense. If you just have your data cluttered around, now you don't know what exactly is happening. You'll always be in that mess. Okay, now slowly you have started decluttering the things one by one. You understood? Okay, boss, this was a D1. Yes, they've given me 4 years dividend, 4 years growth as 20%, but they've given me first year value already. That means that I will not be using. Okay, second year growth I will add, third year growth I will add, fourth year growth I will add. Till here, is this fine? Perfect. Next, what is my question trying to tell? Yes, the growth will decline linearly to 16% per annum. Slowly it will come down to 16% per annum. Now question did not tell by how much percent it will fall. Question could have told every year 2% it falls, every year 1.5% it falls. We would have taken it that way. Question did not tell. What is the default assumption? 1 percentage will make it fall. Is this clear everyone? Perfect. So what I will do, from 20 it has to come to 16. Look at this, linearly it will fall. 20, then it becomes 19, 18, 17, 16. This way my growth will happen. Yes or no, everyone? So first let me just write down the growth. Pay attention, pay attention, pay attention. So for the 5th year, my growth is going to be how much, students? 19%. For the 6th year, my growth is going to be how much, students? 18%. For the 7th year, my growth is going to be how much? 17%. For the 8th year, my growth is going to be how much? 16%. Yes or no, everyone? Till here, whether things are clear? Perfect. So first 4 years growth was 20%. From there onwards, 1%, 1%, it kept on reducing. So let me calculate those values also. Tell me what is going to be my D5. 6.91 plus 19%. 6.91 plus 19%. It is going to be 8.22. Yes or no, everyone? 8.22. 6th year plus 18%. 9.70. Plus 17%. 11.35. Yes, plus 16%, it is going to be 13.17. Till here, is this fine? Absolutely no doubt here. Okay. Now, let me read the question again. Yes. Growth will linearly decrease to 16% per annum after first 4 years. Thereafter, it will stabilize at 16% per annum indefinitely. That means from here onwards, what is going to be my growth rate? For 9th year, how much is going to be my growth rate? 16%. 10th year, how much is going to be my growth rate? 16%. So on up to infinity. Yes or no, everyone? Perfect. That means, if I want, I can calculate the price here. Yes or no, everyone? Perfect. Is this clear? Because from here, future every year my growth is 16% only. So I can calculate, and I can calculate the price here. Perfect. Or one more thing, let us think. You come here to 7th year. You come to 7th year. Tell me 8th year how much is your growth? 16%. 9th year how much is your growth? 16%. 10th year again how much is your growth? 16%. So on. So if needed, I can calculate price here also. Yes or no, everyone? And trust me, wherever you do, it is not going to make any difference. Yes, because everything is ultimately adjusted. But wait. For us, present value factors are given in the question. If you see, present value factors are given in the question. So if factors are given in the question, I should use the factors which are given in the question. Yes or no, everyone? Tell me, factors are given for how many years? 7 years. That means I should restrict my cash flow to how many years? 7 years only. Is this clear, everyone? That means my price will be at the end of which year? 7th year I will keep. Is this clear, everyone? So this I will eliminate here, and I will keep my price here. So from 8th year onwards, every year it is going to be 16% till perpetuity. So this is how I will keep my chart. Is this clear, everyone? Yes or no? Yes or no? Yes or no? In the end, I will summarize things again for you guys. So let me calculate price at the end of 7th year. P7 is equal to D8 divided by KE minus G. D8, next year dividend, it is going to be how much? Generally, I do not keep the future dividend here, because otherwise what happens in your line, you will discount everything. You will calculate price here also. In urgent, you will discount this also. We will commit those mistakes. Okay. Yes. So tell me. Yes, 7th year I got 11.35 into 1.06 divided by 0.2, sorry, 1.16 na, 16 divided by 0.2 minus 0.16. It is going to be how much? 11.35 into 1.16 divided by 0.04, 329.25. Okay. P7, it is 329.25. Is this clear, everyone? Yes or no? Yes or no? Yes or no? Yes. Now, technically, even if you consider D8 and price at the end of 8th year also, your answer will not change. You can do it that way also. But for 8th year, again, you should calculate factor. Because they've given factors already, yes, I do not want to vary from their answer. And I am trying my best to stick on to their answer. Because their factors is for 7 years, their price will also be at 7th year. This is what the examiner will be looking at. That is why I have kept it here. If you have done it other way, absolutely no issues as well. Is this clear, everyone? Now it has become like any other JUJB question. Yes, but your line is very big. Sometimes a small line is not sufficient. You'll have to put more efforts. More line. Consistent efforts you should be putting. Koti. Only then you will become owner of 10 acres. Okay? You guys don't know? 10 acres. He's getting in dowry. Huh. Publicly you should not tell. Okay, in private, okay? Secret. Okay, so look at this. Now I have all my cash flows. First year, second year, third year, fourth year, fifth year, sixth year, seventh year. I have price at the end of 7th year. I will write down the cash flows, bring it to present value. I will arrive at value. Yes, this is something from here onwards. I genuinely believe you guys can do it. 1, 2, 3, 4, 5, 6, 7. Yes or no, everyone? Perfect. Tell me. 4, 4.8, 5.76, 6.91, 8.22, 9.70. This is going to be 11.33 and 11.35 plus 329.25, whatever it is. So how much you are getting? 340.6. Yes, use your present value factors at 20 percentage, you multiply, I guess you will be getting a value of 114.91. Small rounding off could be there, 114, 113, 115, absolutely no problems. Yes, finish off. Sharat Soap is telling it is called gift nowadays. He is also, Sharat is also like Reddy, Koti Reddy. Yes, everyone. So we have calculated the value of the share. So what is going to be value of the share? It is going to be 114.91. Now let us have a look at the question again. First one is intrinsic value. Yes, it is coming to somewhere around 114.91. Okay. Yes. Here, all these numbers they have given 4. All these things are there. This they have calculated and kept. They will calculate everything. Okay. Yes. If you do more calculation, you will get confused. Then you will yes, bring present value of all the cash flows. Only calculate discount which is calculate dividend which is needed. For future, you do current discount into 1 plus G divided by KE minus G. Don't calculate and keep it. You will commit mistakes. That is why I am telling. Yes. Even there is a reason why for the last year I add these two things and write. If you want, you can write it like this: 7th year 11.35, 7th year 329.25. Institute will be doing this way only. But I know that if you do it this way, yes, the moment you get calculator, now you get superpowers. You want to keep pressing on equals. So you'll do 1 divided by 1.2 equals, 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 equals. Seventh time you'll put equals again. You will not see it is 7th year. Again you'll put equals. You will multiply again. You will commit mistake. You will wait again for 4 months. Yes, and then you'll keep complaining. What? I see everything I wrote properly. They don't give marks only. Okay, so every area wherein you can commit mistakes, I am explaining in a way there is no chance for you to commit those mistakes at all. That is why I am writing it this way. Is this clear, everyone? Yes, if you are confident that you will not do it that way, you can write it 2 times also. Absolutely no issues. Is this clear, everyone? Perfect. So we have got all the values. Tell me what is the question asking? Current market price is 112. It is trading at 112. The value is 114. I am willing to pay 114 or 115. Can I buy? Yes, boss. You can purchase the asset. Yes or no, everyone? Intrinsic value is higher. It is under price. Yes, so the share can be acquired. Is this clear, everyone? Perfect. Crystal clear. Beautiful question it was. Let me try summarizing the question again. If you just read the question, you are going to get lost. The simplest way is start slow, go one by one. First, question told me that next year dividend is 4. So absolutely no doubt my next year dividend is 4. Question told me that first 4 years growth is 20%. So first year growth is 20%. Absolutely no need, no use, because D1 is given. But second year growth, third year growth, fourth year growth I will put. Fine. Question told me that later on my growth will linearly reduce and become 16%. So 20 it becomes 19, 18, 17, it becomes 16. But once it becomes 16, it will remain 16 forever. So what I will do from here only, I will calculate the price of the share. If you want, you can go one step further and do the calculation as well. But because Institute has not given the present value factors, I am standing here itself. You've got all your cash flows, bring it to present value, you've arrived at value of the share. This is a question you will have to practice 1 or 2 more times, but there's absolutely nothing big about this. Is this clear, everyone? Perfect. A good question for you, a comprehensive question for you. You will have to solve it 1 or 2 more times. And what I want you guys to do is, every time we come across a question wherein we are having something very unique adjustment, most of the adjustments I would have covered already in the form of workbook, or even in our concept book we have something separate called as Maja adjustments. All those things separately we'll do. But despite that also, if there's something else, I want you guys to maintain a separate book called special adjustments book, wherein what you do is you just write down the question. Say for example, when I was a student, I used to do this. Okay, I had a separate book wherein I would write, okay boss, yes, equity valuation chapter, question number 7. Yes, what was special in this question? If I draw the line, everything else I can do it. Yes or no, everyone? I will highlight those parts of the question and I will just draw the line and keep. Okay boss, D1 is 4. Here this G is 20%. Yes, here it is 20%, 20%, 20%. Slowly it will come down. Yes, at the end of 7th year only you should be calculating the price. If you just have that, calculating value, calculation of dividend, all those things you will do any given day. Yes, the only 2 pointers was D1 is for first year growth is of no use because D1 is given. Third point is I will calculate price at the end of 7th year. As simple as that. So those adjustments, write it down and keep it separately. In your next revisions, revise only those adjustments. Is this clear, everyone? Perfect. Yes. So with this, we have finished question number 7 as well. A very beautiful question for us. Yes, everyone. So we have finished question number 7 as well. We have question number 8. Again, a beautiful question has come in past exam May 23 for 8 marks. But this question we'll be recording it separately in detail for regular batch students. For exam oriented fast track, I'll just quickly tell you guys the adjustment in short. So we'll do it in the next video. Now let us go ahead to question number 9. This is a question which has come in the case scenario booklet. Now what we have done is we have one question bank. In that, for that particular concept, whether a practical question is there or a case scenario is there, everything we have incorporated. Trust me, you will not be finding a book wherein all these things are incorporated in a systematic order, easy to difficult, yes, duplicates, removed, highlighted, all those things. No one will be doing with respect to the question bank. Okay, so much work has gone behind. If you appreciate it, do share it to your friends. Okay, yes, everyone. Now to solve this question, there is one extra thing which is needed from portfolio management chapters, which is calculation of beta. There we will discuss in detail for 1 to 2 hours how that formula has come, but all other parts are from this chapter, so that is why I have kept here, because if then I will go to that chapter, you will forget anyways what you have done here. So that point I will tell here. Yes, question will solve it off. Okay, yes, that is formula for beta. Beta of a security, it is nothing but RXM into sigma x divided by sigma m. You guys can just write and keep it. Don't worry, in detail 2 hours will be spending. At the end of it, what it is, why it is, what exactly it is trying to tell, you will get to know. Okay, yes, where sigma x, it is a standard deviation of the stock. Sigma m, it is a standard deviation of market. RXM, it is a correlation between stock and market. This gives me beta of the security x. I will just write where RXM, it is a correlation between security x and market. Sigma x, I will write it in the new page only. Security x and market, or let me add a new page here. Okay, yes, sigma x, it is standard deviation of security x. Sigma m, it is a standard deviation of market. Is this clear, everyone? Beta x, it is the beta of the security. Is this clear, everyone? Perfect. You guys can just write and keep this. Don't worry. Yes, in detail we'll do. We'll make it halwa for you guys. Don't worry. Absolutely chill. Okay. Yes. So let me just keep this formula here. 7 is over. We are going to question number 9 right now. Okay. Okay, everyone. Okay. With this on the back of our mind, let us read the question now. Okay. Yes. Z Limited paid a dividend of 5. Paid. What kind of dividend it is? D naught. Yes or no, everyone, for the current year. Dividend is expected to grow at 25% for the next 6 years. What is the growth rate? 25%. And 10% per annum thereafter. Okay. So can I calculate all the dividends? Yes, boss. Return on government bond is 13% per annum. Government bond, what kind of return it is? Risk-free rate of return. Fine. Market return is expected to be around 20%. RM is given. Perfect. The correlation between market and Z Limited is 0.3733. Standard deviation of market return and Z Limited is 12% and 18% respectively. Is this clear, everyone? Okay, using this, we'll have to do the calculations. Okay, Slowly, one by one, shall we do the calculation? First, they are asking what is the expected return of shares. Okay. Next, they are asking what is the intrinsic value. Next, they are asking what is the current market price. Is this much? Is it undervalued or overvalued? Let us try doing simple jujube only. It is going to be. Okay. First, we have to calculate beta. Till now, every question wherein we have calculated the required rate of return, beta was given. But in this question, beta is not given. I've told you the formula to calculate beta. Trust me. Yes, once portfolio chapter gets over, this will be one of the simplest things for you. For now, just keep it. You need not even by heart or remember. You just have to wait for 4 chapters. Is this clear, everyone? So step 1, can I calculate beta of security? So let me try calculating step 1 calculation of beta. Yes, tell me beta of security X. It is RXM into sigma X divided by sigma M. Tell me what all data is given. Correlation between the security and market is how much? 0.3733, right? If I'm not wrong, yes or no? Sigma X I want, sigma M I want. Be careful. Just check and put the data. Standard deviation of market and Z limited is 12% and 18%. So 12% is for market. Yes or no, everyone? Yes, it is going to be 12%. You can write as 12% or 0.12. Sorry, this is again wrong. Okay, I was telling you guys, sometimes I do things wrong. Why? So that you should not be doing them wrong. See how difficult my life is to know the things right and then to write them wrong, so that I can teach you to not do the wrong. Is this clear, everyone? Okay, simple. See, institute also could have given the data directly. They knew you will commit data. Small games institute will play. Yes or no, everyone? So sigma market standard deviation is 18%. Security standard deviation is going to be, yes, sorry, securities is 18%. Yes or no, everyone? This is going to be 18%. Perfect, everyone. Using this, can we try calculating beta of the security? Yes, boss, we can try calculating beta of the security. Tell me RXM, it is 0.3733 into sigma X, it is 18%, which is 0.18, divided by sigma M, which is 12%, it is 0.12. Yes or no, everyone? So what is the value that we are going to get, students? 0.3733 into 0.18 divided by 0.12, it is going to be 0.55995 or 0.56. Yes or no, everyone? 0.56. Is this clear, everyone? Once this is done, this is like any other jujube question. Yes or no, everyone? Yes. First question has asked me what is the expected rate of return. Okay, let us try calculating expected rate. Yes, it is RF plus beta, RM minus RF. Tell me what is the risk-free rate of return? 13%. Yes or no? Beta is 0.56. Market is, I guess, 20 minus 13. Yes or no, everyone? 0.56 into 7 plus 13. It is going to be 16.92%. Yes or no, everyone? Let me try seeing if closer answers are available. 15 is there. 23.92 is there. 16.92. 16.92. That means my answer is going to be option number C. Yes or no, everyone? Perfect. Next question is calculate intrinsic value of the share. Okay, boss. Very simple. Yes or no, everyone? Yes. Here I can do it the way I want because presentation is not needed. Pictorial representation is sufficient for me. Yes or no, everyone? Perfect. We'll draw a line. Line should always be straight. Yes or no, everyone? Yes. Tell me whether question has given me dividend. Which dividend is given? Paid. D naught is given as 5. D naught is 5. Tell me for how many years growth is given in the question? 6 years. Yes or no? How much percent is the growth? 25% is the growth. 1, 2, 3, 4, 5, 6. 25%. So it is 1.25 into 5 equals 6.25, 7.81, 9.77, 12.21. Take it to 2 decimals sufficient. 15.26 and 19.07. At the end of it, I will calculate price also. P6. Yes, it is a D7 divided by KE minus G. Tell me 19.07 I got. Yes, 7th year onwards, what is my growth rate? How much is the growth rate? The constant growth rate? 10 percentage it is going to be into 1.1 divided by what is going to be my cost of equity. We have calculated, right? 0.1692 minus 0.1. Yes or no, everyone? So it is 19.07 into 1.1 divided by 0.0692. Is it 303.14? Any doubts in this? First I calculated the required rate. First I calculated beta. Using that I calculated required rate of return. I got 16.92%. Once I've got it, here I had to discount my cash flows. D7 divided by KE minus G. Here I wanted my KE. KE is 0.1692. Yes or no, everyone? Perfect. Using that, I hope you guys are getting a price of 303.14. Yes or no, everyone? Yeah? Or is it a different number? Correct, na? 303.1419, whatever it is. Is this clear, everyone? Now what I'll have to calculate? Value of the share. What is it? It is present value of future cash flows discounted at a required rate. Tell me what is my required rate, students? What is my required rate? 16.92%. So I will write down. Yes, tell me. I'm trying to do all the things here itself. You guys can present it properly. 1, 2, 3, 4, 5, 6. Cash flow. It is 6.25, 7.81, 9.77, 12.21, 15.26. Sixth year I am getting 19.07 also and 303.14 also. It comes to some 322.21 something. Present value factor, I will discount using 16.92%. I will arrive at present value. Yes, I guess we are getting present value as 156.71. Recorded, students? This multiplication part is something you should be doing. Okay? There's absolutely nothing else to be done. I will do 1 divided by 1.1692 equal 6 times. Do multiplication, press grand total. You will be getting the answer as 156.71. Something slightly more or less. So let me try seeing 156 point in that range. Which answer I am having? I am having option number A, 156.75. That is going to be my answer. Is this clear, everyone? Yes, we have solved so many questions already. After this only I am increasing the pace this way. I hope this is going to be okay for you guys. Yes or no, everyone? Yes. Third situation, if current market price of the share is 315, tell me students, what is the value of the share? 156. At what price it is traded? 315. Good or bad? Bad. Yes or no? I am getting benefit of 156 only. Why on earth will I be willing to pay 315? So whether the share is underpriced or overpriced, yes, the share is going to be overvalued. Yes or no, everyone? So it is going to be option A. So my answer is going to be CAA. CAA. Is this clear, everyone? So with this we have finished all questions from variable growth except question number 8. Okay, so question number 8 we will be discussing in the next video. Yes, variable growth is one of the simplest things ever. Simple 3-step framework I have told. Draw a line. Step 1, estimate dividend for the uneven growth. Step 2, calculate price at the end of uneven growth. Dividend is there, price is there, bring it to present value. You have arrived at value of the share. Question 7 was there, wherein that confusion was there. D1 was given, first 40% was given, linearly will reduce to 16%. Yes, do practice it 1 or 2 more times. And question 8, try by your source. Beautiful question. Or else, recorded students, just go to the next video. I will explain to you guys. So that's all for this video. See you guys in the next video. Thank you so much, my dear students. Yes, everyone. So hello, hi, namaskaram, my dear warriors. So I hope you guys have solved the questions on a variable dividend model. So we have one question left, which is going to be question number 8. So we've solved till question number 7. It is a similar question to that, just a slight variant. It had come in the exam for 8 marks. Now, I really want you guys to try it by yourself. There is absolutely nothing. The only thing that is there in this question is, question has given you the value of share. Yes, question has given you dividends for 7 years. At the end of 7 years, the stable growth rate is not given. Whatever is not given, I'll take it as X. And always remember, yes, if one person goes from your life, other person will come into your life. If stable growth is given in the question, using that I'll be calculating value. Here stable growth is not given. That means to compensate for that, value is given. I'll take it as X, create an equation. Now I've solved it already and kept it so that I don't take much of your time. I am genuinely hoping that you have read the question, tried the question, got the answer. Otherwise, read the question once. We'll together read. Investor is considering purchasing equity shares of Alpha Limited, whose current market price is 172.45. Today, at what price it is trading? 172.45. Company is proposing a dividend of 6 for the year ended 31st March 2024. Tell me, students, company is proposing a dividend. Is it D0 or D1? It is D1, proposing. It is going to be first year dividend. Okay, fine, boss. This is going to be D1. Okay, perfect. Now, Alpha Limited is expected to grow at 20% per annum for the next 4 years. First 4 years growth rate is going to be 20%. Perfect. Thereafter, the growth over the next 3 years will decline linearly by 100 basis points per annum. Tell me, year 1, 2, 3, 4, how much was the growth? 20, 20, 20, 20. Next 3 years, it will reduce linearly by 100 basis points. 100 basis points means 1%. You would have learnt in your inter, or else don't worry, we have something called as basic interpretation of interest in concept 0, sorry, chapter 0. When the time comes, we'll explain that. Is this clear? 100 basis point means 1%. So fifth year it will be 19%, sixth year it will be 18%, seventh year it will be 17%. 1% it is reducing over the next 3 years. Great, boss. Thereafter, it will stabilize at a certain growth rate per annum infinitely. After that, it will grow at a certain growth rate. Sir, how much growth rate, sir? Till now, question used to tell thereafter, after 7 years, it will grow at 16% per annum infinitely or 20% per annum, whatever it is. Sir, here it is not given, sir. That is a suspense, that is what we'll have to be calculating. And whatever we'll have to be calculating, we'll take it as X. As simple as that. Is the required rate of return for the investor is 20%? Okay. Dividend value is to be taken only in 2 decimals. Question is specifying. In exam, question will always specify. In exam, question will always give, because evaluator doesn't know what on earth is happening. Yes or no? They don't want any difference. Is this clear, everyone? Okay, perfect. You are required to calculate the stable growth rate of Alpha Limited at the end of 7 years. After 7 years, what is the growth rate we have to calculate? Whatever we don't know, we'll take it as X. Yes or no, everyone? Very simple it is going to be. Look at this. I've already done the calculations and kept so that it becomes easy for us. Look at this, students. Tell me. Here I am standing. For 7 years, data is given. Tell me, first 4 years, what is the growth? 20%, 20%, 20%, 20%, 20%. Then next 3 years, it will linearly reduce by 100 basis points every year. Every year, 1% it will reduce. Next will be 19%, 18%, 17%. Yes or no, everyone? It is a correct question only, right? Not this question, sorry. I am in the wrong question. Yeah, this is the question. Sorry. Yes. First 4 years, growth is going to be 20%. Yes, fifth year 19, sixth year 18, seventh year is going to be 17%. Question told company is proposing a dividend of 6. That means it is first year's dividend is 6. Next year plus 20%, plus 20%, plus 20%. Next year is plus 19%, plus 18%, plus 17%. Is this clear, everyone? Now, technically at the end of 7th year, we will estimate, yes, the price also. Yes or no? D8 to infinity. D8 divided by KE minus G. But to do that, G is not available. Whatever is not available, whom will remember? We'll remember our X. Yes or no? We'll take it as X. So look at this, students. Calculation of stable growth rate at the end of 7 years. Let us assume stable growth rate is X. Tell me, what is the price at the end of 7th year? It is a D8 divided by KE minus G. What is D8? It is a D7 into 1 plus G divided by KE minus G. Yes or no? D7 is 17.04. into 1 plus g, 1 plus x divided by ke is 0.2 minus x. Is this clear, everyone? Yes, I will keep it as it is. Now using this, what I will do, I will calculate value of the share. Yes or no, everyone? Tell me what all I am getting, what all I am getting from the share. 7 years dividend I am getting. At the end of 7th year, price also I am having. Yes or no, everyone? If I bring all of them to present value, I should be getting the value of the share. Tell me, price of the share is given in the question, yes or no, everyone? That means that should be equal to that value. So I will try equating. Look at this, everyone. Year 1, 2, 3, 4, 5, 6, 7. All 7 years dividend I have written. At the end of 7th year, I also have, yes, the price at the end of 7th year. It is 17.04 into 1 plus x divided by 0.2 minus x. 7th year factor is 0.2791. So if you multiply, see what is going to happen when you multiply in the numerator. See, it is 17.04 into 1 plus x into 0.2791. So I can write it as 17.04 into 0.2791. It is 17.04 into 0.2791. It is 4.76. Yes or no? 4.75 or 4.76 into 1 plus x. Yes or no, everyone? Divided by 0.2 minus x. That will be the factor here. For all other things, numbers will be available. I will add and write it. You will get close to 34.59. This one alone will be in terms of x. How to do the multiplication also I have told it to you guys. Yes or no, everyone? This value will be 4.75 into 1 plus x divided by 0.2 minus x. Is this clear, everyone? Perfect. So this is going to be the value of the asset. This is how much I should be paying, and how much I am paying is given in the question. Tell me, students, how much we are actually paying for the share. Question is telling, yes, it is available at 172.45. So using this, I will tell, okay boss, value of the share is 172.45. It is present value of future cash flows. It is 34.59 plus this value. Now I will try simplifying. Look at this. How will I try simplifying? Yes, first, yes, always try looking for simpler ways. First, either if I want, I can take, yes, LCM, all those things. It will unnecessarily complicate things. See, this is available here, plus take it to the other side, becomes minus. So I'll be left with this one is equal to 172.45 minus 35.49. Okay, this amount is going to be 136.96. This is there here in the division. Take it to the other side, becomes into. So it becomes 136.96 into 0.2 minus x is equal to 4.75 into 1 plus x. Yes, now you expand. 4.75 plus 4.75x is equal to 27.39 minus 136.96x. Bring all x together. This will become plus 4.75 plus 136.96x. This goes to the other side, becomes minus 27.39 minus 4.75. Therefore, value of x will be somewhere close to 0.16. That means your sustainable growth rate at the end of 7th year is going to be 16% till perpetuity. Is this clear, everyone? Perfect. A very simple question only, absolutely nothing. And similar to this, so many questions we have done. That is why, to ensure that you save time, yes, I have already done the steps and I'm here only telling you guys quickly. Is this clear, everyone? Perfect. Now, once this is done, there is a second requirement. Tell me, students, share is trading at what price? 172.45. Yes or no, everyone? Yes, when it is trading at 172.45, yes, at the end of 7th year, how much return it is giving me? 16% return it is giving me. Yes or no? There is also a second part of the question. They are asking, advise whether it is worth to purchase the share at this price if investor has a stable growth target of 15% per annum. Investor is telling, boss, I want 15% growth. Yes, if that is the case, yes, shall I purchase this share or not? Tell me whether he should be purchasing the share. Yes, boss, he should be purchasing the share. Yes or no, everyone? Yes. Now, yes, here they have not specified whether this growth of 15% stable growth, is it at the end of 7th year or is it from the start? Yes, that is not being specified. But if you see the solution, now they have not calculated the value again. All they are telling is, boss, at 172 I am getting 16%. That means if I want to 15% means I am getting more than that only. So it is definitely worth it only. So yes, it is worth to purchase the share. Yes, I want 15% only. It is giving me 16% growth. So that means it is worth purchase the share. That is a simple way of doing it. Or else what you can alternatively do is, yes, calculate the price again using your constant growth model, yes or no? D1 divided by KE minus G. Yes, wherein your D1 is 6 divided by 0.2 minus 0.15, right? 15 percentage growth he wants, na? So it is 6 divided by 0.05. It is going to be 120. Wait a minute. Something is wrong. Proposing dividend 15 percentage per annum. Yes, they have taken it that way. They have assumed that for 7 years, this varying dividend I am getting, at the end of it, I'll be getting a stable growth of 15%. I am getting 16% at 172. That means 15. Obviously, I'm getting more than that. So I will tell, okay, it is worth to buy. They have not done the calculations again. They have just given a comment here. Yes, I'm getting more return than I want, more growth. Yes, that means purchase the share. Is this clear, everyone? So with this, we have finished question number 8 also. Thank you so much, my. Yes, everyone. So hello, hi, namaskaram, and good morning, students. Good morning, everyone. I hope you guys are doing really, really well. So welcome back to yet another session on CA Final AFM. We are here to take our discussion forward. But before going forward, let us quickly try revising what all we've discussed already. A substantial portion of Unit 1 is already over. Yes, we were into question solving. We've solved good amount of questions. Some more questions are needed to solve those questions. Some more basic concepts making it strong is needed. We'll do that. But before that, we are going to start every session with a quick revision of whatever we've discussed. So quickly, let us try revising. Yes, everyone. So from the scratch, from day one. Okay. Yes. First, value of an asset. What is value? Value means how much benefit I am getting. That is how much I should be paying. Versus price is how much I'm actually paying. Yes or no, everyone? So value of an asset, it is the present value of future cash flows discounted at required rate. Yes or no, everyone? I will only buy those assets where value is greater than or equal to the price. Yes, so if value is greater than or equal to price, I will buy. Otherwise, I will not be buying. Purchase. Perfect, everyone. Then we came into chapter 1, which is going to be equity valuation. We've understood cross multiplication, time value of money. Yes, simple golden principle. If you are taking decision, if you want to compare, cash flows should be in same period. You want to take your cash flows forward, go to future value compounding. You want to bring your cash flows back, discounting. Yes or no, everyone? Perfect. Yes. Now using that, we have done drawing a line. Going front means include interest into 1 plus r. Coming back means eliminate interest divided by 1 plus r. That is more than sufficient. Then we have understood in case of perpetuity. Yes or no, everyone? In case of perpetuity, if there is no growth means cash flow divided by discounting rate. If there is constant growth means cash flow divided by discounting rate minus growth. In case of variable growth means, yes, individual cash flows will estimate. At the end of it, we'll estimate the terminal value, which is nothing but price at the end of the uneven growth. We'll discount those things. Is this clear, everyone? Perfect. So valuation of equity shares. First one is a dividend based valuation. Yes, if share is held for limited period, what all I'll be getting? I'll be getting dividend also, selling price also. I will discount those cash flows using cost of equity. I will arrive at the value of the asset. Perfect. Share is held till perpetuity, no growth, then it is a dividend divided by KE. Constant growth, yes, it is a D1 divided by KE minus G, wherein D1 is nothing but D naught into 1 plus G. Yes or no, everyone? Perfect. Yes, G we will be discussing how you do we arrive at growth. Yes, next in case of variable growth, three-step framework. Step 1, yes, estimate dividend for uneven growth. Step 2, calculate price at the end of uneven growth. It is nothing but next dividend divided by KE minus G. Step 3, discount all the cash flows to present value. You will arrive at value of the asset. Is this clear, everyone? Using that, we had solved questions. Question 7 and 8 were beautiful questions. I hope you went back, tried, revised it one more time. Okay, perfect, everyone. Yes. Now, additional notes. Okay, we'll come to it later. All these things, we'll come to it later. Is this clear, everyone? Perfect. Yes, everyone. Now it is time to take our discussion forward. Pay attention, pay attention, pay attention. Yes, now we'll have to try and understand how to calculate growth, which is called as sustainable growth rate. I guess you guys have already done this in your CA Inter or CMA Inter also. Yes, I guess there's a formula. Yes, G is equal to B into R, something of that sort if I'm not wrong. Yes or no, where B is the retention ratio and R is the return on equity, something of that sort on formula is there. Okay, yes, I to be very frank, I don't know, but still doesn't need. Okay. Now, before we come here, we need to know how income statement is prepared from AFM purpose, how balance sheet is there, and some basic ratios. So ratios, too difficult it was. Some basic, whatever GGB is needed, we'll learn it. Is this clear? Perfect. It is going to be very simple. So first what we'll do is, we'll try understanding a basic income statement and balance sheet. Okay. Yes, based on that, we'll take our discussion forward. Yes, everyone. So pay attention. We will now come to, yes, chapter 0, which is going to be basics of AFM. There we will try understanding, yes, income statement and balance sheet. Yes, from basics we've been doing, but still one more time let us try doing it quick. I'm not going to take much of your time. Quickly we'll try doing it, because throughout the entire subject we'll keep using it. Yes, every now and then. Okay, fine, boss. Pro forma income statement and balance sheet from AFM perspective. Okay, boss. What all is there? Tell me from where our income statement will start. Income statement will start from sales. Okay. From sales, first what I will be reducing? First I will reduce the product cost. It is called as cost of goods sold. Yes or no, everyone? From sales I will reduce my cost of goods sold. What will I arrive at? I will arrive at my gross profit. Yes or no, everyone? Yes, 10th 11th we have learnt. Yes, trading, sales, this entire thing, COGS. Yes or no? I will arrive at gross profit or gross loss. Yes or no, everyone? Yes, here we will write it as gross margin. Sometimes it will be given as gross profit. Sometimes it will be given as gross income. Same only. Yes or no, everyone? Now, only my direct cost have reduced. Now, what I'll have to do? In order to operate my business, I will be incurring some indirect cost as well. Some other operating cost. Say, for example, administration cost, selling and distribution cost. Yes or no, everyone? In costing, you would have learned. They are not a direct cost, not directly incurred to produce, but they're needed to operate the business. Yes or no, everyone? So from that I will reduce my other operating expenses. In that, generally I'll be having administration, selling and distribution expenses. Yes, once I reduce that, I will arrive at my EBIT. What is EBIT? Earnings before interest and tax. Yes or no, everyone? This only is called my operating income. That is, by operating the business, to operate the business, how much cost I'm incurring. Tell me, students, tell me, to operate the business, to run the business, which all cost I'm incurring. I want my product cost, that is my direct cost, as well as other operating expenses. Is this clear, everyone? Perfect. So I arrived at my EBIT. It is also called as operating income, operating margin, operating profit. Yes or no, everyone? Perfect. This is EBIT. This is the earnings before interest and tax. So in this, what all I'll have to pay? Interest also I'll have to pay, tax also I'll have to pay. Yes, first I will reduce the interest minus interest. We will arrive at EBT, earnings before tax. It is also called as the taxable income. On this amount I am paying tax. Yes or no, everyone? Perfect, great. So we arrived at EBT. Yes, on this now we'll have to be paying the tax. Yes or no, everyone? Perfect. Once we've paid the tax, we will accordingly arrive at PAT. You can call it as EAT, earnings after tax, PAT, profit after tax. You can call it as a net income, net profit, all those things, net margin, all those things are going to be one and the same only. Is this clear, everyone? Perfect. Now this is the profit that company has earned. Yes, after paying all the things, what all is being paid? Product cost, COGS is paid, 1%. Other operating expenses is paid, 2. Yes, interest is paid. Nirmala Sitharaman was standing there. Yes or no? Them also we have paid. Now this money that is available, yes, is available for shareholders. Which all shareholders we are having? 2 shareholders we are having. Equity shareholders, preference shareholders. Yes or no, everyone? Perfect. So from that, first whom we will pay off? Preference shareholder, because for them we'll have to be giving a fixed return. Yes or no, everyone? So my profit after tax, I will first pay off my preference dividend. Is this clear, everyone? Yes. Whatever is left after that, it is the profit available to equity shareholders. You can call it as earning available to equity shareholder, profit available to equity shareholders, yes, net amount available to equity shareholders, whatever you want, you can call it as. Yes, I will be writing it as Patesh, profit available to equity shareholders. My exam is over, I am lazy. Your exam is not over, don't write Patesh and come. Institute will also tell, wait for 4 months and come. Okay, yes, everyone. Is this clear, everyone? This is the total amount available to equity shareholders. Total, this is the total amount we've earned for equity shareholders. Yes, in that, some amount we'll be giving it to them in the form of a dividend. Yes or no, everyone? So some amount we'll pay it off as dividend. Whatever is not paid as dividend, we will be retaining it and reinvesting in the business. That will get added in our reserves and surplus. Yes or no, everyone? Perfect. So I hope a reasonable idea you guys have got. Yes or no, yes or no, yes or no. Perfect. Now understand. One more small point I would like to bring it here. Spacing, we don't have it here, is it? Scribbling, okay, fine, no issues. Okay, now let me just add a page here. Yes, now a very simple point, pay attention students. Here for our face-to-face class, 3 students are there. Koti is there, Kamesh is there, Suhail is there. Say for example, I purchase a chocolate and I tell that chocolate is for 3 people. Yes or no, everyone? Perfect. Yes, imagine Koti wakes up early in the morning, 5 o'clock. He told, okay, I will take my share first. Is this clear, everyone? He took off his share. That means now tell me, now the chocolate is available for how many people only? 2 people only. Then assume Suhail will wake up next and then he will tell, okay boss, I will take my share of chocolate. Now this amount is available for whom? For Kamesh, yes or no? He wakes up on time, he will get, or else Koti will again eat it. Yes or no, everyone? Perfect. So now try understanding what is the total money that the company is getting, total amount that the company is getting. It is the sales. Yes or no, everyone? This sales that I am getting, yes, it is totally for how many people? Totally for how many people? Try understanding. Yes, I will first put, yes, my operating cost, that is COGS as well as other operating income. That is one category of people who are waiting. Money will come for me, money will come for me. Yes or no, everyone? Perfect. Second, yes, there are people who have given us money in the form of debt. For them, I'll have to be paying them the interest. Second, people who is waiting for me. So first person who is waiting for me with respect to the money, yes, it is going to be, yes, the operating cost. Yes or no? All operating cost. Yes, it will include COGS also. It will include other operating cost also. Yes, the second person who is waiting for my money, telling that, okay, this person will earn money. Yes, I will also be taking some money from that. Yes, it is going to be the debt holders. Yes or no, everyone? Perfect. Yes, so yes, we paid for them. They've given us goods or services. Yes, we paid because they've given us fund. Yes, that time only one person is standing and saying, you're running business. You're making money. Give me some tax. I told, but they have given me goods or services. They have given me money. You have given us roads in which we can't go. So why should we pay? You want to be in India, you pay, or else you go anywhere. I don't care. Okay, we paid. So the third person who is standing there, where is my money? Who is that? Government is also standing. Yes or no, everyone? Perfect. Settings after they've changed. Okay, government is also standing. Perfect. Is this clear, everyone? Okay. So once I've paid the government also, yes, that is my profit after tax. Yes or no, everyone? Perfect. Yes, this profit is now available for 2 people. Who are those 2 people? Yes, one is equity shareholders, one is preference shareholders. First, whom we will pay it off? Preference shareholders. Yes or no, everyone? Yes. Finally, whom will be paying it off? Equity shareholders. Is this clear, everyone? Okay, perfect. Now try understanding. Yes, if I ask you, yes, what is the total amount available for all these 5 people? For all these 5 people, what is the total amount available? Total amount available for all these 5 people? It is the sales. Yes or no, everyone? Perfect. Yes, in that first, whom will pay off? My operating cost. Yes or no? COGS as well as other operating expenses. That I have paid off. This also I paid. This also I paid off. The net amount that is available here, it is available for how many people? How many people? For 4 people. Yes or no, everyone? So EBIT, it is the profit which is available for 4 people. For whom all? For debt holders, for government, for preference holders, and equity holders. Is this clear, everyone? That is the interpretation. This is the money available for 4 people. Is this clear, everyone? From that, for debt holders, I paid interest. Now, the net amount available. This is the money available for how many people? 3 people. Yes or no? Who all it is? Government, preference shareholders, equity shareholders. Is this clear, everyone? Yes, I paid tax also. Now, this is the profit which is available for how many people? 2 people. Who all? Equity shareholders, preference shareholders. I paid preference share also. That means this is the amount which is available for whom? Only for equity shareholders. Is this clear, everyone? Try remembering this right now, because at different places profit means different. Say for example, at one place I'll have to be seeing to pay interest how much tax is available, to pay interest how much profit is available. So tell me, to pay interest, that means before paying interest how much profit I've earned. Yes, it is going to be my EBIT. Yes or no, everyone? Yes, because from this money only I'm paying interest, tax, preference, equity. Say for example, I want to know. Yes, to pay preference dividend, how much money is available? Tell me, to pay preference dividend. In this order only I'll be making my payment. Yes, to pay preference dividend, which amount is available? Profit after tax. From that I'm paying two people. Is this clear, everyone? Yes. If I want to know what is the total amount available to equity shareholders, what is it? It is going to be my Patesh. Yes or no, everyone? Profit available to equity shareholders. Is this clear, everyone? And this is a format I will be putting throughout. 99.99% questions I will not be having preference dividend, but still I will write that and I will be putting it 0. Is this clear, everyone? Perfect. Now tell me one very simple extra point that I'll be asking it here. I want to calculate EPS. EPS, it is the earning per share. It is only for equity shareholders. For preference I'm giving fixed. Is this clear? EPS is calculated for whom? For equity shareholders. I am one equity shareholder. For one share, how much profit I got? Tell me, if I'll have to calculate my EPS, which profit I should be taking? I should be taking profit after tax, or I should be taking Patesh? I should be taking Patesh. Why? Profit after tax, it is a profit for two people. In that, if I pay preference dividend, the net amount only is available for equity shareholders. Is this clear, everyone? Yes or no? I've just built a base here. Yes, at different places we would require this. Is this clear, everyone? Yes. So what is the total profit available? Yes, for all the 5 people. For all 5 people, yes, the profit available is called sales. Yes or no, everyone? In that, I paid my operating cost. That means for 4 people from here, yes, the profit which is available is called my EBIT. Yes, I paid debt holders also. Now for 3 people, the profit available is called EBT. Yes, I've paid, yes, tax also. Now the profit is available for 2 people. It is called PAT. Now I paid preference also. Now the profit is available only for one person. It is called Patish. Yes or no, everyone? Now using this balance sheet is there. Balance sheet is going to be very simple. Yes or no, everyone? Yes. Left hand side. Yes. Liabilities. Yes. There first we will write equity share capital, reserves and surplus. Is this clear? This is amount for equity shareholder. Then if you have preference share capital, we'll be writing that. But throughout there is absolutely not even a single question where that is there. So chill, no issues, absolutely. Yes. Then comes debt, long-term debt. Is this clear, everyone? Yes. Bonds, debentures, yes, long-term borrowings, etc. Then comes current liabilities. Right hand side, I have fixed asset or non-current assets, and then I have current assets. Is this clear? Yes. In the entire question at one place, here you might get fictitious asset, preliminary expenses, profit and loss, debit balance, etc., etc. Only in one question, that particular point in time we'll be seeing it off. Is this clear, everyone? I hope this level of explanation is sufficient. Yes or no? Chumma, there is no need to spend 2-3 hours on this. Perfect. So what I will do is, we want some basic ratios. For that, instead of Chumma explaining the field, I will create an example. We have an example in the workbook. Using that data, we will first create the income statement, then balance sheet. Then using these numbers, what we'll try doing is, we will try calculating and analyzing the ratios. Is this clear, everyone? Yes, perfect. So giving you guys a minute to let this sink in. Now, with this much information on the back of our mind, let us take our discussion forward. We'll have to be calculating some basic ratios. For that purpose, what we'll try doing is, yes, pro forma balance sheet also I've written here. Look at this, students. Equity share capital, reserves and surplus. If there is a need, preference share capital can also come, but it will not be there for us. Yes, debt means long-term debt. Current liabilities, I've told fixed assets, current assets. Is this clear, everyone? Perfect. Now we have some basic equations and basic ratios. Let us try understanding that quickly using a simple example. Pay attention, pay attention, pay attention. Okay, we have a simple example. Now look at this. XYZ Limited provides the following information for the year ended 31st March 2027. Okay, prepare income statement from the following data. Let us try seeing, yes, what all data is given. First they have told sales is going to be 10 lakh. Okay. So total how much money I got? 10 lakh I got. From this how many people I'll have to be paying? 5 people I'll have to be paying. Perfect everyone. In that cost of goods sold, it is my direct cost, my product cost is going to be 6 lakh. Okay, great boss. Other operating expenses, it is going to be 1 lakh. Perfect. Long term debt. Yes, some debt holders have taken 5 lakh. So what they'll be expecting at the end of the year? Interest they'll have to be paying. Great boss. Interest rate is 10%. So on 5 lakh, 10% it is going to be 50,000. Okay. Yes, once I've paid that, who is waiting there? Nirmalata is waiting. Yes or no, everyone? 30% tax I'll have to pay. Okay. Assume preference share capital is 1 lakh. On that I'll have to be paying a 10% preference dividend. Okay. And equity share capital is going to be 5 lakh. And equity dividend that we have distributed is a 20%. Is this clear, everyone? Okay, perfect. So let us try preparing our income statement quickly. Yes. Tell me the numbers, tell me the numbers, tell me the numbers. First is going to be sales. Sales is going to be 10 lakhs. Yes, from this I will reduce my cost of goods sold. Sometimes question will give you as variable cost, fixed cost. Both of them are going to be same, only how much it is? 6 lakh. Yes, that gives me my gross margin, which is going to be 4 lakh. Yes or no? From this I will reduce other operating expenses. Yes, this will include depreciation. Sometimes depreciation will be given separately. I will write it down as simple as that. Yes or no, everyone? 1 lakh. Yes, this gives me my EBIT. Other name, other name, other name. This is my operating income. By operating my business, how much money I got? Okay. Operating income, operating profit. It is going to be 3 lakh. Yes or no, everyone? Yes, from this, what I'll have to be paying? EBIT. Interest I'll have to be paying first. It is 5 lakh into 10%. It is going to be 50,000. Perfect, everyone. Yeah, we'll have to resize it. Okay, fine. Or else, okay, fine. Let it be. EBIT is over. Yes, we have reduced interest also. Now, what we will be arriving at? We will arrive at our earnings before tax, before paying tax. It is going to be how much? 2.5 lakh. From this, who is waiting? Nirmaladai. 30% of 2.5 lakh. It is 75,000. Yes, we will arrive at our profit after tax. Yes or no, everyone? Yes, perfect. 2.5 lakh. In that 75,000 I've paid it off. That means how much is still left with me? 1 lakh 75,000 is left with me. This is the profit for how many people? 2 people. Who all? Equity, preference. First, whom I'll be paying? Preference minus preference dividend. Yes, how much preference share capital I'm having? 1 lakh into 10%. 10,000 I paid. Yes or no, everyone? Yes, this will give me my Patesh. It is going to be 1,65,000 rupees. Is this clear, everyone? Perfect. This is the net amount available for my equity shareholders. Yes or no, everyone? Perfect. So, whether I will give a full amount to them? No, some amount I'll pay it off as dividend. Some amount I'll be reinvesting in the business. Yes or no, everyone? Perfect. Yes. So, from this minus dividend distributed. Yes. Tell me, students, how much is my equity share capital? 5 lakh. On that, how much dividend I am paying? 20% I am paying. Yes or no, everyone? So 5 lakh into 20%. It is going to be how much? 1 lakh. Sorry, 5 lakh into 20%. 1 lakh I paid off as dividend, equity dividend. That means how much is my retained earnings? It is going to be 65,000. Yes or no, everyone? Technically this retained earnings will get added in my reserves and surplus. Yes or no, amount? Because that's a net amount which is still available. Is this clear, everyone? Perfect. Absolutely no doubt in this. Simple jujube halwa from basics we've been doing. Okay, perfect. Now assume, yes, continuing the above example, assume the balance sheet of XYZ Limited after incorporating the retained earnings. That is, I've already added this retained earnings. After adding this, yes, my balance sheet stands as follows. What all is there? Equity share capital. 50,000 shares is there of 10 each. 5 lakh is a value. Okay. Reserves and surplus 1.5 lakh. Okay. Preference share capital 1 lakh. Okay. Long term debt 5 lakh. Okay. Current liabilities 50,000. Perfect. Here fixed asset 9.5 lakh. Current asset 3 lakh. Perfect. So using this, yes, calculate the following. First is going to be calculation of some basic equations. Basic equations. Jujube. +1 +2 only, but still, chumma, let that also we'll tell. Yes, everyone. First, total asset. Total asset. Tell me, students, the most difficult thing in the world. Total asset. In this above example, how much is my total asset? Tell me, everyone. Fixed asset is how much? 9.5. Current asset is how much? 3. That means my total asset is going to be 12.5. Yes or no, everyone? Yes, I will tell my total asset is equal to fixed asset plus current asset. In the example, it is 9.5 plus 3, it is 12.5 lakh. Yes or no, everyone? You guys can quickly properly scribble it down. Yes, for students who are watching it recorded, you guys write it down properly. Okay, or else in the notes I would have already written properly, like whatever is required. Okay, I will show it to you guys. That time you guys can pause and take a screenshot, and or pause and keep writing. Is this clear, everyone? Okay, fine. Now let us come back again. Total liability. Total liability. Liability means it is going to be outsiders funds. Outsiders fund. Yes or no, everyone? Perfect. What is going to be my total liability? Total liability. Total liability. Okay, in this case we are having long term debt as well as current liabilities. Yes or no, everyone? Perfect. Yes. Now preference share capital also will be treating it as a part of outsiders funds only. When I'm telling equity, yes, it will be only equity share capital as well as reserves and surplus. Is this clear, everyone? Perfect. So in my total liability means it is going to be my, yes, outsiders funds. Now here preference share capital, there it should come, or here it should come. Yes, for us, yes, because there is no question where this information is needed, but technically it will come as a part of my liability only. Is this clear, everyone? So here in my total liability, technically it is going to be, yes, technically 99.999 percentage, it will be this much only, debt plus current liability. But if preference, yes, is there, that also I'll be adding. Is this clear, everyone? It will be treated as outsiders funds only. Yes. Now comes equity. Now there are different names for equity. Okay, like Koti Reddy is there. Different names are there for Koti Reddy. Koti Reddy, humble person, money minded person, mean person, 10-acre person, dowry person, sorry, gift person, a power person. Same, if you tell everything is Koti Reddy only, the same way. Yes, for equity. Yes, what all names are there? Yes, equity. It is also called as the book value. The book value. Is this clear? Yes, from the books. Yes, how much is the owner's fund? That is called as, yes, book value. It is also called as the net worth of the business. Net, how much is assets available? Yes or no? It is called as net worth, net assets, or shareholders funds. Everything means one and the same. Yes or no, everyone? Yes, anywhere we see any of these wordings. Yes, equity, shareholders funds. Fine. This anyways will be doing. But still, whenever we hear these things, net assets, net asset means total asset minus total liability. That means what is left is only equity holders funds. Book value, in the book, what is the net value which is available? Okay, or net worth. All these are going to be one and the same. Tell me, students, how do I calculate the value of equity? Equity. Tell me, it is going to be equity share capital plus reserves and surplus. Yes or no, everyone? So I will write, yes, equity is nothing but equity share capital plus reserves and surplus. Is this clear, everyone? Okay, so tell me, equity share capital in the example is how much? 5 and 1.5. It is going to be 6.5 lakhs. Is this clear, everyone? Perfect. Okay, now this, if this is confusing for you guys, what you can do is you can write it as a 3 different headings also. You can write it as, yes, outside external liabilities. There you can write long term debt plus current debt. Then you can write separately preference share capital. Then you can write equity. That way also you can write. But technically your preference is also coming as a part of total liabilities only. Okay, from finance perspective, we are treating it as, yes, liability only, because I'm having an obligation to pay every year, irrespective of the profits that I'm earning. Is this clear, everyone? Okay, perfect. Yes, next comes working capital. Working capital. What happened? Then comes my working capital, working capital, working capital. Tell me students, working capital. What is working capital? Current asset minus current liability. Yes or no, everyone? To carry out the day-to-day operations, net how much amount I have put in the business. Yes, it is nothing but current asset minus current liability. Not going in detail. From 11th, we have been playing around with this. Yes, working capital is nothing but current assets minus current liability. Tell me, current asset is 3 lakh minus 50,000. It is going to be 2.5 lakh. Is this clear, everyone? Perfect. Yes. Now comes capital employed. Capital employed. That is how much total money we have put in the business. Let me do one thing here. External liability. I will write it this way. Wait a minute. External liability. One column. Preference share capital. Next column. Okay. This way we'll keep it, just to reduce your confusion. Ultimately, that also comes as part of debt, but still, for you, sir, preference, sir, we learned account, sir. Like, keep it as a separate item. Okay. Is this clear, everyone? Yes. This will come as a part of this only. Is this clear, everyone? Okay, fine. Yes. Now, total capital employed. Now, tell me, we started a business. To run business, we want fund. Yes or no, everyone? From how many people we can be collecting fund? 3 people. Yes or no, everyone? 2. But okay, 3. Yes. First is going to be equity. Yes, which is going to be equity. We've already calculated share capital plus reserves and surplus. Next is going to be debt. Yes or no, everyone? Yes. Next comes my preference share capital. Yes. When I'm telling debt, it is only long-term debt. Is this clear, everyone? So when I'm talking about capital employed, for us, preference will not be coming anywhere. Don't want you guys to unnecessarily confuse it. That's a problem. We will keep it here only. Preference share capital. Okay, fine. We'll keep it this way only. So capital employed, yes, I will tell. Capital employed to run my business, I will be taking money from technically 2 places. First is from equity holders, where there is no obligation. Here we are only seeing from the perspective of obligation. Is there an obligation to pay fixed return? Yes. No means equity. If there is, means yes. How I am telling? Yes. Am I paying it as a dividend? Means preference. I am paying it as interest, means it is going to be debt. As simple as that. Yes or no? Equity plus debt. Yes. In my equity, what all will be there? Equity, what all will be there? Equity share capital plus reserves and surplus. We've already written above. Yes. In my debt, what all will be there? Yes. I will have my debt also. Extra. Yes. Long-term debt also. Preference share capital also. Is this clear, everyone? Perfect. Okay. Now comes some basic ratios and some basic formulas. Okay. Yes. First one, gross profit ratio. My gross profit is how much percentage of sales? Yes. Tell me what is going to be the formula. It is gross profit divided by sales into 100. Yes. I hope for all these things, if I just write down the formula, put the numbers, it is going to be sufficient. Yes or no, everyone? Yes. As and when there is a need for us, don't tell me, sir, GPA ratio also you explain, no, sir. From when you have been playing with this. Is this clear, everyone? Okay. So let me try putting the numbers. Tell me, students, in our example, how much is the gross profit or gross margin? I guess it is going to be 4 lakh. Yes or no, everyone? Perfect. 4 lakh, right? 4 lakh divided by sale is of 10 lakh into 100. It is 40 percentage. Is this clear, everyone? Okay, perfect. Next comes my operating profit margin, operating profit ratio. Tell me, operating profit. By operating your business, how much profit we earned in this example, in this income statement? By operating my business, I earned 3 lakh rupees. Yes or no, everyone? Yes. This I want it as a percentage of sales. So it is going to be how much? 30 percentage. Perfect, everyone. So I can write the formula. Yes, operating profit. That means it is operating profit divided by sale. Operating profit is nothing but EBIT. Yes, so I will write it as EBIT divided by sales into 100. Yes, for basic ratios, I am not giving much interpretation. Yes, it would really be a disservice to the final level that I am telling these things again. Okay, but don't worry, once a reasonable ratio comes, I will tell you exactly what a ratio means. What does A divided by B? What is the feel? What is the literal interpretation of A by B? Okay, that I will tell you when the time comes. Don't worry. But for this, Chuma, there is no need to tell anything much. Then comes my net profit ratio. Net profit. Yes, tell me what is going to be the formula. Net profit divided by sales into 100. Yes, in the example, what is going to be the net profit, students? Tell me. Profit after tax, net profit is going to be how much?
1,75,000, yes or no everyone? So I'll tell, okay boss, 1,75,000 on 10 lakh. Yes, it is 17.5 percentage. Yes or no everyone? Yes, all these were, we were calculating income as a percentage of sale. Yes or no? Gross income is how much, operating income is how much, net income is how much. Now we'll be seeing cost also as a percentage of sales. Yes, COGS ratio, my COGS is how much percentage of sales. So the formula is going to be COGS divided by sales into 100. Yes or no everyone? Perfect. Tell me everyone, in the example how much is my COGS? 6 lakh is a COGS. It is how much percentage of sale? 60 percentage of sales. Yes or no everyone? Perfect. So it is going to be 6 lakh by 10 lakh, 60 percentage. This is one way to write. There is one more way to write. Tell me, from my sales, if I reduce the COGS, what will be there? Gross margin will be there, or gross profit will be there. Gross profit is how much percent? Gross profit is how much percent? 40%. So in total, gross profit is 40. That means COGS should be 60%. That way also I can do. Right now here, not required. Is this clear everyone? Okay, perfect. Then comes my operating cost ratio. Operating cost ratio. Tell me, yes, costs required to operate the business, to run my business, to operate my business. How many cost I want? Two cost I want. What all are those two costs? Yes, first I have the direct cost, which is cost of goods sold. Then I have also have other operating cost. Is this clear everyone? Perfect. Yes, in the example, tell me total how much money is needed to run the business. Yes, 6 lakh direct cost and 1 lakh indirect cost. That means total 7 lakh is needed. Yes or no? So this is how much percentage of sale? 70 percentage of sale. Is this clear everyone? Perfect. So I can write it this way. Yes, total I want 6 lakh plus 1 lakh. Yes, 7 lakh. So it is going to be 70%. Yes. So I can write the formula as, pay attention, 6 lakh. Yes, it is COGS plus other operating expenses. That gives me the total operating cost. I want it as a percentage of sale divided by sales into 100. Is this clear everyone? Perfect. Now tell me, yes, if I reduce all the operating expenses, that is cost of goods sold as well as my other operating expenses, what will be left for me? Operating income, EBIT will be left for me. Yes, there is one more way for me to calculate it as well. Tell me students, my operating profit is how much percent? 30%. Yes, if I earn 1 rupee sale, my operating profit is 0.3. That means operating cost should be how much? 0.7. Or 1 rupee sale I earned, my operating cost is 0.7. Yes, 70%. That means my operating profit should be how much? 30%. That way also I can be doing. Is this clear everyone? I don't want to overburden you. I can keep writing everything in the world, but chumma you will feel yes overwhelmed looking at too many formulas, so I'm not keeping it here. Yes, but even if you get one, yes, you can draw the equation, carry out the other. Is this clear everyone? Perfect. Then comes debt equity ratio or debt to equity ratio. Simple. Whenever I'm having equations this way, it's the simplest thing in the world. Debt to equity ratio. Debt to equity. As simple as that. Yes or no everyone? So it is going to be debt to equity. Is this clear everyone? Perfect. Okay. Yes. Next comes debt ratio and equity ratio. I feel I've complicated things by adding preference share capital here. Huh? Where? Not here in the balance sheet. Because the thing is, nowhere in the balance sheet you're having preference share capital. So just here, one or two places it will come. Huh? Hmm. See, in simple, preference share, we will treat it as debt only, as simple as that. Is this clear everyone? Okay, perfect. Now let us try looking at this, then I will try explaining from the concept book only, not from this one. Yes. debt ratio and equity ratio. Yes. For a business, I want to be running my business. Total capital, I'll be raising mainly from two places. Which all? Equity, debt. Yes or no, everyone? Say for example, I have raised total 100 rupees. In that 60 I have raised from equity, 40 I have raised from debt. Yes. Now I want to know the debt ratio. My debt is how much percentage of total capital? Yes or no, everyone? Tell me. Assume 60 is equity, 40 is debt. Yes, debt is how much percentage of my total capital? 40 percentage. Total capital is 100. In that my debt is 40. So it is going to be 40 percentage. Yes or no, everyone? So how do I write it? I can write it as a debt divided by total capital, or I can write it as debt divided by total capital is nothing but equity plus debt. Yes or no, everyone? Perfect. Now I want to know my equity ratio. My equity is how much percentage of total capital? Yes, it is nothing but, tell me how much equity I have raised? 60 out of total capital of 100. So it is 60 by 100. Yes or no, everyone? So it is equity divided by total capital. Total capital is equity plus debt. So I can write it as equity divided by equity plus debt. Yes or no, everyone? So look at this. I have written it down here. Total capital is debt plus equity. Debt ratio is debt divided by debt plus equity. Equity ratio is equity divided by debt plus equity. Is this clear, everyone? Perfect. This is also over. Now let us come back to the workbook again. Yes, we have EPS, DPS, BVPS, all per share, per share, per share. Okay, first comes my earnings per share. When I'm talking about the earnings, yes, for whom the net earnings of the company are available to? They are available to equity shareholders. So I want to know company total, how much profit it has earned to equity shareholders. Let us come back, let us come back, let us come back here. Yes, my profit after tax, it is a profit, but it is for how many people? Two people. Equity and preference. Yes or no, everyone? I want to know the profit for equity. So from this, if I reduce my preference dividend, I will arrive at my Patesh. That is the profit available to equity shareholders. But boss, this is a total amount available, na? I want to know per share. Tell me total, how many number of shares are there? 50,000 shares are there. Yes or no? So I can tell cross multiplication. For 50,000 shares, I earned 1.65 lakh. That means for one share, I am earning how much? Cross multiplication. 1,65,000 divided by 50,000. Yes or no, everyone? 1,65,000 divided by 50,000. Yes, 1,65,000 is my Patesh. Divided by 50,000 is number of shares. Yes or no, everyone? Perfect. So I can write it down as EPS. It is Patesh divided by number of shares. Is this clear, everyone? Yes, Patesh in our example is 1,65,000 divided by 50,000 shares. How much it is? 3 point. Perfect. Is this clear, everyone? Okay. Then comes my dividend per share. Tell me, students. In the example, total how much dividend we have distributed? 1 lakh. That is total. Total how many equity shareholders are there? 50,000 equity shareholders are there. That means for one equity shareholder, how much I have given? 2 rupees. Yes or no, everyone? It is a total dividend divided by number of equity shares. So let me write it down. It is the dividend distributed. Dividend divided by number of shares. Yes. Throughout for finance, forget accounts. For finance, the only way for me to bifurcate, okay, is am I having fixed obligation? Am I not having fixed obligation? If I am having fixed obligation, in essence, whatever it is having risk for me. Yes or no? You call it debt, you call it preference share. We are having risk from that. Own money is equity, wherein I have no fixed obligation to pay. If I have, I will pay, or else I will not pay. Is this clear, everyone? Then, sir, why here you have written it separately? Understand? Then why, sir, here also you could have shown your preference dividend here only, na? Because when I'm paying tax to the government, na? Yes, on my interest I will be reducing a I will be getting a deduction. On my preference dividend I will not be getting a deduction. That is why I have written it this way. Is this clear, everyone? So income statement, why I have written it here and not here? Yes, that is from the taxation perspective, because tax benefit I will be getting only on the external interest. Is this clear? But in essence, for finance, yes, my bifurcation is very simple. Owner means equity, where if I earn, I will give. There is no fixed financial obligation. Yes, others, you call it preference share or debt. Both are outsiders only. I will put it under a common heading debt. Is this clear, everyone? Perfect. That is point number one. Point number two, this level of detailing is not needed also. Okay, one or two places you will get this. Trust me, one or two places you will get this preference dividend. Apart from that, yes, in balance sheet, nowhere you will be getting. In ratios, nowhere you will be getting preference. Is this clear, everyone? Okay, perfect. Then comes book value per share. Book value per share is very simple, provided you know what is book value. What is book value? Book value, I have told you. Yes, these names you should be remembering. Yes or no, everyone? Yes, you call it equity. You call it shareholders funds. You call it net assets. You call it book value. Yes or no? You call it net worth. All are one and the same only. Yes, it is what? It is equity. Yes or no, everyone? Perfect. Yes, that means if I'll have to tell, yes, my book value per share, it is nothing but book value divided by number of shares. Yes or no, everyone? Where? What is book value? Book value is nothing but equity. Yes or no, everyone? Book value means equity, which is nothing but equity share capital plus reserves and surplus. Is this clear, everyone? Perfect. Okay. Now the last thing is going to be dividend yield. Dividend yield. Okay. Now dividend yield, it is the return from an investor's perspective. Okay. Yes. How much return the investor is getting? Say for example, I am an investor. I purchased shares of Reliance Limited, which is trading at a market price of, say for example, 1000 per share. Okay, and I earned a dividend of, say for example, 100. So from my lens, look at this, look at this. I am an investor. I purchased a Reliance share. Yes, how much money I paid? 1000 rupees. Yes or no? Yes. Face value may be 10. That is in the books now. For from my perspective, from my lens, I am seeing from investor's lens, how much I paid? I paid 1000. By paying 1000, how much dividend I got? Say for example, I got a dividend, DPS, dividend per share of, say for example, 50. That means for me, the investor, yes, my dividend income is how much percentage of my investment? Tell me how much I've invested? 1000. In that, how much income I got? Dividend 50. That means how much percentage it is? 50 divided by 1000. Yes or no? Into 100. Is this clear, everyone? Yes, 5 percentage. Is this clear? So I can write it as a DPS, dividend per share, divided by MPS. Yes or no? If you want, you can do it into 100. Is clear? As simple as that. Dividend yield is going to be DPS divided by MPS. Is this clear, everyone? Perfect. Perfect, 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 everyone. Okay. Yes, now comes one more thing, which is return on equity and the return on capital employed. Return on equity and return on capital employed. Now, before we get into this, yes, we'll have to try and understand, yes, the return on investment concept. Return on investment is very simple. Oh, yes, what is the formula for return on investment? Yes, it is return divided by investment. There is no place here. Okay, then I'll have to. Okay, here there is a bifurcation. Okay, fine. Okay, very simple. Do not complicate things. Simple, simple, simple. Yes, I invested 100 rupees investment. From this, I earned a return of 15 rupees. How much percent return I got on my investment? Return, when will I get return? Only if I invest. Yes or no, everyone? Perfect. So I have invested 100 rupees. I have earned a return of 15 rupees. Yes, my return is how much percent of investment? 15% of investment. Yes or no, everyone? So a simple formula, return on investment, it is return divided by investment. If you want, you can do it into 100. Is this clear, everyone? Perfect. Now slowly, return on equity and return on capital employed. First, let me come to return on equity. That means in simple, it is return divided by equity. Yes or no, everyone? Perfect. Now let me take it one level further. For equity shareholders, for equity shareholders, recorded students, for equity shareholders, how much profit we have earned? What is it called? Equity shareholders, the profit that we have earned for equity shareholders, what is it called? It is called, my Patesh. Yes or no, everyone? Profit after tax is for two people, equity and preference. From that, if I pay preference dividend, net amount only is for equity shareholders. So this is called as Patesh divided by equity. And tell me, equity holders total, how much fund they have contributed, invested? It is the equity share capital plus reserves and surplus. Yes or no? So my return on equity formula is going to be Patesh divided by equity. Is this clear, everyone? Perfect. Where equity is equity share capital plus reserves and surplus. Okay, now next comes return on capital employed. Yes, it is here we are calculating the return. On which I am calculating the return? On the capital that I have put in the business. Tell me, to run the business, total money from whom all we will be taking, equity shareholders as well as debt holders. That includes preference. Yes or no, everyone? Now for them, so here capital employed, I will write it as capital employed, which is basically equity plus debt. Yes, to pay these people, equity holders as well as debt holders, how much money I have earned. What is that profit called? That profit is called EBIT. Pay attention, pay attention, pay attention. Yes, yes, yes. Profit after tax. That is a profit for two people. Yes or no, everyone? Yes. Who all it is? It is going to be preference and equity. Patesh, it is a profit for one person. Yes or no? Yes. No. Here I'll have to pay for my debt holders also. To pay my debt holders, how much profit I have earned? Look at this, look at this, look at this. That means before paying my, yes, interest holders, how much money I have earned before paying my interest holders? 3 lakh. Yes or no, everyone? So that is why here I'll be taking EBIT. Is this clear, everyone? Perfect. So I'll write it down as EBIT divided by capital employed. Is this clear, everyone? Yes. Now, in essence, to be very frank, this EBIT as an income, it is an income for four people. Tax is also there, but that in the ratio throughout they've ignored. So let us not get too much into that. Is this clear, everyone? So this is how the formulas are going to be. Is this clear, everyone? Perfect. In our example, if we have to come and see, yes, EBIT amount will be given, capital employed will be given. You can take it as a ratio. Is this clear, everyone? Perfect. I guess with this, our basic ratios, we've finished it off. Perfect. So look at this, look at this, look at this. Yes, we've solved the question, Now let us come back to the concept wherein I've written down all the ratios. Quickly, let us try seeing it again. Yes, and yes, students who are watching recorded, you guys can pause and write it down. Or else, yes, this file, whatever I'm scribbling here, I'll make it available to you guys subsequently. You guys can do it there. But what I would recommend is pause, finish it off, then move forward. Is this clear, everyone? First is going to be my income statement. Yes, let us quickly try summarizing the income statement. All of you guys, quickly, 1 minute. Yes, sales minus cost of goods sold gives me my gross margin. From that, I will reduce my other operating expenses. I will arrive at my EBIT. Yes or no? From that, I will reduce my interest. Yes, I will arrive at my EBT. From that, I will reduce my tax. I will arrive at my PAT, EAT, profit after tax. From that, I will reduce my preference dividend. I will arrive at my Patesh, profit available to equity shareholders. From that, whatever I've distributed as dividend, what is left is going to be retained earnings. Perfect. Now, different names which we should be keeping on the back of our mind. Question tells gross margin, gross income. Same only. Yes, question tells you operating margin. It is EBIT. Question tells you taxable income. It is EBT. Question tells you net income. It is PAT. Because in different places, different wordings would be there. Yes, company has earned an operating income of 10 lakh. There should be operating income means PAT. Yeah. You should be knowing these terms. That is why we've written it here. Is this clear? Yes, company has earned a taxable income. That means it is going to be pay before paying tax. Company has earned a net income. Is this clear? These wordings are going to be very important for us. Okay. Then comes my pro forma balance sheet. Okay, fine. Yes. For us, throughout in the balance sheet, this will not be there. Yes, that is why I have not even written that also. Preference share capital. Is this clear, everyone? Just for this purpose. Yes, one question. This adjustment is there. For that purpose, we've incorporated. Otherwise, it will not be coming. Even if it comes, a simple point, my preference is debt only. As simple as that. Is this clear, everyone? Okay. Now, ratios. Total asset, total liability, equity. This is going to be important. Yes, different names for equity. You can call it as book value, net worth, net asset, shareholders funds. Yes, equity holder. What all they're bringing in? Equity share capital plus reserves and surplus. Okay, boss. Next, capital employed. To run the business, I will be taking money from two people who all equity as well as debt. So it is going to be equity plus debt. Now this I can be writing in a different way also. Balance sheet should be tallied at both the places. Yes or no, everyone? So tell me, in the left hand side, I have equity, which is equity shareholder plus reserves and surplus, and then debt. Yes, in the other side I'll be having assets, current liabilities. So if this I'm writing means it should be equal to asset minus current liabilities also. So that way also if I want I can be writing it. Is this clear everyone? Basics from +1 you've been doing, but still I've spent, I think what I've spent is more than sufficient time. I guess 50 minutes I've spent on this. Okay. Gross profit ratio. Okay. Operating profit. Operating profit is EBIT. Yes. Net profit COGS. Operating cost. To operate business to cost. COGS as well as other operating expenses. Okay. Debt equity is debt divided by equity. Debt ratio and equity ratio. Total how much capital borrowed? Debt and equity. In the debt is how much percent of total capital? Equity is how much percent of total capital? This and this you should not be confusing. Debt to equity ratio is debt divided by equity. Debt ratio means debt is how much percentage of total capital. Debt divided by debt plus equity. Equity ratio is equity divided by debt plus equity. Is this clear everyone? Perfect. Yes. Earnings per share. Here for my equity shareholders, how much profit I have earned? It is the Patesh. Yes or no? So I'll write it as Patesh divided by number of equity shares. Dividend per share is total dividend divided by number of shares. Book value per share. Yes, it is nothing but book value or equity divided by number of shares. Dividend yield for an investor, for his investment. Yes, his dividend is how much percentage of market price? It is DPS divided by MPS. Yes, next is return on equity and return on capital employed. Return on investment, it is return divided by investment. Return on equity, it is return divided by equity. Tell me, for equity holders, what is the return that they are getting? Patesh. So it is a Patesh divided by equity. Is this clear everyone? Perfect. Return on capital employed, it is return divided by capital employed. Yes, capital employed for running business, from how many people you are bringing money? 2 people. Equity as well as a debt. Yes or no? So it is capital employed, equity plus debt. For them, how much profit we are earning to pay debt holders also? It is nothing but my EBIT. So it is EBIT divided by capital employed into 100. Is this clear everyone? Yes. One final point which is dividend payout ratio and retention ratio. Is this clear everyone? Perfect. Now assume in this example Patesh is 3 lakh. That is, this is the net amount available for my equity shareholders, PAT minus preference dividend. Okay, in that I have declared a dividend of 1 lakh. Yes, calculate all the ratios. So tell me, my Patesh is how much? 3 lakh. In that, how much dividend I distributed? 1 lakh. That means how much is going to be my retained earnings? 2 lakh. If I want to calculate it as a percentage, my dividend is how much percentage of the total profit I've earned for equity holders? 33.33%. If I want it as a formula, it is a dividend divided by Patesh into 100. Yes or no everyone? Perfect. I want to know the retention ratio. How much percentage of the earnings I have retained in the business? Tell me, out of 3 lakh, 2 lakh I have retained. That means how much percent? 66.66 percentage. It is retained earnings divided by Patesh into 100. Yes or no everyone? Perfect. Now there is one more way I can be doing the calculation. Tell me, Patesh, it is the total profit available to equity holders. Yes or no everyone? Yes. If I bring it to per share, what is it called? EPS. Yes or no everyone? Yes. Dividend, this is the total dividend I have paid to equity shareholders. If I bring it to per share, it is called DPS. Yes or no everyone? So if I want, say for example, randomly I'm telling my EPS is 3. In that 1 rupee I paid it off as dividend. That means yes, my dividend ratio, dividend payout ratio, it is a DPS divided by EPS. Yes or no everyone? That formula also is going to give me the same answer. Is this clear everyone? Okay. Or else there is one more way to calculate it also. Tell me, from my Patesh is how much? 3 lakh. In this 3 lakh, 1 lakh I paid as dividend. That means 2 lakh is retained earnings. Yes, tell me, my dividend is how much percentage? 33.33 percentage. That means retained earnings should be how much? 66.66 percentage, because if I add the both, it should be 100%. Yes or no? My retained earnings is 66.66 percentage. That means dividend should be how much? Balance 33.33 percentage. So dividend payout ratio plus retention ratio, if I add, they should be 1. Is this clear everyone? Perfect, perfect, perfect. You guys can quickly scribble it down as well. Okay. Yes, it may feel slightly a bit overwhelming right now, because what you've studied in a ratio analysis at Inter, after 3 years you guys are recapping. It's not that you don't know these ratios, but just for a moment, yes, you may feel okay, it's a bit fast, but trust me, it's not of much use. Just that 1 or 2 places we'll see: capital employed, equity, ROC, ROE. I didn't want to keep explaining every time. That is why quickly at one shot, majorly whatever things are required, I've explained it and finished it off. Is this clear, everyone? Okay, perfect. Now, once this is done, one more advanced ratio is there. Advanced ratio, as and when we want, we'll be discussing. In that, only one I will be discussing, which is going to be my asset turnover ratio. What exactly is my asset turnover ratio trying to tell me? Okay, we'll do one thing. Giving you guys a minute to let this sink in. Then we'll continue our discussion. Recorded students also pause for a minute. Just let this settle down. Then we'll continue our discussion. Yes, everyone. So let us try continuing our discussion, my dear students. Yes, now we are going ahead to some advanced ratios. In that, whatever is needed, whenever we'll keep touching on to those. First one is going to be asset turnover ratio. Yes. Now imagine. Yes, I am telling there are two businesses. Yes, business 1, business 2. Or I'll say, for example, two people who are running business. Yes, Koti is running Koti Industries Limited. Yes, Kameshwaran is running Kamesh Industries Limited. What does Kamesh means, though? Huh? It's same only, da? Kama. Yes? Lust, na? Huh? Oof. Lust guy. Okay, fine. Yes. Now, in business, yes, we will be selling goods or services and generating sales. Yes or no, everyone? Perfect. So I am telling sales. Okay, perfect. Say for example, both of them have earned a sale of 10 lakh. Okay, which company is better? Koti's company is better, or Kamesh company is better? Can I interpret just by looking at the sale? No. Now let me try bringing another comparable. Asset. Obviously, to generate sale, I should have invested in some asset. Yes or no, everyone? Perfect. Now, Kamesh has earned a sale of 10 lakh by investing 10 lakh in assets. On the other hand, Koti has earned 10 lakh sale by just investing 2 lakh in assets. Tell me, everyone. Yes, whose business is better? As a logical, rational person, what is our intention? We should be putting in more investment to generate same return, or with the lowest possible investment, we want the maximum return. What is our intention? Always with the lowest possible investment, we want the maximum return. Yes or no, everyone? This is what my turnover ratio is trying to tell me. Is this clear, everyone? Yes. Asset turnover ratio. Yes, it is telling, yes, for how many rupees sales I have generated for every 1 rupee of investment. That is for 1 rupee of asset. Yes, tell me, everyone. Yes, asset turnover ratio. Always in all my turnover ratios, turnover will be in the numerator. Yes, turnover divided by assets. Don't worry why exactly, we'll come to it. Right now, let us just try seeing and try getting a small feel. Yes, tell me, students, in this example, 10 lakh divided by 2 lakh is going to be 5 times. 10 lakh divided by 10 lakh is 1 time. Yes or no, everyone? Perfect. So this means that, yes, by putting in 1 rupee asset, now I'm generating only 1 rupee turnover, 1 rupee sale here. But here, by putting in 1 rupee, yes, investment asset, he's generating 5 rupee sales. Is this clear, everyone? Got a small idea? Perfect. Now, to get a better idea, we should try getting an understanding of what exactly is a ratio. What is it trying to tell us? Let us try understanding this with the help of a very simple ratio that we know. Let us try understanding what exactly does it mean. Yes, everyone. Let us try understanding our gross profit ratio. Tell me, students, what is my gross profit ratio? Gross profit divided by sales into 100. Let me currently keep it aside. Whenever you want to convert it into a number, you do into 100. Otherwise, it will be available in terms of decimal. Okay, fine. Let me take a simple number. Imagine I did a sale of 10 lakh. In that, my gross profit is 4 lakh. That means it is how much? 40% or 0.4. Yes, what exactly is this trying to tell? Let us try understanding. Just a cross multiplication. Yes, sales, gross profit. Perfect. Tell me, if my sale is 10 lakh, gross profit is how much? 4 lakh. I want to know if I make a sale of 1 rupee, how much gross profit I am earning. So it comes as 4 lakh divided by 10 lakh, it is 0.4. Yes or no everyone? Yes, that is how I've got it as gross profit divided by sale. Yes or no? So any ratio in the form of A divided by B, here try telling, yes, what is the interpretation of my gross profit ratio? For 1 rupee sale, how much is my gross profit? For 1 rupee of denominator, how much is the numerator? Yes or no everyone? Perfect. Say for example I'm having a ratio, say for example return on capital employed is 1.3. Return on capital employed formula, it is EBIT divided by capital employed. Yes, it is equal to 1.3. Say for example, what does it mean? It means that for 1 rupee of a capital employed, I am earning 1.3 rupee of EBIT. Is this clear? For 1 unit of denominator, technically when you are doing a division, what happens is for 1 unit of this, how much it is you will be getting. Is this clear everyone? Simple division also it's the same thing only. Say for example, I am telling for 5 chocolate, it is 10 rupees. For 1 chocolate, it is how much? Cost per chocolate, what you are doing? 10 divided by 5 chocolates. Yes or no? Whenever you are dividing it, you are getting for 1 unit of this, how much is the numerator? Is this clear everyone? This knowledge we should be having throughout whenever we see any goddamn ratio in the world. Anything in the world which is in the form of A divided by B means for 1 unit of B, how much is A? This is what it is trying to tell. Is this clear everyone? Perfect. So now try seeing, yes, what exactly my asset turnover ratio is telling. Yes, now there's too many more things, x, y, x is independent, y is dependent, all that subsequently whenever the time comes we'll discuss that. Yes, beautifully graph is going to come. We are going to understand the equation of a straight line. Okay, beautiful. Y is equal to mx plus c, what exactly it is, all those things in a very simple way. There's absolutely no complication, simple layman style. Okay everyone? Yes, right now asset turnover ratio, I am generating turnover. To generate turnover, I should have invested in the assets. Yes or no everyone? So I am telling for 1 rupee of asset, for 1 rupee of asset, for 1 rupee of asset, how much turnover I have generated? For, yes, formula, for 1 rupee of asset, for 1 rupee of asset, how much turnover I have generated? Yes or no everyone? Yes, in the example look at this, yes, Kamesh Limited. Yes, for 10 lakh of asset, he has generated 10 lakh revenue. Yes or no, everyone? So look at this asset turnover or sales or revenue, whatever you call. Yes, for 10 lakh of asset, he has generated 10 lakh revenue. I want to know for 1 rupee of asset, how much turnover he has generated. It is 10 lakh divided by 10 lakh. It is 1. Yes, Koti Reddy. Yes, for 2 lakh of asset, he has generated 10 lakh of revenue. That means for 1 rupee of asset, how much he will be generating? 10 lakh divided by 2 lakh, which is going to be 5 times. Yes or no? That is why my asset ratio is going to be turnover divided by assets. Yes, now whenever you see a ratio, you will get a feel exactly what it is. Whenever you are having a ratio in the form of numerator divided by denominator, it means for 1 unit of denominator, how much is my numerator? For 1 rupee asset, how much turnover I have generated? Yes or no everyone? Perfect. Now tell me, ideally for 1 rupee of asset, I should be earning more turnover, less turnover? More turnover. Yes or no everyone? Look at this. In this example you can see here for 10 lakh asset, 10 lakh only he earned. Here for 2 lakh asset, 10 lakh he earned. For every 1 rupee investment, 5 rupee sale he did. Yes or no everyone? The higher the better it is. Is this clear everyone? Perfect. So I will just write down and keep here. Look at this everyone. Yes, golden rule. Yes, in all my turnover ratios, turnover, that is sales, will always be in the numerator. Is this clear? You can call turnover, sales, revenue, all are going to be one and the same only. Perfect. So let us try writing. Yes, asset turnover ratio. It is turnover bracket, that is sales, divided by assets, total assets. Yes, then we have variants of this. We have fixed asset turnover ratio. There I will take only fixed asset in denominator. Yes or no everyone? Fixed asset turnover ratio. Yes, turnover. It is bracket sales divided by fixed assets. Yes. Then we have current asset turnover ratio. Yes, here turnover, that is sales divided by current assets. Okay. Now today I want you guys to go back. Yes, you would be having your CA Inter FM textbook at least. Yes or no? Just open ratio chapter. You might find some 50, 100 ratios. Every ratio you see from this lens. For 1 unit of denominator, how much is my numerator? It will start making way more sense for you guys. Okay. So let us try getting a feel of this. For 1 rupee of asset, how much turnover I have generated? Fixed asset turnover ratio. For 1 rupee of fixed asset investment, how much turnover I have generated? Current asset turnover ratio. For 1 rupee of current asset, how much turnover I have generated? Is this clear, everyone? So technically, the higher it is, the better it is. Yes or no, everyone? Perfect. Not needed, but let it be there. Is this clear, everyone? So this was my asset turnover ratio. Perfect. So with this, we have finished. Yes, basic equations, basic ratios. In the advanced ratio, asset turnover ratio was needed. That also we finished. Yes, this much base was needed for us so that we can take our journey forward. Is this clear, everyone? I am not revising this because it's anyways part of the very basics. Is this clear, everyone? You guys can read it 1 or 2 times, and every time you're using these equations, if you feel like you're forgetting, you can come back and have a look at this. Is this clear, everyone? Perfect. Now what we'll do is, it is time for us to take our discussion forward. Why we did all these things? What was the reason? Because we wanted to calculate sustainable growth rate. There we wanted to know what is retention ratio, what is return on equity. For that purpose we have come here. But because we have come here, yes, all the basic ratios, formulas, everything is now sorted. Now any point in time we want to use ratios, it's not a big deal for us at all. Is this clear, everyone? Okay, perfect. So now what we'll do is, it's already I guess close to 70 minutes. So we will pause the recording right now. We'll take a small break. We'll come back and continue our discussion further. Recorded students, please do take a small break. Interesting maja discussion is going to come for you guys. Calculation of sustainable growth rate, questions based on that. We are going to do it, but after a short break. See you guys after the break. Yes, everyone. So welcome back after the break. So let us take our discussion forward, my dear students. Yes, last 1 hour was a bit heavy of a discussion. Not heavy in terms of the concepts, but too many things have come together. But it's all right. Okay, the only essence that we'll have to be knowing is, first is income statement. Sales minus cost of goods sold gives me my gross margin, minus my other operating expenses gives me my operating profit or EBIT. I will reduce my interest, I will arrive at my EBT. I will reduce my tax, I will arrive at my EAT or profit after tax. From that, if I reduce my preference dividend, I will arrive at Patesh, that is the profit available to equity shareholders, minus the dividend distributed. I will arrive at my retained earnings. Point number one. Point number two, I have told you interpretation of ratio. Any ratio in the form of A divided by B in the world, it tells me for 1 unit of B, how much is the A. As simple as that. Yes or no, everyone? Perfect. Now with that on the back of our mind, let us go ahead to take our discussion forward, which is calculation of growth. Yes, which is also called as sustainable growth rate. Yes, again you guys would have done in your CA Inter days. Yes, growth rate, sustainable growth rate formula is, yes, retention ratio into the return on equity. We'll take, this is not going to take much of time, 5 minutes. Now tell me students, yes, what is it that we are discussing? We want to calculate value of a share. Dividend discount model told me that, yes, we'll do one thing, D1 divided by KE minus G. Last, how much dividend we paid? Last year, D0. Based on that, every year my dividend will keep on growing. So we'll calculate how much percent is the growth. Based on that, we'll calculate the value of the share. That is what my dividend discount model had told me. But for that, I should be knowing how much is the growth. Either you can randomly estimate, or on a logical basis we'll try deriving, developing how much growth would be there. Now tell me students, how will my earnings grow? Only if my investments will keep growing, my earnings will keep growing. Yes or no, everyone? This is a product of that. Very simple. We'll try understanding. Pay attention, everyone. Where is it given? Yes, sustainable growth rate. We'll once read it. What is given? Sustainable growth rate, it is the rate at which company can grow its earnings and dividends without needing additional finance, without taking any extra finance from outside, using the existing funds only, how can we keep growing? Yes, our dividends as well as earnings. Okay, growth comes from reinvesting the profits back into the business. It depends on two factors. Factor number one is how much profit is retained in the business, which is the retention ratio. Second is how much returns is the reinvestment generating, which is return on equity. I multiply the two, I will arrive at my growth rate. Sir, nothing we understood, sir. Don't worry. For that, I'm there now. We will make it jujube. Yes, everyone. So let us come here to try understanding what exactly is going to be my sustainable growth rate. What exactly this formula is trying to tell me. Okay, fine, simple. Yes. Imagine. We are running a business. Yes, we have made a sales. From that we paid all our operating costs, COGS, other operating expenses. We paid interest, we paid government. Yes, we paid preference dividend also. Ultimately, we were left with our patish, which is the earnings available to equity shareholders. Assume by doing everything, I earned 1 rupee patish. Is this clear, everyone? This 1 rupee is now for whom? It is for equity holders. Now I am giving them the option. Boss, I did everything. 1 rupee I have earned for you. What is it that you want to do? If you tell I will give this full 1 rupee as dividend, or else what I'll do is a portion of that I will retain. I will invest it back into the business. From that I'll be earning more profit. Is this clear, everyone? Suppose you are the investor. You told boss 50% you give it to me as dividend. So what I did, from 1 rupee, 0.5, 50% I have distributed it as dividend. Yes or no, everyone? Perfect. How much percent dividend I have distributed? 50%. Dividend payout ratio is 50%. Yes, dividend per share divided by EPS per share. That means how much I have retained in the business. 0.5 I have retained in the business. Yes or no, everyone? 50% I have retained. 0.5 or 50% we have retained. Is this clear, everyone? Imagine we are Maja Sugarcane. Yes or no, everyone? We earned the EPS of 1 rupee. In that you were the investors. You told boss at least 0.5 at least you give, so that we can buy at least one Alpenlibe chocolate. I gave that to you. 0.5 is now there with me. Now I am having your 0.5 extra right now. What will I do? Will I chumma keep it here? No. What I will do? I will reinvest. Now your original money anyways I had invested, and from that steadily I was giving you return. Suppose originally you had put 100 rupees, you had purchased a share at 100 rupees. On that anyways every year, suppose 20 percentage, 20 return I was giving. Now this year your retention ratio, yes, your retained earnings, that amount also I got, that I did not pay you. This I am reinvesting in the business. I'm reinvesting in the business. I will be earning some profit. Say for example, the return that we are giving to our equity holders on their investment, it is called return on equity. Say for example is 10%. So that means, tell me how much money you have reinvested, how much money you have kept it as retained earnings. 0.5, that we will reinvest. Yes, and say for example we are giving you 10% returns on that. That means how much return you will be getting? Yes, 0.5 was there. It is a pen. Okay. Yes, 0.5 you have invested. On that I'll be giving you guys a 10% return. That means how much extra return you will be getting from next year onwards. Yes, 0.5 into 10%, it is going to be 0.05. Yes or no, everyone? This is going to be your growth. 5% extra you will be getting. Whatever you are getting this year on your original investment, that anyways you will keep getting. But because a retained earning, a portion of your earning, I did not pay you fully, I kept it here, I reinvested. On that extra earning will keep on generating. Is this clear, everyone? Yes or no, everyone? Yes. What is 0.5? Yes, it is going to be my retention ratio. How much we've retained? Into, yes, we are retaining whose money? Equity shareholders money. So on that, how much percent I am giving to the equity shareholders into the return on equity? That gives me my growth rate. Is this clear, everyone? One more very simple example I'll give it to you guys. This would have given you guys a good feel of what exactly this is, but still one more example I'll give it to you guys. Imagine good old days when we were kid. We used to have summer vacations. Every year summer vacation we would go to meet our grandmother. Yeah, we'll have good food, enjoy, they'll take us out, they'll purchase clothes for us and everything. And at the end of it, when you're about to go back, yes, your grandmom will slowly give you some money in your pocket, slowly by folded hands, and she'll tell, don't tell mother, buy chocolates for yourself. Yeah, most beautiful part of life. Okay, yes, now. Assume every year summer vacation, yes, your grandmom will give you 100 rupees. Okay, every year grandmom will give you 100 rupees. Is this clear, everyone? Yes. Now, first case, assume Koti. Yes, Koti now has got a new full name. Koti the Naughty. Okay. Yes, first year. Yes, Koti went to his grandmom. Grandmom gave him 100 rupees. Situation 1. Assume Koti spent all 100 rupees. Next day only he purchased chocolate. He gifted some chocolate to girlfriend. Yes or no, everyone? Yes, he ate chocolate. He went out. He spent it everything. Yes. Next year, again whether grandmom will give him 100 rupees? Yes. But this money he has fully spent. Will he be getting growth in that? No. Situation 2. Koti is intelligent. Yes or no? He plays with money before even money was born. The moment Koti was born, he started playing with money. You know, when all of us were born, we have spent money to be born. We went to hospital. Koti is legend. To save money, the moment he was born, he saved his dad's money. He was born at home only, right, Koti? He saved money from there only. From there only he learned financial lessons. Okay, yes. Case number 2. Grandmom gave 100 rupees. What Koti did? 50 rupees chocolate he purchased. Balance 50 rupees. He told boss, let me do one thing. Let me invest it in FD. FD will give me 10% returns. Assume. Is this clear, everyone? So that means tell me, students, what is the story that is happening? Yes, year 1, 100 rupees he got. Yes or no, everyone? Every year grandmom is giving 100. Yes, year 100 rupees he got. What he did? 50 rupees he spent. 50 rupees he reinvested. Yes or no, everyone? Yes, which is basically 50 percentage of his money he reinvested. Yes, when the next year comes, yes, grandmom will again give him 100 rupees. Yes or no? That anyways he'll be getting. But wait, here something else is also happening. He had reinvested that 50 rupees. He had put that in FD. On that, how much income he is getting? 10% income he is getting. That means how much extra he will get on 50 rupees? 10%. 5 rupees extra he'll get. That means second year how much he will be getting? 105. That means his earnings has increased by how much percent? 5%. First year it was 100. Second year it became 105. It has increased by 5%. How did it increase? Simple. First year whatever earnings he got, he did not spend fully. He retained a portion. How much percent he retained? 50 percentage he retained. That he reinvested. When he was reinvesting, how much return he got? 10% return he got. That means 5% extra he got next year. If you want, you can keep continuing the story. Every year it will keep on increasing by 5 percentage. Is this clear, everyone? So look at this. Whatever money he got, he retained 50 percentage of that. It is a retention ratio. And on that, how much return he is getting? It is for the equity holder, so it is into return of equity. That gives me my growth. Is this clear, everyone? Perfect. So my growth is nothing but retention ratio into return of equity. Retention ratio formula we have already learned. Yes or no, everyone? Yes, it is retained earnings divided by, yes, Patesh. Yes, return on equity also no. We know it is return divided by equity. Yes or no, everyone? Perfect. Now I guess, yes, one more using a simple, yeah, simple table also I'm showing how every year it increases. I've already showed one more time. Yes, using proper financials also, let us try seeing how everything increases. Imagine equity holders are investing 1000 rupees in a business. Okay, net profit is 20% of the equity value. Okay, for assumption sake, I've kept it this way. Yes, assume there is no preference dividend, nothing of that sort is there. Return that we are giving to our equity holders is 20%. Assume there is no preference dividend, 40% of earnings is distributed as dividend and balance is retained in the business. Calculate sustainable growth rate. Tell me, students, if I earn 1 rupee earnings, how much I am paying as dividend? 40%, 0.4. That means how much I am retaining? 60% retention ratio is going to be 60%. 0.6. Is this clear, everyone? Yes. And whenever company gets equity holders fund, it reinvests, and how much return it is generating? 20% return it is generating. Yes or no, everyone? Return on equity. That means can I calculate growth? Yes, it is retention ratio into return on equity. 0.6 into 0.2, 0.12. That means every year my things should increase by 12%. Yes or no, everyone? Perfect. So imagine. Yes, first year the investment value is, say for example, 1000 rupees. That is what is given. Yes or no? 1000, right? 1000 we've invested. We have told that company is earning a net profit of 20% of that. That means 200 profit we have earned. Yes or no? There is no preference. It is 0. That means what is the net profit available to equity holders? 200 rupees. Yes or no? We are giving you option. If you want full, we'll give. What you told? No, boss, I don't want full. You give me 40% right now. Yes or no, everyone? That means how much we have paid? 80 we've paid. That means how much we've retained in the business? 120 we've still retained in the business. Yes or no, everyone? Perfect. That means next year, total how much fund company is having? 1000 anyways it had. Extra 120 also he gave, na? So now this year how much company is having? 1120 it is having. Yes, from this it is running its business. Tell me students, how much profit we are earning? 20 percentage. So 1120 into 20 percentage, it is going to be how much? 2 224. Yes or no, everyone? Perfect. Preference dividend is not there. That means Patesh is 224. Second year also we are asking how much percent dividend you want. They told 40% I want. So 224 into 40 percentage, it is going to be how much? 89.6. So my retained earnings is going to be how much? 60%. Fast. 134. Yes or no, everyone? Let us try seeing the growth rate. See. 1000 has become 1120. That means 120 has increased from 1000. It is 12% growth. Yes or no, everyone? Percentage increase also in a beautiful way we'll understand using just circles throughout. Nowhere you will be confusing it whenever it is needed. Yes, 200 has become 224. That means 24 it has increased from 200. 12%. Yes or no, everyone? 200 has become 224. 12% it has increased. Yes. 80 has become 89.6. 9.6 it has increased from 80. That means 12%. Yes or no, everyone? Yes. 120 has become 134.4. That means 12% it has increased. If you want this table, you keep on continuing for how many ever number of years, you'll keep on getting every year a growth of 12%. Is this clear, everyone? Yes. So we have earned extra growth without borrowing money from outside. Yes or no, everyone? This is called the sustainable growth rate. Is this clear, everyone? Perfect. So now let us come back to our concept. Yes, now look at this thing, students. Sustainable growth rate, it is a rate at which company can grow its earnings and dividends. Yes, without needing additional financing, without taking any extra funds from outside, just by managing our earnings, how much dividend to pay, how much to reinvest. Just by that, how much extra growth we can be getting. Is this clear, everyone? We are telling growth comes from reinvesting the profit back into the business. We have earned profit. If you take away that full profit, there is no extra amount left. So you cannot be doing expansion. If we reinvest that money, from that we'll be getting extra profit, extra growth. Yes, so for that, two factors we want. First is how much profit is retained in the business. It is nothing but my retention ratio. Next, yes, on this fund, how much return I'm generating, which is going to be the return on equity. That is why my growth rate is retention ratio into the return on equity. Is this clear, everyone? Yes, each of these formulas in detail I have told, so I'm not going to tell again. Yes or no, everyone? Retention ratio. Yes, it is retained earnings divided by Patesh. Yes or no, everyone? Or on per share basis also you can tell retained earnings per share divided by EPS. Or I know dividend payout ratio plus retention ratio is equal to 1. That means I can tell it is 1 minus dividend payout ratio. Is this clear, everyone? Just for writing sake I have written. When we are solving questions, we don't even want that. Just by looking based on the feel only we'll be doing it. Is this clear? Return on equity. It is the return for the equity. Tell me, for equity holders, what is the profit that I'm earning? It is Patesh. Yes or no, everyone? Yes. And equity, it is nothing but equity share capital plus reserves and surplus. Is this clear, everyone? Perfect. Simple crux. Yes. Growth is equal to retention ratio into return on equity. Is this clear, everyone? Perfect. Absolutely no doubt. Yes or no, everyone? Perfect. So if that is the case, we'll do one thing. We'll try solving questions on this. Yes, everyone. So now let us go ahead to solving of the questions. Question solving also, we'll be doing it in this video only. We are having some 3 to 4 beautiful questions. Quickly, taka, taka, taka. We'll keep on solving. How? Taka, taka, taka. So first we are going ahead to question number 10. This is a question from the study material. Same question has come in July 21 exam for 8 marks. And if you go below, yes, same question with a slightly different numbers has come in May 19 for 8 marks as well. Is this clear, everyone? Okay. Giving you guys a minute. Read the question. Okay, simple. Yes, they are asking us, yes, draw income statement. We have learned how to draw. Yes, calculate sustainable growth rate. Okay. Yes, calculate fair price of the company using dividend discount model. Okay. And what is your opinion using the current share price? Is this clear, everyone? Now I'll give you guys a very simple hint. Here they have given me asset turnover ratio. Asset turnover ratio. Formula is turnover divided by asset. For 1 rupee asset, how much turnover I am generating? You read this beautiful question, spend 2 to 3 minutes, try seeing what all is there, what all is missing, how I can start. We'll together solve this simple question. If it comes in the exam, halwa jujube. Okay, everyone, read it quickly. Yes, everyone, I hope you guys would have read the question. Recorded students, please read the question. Yes, now let us try reading the question and solving them together. Pay attention, pay attention, pay attention, everyone. We've seen the requirement. I'll have to draw the income statement, calculate sustainable growth rate. Yes, calculate the fair price and accordingly give a comment. Okay, fine. Following financial data is available for PQR Limited for the financial year 2008. Great, was 8% debentures is there, 125 lakh. Okay, great. 10% bond is there, 50 lakh. Yes, it was issued in 2007. Okay, now it is end of the year 2008. It is great. Equity shares 10 each, total 100 lakh is there. If there is a need, I can calculate number of equity shares. Okay, reserves and surplus is given. Okay, total assets is given 600 and asset turnover ratio is given. Oh, using this, can I be calculating my sales asset turnover ratio, turnover divided by assets? Using that, if there is a need, I can calculate sales also. Okay, let us see. Effective interest rate is 8%. Okay, effectively on all the funds wherein I'll have to be paying a fixed amount. Yes, I'll have to be paying 8%. Yes or no, everyone? But sir, this is 8%. This is 10% na, sir. How am I paying 8%? Because it was issued in the middle of the year 2007. That is why they've given. So they're telling you don't see individually total whatever is the amount on that I'm paying effectively 8% only interest. Is this clear? Yes, this was issued some back previous years. So on this anyways full 8% I'm paying. This was issued in the current year. Yes, on this if I'm paying 8% only means it is issued somewhere in the middle of the year. Is this clear? That's a simple interpretation. Okay, when there is a need we'll come back to this. Okay, effective tax rate is 40%. Okay, perfect. Yes, operating margin is 10%. Tell me operating margin, where do I arrive at that? Operating margin, operating profit, EBIT, that is why I have spent time there. Is this clear? Dividend payout ratio 16.67%. Current market price is 14 rupees and required rate of return is 15%. One by one let us do. First one is to draw the income statement quickly. Taka. Let us try doing. Firstly, I want to calculate from where my income statement is going to start. Sales, yes or no, everyone? Perfect. So let me write down sales. But tell me, students, whether sales is directly given in the question. Yes or no? No. But I want sales. How do we calculate sales? Sir, very difficult, sir. Jujubida. See the question. What is given for you? Yes, Koti, always remember one very golden principle in life. If one person goes from your life, means other person will definitely come into your life. Yes or no, everyone? Yes. If one data is not given in the question, means to compensate for that, some other data will definitely be given in the question. As simple as that. Is this clear? Always. If two data is not given in the question, means two extra data should be given in the question. As simple as that. And the person who is going away from your life, yes, crying, what do you call them as? Yes, we'll call them as our X. Yes or no, everyone? Yes, in maths or in life, the person who is leaving you and going, who is not available for you, who will tell you, I can't even spend a day without you, but then acts as though nothing has happened. We'll call them our X. And it is always important in life to remember who your X is, because they'll help you to grow in life, to solve questions in life. Motivation. Yes, everyone? Yes, enough of that. Come, let us solve questions. Yes, everyone, tell me. Asset turnover ratio. It is for 1 rupee asset, how much turnover I have generated? Yes or no, everyone? For 1 rupee asset, how much turnover I have generated? Tell me what is my asset turnover ratio? It is going to be 1.1. Yes or no, everyone? Asset is given for me. How much is my asset? 600 lakh, if I'm not wrong. Yes or no, everyone? So I want to calculate my turnover or asset. So can I tell turnover? Yes, that is sales is equal to 600 into 1.1. It is rupees 660 lakhs. Yes or no, everyone? Perfect. Now that I've got this, can I be doing all the calculations? Yes, boss, we can be doing all the calculations. So let us try doing all the calculations. Sales is 660 lakhs. Yes, you can be writing lakhs in the end, or in the top you can write rupees in lakhs. Is this clear? Now from there, generally what we'll be doing, I will reduce my cost of goods sold, I will arrive at gross margin, other operating expenses, I will arrive at EBIT. Yes or no, everyone? But here, whether question has told me how much is COGS, how much is other operating expenses separately? No. But question has told me one thing. What question told me? Question told me that my operating margin is 10%. Yes or no, everyone? That means my operating cost is how much percent? 90%. Yes or no, everyone? Perfect. So I can tell from my sales, if I reduce all operating cost, what all could be there? COGS is also there, other operating cost is also there. Yes or no, everyone? Perfect. I will arrive at my operating margin or EBIT. Perfect, everyone. And tell me, my EBIT is how much percent? 10% of 660 lakh, that means it is 66 lakh. Yes or no, everyone? That means my operating cost should be how much? Balance amount. Either you can write it as balancing figure, or it should be 90%. Yes or no, everyone? Perfect. So 660 into 90%, it is going to be 594 lakhs. Till here, is this clear? Okay, this is my earnings before interest and tax. From this, what I'll be paying? Interest I will pay. Tell me total how much funds we have taken from debt holders. Total 125 lakh and 50 lakh. That means total, yes, debt is going to be 175 lakh. Yes or no, everyone? Yes, I can tell. Okay. Total debt that we have raised for business is 125 plus 50. It is 175 lakhs. Yes or no, everyone? Perfect. That means the total interest that we are going to pay, it is 175 lakh. What is question telling? Question is telling effectively I have paid 8% interest. That means it is going to be how much, students? 175 into 8%, it is 14 lakhs. Yes or no, everyone? Perfect. Now the Koti, what is happening? Where are you? You finished? Then who will tell me the numbers? Yes, EBIT minus interest gives me EBT. How much is it? 52 lakhs. Yes or no, everyone? This is before paying tax. From this, let me pay tax. How much is the tax? 40%. It is going to be how much? 80 lakhs. Yes or no, everyone? That gives me my profit after tax. Yes, it is going to be 31.2 lakhs. Yes or no, everyone? Yes, from this I will be paying preference dividend, if any. Is there a preference dividend? Even if it is not there in my income statement, I will always write. Sometimes it is important for to know where to put the dash. At the correct place, correct dash you should put, or else your life only will become dash dash dash. Yes, quote by the one and the only, the legendary Koti Naughty. Is this clear, everyone? Okay. So once I have reduced that, yes, I will arrive at Patesh 31.2 lakhs. This is the total amount which is available for my equity shareholders. In that, I'm asking, if you want some money, I will give it to you as dividend, or else balance I'll keep it with me. So they're telling, boss, Papa people, we are give some dividend for us also. We told, okay. We are asking how much dividend you want. What they are telling, they have given dividend payout ratio. Dividend payout ratio. Is this clear, everyone? My earnings, whatever I have earned, they're telling 16.67% of the earnings you pay out as dividend. Is this clear, everyone? We will understand interpretation of dividend also. Three things will be there. If dividend rate is given, it means it is on the face value. Dividend yield is given, it is on the market price. Dividend payout ratio is given, it means it is on my EPS or earnings. Is this clear, everyone? They're telling, boss, how much ever we have earned, how much ever is the money for me, on that you pay 16.67%. We told, okay, boss, don't cry, we'll pay now. Why you're worrying? Okay, chill pannunga. 31.2 lakhs into 16.67%. How much is it? 0.1667. 5.2 lakhs. Yes or no, everyone? Perfect. Yes. That means balance how much money is kept as retained earnings? 26 lakh. Yes or no, everyone? We are telling equity holders, don't worry. This much amount you take. 26 lakh we have kept it with ourselves. We will reinvest, we will grow, we will make you rich in future. Yes or no, everyone? Is this clear? Is this clear? Is this clear, everyone? Perfect. Yes, I hope you guys have noted it down. Now at the end of every question, keep reminding me to just take a minute to remind students to take screenshot if in case they have not noted it down. Is this clear, everyone? Okay, perfect. Yes, first phase is over. We have calculated income statement till the very end, till retained earnings we have done. What is the second requirement of the question, students? What is the second requirement? Calculate sustainable growth rate. Okay, let us try calculating sustainable growth rate. Tell me, students, tell me. Sustainable growth rate, G. It is nothing but retention ratio into return on equity. Yes or no, everyone? Perfect. So I'll have to be doing two calculations. First is retention ratio, next is return on equity. Retention ratio, multiple ways I can be doing. Now tell me, students, in this question, total for equity holders, how much I've earned? 31.2 lakhs I earned for equity holders. Yes or no? In that, how much I've distributed as a dividend? 5.2, which is 16.66%. That means how much I've kept it as retained earnings? 26 lakh. Yes or no? Yes. My dividend is how much percentage of my Patesh? It is going to be 16.67 percentage. Yes, that means my retained earnings is going to be how much a percentage? 83.33 percentage. Yes or no? Yes. If you want to calculate, two formulas can be there, but I've told you I'm not never going to use the formulas. If you want the formulas, it is retained earnings divided by Patesh. That will give you retention ratio formula 1. Or I know if I add the two formula, the whole should be 1. So I can write it as dividend payout ratio plus retention ratio is equal to 1. Therefore, retention ratio is 1 minus dividend payout ratio. Anything in the world you can be doing, yes or no, everyone. So let me just write anyone. Retained earnings divided by Patesh. It is 26 lakh divided by 31.2, right? So it is coming as how much? 83.33%. Yes. 3%. Yes, that is 0.8333. Yes or no? Or alternatively, you can write it as 1 minus dividend payout ratio also. Yes, return on equity. Return on equity. Return on equity. Yes, it is nothing but a return divided by equity. Yes or no, everyone? Tell me, students, for my equity holders, how much return I have generated? What is it called? It is the Patesh. Yes or no, everyone? Always have a habit. Yes, don't tell Pat, tell Patesh for equity holders, because Pat is for two people, equity and preference holders. Is this clear, everyone? Now, total how much money I have taken from equity holders? What all I am taking? Originally, I will be having equity share capital. On that extra every year, reserves and surplus will get added. So it is equity is nothing but equity share capital plus reserves and surplus. Yes or no, everyone? My Patesh, I guess, is 31.2 lakhs. Yes or no? Yes, my total equity value. Yes, it is 300 plus 300, which is going to be 400. 100 plus 300. So 31.2 divided by 400. How much is it? 7.8 percentage. Yes or no, everyone? Yes, perfect. So that means when I'm doing the calculation, that is 0.078. Always when you're calculating percentage, ensure you write it as decimal also. Is this clear, everyone? Perfect. So when I'm calculating my retention ratio, yes, it is. Yes, retention ratio is how much? 83.33%. 8333 into return on equity is how much percent? 0.078. 0.078. Always ensure you write down whenever you're doing multiplication or whatever in terms of percentage. Bring it to decimal, do it in terms of decimal, get the final value in decimal. Then if you want, you can do into 100 or keep it as decimal. Absolutely no issues. Is this clear, everyone? So how much is going to be the growth rate? Tell me, students. Yes, 0.06499. I can write it as 0.065. Yes or no, everyone? Yes, that is 0.065 means how much? 6.5%. Is this clear, everyone? Yes or no? Yes or no? Yes or no? Always do calculation in decimal. In the end, only in the end, convert it back into percentage. Is this clear, everyone? Yes, 0.065, that is 6.5%. Always in exam have both these numbers, because you don't know in your suggested answer what is there. So it is always better write both, put a box how much time it is taking. Is this clear, everyone? Okay, We have calculated sustainable growth rate. Okay, okay, perfect. Yes. Now, what is the third requirement of the question? What is the third requirement? Calculate fair price of the share. Yes or no, everyone? Okay. Yes, fair price of the share. Here, growth we have calculated. That means we'll be going for constant growth model. Yes or no, everyone? So we'll tell value of a share. It is a D1 divided by KE minus G. Now tell me one thing, students. Cost of equity, is it given in the question? Cost of equity, is it given in the question? I guess it is given in the question. How much is the cost of equity? 15 percentage, yes or no, everyone? 0.15. Yes, growth we have calculated 0.065. Yes or no, everyone? That means the only data that I want to complete my story, it is a D1. Yes or no, everyone? Yes. D1, is it directly given? No. Growth I know. Yes. D naught, do I know? No. Total dividend I know. Per share I don't know. Here everything I'm doing it on per share basis. So let me try doing the calculation here in the side. Yes, working note. Yes. Dividend per share. I am taking it from my income statement. That means it is a D naught. Yes or no, everyone? Tell me total how much dividend we have distributed. 5.2 lakhs. Yes or no, everyone? Yes, it is total dividend divided by number of equity shares. Yes, it is 5.2 lakhs. Yes, now I want to know the number of equity shares. What is the number of equity shares? 100 lakh. Yes or no? Yes or no? Yes or no? Hmm? I'll come to your home with a flying chapel. Huh? Tell me. Equity share capital. How many equity shares are there? Yes. God, please save the me. Huh? Tell me. Equity share capital is how much? 100 lakh. Yes. Every share face value is how much? 10. That means how many number of shares I'm having? 10 lakhs. Yes or no, everyone? Who told 40 lakhs? You told. Okay, be careful. Yes, keep your basics intact. Yes or no, everyone? Yes, tell me, students, how much is it going to be? Number of equity shares, again, if you want, you can write it 10 lakh as it is, or if you are having doubt, you can show the calculation also separately. Is this clear, everyone? So that means it is 0.52. Okay, D not, because I've taken it from my income statement. Yes or no, everyone? So I can tell it is 0.52 into 1.065. Is this clear, everyone? This calculation becomes important because till now everywhere D naught, growth, everything was given to me. I was directly putting. Now that thing they've done, they've given income statement. You just have to do the basic calculations. Is this clear, everyone? 0.52 into 1.065 divided by how much ever. Tell me the value, students, how much you're getting. You have not done the calculation. Is it 6.52? 0.085. 6.52. Yes or no, everyone? Yes. Quickly finish off the calculations. Yes, everyone. Till here, things are clear. Absolutely clear, crystal clear, no doubt. Yes or no, everyone? Very simple. 2-3 times it has come in the exam only. Simple. Asset turnover ratio. Using that, you will calculate sales. Once you've got sales, operating margin is given, you will arrive at EBIT. You will finish off the entire story. Is this clear, everyone? They've asked you to calculate sustainable growth rate. It is retention ratio into return on equity. Retention ratio, dividend payout is given. You can do it 1 minus that. Okay, you will get that. Or logically, also you can be doing it. Okay, fine. Then return on equity. It is return divided by equity. For equity holders, I am earning Patesh. Total equity holders funds, it is going to be equity share capital plus reserves and surplus. Okay, this is also done. Yes. Next, calculation of fair price. It is a D1 divided by KE minus G. KE is given in the question. G I have calculated. D1 was important. Be careful. Slowly. It is a D naught into 1 plus G. Growth I know. D naught I have to calculate. Income statement is given. Their total dividend is given. That is total. If I divide by number of shares, I will be arriving at the dividend per share. Yes or no, everyone? So it is a total dividend divided by number of shares. Number of shares, equity share capital was given. For every share, what is the face value was given. Using that, I'll calculate the number of shares. Is this clear, everyone? Perfect. Now, one place students will be having doubts. Yes. Now, imagine. I'll give you an example to clarify. Imagine, yes, this is financial year 27-28. Is this clear, everyone? Okay. So 1st April 2027, 31st March 2028. I have taken two different loans. Yes, one loan of 100 rupees I had taken 3-4 years back. Yes, at what rate? 10% loan I had taken. Is this clear, everyone? 3-4 years back I had taken. Is this clear, everyone? Yes, for this entire year that amount is due. That means how much interest I will be paying on that 100 into 10%, 10 I will pay. Is this clear? In the middle of the year, I wanted some more money. So what I did in the middle of the year, say for example, after 6 months, say for example, on 30th of September, I took a new loan. 9% loan I took, again for 100 rupees. Yes, that means tell me how much interest I will be paying on this loan for this year. Tell me, on 100 rupees, 9% I will be paying if I hold it for full year. Here I was holding it only for 6 months. Into 6 by 12, that means I'm paying 4.5 only. Yes or no, everyone? So tell me, total how much interest I am paying? 14.5. Yes or no, everyone? Yes. On total, how much? Yes, loan amount 200. So if I want, I can tell my effective interest rate is going to be 7.25 percentage of the total loan amount. Yes, if I do it that way also, I am telling, okay, boss, 200 rupees loan is there, 7.25 percentage is the interest. Yes or no? Into 7.25 percentage also, you are getting same amount only. Perfect. Same thing is happening here. Look at the question. Yes, 8% debentures is old thing. So full 8% I'll be paying. 10% bond is issued in the year, in the middle of the year. When it is issued, I don't know. God only knows. Yes, 10% I'm paying, but I'm paying only for that period. Question told me, okay boss, you don't get into that confusion of when this was issued. Yes, I'm giving you an additional information. Throughout whatever interest I was paid, it was 8% of the capital investment. So I'll tell 125 plus 50, total 175 loan I've taken. On that 8% I'm paying. Is this clear, everyone? Perfect. Now using this, if in case I'll have to calculate, yes, when the loan was issued, can I do that calculation also? Yes or no? Yes or no? Yes or no? Perfect. I can do that calculation also. Let me try doing that. Why? Because next question, nothing new is there, only this is new and it has come in the form of a case scenario. Is this clear? So if I do it here, next question case scenario, I will just keep on taking the answers. Is this clear, everyone? Perfect. Now third opinion they have asked, calculate fair price and comment. Tell me actual price is how much? 14. Fair price was 6. I'm getting a benefit of 6 only. Will I be willing to pay 14? I will tell no. It is overvalued, so do not buy. Is this clear, everyone? Perfect. Now we'll have to calculate the issue date of the bond. Let me try doing that as well. Did I keep it as an additional investment, additional adjustment here? Okay. In the next question, it is there. Same question only, just numbers are different. So let me try doing it. I will try. Okay. Simple I can do. Yes, first I will show you detailed approach, then I'll show you takka shortcut. In 2 seconds you will get. How much? 2 seconds only. Yes or no? Maggie will also take 2 minutes. This you will get answer in takka. Push you will get. How? Push. Okay, fine. Let us try calculating. Calculation of issue date of bonds. Yes, tell me the numbers, students. Tell me the numbers. What all is given? 8% debentures is there. Now what is the amount? 8% debentures, 125 lakhs. Yes, then 10% bond is there, right? Yes, which was issued in the year 2007. Amount is 50 lakh. Effective interest rate is how much? 8%. Is this clear, everyone? Perfect. Now can I calculate the total interest cost? Total interest cost, I will tell boss, total I have taken 175 lakh loan. On that I'm paying 8%. That means it is going to be how much? Tell me, everyone. 14 lakhs. Yes or no, everyone? Perfect. Total 14 lakh interest I'm paying. Can I tell total interest? It is interest on debentures plus interest on bonds. Yes or no, everyone? Perfect. Total interest is 14 lakh. Yes, debenture. Only bond is issued in the middle of the year. Debenture is there from a long time. On that full year interest I'll be paying. Yes or no? On 125 full 8%. So I'll tell 125 into 8%. Yes, it is going to be how much? 10, 8. Correct? Okay, perfect. 14. Okay. Yes, on bond, for how much months I am paying interest? I don't know. Whatever I don't know in life, I will take it as X. Yes or no, everyone? Tell me. Yes, how much amount bond I've taken? 50 lakh. So I'll tell 50 lakh. Yes, technically how much percent I should be paying? 10%. But 10% I'll be paying if I'm holding it for full year. I'm not holding it for full year. How many months I'm holding? I don't know. Let me assume it as X into X divided by 12. Is this clear, everyone? Perfect. So let me try simplifying this. Tell me 50 lakh into 10%. It is 5 lakh. Yes, divided by 12. I guess makes it 0.4166. Yes or no, everyone? Plus 0.41667x. Yes, so now let me try simplifying. 14 minus 10 becomes 4 is equal to 0.41667x. Therefore, x is equal to 4 divided by 0.41667. Are you getting 9.6? Yes or no, everyone? And it is very important to know who your x is, whom we have taken as x. Yes, the number of months for which I am paying interest, that is taken as x. Koti Reddy, don't tell me name of the your x. Okay, whom we have taken it as x, the number of months for which I am paying interest, that is taken as x. Yes or no, everyone? Perfect. Wait. I'll come. Don't worry. Chill. I know. I know the game that I'm playing. Chill, Koti. Okay. Yes. Okay, here let me put, let's assume, yes, bond interest is payable for x months. Is this clear, everyone? So I arrived at the value of x. Is this clear, everyone? So that means I am paying interest for 9.6 months. Is this clear? Okay, now let me try calculating the year. From where my year is starting? Is it starting from April or from January? Is it given? Here it is not given. I guess in question 11 it would be given. For the financial year ending. Okay, if you see the question, if you see question number 11, ditto, including numbers, it is same. Absolutely, there is no change. See where all it has come. It has come in the case scenario booklet, MTP March 25 for 10 marks. The only change is there it was 2008, here it is 2023. All numbers are same. Okay, yes, here for the financial year, where is the highlighter? For the financial year ending 2023. That means from where it is starting, 1st April 2022 to 31st March 2023. Yes or no, everyone? Perfect. Tell me from here. Yes. Yes, I am paying, yes, interest for 9.6 months. That means here I have taken loan for 9.6 months. I am paying interest. Yes or no, everyone? So that means if I want from end of the year, I can keep coming back 9 months and plus one additional month. That is one way of doing it. Or else there is one more way of doing it. For 9.6 months I am paying interest, means for how many months I am not paying interest? 2.4 months I am not paying interest. Yes or no, everyone? This is simple for me to do. So year has started. Yes, after 2.4 months is when I have taken my loan. Yes or no, everyone? So first month is when? April. Did I take loan? No. Second month is when? May. Did I take loan? No. So till end of 31st May I have not taken loan. But somewhere in the middle of June, somewhere around June 14th, June 15th, in that range I would have taken my loan. Yes or no? Because it is 2.4. So I would have taken my loan in June 2022, approximately around June 14 or June 15. Is this clear, everyone? Let us have a look at the question, how it is asking. They've just asked me the month. Yes or no, everyone? Yes, 2.4 months. Again, if you are coming back now, you will have more confusion. In case of 9.6, you will not come back 10, you will come back only 9. Okay, that confusion you don't want. You see from the start. That is going to be simpler for you guys. So the answer is going to be, when was this issued? It was issued in the month of June. Is this clear, everyone? All other things are going to be same only. Amount of retained earnings. See your previous question, how much it was? 26. Same only. Return on equity was 7.8%. Same only, right? Return on equity is how much? The 7.8%, na? Okay, yes. Sustainable growth rate is 6.5%. Perfect. Fair price of the share is 6.51 or 52. Yes or no, everyone? It is BCDBD. BCDBD. Is this clear, everyone? 10 mark question. Simple. Jujube. Halwa. Yes or no, everyone? Perfect. Now, sir, everything is good, sir. But is there a shortcut, sir? If it is a case scenario question, there is a shortcut for you. Tuck, 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 tuck. 2 seconds. Now understand the question, get a feel of the question. Look at this, students. Yes, you cannot directly apply, you will have to see properly, okay? Only then apply. I'm telling you guys this as an instruction, okay? Pay attention. Question 11. Question is telling me that my effective interest is 8%. Perfect. On debentures, I am paying for the full year. How much I am paying? 8% only I am paying. Okay, fine. Yes. Technically, for 1 year, bond interest is how much? 10%. That means if I am using it for full 1 year, that is for full 1 year, if I use, that is if I use it for 12 months, I should be paying 10%. But boss, I am paying how much only? 8% only. That means how much months only I used? Cross multiplication. 8 into 12 divided by 9.6. Thank you. 2 seconds. Yes or no, everyone? I am paying interest for 9.6 months only. That means after how much months I have taken loan? 2.4 months. April, May, June. How much time did it take? 10 seconds. That is why we have spent so much time in the basics. Is this clear, everyone? Throughout even the most complicated of the things, we will do it off in the simplest of the ways. Is this clear, everyone? Oh my the god, what is this? The magicado? A little mundo, sir. Logicado. Is this clear, everyone? Till here, is this clear? Give me a confirmation, students. Beautiful question. Multiple times it has come. 10 I have solved completely. Yes or no, everyone? You have a 10A with a slight change in the numbers. Okay, again 8 marks homework for you. You have 11. The only thing extra was when was this bond issued. This is important. Here you may be committing a mistake. Be careful, be careful, be careful. Is this clear? 9.6 you are coming back. Don't do it that way. That means 2.4 I am going front. From here you do. You will never commit a mistake. That means 2.4. April 1 full month. May 1 full month. June half. That means somewhere in the month of June it is issued. Is this clear, everyone? Yes, other things are also done. Okay. Now there is one more question which has come in November 22 exam for 8 marks. Simple JGB question only. Yes, look at this, everyone. First is, what is sustainable growth rate? It is a rate at which company can grow, yes, without taking any additional financing by yes, it is based on 2 factors: how much we are retaining, on that how much return we are giving to equity holders. All those things you guys can be writing. Okay, fine. Next, what makes an organization sustainable? This is not regarding sustainable growth rate. In general, for an organization to be sustainable, what all things they'll have to be doing? Yes, they should be having proper strategic direction. Yes, they should not be doing any scam. Yes, they should not be running behind a 10-acre land. All those things they are writing. If police gets to know, they'll put them behind bars. All those things they've written. Okay, Koti. Yes, have a clear strategic direction. Scan the environment, identify opportunities, attract people, have adequate, yes, infrastructure. All these things, don't worry. In theory, we'll discuss it for you guys. Theory discussion, we'll keep it separate, wherein all theory properly, beautifully we'll discuss. Theory will come for 20 marks. Our intention is to ensure that in 20 we'll take full 20. Is this clear, everyone? With that perspective, we'll put good amount of efforts for theory, but that we'll do separately. Is this clear, everyone? That in the end, when you're close to your exams, if you see it is sufficient, because it is anyways just like quickly you'll have to read it, you'll have to revise it 1 or 2 times. That's as simple as that. Now we are having a third part of the question. Yes, Mr. X has submitted the following data. Assets is given, liabilities is given, net income is given, dividend paid is given, sales is given. X wants to know to what extent sales can be increased without going for additional borrowings. Even if they're given just this much, I should have known that they are asking for sustainable growth rate. Yes, by using sustainable growth rate concept. That means I will be calculating my sustainable growth rate. Is this clear, everyone? Yes, giving you guys 2 minutes, quickly, small question. But somewhere you will have to be using your 11th standard commerce. I'm telling you. Okay, 11th standard. Okay, yes, giving you 2 minutes, read. Try seeing what all is there, what all is needed. Quickly you will be getting the answer. Then we'll solve it together. Yes, everyone, let us try solving the question. Yes, if you think of this question from a purely AFM perspective, you will not be getting the answer. Simple, think of it as a 11th standard student, you will get the answer. Nothing is there. Tell me, sales is given, income is given, dividend and all those things are given. I will just try drawing a pro forma income statement. Look at this, everyone. Let me just try creating a pro forma income statement. Look at this. I will tell income statement. Whatever is given, I will write. Using that, let me try doing it. Okay. Yes, it is pro forma. Anyways, I am not filling the total things. Whatever is needed, that only I am putting. Tell me whether sales is given to me. Yes, boss, sales is given to me. How much is sales? It is all in rupee lakhs, yes or no, everyone? So let me just write rupee lakhs. Tell me how much is my sales, students? Sales is going to be 100 lakhs, yes or no, everyone? 100. Okay. Question has told me net income. I've told you there is a reason why I utter every single word I utter. If one breath is not needed, I would not be taking that. That lazy I am. Yes, there is a reason why I told operating income, EBIT, taxable income, EBT, net income, net profit, net margin, PAT. Why? Because in questions you will keep finding these words. Then you should not think, is it EBIT? Is it EBT? Is it Patesha? If you think like that, I'll kick you out from your own home. Okay? Yes, net income, it is net profit, profit after tax, yes or no, everyone? Yes, profit after tax, it is 12 lakhs, yes or no, everyone? Here if I want, I'll write minus all expenses, cost, tax, expenses, interest, tax, everything. Not needed, this we are doing just for our understanding. That is why I've written pro forma, yes or no, or else let me keep it this way. Sales, let this be separate. Profit after tax is 12, yes. From that I'll be paying preference dividend, yes or no, everyone? Tell me whether anywhere in the question has given me any information about preference. No. 99.999999 percentage questions preference will not be there, so I can directly confidently put a dash. That means tell me what is my patesh, what is the profit available to equity shareholders? 12 lakh is available, yes or no, everyone? In that, how much I've given it to them as a dividend? How much I've given it to them as dividend? Whether the question has told 4.5, yes, 4.5 lakhs, yes or no, everyone? Perfect. Yes, that means my retained earnings 7.5 lakhs, yes or no, everyone? Perfect. Now tell me my patesh is how much? Patesh is how much? 12. Yes. In that, dividend that I have distributed is 4.5, retained earnings is 7.5, yes or no, everyone? Yes, dividend is how much percentage of patesh? It is 4.5 divided by 12. How much it is? 37.5 percentage, yes or no? That is 0.375. This is dividend payout ratio. Yes, retained earnings is how much percentage of patesh? 7.5 divided by 12. It is 0.625, yes or no? 62.5%, that is 0.625. This is my retention ratio, yes or no, everyone? Perfect. Retention ratio I got, not a big deal at all, yes or no, everyone? Till here, is this clear? Any doubt in this? In any case, you should not be getting a doubt at all. Okay. Now tell me. Yes, I want to calculate sustainable growth rate. What is the formula for sustainable growth rate? Sustainable growth rate, G, it is retention ratio into return on equity, yes or no, everyone? Perfect. Retention ratio I've got, how much I've got? 0.625. The only thing I want in the world right now is my return on equity. So here let me just try seeing return on equity. It is return divided by equity. This is all how I will always first write it, yes or no, everyone? Tell me, for equity holders, the return, what will I call the return that I'm generating for equity holders? It is called patesh divided by equity, yes or no? Yes. If equity, share capital, reserves and surplus is separately given, I will add it and write. Yes. Now tell me, patesh, is it available for me? Yes boss, it is available for me. How much is my patesh? 12 lakhs is going to be my patesh, yes or no, everyone? Perfect. Yes, the only thing that I want in the world right now is my equity value. Yes, tell me, you guys have got the value of equity? You guys have got the value of equity? Online live students, equity. No? La 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 la. Total asset is given. How much is the asset? 250. Liability is also given. 220. Credit side, what will be there? Equity is how much? 30. So I told As simple as that. Yes or no, everyone? Perfect. So whenever you are getting, try putting all the data into the respective places. Answers will come automatically. Is this clear, everyone? Perfect. This is also one more formula: total asset minus total liabilities. If you want, you can use, but not needed. Because if you get any of the data, now you can put it in a sample balance sheet. Equity, share capital, reserves and surplus. That you can do. Or else asset liabilities given, that you can do. From there you will get a feel which one you will have to be calculating. Is this clear, everyone? Perfect. So simple. I can tell equity is 30. Equity is total asset minus total liability. 250 minus 220 is equal to 30 lakhs. Is this clear, everyone? So tell me, 12 upon 30, is it 40%, 0.4? Yes or no, everyone? 40%, that is 0.4. That means, can I calculate my sustainable growth rate? 0.625 into 0.4. Yes, it is going to be 0.25. That is 25%. Is this clear, everyone? However, you are right, it is not going to make any difference. But the only thing is, your key answers should be highlighted. All key answers you should put a box. As simple as that. Is this clear? I guess one student had told before itself 25%. Joe, good approach. Okay, everyone, perfect. So with this, we have finished all questions on this. I guess here also they've done. If you see their approach, na, yes, you will go mad. A sustainable growth rate, something they've done. I mean, not in a synchronized order. It is 25%. And what is it that they're asked? Okay, see the question properly. Yes, in the end, you should always read the question again. To what extent sales can be increased? Sustainable growth rate is 25%, and I've shown you in sustainable growth rate. Yes, 25% means everything will keep on increasing 25%. Yes or no, everyone? That means my sales will also increase by 25%. So tell me what was my sales? Sales was 100. Yes or no, everyone? It will increase by 25% and it will become 125. Yes or no, everyone? Perfect. What they've done, okay, this is alternatively. Whatever is alternative, you can just ignore it, okay, so that you don't get confused. This is our main answer: 25%, 125. So yes, 25 percentage. Therefore, total sales after growth. Yes, 100 lakhs anyways I was doing, plus 25 percentage I'll be doing. It is 125 lakhs. Is this clear, everyone? Perfect. Now for the questions that we have solved, if recorded students have not noted it down, yes, I would recommend you guys, yes, write it down. Yes, immediately as and when we are doing, or else now in the end you can pause and write it down. Yes, question 10. Yes, pause, write it down. 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 Is so much. Okay, this is for the next thing. Okay, pause, write it down. Pause, write it down. Pause, write it down. I guess cross multiplication did I show? No. Okay, anyways, this question also you guys can pause and write it down. Pause and write it down. Pause and write it down. Is this clear, everyone? Okay, here below I've written calculation of additional sales. Is this clear, everyone? Perfect. So with this, we have finished the concept of sustainable growth rate, as well as all the questions associated with sustainable growth rate as well. In simple essence, one liner: sustainable growth rate, it is going to be my, yes, retention ratio into the return on equity. Is this clear, everyone? Perfect. So with this, we end this session. See you guys in the next session for more exciting knowledge learning. See you guys there. Bye. Yes, everyone. So, welcome back after the break, my dear students. I hope you guys are thoroughly enjoying the discussion. So, it is now time to take our discussion slightly forward. We have one or two more small things to finish it off. With that, the entire concept and all variants of questions will be done with. Now, calculation of cost of equity. Whenever I am calculating value of a share, it is the present value of future cash flows discounted at required rate. In case of equity, it is the cost of equity. Yes or no? So for that purpose, I want cost of equity. In what all ways cost of equity can come? I have summed it up. Either option number 1, question can give me beta. In that case, using my CAPM model, I will calculate cost of equity. It is RF plus beta into RM minus RF. Yes or no? This we have seen. Or else, what will happen is, question will give me price of the share. Question will give me D1. Question will give me growth also. Only KE will be missing. If you want, there is a separate formula for that. I guess D1 divided by P naught plus G, something of that sort. No need. Dividend discount formula, you know. Yes or no, everyone? P naught is equal to D1 divided by KE minus G. KE, keep it as missing figure. You will get that. Is this clear, everyone? Perfect. Now, there is one more situation. In case of two stage or yes, variable growth rate, na, we'll be having different cash flows, multiple cash flows. In that case, say for example, every year dividend I know. At the end of it, I know the price also. Okay, but today's price also I know. But what is the required rate of return? I don't know. In that case, how we'll be doing? We will be using interpolation technique or IRR that we have learned in our CA interdays, and we'll be applying that. Yes, simple IRR technique is, I guess we are having a formula for IRR technique. What is the formula for IRR technique? Da? I guess it is NPV at lower rate plus, what is it? Something is there. What? Higher rate minus lower rate divided by NPV at higher minus NPV at lower into whatever it is. Nonsense. I don't know. Okay. Yes. NPVU minus NPVD. What all nonsense is there? Okay. We'll take 10-15 minutes. Once this is done, trust me, all parts of basics are done. Nothing more is there. Okay. Yes. This is going to be one of the final things that we are going to discuss. Beautiful thing. Okay. Again, just using basics of time value, we will keep on playing. Pay attention, pay attention, pay attention. First, let us try doing it in a very simple way. Yes, everyone. Imagine. Yes, everyone. Now let us try actually understanding the logic as to what IRR is, what interpolation is, why it is needed, all those things in a beautiful way, in a way you have not seen at all. Okay, slowly let us build. Imagine. Yes, Koti invested in a project. Simple project he invested. Today he invested 100 rupees. At the end of first year, he is getting 110. Story is over. He wants to know how much percent return he is earning. In a simple way also I can do. Tell me students, 100 has become 110. That means how much return it is? Put it on silent. How much return I am getting? 10 rupee return I am getting. Yes or no? On an investment of 100, that means 10% I am getting. Yes or no, everyone? That is one way of doing. Or one more way of doing. Tell me, today I have invested 100. I want to take it to the future. Into 1 plus R. That should be giving me my future value. In future, how much it is? 110. Yes, how much is my rate of return? I don't know. Let me keep it as it is. So my 1 plus R is equal to 110 into, goes to the other side, becomes divide, becomes 1.1. Therefore, my R is equal to 1.1 minus 1. It is 0.1. This way also I can be doing. Yes or no, everyone? Perfect. Yes. So, when you are having only one cash inflow and one cash outflow, directly you can calculate your return. No tension at all. Yes or no, everyone? Perfect. Or alternatively, I can be using interpolation also. But now, just using the existing knowledge, let me create another example. Imagine. Yes. I have put 100 rupees in the project. I am getting 70 in the first year, 60 in the second year, 50 in the third year. I want to calculate how much return I am getting. Is this clear, everyone? Perfect. Now, understand. Yes, 100 I have invested. Total how much I am getting? 70 plus 60, 130 plus 50. 180 I am getting. So can I tell 100 I put 180 I am getting? That means total 80 I am getting on 100, 80% return I am getting. Is it possible for me to tell? No. Why? Cash flows are in different period. How much return I have earned? I don't know. Let me do one thing. Let me assume that the return I am earning is X. Is this clear, everyone? So we are assuming that the return I am earning on my investment is X%. So let me try calculating present value of all the cash flows. Tell me, first year I am getting 70. Let me bring it back 1 year. So it is going to be present value. It is 70 divided by 1 plus x. Yes or no, everyone? Second year I am getting 60. I am bringing back 2 years. So it is 60 divided by 1 plus x whole square. Plus third year I am getting 50. It is going to be 50 divided by 1 plus x to the power of 3. Yes or no? That should give me the present value. And today how much I'm investing? Today I'm putting 100. It should be equal to 100. Yes or no? If I want, yes, I can try simplifying solving this. Okay, only for 3 years, power 3 and all has come. By the time you solve, okay, your life would have gone. Your granddaughters would come. Okay, and your grandkids would tell, my grandfather had 15 acres, but he had 7 daughters. Because of that, you don't have anything. Yes, for recorded students, you would not get the reference. Yes, this was a joke which a student had told in the live class, that their grandfather had 15 kids, but because they had 7 daughters, all the wealth got distributed, or else today they would be owner of 15 acres. Okay, so today they are having nothing. But Koti Reddy is not like that. Koti, you know what is Koti Reddy's valuation today? Koti Reddy is having a valuation of 13 CR. Future. You discount it to present value using a required rate. Okay, you will get. Now, so 3 acres of land his dad is having. All his sisters got married, so that 3 acres is for him. And the person whom, yes, Koti Reddy is loving, yes, her father is having 10 acres. Okay, and she is the only daughter. That is the reason for Koti Reddy to love her. So 13 acres. Every acre land is having a valuation of 1 CR right now. So 13 acres. Sorry, 13 CR. 13 crore value Koti Reddy is having. And what is the thing Koti Reddy do to earn 13 CR? Be born. Line should be straight. Okay. For Koti, we are preparing consolidated balance sheet. Okay. Yes. Now, if you are having too much interest in maths, you can sit behind that, crack your head, go mad. Yes, quadratic equation, power, everything will happen. Okay. Still, you will not be getting the answer. You will go mad only. Is this clear, everyone? So now what we are doing is, for this purpose, what we are doing is, we are saying if there is any other way for me to calculate. Now what we are doing is, sometimes we randomly throw stones. Yes or no? Trial and error. If it hits, it hits. Yes or no? Koti Reddy first went to the girl who was having 20 acre land. I love you. If it hits, it hits. Or else no. 15 acre. I love you. If it hits, it hits. No. 10 acre. I love you. I love you. Over. Yes or no? Trial and error. Yes, throwing stone. If it hits, it hits. Jackpot. Or else we'll try something else. Yes or no, everyone? Okay. Now let us try doing. There are different ways for me to do it. Okay, now let me try doing it the NPV way. That is how you would have learned it. Or else I can compare cash flow, I can take it to future, I can bring it to present. If you know the basics, however you want to play, it is not going to make any difference at all. Now suppose I'm telling, okay boss, there is a project in which if I invest 100 today, in future how much I'm getting? 110 I'm getting. Assume I don't know how much is the rate. I know it is 10%, but assume I don't know. I want to interpolate. Let me see. Yes, am I getting 10% return from, sorry, am I getting 5% return or not? Let me try seeing. Let me discount my cash flows at 5%. Tell me in future how much I'm getting? 110. If I discount it at 5%, what is going to be the present value of cash flows? 110 divided by 1.05. How much is it? Present value of cash inflows. It is going to be how much? 104.76. Yes, minus initial investment is 100. That means my NPV is how much? 4.76. Yes or no, everyone? Perfect. That means, now try understanding the interpretation. What does that mean? It means this project, will it give me 5%? Yes, it gives me 5%. Yes or no? Yes, it gives me 5% because the present value of future cash flows is 104 and I'm putting 100 only. 5% it gives, and a bit more than 5% only it is giving me. Yes or no, everyone? Perfect. So it is giving me a bit more than 5%. So let me try increasing the rate. Let me try putting one more stone to see how much it is giving me. Okay, let me try discounting it 8% and see if I'm getting 8% or not. So 110 divided by 1.08, how much is it? 1 or 1.85, I should be willing to pay, but I'm paying 100 only. That means I'm still having a NPV or a net benefit of 1.85. What does that mean? This project, is it giving me 8% return? I have discounted by 8%, na? Okay. This project, is it giving me 8% return? Yes. In fact, it is giving me slightly more than 8% only. Yes or no, everyone? Perfect. So let me try seeing. Let me try discounting at 11% and see if it gives me 11% or not. Tell me if I try discounting at 11%, 110, sorry, 12%, I guess I've written. Whatever it is, doesn't make a difference. 110 divided by 1.12. How much is it giving me? 98.21 is the benefit, but I'm paying how much? 100. That means my NPV is a negative. It is going to be minus 1.78 or 79. Yes or no, everyone? Perfect. That means tell me, students. My return, yes, whether the project is giving me 8%, yes, it is giving me 8%. Is it giving me 12%? No, it is not giving me 12%. That means it is lying somewhere in the middle of 8 and 12%. Yes or no, everyone? Perfect. So let me tell whether my project is giving me 8% returns. Yes, it is giving me 8%. Is it giving me 12% returns? No, it is not giving. So it is lying somewhere in the middle of that. Yes or no, everyone? Perfect. Tell me at 8%, my NPV is how much? 1.85. At 12%, my NPV is how much? Minus 1.79. Yes or no, everyone? Now I want to know how much return exactly I am earning. Yes, exactly how much return I'm earning. It is a point at which my NPV is 0, net benefit is 0. Is this clear, everyone? I want to come to this point. Okay, very simple, very simple, very simple. Draw a line, line should be straight. That's all I know. I don't know anything else. Now, let me start from here. Look at this. I am not going to touch the formula. Very simple way we are going to do it. Okay. Tell me, am I earning 8% return? Yes or no, everyone? Yes. I am earning slightly more than 8%. So, 8% plus. Now let me try seeing. Tell me, students. If I increase the discounting rate by 4%, what is happening to my NPV? From 8%, I took it to 12%. What is happening to my NPV? From 1.85, it is coming to minus 1.79. Look at this if you are having a doubt. 0, this is 1.85, this is minus 1.79. So how much it is falling? How much it is falling? 1.85 plus 1.79, 3.64 it is falling. Second standard maths, line 0 plus, plus to 0, 0 to minus. Yes or no, everyone? 3.64 it is falling. Yes or no, everyone? 3.64 it is falling. Till here is it clear? So what I will write? Cross multiplication. Yes, percentage value. Yes, if my percentage is increasing by 4%, my value is decreasing by 3.64 rupees. Is this clear, everyone? Tell me, I want my value from where I've started, from 8 I've started. I want my value to come from 1.85 to 0. That means I want my value to decrease by how much? By 1.85 only. So I want my value to decrease by 1.85 only. So first let me write the direction, whether the percentage should increase or decrease. It should increase, yes or no, everyone? How much it should increase? Cross multiplication, yes or no, everyone? So it is 1.85 into 4 divided by 3.64. Yes or no, everyone? 1.85 into 4 divided by 3.64. It comes to 2.03. So it is going to be 8 plus 2.03, 10.03%. Is this clear, everyone? So whatever I'm getting through interpolation, yes, it is the exact, it is approximate. A small rounding off would be there. Is this clear, everyone? Yes or no, yes or no, yes or no, everyone? Yes. Trust me, all you'll have to do is, yes, draw a line, write down, cross multiplication. You will never commit a mistake. If you sit and by heart formulas, trust me, what formula it is, God knows. I myself don't know that. Is this clear, everyone? Okay. Okay. Yes. Now. If I want, I can do the calculation from 12% also. That also let me try showing it to you guys. Now pay attention, pay attention, pay attention. Same answer, let me try getting it in a slightly different way. Look at this, students. Let me try starting from 12%. Let me add another page. Yes, from 12%. Let me do the calculation. Tell me, I thought that 12% return I might be getting. But tell me, in reality, do I get 12% return? No, it is slightly less than 12%. So I will do minus, yes or no, everyone? Yes. How much less? Tell me, from 12%, now from 12%, if I reduce my discounting rate by 4%, if I reduce my discounting rate by 4%, yes, the value will increase by how much? From minus 1.79, it will go to 0, it will come to 1.85. That means my value will increase by 3.64. Yes or no, everyone? So I will tell, okay boss, if I reduce percentage by 4%, value will increase. Percentage value will increase by how much? 3.71. Yes or no, everyone? Perfect. Now tell me, I want to increase. Where am I standing? Here I am standing. I want to increase my value from here to here. That means I want to increase my value by 1.79 only. Yes, I want to increase my value by 1.79 only. That means by how much percentage should I reduce? Yes or no? It is going to be 1.79 into 4 divided by 3.71. 1.79, 1.64 is it? No, 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 no. From here I'm going, no? 1.79. That is total 3.64. Oh, sorry, this is 3.64. Okay. Yes, 1.79 into 4 divided by 3.64. Yes, it is. I'll have to reduce it by 1.97 percentage. So it is 12 minus 1.97 percentage. Huh? Yes, it is going to be, what you guys are doing, the 10.03 percentage. Yes or no? Yes or no? Yes or no, everyone? Perfect. Is this clear? Is this clear? Is this clear, everyone? Perfect. Now there can be multiple different ways through which I calculate it also. Here I have calculated NPV. Without NPV, just by keeping cash flows also I can do. By bringing all cash flows to present also I can calculate the required rate. By taking cash flows to front also I can do. Anything in the world I can do. It is basically you're playing with the cash flows. As simple as that. One more thing I will show it to you guys. That's all. With that we'll go to the example. We'll do it properly. We will end it off. Pay attention. Yes, using this basic example. Let me just copy it. Because at different places, institute has done it in different ways. If you want, you can by heart. NPV at lower rate, NPV at higher rate, all those things. Okay, now here let me try doing it using cash flows only. Anywhere you can take cash flows. You can bring it back, you can take it front also. Anything in the world you can do it. Okay. Now what you want me to do? You want me to bring the cash flows back or take the cash flows front? What you want to do? Anything in the world. We'll take it front. Okay. Let me try seeing. Yes. If I take my cash flows front at say 8 percentage, how much should the future value be? 100 plus 8%, it will reach 108. Yes or no? At 8% it will reach 108. But my cash flow is how much? 110. Okay, let me try taking the cash flows front at 12%. How much it should be? 100 plus 12%, 112. Yes or no, everyone? So tell me, if I add 8% return, my value will be 108. If I add 12% return, my value will be 112. But I want my value to be how much? 110. So tell me, am I earning 8% income? Yes, boss, 8% anyways I'm earning. How much extra I'm earning? If I increase 4%, na, value is increasing by 4. If I increase 4%, na, value is increasing by 4. Yes, I want the value to increase by how much? 2 only. That means how much percentage I should be increasing? Plus 2 into 4 by 4, it is 2%. So 8 plus 2 is equal to 10%. I want to bring it back. Do it. When you're bringing it back, you're comparing it with this value as a base. Yes or no, everyone? You bring it back at 8%, you get the value. You bring it back at 12%, you get the value. Then you interpolate. As simple as that. Is this clear, everyone? As simple as that. Perfect. I can give you 3-4 formulas. In case if you are going front, what is the formula to sit and by heart? If you are coming back, what is the formula? If you are doing in terms of NP, what is the formula? But for that, I'll have to see from chat GPT and give, because I don't remember. Is this clear, everyone? Okay, why you will have to remember? It's as simple as that. Is this clear, everyone? Now I've given you one more final example. Here I'm just going to apply my, yes, throwing the stones technique. Yes or no, everyone? I will see. Yes, this much I'm getting. If I'm getting more, okay, let me try. Is this clear, everyone? Imagine there is a project. I invest 100 today. First year I'm getting 70, second year I'm getting 60, third year I'm getting 50. I want to know in reality how much return I'm getting. Is this clear, everyone? I've told you, if you want, you can discount cash flows by assuming X%. You will go mad. Is this clear? It is not going to happen. So I'll have to do interpolation only. Is this clear, everyone? So let me try writing down and let me try seeing. Tell me. Year 0, how much I'm paying? 100. Year 1, how much I'm getting? 70. Year 2, how much I'm getting? 60. Year 3, how much I'm getting? 50. Yes. First, nothing is given. Let me try discounting at 10 percentage and see what is happening. Yes. If 10 percentage. Present value factor. Present value. Yes, this is year 0. Year 0's present value is 1. Yes, this is 0.909. 0.826. 0.751. Yes or no? Can you guys tell me how much is the NPV going to be? 70 into 0.909. 60 into 0.826. 50 into 0.751. Yes, minus 100. Yes, 50. 0.74, something of that sort. Yes or no, everyone? Perfect. That means tell me whether this project is giving me 10% returns. Yes, boss. In fact, it is giving me way more than 10% returns. Yes or no, everyone? Perfect. Let me try using another rate. Let me try taking, say, for example, why will I reduce? I'm getting more than 10%. Nah, I will increase the rate. Let me try discounting at 15%. Is this clear, everyone? Present value factor. Present value. This is going to be 1 divided by 1.15, 0.870, 0.756, 0.658. Okay. Now 70 into 0.87, 60 into 0.756, 50 into 0.658, grand total minus 100. You're still left with 39. That means I am getting somewhere around 25% range, I guess. 25 to 30%. Okay. Let me try discounting directly using 30 percentage. Let me see. Let me try my luck. It would be close. Or I guess 25, 30 would make sense, I guess. 25, let me try. I guess 25 and 30 would make sense. Yes, 1 divided by 1.25, 0.8, 0.64, 0.512. Yes, so 70 into 0.8, 60 into 0.64, 50 into 0.512 was 120 minus 100. Oh, still I'm having 20. 30 only I should have done. You try 40. Okay, because these cash flows are random. I'm just trying. Okay, I've just randomly put numbers. I guess 40 we can easily do. 1 divided by 1.4, 0.714, 0.510, 0.364. So tell me the total value. 70 into 0.714, 60 into 0.510, 50 into 0.364, grand total minus 100. Okay, fine, minus 1.22. Okay, so it is coming somewhere in the range of 35 to 40. Let me try discounting using 35 percentage. 1 divided by 1.35. I can keep it very close also, but this is anyways time pass only, na? So it doesn't make much of a difference. 0.741, 0.549, 0.406, 0.741 into 70, 0.549 into 60, 0.406 into 50, grand total minus 100, it is 5.11. Okay, fine. Yes or no, everyone? Perfect. That means tell me, in this project, am I getting 35% return? Yes. I am getting more than 35%. But am I getting 40%? No, slightly less than 40%. So what we will do? Yes, for most of the questions for us, yes, for most of the problem, we have one solution only. What? Draw a line. Line should be straight, whether you are straight or not. Yes or no, everyone? Perfect. Tell me, at 35 percentage, my NPV is going to be 5.11. Yes. At 40 percentage, my NPV is minus 1.22. Yes or no, everyone? Am I earning 35%? Yes, boss. I'm earning a bit more than 35%. Yes or no, everyone? How much more I want to see? So I'll tell boss, I'm earning 35. Yes, I'm earning a bit more than 35. Tell me, if I increase the discounting rate by 5%, yes, NPV will reduce by how much? From 5.11 it will come to 0. From there it will come to minus 1.22. 5.11 plus 1.22. 6.33 it will reduce. Yes or no, everyone? So if I increase percentage value, if I increase how much, 5%, 5% increase means 6.33 value will decrease, yes or no? Where I am standing, I am standing here. Yes, I want my value to decrease by how much? 5.11 only. That means by how much my percentage should increase? Cross multiplication, 5.11 into 5 divided by 6.33. 5.11 into 5 divided by 6.33, it should increase by 4.036% plus 35, it makes it 39.036%. Is this clear, everyone? Perfect, yes or no? Yes, everyone. The same thing alternatively using cash flows also I can do without taking NPV. That is, I will ignore this number. I will calculate present value of all cash inflows at both the rates. Here I guess I will get it as 105.11. Here I'll get it as somewhere around 98.78. Yes, I want 100. So it will come in the middle of that. Using that also I'll get the same value. Yes, on anything in the world you do da. You're basically playing with the same thing. Is this clear? It's not necessary you should always calculate NPV. Yes, so long as your base is strong, you can play it the way you want. Is this clear, everyone? Okay, perfect. I hope the concept of interpolation is clear. Yes or no, everyone? Why am I doing interpolation? Okay, boss, multiple years, multiple cash flows is there. Yes, I can assume a factor of x percentage and do it. But in case of multiple years, 1 plus x square, 1 plus x to the power of 3, that becomes very difficult, yes, to solve. So for that purpose, what we are doing, we are throwing random stones. Okay, am I getting 10%? Okay. If yes, let me try 15%. If yes, let me try 20% also. If yes, let me try 25% also. Accordingly, I will try estimating. Is this clear, everyone? Yes, the simple way I will be doing interpolation is first using random rates, I will try getting the values. Yes, and then I will draw a line from there. Logically, I will do this. Is this clear, everyone? Perfect. Okay. So if we come to, yes, I guess in the concept book, yes, unit 0, advanced capital budgeting. Again, we have put the notes for this one, interpolation technique. There again, we would need that. Yes. But here also, in a simple way, I guess I've put it. Okay, calculation of IRR. It has become a bit blurred, I guess. Okay, fine. Yes. IRR, it is the actual rate of return earned by a project in terms of present value terms. It is a discount rate at which NPV is equal to 0. Yes, steps. Calculate all cash flows from the project. Yes, bring it to present value. Calculate NPV using two imaginary rates. Apply interpolation technique and calculate IRR. Is this clear, everyone? Perfect. Now, why on earth did we learn this? What is the reason? Okay. Yes, let us try understanding it properly. Pay attention, students, using a workbook example. Let us come back. This is over. Let us come back. Okay, let me just pause the video. Yes, everyone, I have given you guys a crux of IRR. Now understand what is going to happen for us in the questions. We will be having a question on, yes, two stage or variable growth. That is, question will give you multiple dividend. Year 1, year 2, year 3, year 4, year 5 dividend would be given. Price may also be given. I want to know how much return I've earned. I don't know. So what I'll be doing, I will use some imaginary rates. I will pull. I will see, is it close to the price? Or else I'll take another rate. Then using interpolation, I'll be calculating how much return we've earned. Very simple jujube thing only. Is this clear, everyone? Okay. Now let us try seeing one example using that. One more question is also there. Okay. Example number 9. Calculate cost of equity in the following cases. Situation number 1. Calculate cost of equity if D0 is 100, growth is 5%, and P0, that is the price today, is 2100. Tell me, this aram se can I do just by putting my, yes, Gordon's growth model? Yes, tell me, value of an asset or price of an asset. Yes, it is nothing but D1 divided by KE minus G, price of an asset. Yes, tell me, P0 is how much? 2100. D0 is 100, growth is 5%, so into 1.05 divided by cost of equity, I don't know, minus growth is 0.05. Yes or no, everyone? Simplify and tell me the value. 2100 into KE minus 0.05 is equal to 100 into 1.05 is 105. KE is equal to this into, goes to the other side, becomes divided. Yes, it is 105 divided by 2100 minus 0.05 goes to the other side, becomes plus 0.05. You can do it slowly also, absolutely no issues. I am just combining steps and do it at once. Is it clear? So I guess my cost of equity is coming as 0.1, that is 10%. Yes or no, everyone? Perfect. Okay. If that is clear, now we are having the next situation. Look at the next situation, my dear students. Okay. Company expects to pay a dividend of 50, 70 and 100 in the first 3 years. Tell me, students, what is happening? We'll draw a line. We are standing here. Company is telling that, boss, we will pay you dividend. How much? 50 in first year, 70 in second year, 100 in third year. Okay. Investor expects to sell the share at 800 at the end of 3 years. He is telling at the end of third year I will sell it at 800 also. Okay. Calculate KE. If the current market price is 750, today how much I am paying? 750 I am paying. Is this clear, everyone? That means when I take a present value of my cash flows, it should reach 750. That is the actual rate I am going to earn. Is this clear, everyone? Now, otherwise we will randomly take rates and we'll start doing our calculation. But most of the times in exams, rates will be given. If rates are given, I will use the rate which is given in the question. Is this clear, everyone? Okay. Let me try doing the calculation. Very simple, GGB this is going to be. Tell me, students, first year how much cash flow I am getting? First year I am getting 50. Second year I am getting 70. Third year I am getting 800 plus 100. That is basically 900. Yes or no, everyone? Let me try seeing. Am I getting 10% return or not? Tell me the factors. 0.909, 0.826, 0.751. Yes, calculate and tell me the total present value, students, quickly. 50 into 0.909, 70 into 0.826, 900 into 0.751, 779. 0.17. Yes or no, everyone? Perfect. Now try understanding and interpreting. Pay attention, class. Try understanding. If I discount all my cash flows at 10%, what is the value? 779. What does it mean? It means that if I am paying 779 for this asset and I'm getting these three, that means how much return I'm getting? 10% return I'm getting. Yes or no? But tell me how much I am paying? I am paying more than that. I am paying 800 rupees. Yes or no, everyone? Perfect. That means tell me. This is 779, huh? If I'm getting, okay, fine. I guess I've committed a mistake in taking interest rate factors. Okay, let me try pulling at 12 percentage also and see if there's a need. I'll take another factor. Tell me. 0.893, 0.797, 0.712. Tell me what is going to be the value. 50 into 0.893, 70 into 0.797, 900 into 0.712, 741. Yeah, that's the thing. 24. Yes, I should have technically taken, I guess, close to 7%. Let me discount it at 7%. Okay. Yes, students, there is a logical flaw. Yes, in this rates, I mean, using this also I can do, but it's going to be different. Okay. So what I would say is, let us discount using 10% and 7%. Okay. I guess when I was doing this, or else we'll do one thing. Wait. Let's not change this. We have a technique. 779, 740. Let's keep it 750. Koti, simple. Sorry, not this. Oh, da. Current market price is 750 only. What on earth you are doing? Like this mistakes you should not do. You should keep your eyes open. Okay, see. Yes, if you wanted, you could have written here also. Price was 750. That is why I generally write the data, because I know in the end I will also commit mistakes. This I did not do. Just to tell you what not to do. Okay, I did all these things. Okay, fine. Okay, yes, everyone, pay attention. I just saw, okay, price of 800. So I thought it was that price. It was at the end of third year. What, Koti? Just calculating 10 acres is not sufficient. Question also you should read properly. Yes, everyone. Extremely sorry, students. Okay, yes, the data is absolutely fine. Perfect. No issues at all. Yes, perfect. So tell me, students. Yes, now let us come into interpretation. If I am paying 779 for the asset, na, I will get 10%. But tell me, am I paying 779? No, I'm paying 750 only. That means I'm getting slightly more than 10%. Yes or no? And slightly less than 12%. Perfect. So how much return I'm getting? Let me try calculating. Very simple interpolation. Yes, we will draw a line. Line should always be straight, whether you are straight or not. Yes or no, everyone? Tell me, at 10%, what is the value of the asset? 790, 779.17. Yes, at 12%, what is your value? 741.24. I want the value to be how much? 750. Yes or no? Tell me, am I earning 10%? Yes. Am I earning a bit more than 10%? Yes. How much more? If I increase my required rate by 2%, I am standing here. Yes, my value will decrease by 779.17 minus 741.24. It will reduce by 37.93. Yes or no? So let me write it here. Yes, percentage value. If I increase 4%, value will decrease by 37.93. Yes, 2% are correct. What is happening now for me? 2%. Okay, yes, I want my value to decrease by how much? Tell me, where am I standing? Where am I standing? I am standing here. Okay, from here, I want the value to come to here. That means I want the value to decrease by 29.17 only. Yes or no, everyone? Yes, that means by how much percentage I should be increasing the rate. Cross multiplication, it is 29.17 into 2 divided by 37.93. Yes or no, everyone? 29.17 into 2 divided by 37.93. It is 1.54 plus 10. It is going to be 11.54 percentage. Is this clear, everyone? Perfect, everyone. So we've calculated, yes, how to calculate cost of equity using interpolation technique also. So coming back to our concept book, students, pay attention, pay attention. Yes, just let this sink in. Okay, calculation of cost of equity. If beta is given, I will do as per CAPM. All other data is given, I will calculate as per Gordon's growth model. But it is not possible for me to calculate it this way. Multiple cash flows are there. What I will do, I will use interpolation. At random rates, I will try pulling it off, and then I will use interpolation technique and accordingly calculate cost of equity. Is this clear, everyone? Yes, using this, I'm having an example also. That also I've linked. So that once you finish this off, here I can write in detail how to do interpolation, all those things. Better than that is I've given you an example. You can go there, refer the example, things will be clear for you. Is this clear, everyone? Perfect. Now using this, just by using this, you guys are having question number 13. Okay, yes, I want you guys to be solving this question. Is this clear, everyone? Very simple question. It is going to be quickly solved, students. Giving you guys 2 minutes to read and understand the question, then we will solve it together. Yes, everyone. So let us try solving this question. Very simple JGB question. You should just write down whatever data is available. And whatever is not available, whoever is not available in life, whom do we call them as? We call them as X. As simple as that. Let us try seeing. Yes, question number 13. It is just a study material question. Okay. Piyush Lunkar and Associate presently pay a dividend of 1 per share. Presently. That means what kind of dividend is? D naught is going to be 1. Yes or no, everyone? Okay, perfect. Presently I'm paying 1 rupee dividend. Okay. And has a share price of 20. Okay, right now the price is going to be 20. Yes, if this dividend is expected to grow at a rate of 12% per annum forever, perpetuity, what is the firm's expected or required rate of return using dividend discount model approach? Okay, this is very simple. Let me try doing it. Tell me, students, tell me. D naught is going to be equal to how much? 1. Yes or no, everyone? Price is going to be equal to 20. Yes. Price is equal to D1 divided by KE minus G. Yes or no? It is 20 is equal to D1. 1 into how much is a growth rate? Growth rate 12%. Yes, into 1.12 divided by KE minus G. Yes, minus 0.12. If you simplify this, how much is going to be your KE, students? 17.6 percentage. Here there should absolutely be no scope at all for any doubts. Yes or no? Now coming to the second requirement. Okay, instead of this situation in part 1, that means part 1 completely you cancel it out. Okay. Suppose that dividends are expected to grow at 20% per annum for 5 years. Tell me 5 years how much percentage it is going to grow? 20%. And 10% thereafter. From then on, 10% till perpetuity. Now, what is the expected return? Is this clear, everyone? Yes. We are not getting a complete picture as to what to do. But we know one thing. Any question comes, what we'll do? Koti, draw a line. Line should be straight. Yes or no? Let us do that afterwards. Subsequently, we'll think pictorial representation. Let me put it here. Yes. 1, 2, 3, 4, 5. So on up to perpetuity. Tell me for the first 5 years, at what rate my dividend is growing? 20%. So I will do 1.2 into 1 gives me 1.2. Yes, second year gives me 1.44. Third year gives me 1.728. I'll write it as 1.73. Fourth year gives me 2.07. Fifth year gives me 2.49. Till here, is this clear? Any doubt? No. Now, normally, I will be calculating price at the end of fifth year. Yes or no, everyone? Tell me, how do I calculate price at the end of fifth year? It is a D6, next year dividend, divided by KE minus growth. Tell me, is it possible for me to calculate D6? Yes, boss. I know the growth. It is 10%. So I can tell it is a 2.49 into 1.1. Do I know cost of equity? Do I know cost of equity? I don't know. Whatever things I don't know in life, I will assume it as X. X minus, tell me what is my growth? 0.1. So my P5 is nothing but 2.49 into 1.1 divided by, that is 2.739 or 2.74 divided by X minus 0.1. Is this clear, everyone? Yes or no? Yes or no? Yes or no, everyone? Perfect. Now I'll have to try interpolating. Any random rates I'll have to be doing. Now in the exam, you need not worry at all. Question will give you two different set of rates, either 2 or 3 it will give you. Okay, here what I'm doing is I've seen the solution, whatever rates are there, that only I'm doing. I will not keep playing 10%, I'll do 15, I'll do 18, I'll do 20, I'll do. In the exam, question will give you the rates. Don't worry. This is just a study material question. If it would have come in either MTP or past paper, you will see that rates will be there. Institute doesn't take risk only because their evaluators don't know what is happening. Yes or no? That is why they will only give the rates. Is this clear, everyone? Okay. I will discount using 18% and 19% because it will fall in the middle of that. Okay, fine. Let me try discounting the cash flows at 18%. If I'm discounting the cash flows at 18%, na, yes, first I will write down D1, D2, D3, D4, D5. There is absolutely no doubt. Yes, step 1, calculation of dividend. I will write D1 value, D2 value, D3 value, D4 value, D5 value. Here there should be absolutely no doubt. Yes. Step 2, calculation of price at the end of my uneven growth. Yes, it is at the end of fifth year. Yes, I know the formula for P5. P5 is equal to 2.74 divided by, yes, KE minus 0.1 or X minus 0.1. Yes or no, everyone? Yes, if I am assuming that I am earning 18%, yes, if KE is equal to 18%, then P5 is equal to 2.74 divided by 0.18 minus 0.1. It is 2.74 divided by 0.08. It comes to 34.25. Yes or no, everyone? Perfect. Yes, if I am assuming cost of equity is equal to 19%, then P5 is equal to 2.74 divided by 0.19 minus 0.1, which is 2.74 divided by 0.09. It comes to 30.44. Yes or no, everyone? Perfect, perfect, perfect. Yes, just you will have to be present in the moment. Do not confuse. Do not mistake. Is this clear, everyone? Perfect. Suppose I'm telling, imagine company is earning 18% return. Total how many years are there? 5 years. So I will write down year 1, 2, 3, 4, 5. Tell me first year what only I am getting? Dividend only I am getting. How much is my dividend? 1.2. Second year only dividend I'm getting, how much it is? 1.44. Third year only dividend I'm getting, how much it is? 1.73. Fourth year dividend only I'm getting, how much it is? 2.07. But fifth year I'm getting dividend also, sale price also. Yes or no, everyone? Yes. If I am getting 18% means my sale price is dependent on 18%. Yes or no? What is the selling price at 18%? Tell me, everyone. 34.25. Yes. If there is a need, I can write year 5. This is going to be dividend. Dividend is how much here? 2.49. 2.49 plus how much was the price here? 34.25. Yes or no, everyone? 34.25. How much is it going to be? 2.49 plus 34.25. It is 36.74. Yes, write down the present value factors at 18%. Yes, 1, 2, 3, 4, 5. Calculate the present value. Do a summation of it. Yes, I guess the summation of the present value is going to be 20.23. Yes or no, everyone? You will have to be careful here. Is this clear? Now coming to 19% rate. Year 1, 2, 3, 4 dividend only I'm getting. Absolutely no issues. Fifth year dividend also I'm getting. Sale price also I'm getting. Sale price from 19% I should be picking. Is this clear, everyone? Yes, obviously. Yes, as and when we are advancing some things, it is not going to be as simple as 1 plus 1 is equal to 2. Aha. You're at the final level. Yes, things are not going to be complicated, but it is not going to so happen that without using your brain, keeping your brain at home, you can solve. No. You will have to be using your brain. Is this clear? It is not complicated. The only thing you had to do was, okay, boss, you estimated dividend for 5 years. You wanted price at the end of 5 years. Okay, K you didn't know. Yes, if it is 18%, what is the price? If it is 19%, what is the price? Now discount, now interpolate. As simple as that. There is nothing more. But you will have to be present, focused, do it 1 or 2 times. Is this clear, everyone? Tell me, cash flows is going to be, yes, 1.2, 1.44, 1.73, 2.07, and in case of fifth year I will get a dividend plus sale price. I guess it comes to 30.43. 30. Fifth year dividend plus cash flow, na? 2.49 plus how much is it? 30.44, is it? Okay, fine. So how much it is? 32.93. That means if you guys are calculating, how much is going to be this one? 17.89. Close to that? Yes or no, everyone? Perfect. Small rounding off would be there. Yes, recorded students, these things you should be doing by yourself. Okay? Da, you guys are confident, na? Huh? Or should I be doing the calculation? No, right? Okay, fine. Yes, everyone. So now if this much is over, now it's going to be very simple for me. Tell me. I'll draw a line. Tell me, if I discount my cash flows at 18%, yes, how much is the value? 20.23. But tell me, am I paying 20.23? No, boss. I am paying how much only? I am paying, I guess, 20 only. How much is the price that I am paying? 20 only I am paying. So I am getting a bit more than that. Yes, if I discount cash flows at 19%, how much I am getting? 17.89. So using this, I'll be calculating my actual rate of return. Yes, now look at this. Pay attention. Am I earning 18% return? Yes, boss, I'm earning 18% return. Am I earning a bit more than 18%? Yes, boss. How much more? If I increase 1%, if I increase 1% percentage value, 1% if I increase, my value will decrease by how much? From 20.23 it will come to 17.89. 20.23 to 17.89. My value will decrease by 2.34. Yes or no, everyone? Yes, I want my value to reach where? 20. That means I want it to reduce by how much only? 0.23 only. Yes or no, everyone? Yes, that means how much percentage should I increase the rate? It is 0.23 into 1 divided by 2.34. So 0.23 divided by 2.34 plus 18, it is going to be 18.098 or 18.1%. Is this clear, everyone? This is going to be our answer. Let's have a look at the question bank. First one was 17.6 percentage. Yes or no? That was the answer we got, I guess. Second, here it is going to be, if you see their answer, you will go mad. 18.1 percentage only. Is this clear, everyone? Perfect. This is the formula. LR plus NPV at LR divided by NPV minus whatever it is. Is this clear, everyone? Perfect. So with this, we have finished question number 13. Okay, very simple, crisp crux, my dear students. Pay attention, pay attention. This is going to be the crux. I want to calculate K. Beta is given, I will apply CAPM. All other data is given, growth is given, I will put Gordon's growth. But different here, just cash flows are given, or variable growth stage is given. That is 5 years it will increase by 20%. Yes, at the end of it, it will increase by 10%. Yes, today's present price is given. How will I calculate? First, D1, D2, D3, D4, D5, I can calculate, absolutely no tension. Yes, price at the end of uneven growth, it depends on my cost of equity. Cost of equity rates will be given. At both the rates, I will calculate the price. Yes, at the first rate, how much is the price payable? Second rate, how much is the price payable? Now interpolate and calculate the actual return that you're earning. As simple as that. Is this clear, everyone? Perfect. So with this, we have finished question number, what was it? 13 as well. A beautiful question, important, not come in the exam, but still, you never know. If in case they want to make your paper difficult, they are going to do it. Is this clear, everyone? So that's all for this session. See you guys in the next video, students. Thank you so much. Yes, everyone. So welcome back after the break, my dear students. So it is time to take our journey forward. So let's quickly see where we are standing. We have started with the chapter equity valuation. In that, unit 0 was basics, wherein we have understood what exactly is value. Unit 1 is valuation of equity share. In that, a major chunk, I can say 90%, yes, the most practical thing which we are having for exams, which are using in life, yes, it is going to be, yes, what we have understood. Cash flow based valuation. If yes, shares is held for limited period, unlimited period, constant, yes, no growth, constant growth, variable growth, all of that is done. Now some more miscellaneous pointers are there, small pointers, not very important from examination perspective, but my approach is that if it is there, if you are having questions, we will do it. So based on that, we have some 3 more approaches which I have bifurcated. Other methods of valuation, you have earnings based valuation, wherein I'll be calculating value of the share based on the earnings. Next, we have PE ratio based, price to earnings ratio based, and then we have miscellaneous, wherein we have one question on yield based valuation. Okay. Now, coming to earnings based valuation. Yes, a dividend based valuation, there I was considering dividend. Yes, earning based valuation, I have earnings growth model. Sir, looks similar, sir. Similar to dividend growth model. Yes, my dividend growth model took it as a D1 divided by KE minus G. Earning growth model is telling, boss, why are you considering only dividend? Take the full earnings. So here I will be taking EPS. Yes or no? The dividend for one shareholder, it is called as a dividend per share. Yes, the total earnings for one shareholder, it is called as EPS per share. EPS 1 divided by KE minus G. As simple as that. Over, sir. Over, sir. Explanation. What is explanation? Instead of dividend, you are taking EPS. As simple as that. Is this clear, everyone? This is done and dusted. Now, the next model you are having is going to be Walters model. Now, I can tell you one thing. This is less important, very less important from your examination perspective. Walters model was important from your CA inter perspective. CA final, CMA final, it is one of the least important things. And to be very frank, in your entire study material, yes, because of 2 words, in one simple GGB question from the study material, they put calculate as per Walters approach also. Just because of those 2 wordings, I have no other option. I'll have to explain it to you guys. But trust me, from an examination perspective, it is not important at all. So even if you ignore it, I would say it is absolutely all right. Okay, I will not be putting this everywhere, but those things which I feel are least important, there's less than 1% chance of them being tested, only there I'll be putting it. But still in the class, I'll keep explaining. Is this clear, everyone? So if you feel you don't have time, you want to skip this, you can directly go to the next video also. Absolutely no problem. Is this clear, everyone? Okay, perfect. Now, Walters model, let us quickly try understanding. Yes, the understanding of Walters model, we will do it in 2 phases. Phase number 1, we will just try having a surface level understanding based on which we will try solving a question. Then yes, if you guys want, you can also try seeing a detailed understanding of what exactly the formula is trying to tell. Okay, so first let us try getting the surface level understanding. Okay boss, yes, this is how your formula is going to look like. Yes, ICA's formula, yes, price of an asset or value of an asset as per Walter's model, it is D plus E minus D into R divided by KE whole divided by KE. Yes or no, yes or no, yes or no, everyone. Perfect. Now using this formula and using the data, first let me just try putting the value and getting the answer, then we'll try understanding. Yes, now here I'm giving you guys the some example. Yes, assume EPS earning per share E is 200, DPS D is 100. Yes, retained earnings is balance 100, return on equity, yes, that is R, is 20%, cost of equity is going to be 10%. All these things at interview you have done it already. So first let me try putting in the numbers in the formula. Yes, tell me dividend is how much? Dividend is 100 plus E minus D. Total earning is 200. In that 100 I paid off as dividend. That means 100 is my retained earnings. Yes or no? That will be reinvesting. So once I reinvest, how much return I'll be getting? Into 20%. On 100, 20%, 20 I'll be getting. This I will capitalize divided by KE 10%. Whole divided by 10%. So it is going to be 100 plus 200 minus 100 is 100. 100 into 20 percentage is 20. 20 divided by 0.1, it is going to be 200. Yes or no, everyone? Divided by 10%. 300 divided by 10%, it is going to be 3000. Is this clear, everyone? Perfect, perfect, perfect. I have not explained anything. I just wrote the formula. Now, first, on the surface level, I will try giving you guys a feel and a simple hack to remember the formula. Is this clear, everyone? Firstly, I'm telling it is not important at all. Still, I will first give you a surface level understanding and a hack to remember, make this formula simpler to look. Then we'll solve a question based on that. Then I will go and give you a detailed understanding that if you want, you can ignore also. Now, understand what Walter's model is telling is they are trying to calculate the value of the share based on the earning potential. That means they will be calculating the value based on EPS, how much they are earning. Is this clear, everyone? Perfect. Walter is telling that, boss, yes, what a share gives. Imagine I am an investor. I purchase shares of, or Koti is an investor. Yes, I am running Maja Sugarcane. He purchased a share of Maja Sugarcane. I am telling ultimately for him, what he is getting? He is getting the EPS. Yes or no, everyone? Perfect. So imagine company has given EPS of 200 rupees. Is this clear, everyone? Perfect. So in this, Walter is telling there are two parts, boss. One part which I am giving to Koti directly in the form of dividend. Dividend is how much? 100. Yes, how much is retained in the business? Balance 100. Yes or no, everyone? Retained earnings is 100. Is this clear, everyone? Perfect. Now tell me, my retained earnings, can I write it as E minus D? Yes or no? Total I have earned 200. In that 100 I distributed. That means balance 100 I have retained. Yes or no? That is what is my E minus D here. Is this clear, everyone? Perfect. It is 100. Till here, anything great we did? No. Yes, I am telling from Koti's perspective. Koti is telling, okay, boss, this 200 is a EPS. For me, how much cash only I got? 100 only I got in the form of dividend. Yes or no? 100 you only kept now. So what company is telling, wait, boss, 100 I kept it with me. Firstly, it is yours. Why did I keep it with me? Because yes, I will be earning money for you from that. Yes, I will reinvest. And when company is reinvesting, how much return it is generating? How much return it is generating? 20% return it is generating. Yes or no, everyone? So on this, it is going to generate me an additional return at the rate of 20%. Yes, 100 into 20 percentage. Sorry. Yes, it is going to be 20 rupees. Yes or no, everyone? Perfect. Till here things are clear. Is this clear, everyone? Okay, so now what is happening? Yes, now I will rewrite the formula as follows. I'm not going to give you the reason as to why I'm writing it this way, but I will tweak the formula a bit and make it simpler for you guys to do and remember. I will write the formula as follows. I will tell value of a share as per Walter, it is capitalize the dividend plus double capitalize the return from retained earnings. This is just a shortcut for you guys to develop a formula in a simpler way. I'm not explaining you guys why am I telling double capitalize. Okay, so capitalize dividend. Tell me, dividend I am getting till perpetuity 100 I'll keep getting. Yes, how much return the investor wants? He wants 10% only, divided by KE. Yes or no? And I'm telling whatever is the extra return we are getting by reinvesting retained earnings, that is I have my retained earnings, I can write it as E minus D. Yes or no, everyone? Yes, this when I'm reinvesting, company how much return it is giving me? It is giving me 20% into ROE. Yes or no? I guess it is written as R, right, in the formula. Yeah, into R. Yes, this what we are going to do is, this we are going to double capitalize. That means I'm going to do it as divided by KE square. Why? I will tell in the end. For now, this much is sufficient. Let me see if I write my formula this way. It looks a bit more simpler. Am I getting the same answer or not? Tell me. My dividend is how much? 10 by 10% plus E minus D. 200. Sorry, this is 100, not 10. Yes, 200 minus 100 into 0.2 divided by 0.1 square. Yes or no, everyone? Tell me, 100 divided by 0.1 is going to be 1000. Yes, 200 minus 100, 100 into 0.2, 20 divided by 0.1, 200 divided by 0.1 is going to be 2000. 100 plus 2000 is going to be 3000. Yes or no? Am I still getting the same answer only? Yes or no, everyone? Yes, this way we can try to remember it in a simple way. Is this clear, everyone? Perfect. So from examination perspective, this is how I will tell. I will tell, boss, Walter's approach, what it is telling is, it is telling, boss, dividend you capitalize, and whatever is the extra return you are getting by reinvesting your retained earnings, that you double capitalize. Is this clear, everyone? With this background, let us solve a question. Then if you want, I will tell you why am I double capitalizing also. Is this clear? Simple logic only. Is this clear? So now let me try writing it here. So it is telling, boss, two things I'm getting. Dividend I will get, and by reinvesting the retained earnings, now I will get extra returns, that is E minus D retained earnings into R. Yes, so formula, I will rewrite the formula as follows. I will write value V is equal to capitalize dividend plus double capitalize. This wording I have only created so that you guys can remember. You will not be finding it anywhere. Yes, the returns. What did I write? Only in the flow I will get it. Where is it? Okay, double capitalize the return from retained earnings. Returns from reinvesting retained earnings. This is a shortcut for us to develop the formula. Yes or no? Dividend I am going to capitalize. That means divided by K. Yes. The returns from reinvesting retained earnings. Yes. Earnings minus dividend gives me retained earnings. That I will reinvest into R. That I will double capitalize KE square. This is going to give me the value of the asset. Yes. Where D is the dividend per share. Yes. K is required rate for equity. It is there in the next page. Okay, then I'll not write it. Okay, yes, where V is value of a share, D is dividend per share, E is earning per share, E minus D is going to be retained earnings, R is return on equity or ROI. Is this clear, everyone? Yes, technically it is ROE because it is the equity holders fund, but I say sometimes it will give ROI, so I'll be using ROI also. K is the required rate of return for the investor. Using this, let me try seeing example 10 as well as question number 15 quickly. Let me come to my question bank. Example number 10, right? Okay, fine. Yes, look at this. Calculate price of the share as per Walter's approach based on the following details. EPS is 200, DPS is going to be 100, KE is going to be 10%, required return on equity is going to be 20%. How am I going to write? Yes, I will write value of a share as per Walter. Yes, it is capitalized dividend. Capitalize dividend plus double capitalize the return from reinvesting retained earnings. Yes or no, everyone? It is a D divided by KE plus retained earnings. It is E minus D, right? Earnings, yes, minus dividend. That is okay, into R divided by KE square. Is this clear? Yes, how much dividend I'm getting? 100 divided by KE is going to be 0.1. Oh, it's the same data. Okay, fine. Okay, that was just understanding. This is there in your book. Yes, 200 minus 100 into zero point 0.2 divided by 0.1 square. I guess it is 3000. Yes or no, everyone? Perfect. We finished it off. If this is done, let us go to our question bank and have a look at question number 15. Only a single question. Simple. Yes, let us quickly try doing it. Giving you guys a minute. Try reading the question. Try understanding the question. Also try solving the question. Yes, everyone, I hope you would have read the question, you would have tried solving the question. Some of you would have got, some of you would not have got. Absolutely all right. We are there. Try, commit mistakes. That's a simple philosophy for us. Okay, let us try reading the question and solving the question. Question number 15 we are having. Company has a book value per share of 137.8. Book value, book value, book value. Somewhere we've heard. Where did we hear book value? Basic terms. Book value. What is it? Equity, net asset, yes or no, shareholders fund, net worth, book value, all of that are one and the same only. That means it is the value of equity per share. Yes, equity holder for one share how much money he has put, that is 137.8. And tell me, yes, company how much return it is generating on that? 15%. So can I arrive at my EPS? Investors 137.8 is there, on that I will generate 15% into 15. It will give you your EPS. Yes or no, everyone? Perfect. It follows a policy of retaining 60%. 60% they're retaining, that means 40% they're paying it off as dividend. Opportunity cost of capital is 18%. That is investor na, anywhere else he could have invested at 18% for similar risk. That means if he's investing here, he wants 18%. That is my discounting rate. Yes or no? Calculate the price of share today using dividend growth model and Walters model. So quickly, the only thing that we want is to build the basic data. Look at this, everyone. So first I will write book value per share. Book value per share is how much? 137.8. Yes or no, everyone? Return on equity is going to be how much? Hey, 15%. Koti, 15%. Yes, that means can I calculate my EPS? I will tell 137.8 rupees of my investor is there. On that I'm generating 15%. That means it is going to be 137.8 into 15%. It is 20.67. Yes or no, everyone? Is this clear? Is this clear? Is this clear? Okay. Now, logically, you should be getting a feel. Yes. Equity holder for one share he has put 137.8, and we as a company we are generating 15% return. That means this should be the answer. Yes. Or alternatively, yes, you don't get the logic, you want formula only. Okay, fine. Return on equity formula, we had written it. Yes or no, everyone? Return on equity, what was the formula we wrote? Return on equity is equal to return divided by equity. Tell me, for my return, for my equity holder, what is the total return that I'm generating? It is Patesh. Yes or no, everyone? Yes. Equity, it is divided by equity. This is on total basis. If I divide by number of shares, my total profit available for equity holders divided by number of shares becomes my EPS. Total equity divided by number of shares, it becomes the value of equity per share, or it is the book value per share. Yes or no, everyone? This is going to be my return on equity. Tell me, return on equity is 15%, 0.15. EPS divided by BVPS is 137.8. 137.8 into 0.15. That will also give you 20.67. Is this clear? It is not needed if you know the feel of the data, or else you keep by hearting. I can give you 10,000 formulas. Sit and by heart. Is this clear, everyone? Okay. But still, I have just showed it. Looking at the data, we should be getting a feel of what exactly it is trying to tell. Okay, this is done. EPS I've calculated. Now tell me, my EPS is 20.67. Yes, what is company's policy? How much they are retaining? Retained earnings, which is E minus D. Yes or no? It is going to be 60%. That means it is going to be how much, students? 20.67 into 60%, 12.402. That means how much they are paying as dividend? 40%. It is going to be how much? 268. Yes or no, everyone? Till here things are fine. Okay, absolutely no issue. Any other data is given? No. This we have taken, this we have taken, this we have taken. Opportunity cost of capital, it is KE, is 18 percentage. Yes or no, everyone? Perfect. Now some students will be having a doubt, sir, can we do it this way in the form of a chart? I would say you should do it, so that yes, the answers are highlighted to examiner. Is this clear? Or else you can write it also, no problem. For me this becomes simpler to understand and explain. That is why this is how I'll write. And even to understand for students also it becomes simpler. That is why this is how I'll be doing. Yes, everyone. Now that I've calculated this, tell me, I want to calculate my share price as per dividend growth model. What is going to be the formula, students? It is going to be D1 divided by KE minus G. Tell me, am I having growth given in the question directly? No. But if I open my eyes, is it possible for me to calculate growth? Yes or no, students? Yes. How, sir? Yes, retention ratio is given 60%. Return on equity, I know. That means can I calculate my growth? Yes, boss. Calculation of growth. G. Yes, it is retention ratio into return on equity. Yes, if I earn 1 rupee EPS, now 0.6 I'm retaining 60% of that. That when I'm reinvesting, how much extra return it is generating? 15%. So 0.6 into 0.15, is it 0.09? Yes or no, everyone? 0.09 is going to be my growth. Is this clear, everyone? Perfect. Absolutely no doubt. Okay, perfect. Now I'll have to calculate the value of the share. It is D1 divided by KE minus G. Yes, tell me KE is going to be how much? 0.18. G is 0.09. Now here there is a confusion. Yes, the dividend which is there. Okay. Yes, is it going to be my D0 or D1? There is no crystal clear clarity. So technically I would either give a note, or this is anyways a simple thing, I will do it in both the cases. That would be better, so that I don't take any risk. Yes or no, everyone? So I will do it in both the cases. So I will tell yes. If dividend of, how much was the dividend? 8.268 is assumed as D0, yes, it is a D1 divided by KE minus G. It is 8.268 or 27 into 1.09 divided by 0.18 minus 0.09. How much is it going to be, students? Is it 100.16? Yes or no, everyone? Yes. Alternatively, yes, if dividend of 8.268 is assumed as a D1, I guess below in the answer book I would have written what exactly is ICA's assumption. Okay, currently I don't remember. They can do anything because they are ICI. Okay, yes, it is a D1 divided by KE minus G. So it is 8.268 divided by 0.18 minus 0.09. Yes. 91 point. Is this clear, everyone? Perfect. Which is the answer that institute has given? 91.89. They have taken it as P1 only, right? Generally that is how they will do. If there is no clarity, now most of the time I have told they will be taking it as P1 only, but still, yes, I was not very convinced, so I did it as per both. Is this clear, everyone? Yes, if you are not convinced, you can do it as per both and give a note and finish it off. Is this clear? Okay, perfect, boss. Now second, I'll have to calculate as per Walter's approach. Very simple. Tell me, students. You will have to write it 3, 4, 5, 10 times. What is value of a share as per Walter? Simple, boss. Two things. Capitalize dividend, double capitalize the extra return that you are getting by reinvesting retained earnings. So it is capitalize dividend plus double capitalize, yes, the extra income. What is the wordings I had written? By reinvesting, double capitalize the extra Return from reinvesting. Return by reinvesting retained earnings. So it is D divided by KE plus retained earnings, which is total earning minus dividend, into R divided by double capitalized KE square. Dividend is how much? 8.268 divided by 0.18. Yes or no? Yes. This is going to be retained earnings is how much? I can directly put that value also. 12.402. 12.402 into 0.15 I am getting. Yes, but 0.18 is required. 0.18 square. What is going to be the value? How much is it? 103.35. Yes or no, everyone? Yes, the value is going to be 103.35. Is this clear, everyone? Yes, it's the same thing, but if you see their formula, it looks even more complicated. Same thing is happening. This here I have divided. This again I divided, became square. Yes or no, everyone? Perfect. 103.35. Answer is tallied. Story is over. Is this clear, everyone? Yes. If you are happy with this, okay, the video is over for you guys. But if you want to know why am I double capitalizing, okay, let me take 5 minutes and try explaining that as well. Okay, let this sink in, then we'll try explaining that also. Don't worry. Yes, everyone. So now let us try understanding exactly why on earth am I double capitalizing. Is this clear, everyone? Properly, logically, we'll get to it. Absolutely no issues at all. Okay, but yes, this is going to be the formula. Yes, we will remember it this way. Capitalize dividend, that is D divided by K, and double capitalize the returns that I'm getting by reinvesting my retained earnings. Retained earnings is E minus D, that you will reinvest into R, that you are going to double capitalize. I know this part. I know this part. I want to know why on earth am I double capitalizing. Capitalizing was fine, but why on earth am I double capitalizing is the only question. Is this clear? Let us understand. Simple only. Yes, everyone, same data I have kept. EPS is 200, DPS is 100. Yes, retained earnings is 100. Return on equity is 20%, K is 10%. Is this clear, everyone? Imagine. I decided once and for all that I'm going to quit teaching. Yes, sir. No maja only in life. So much hard work we are doing. Yes, after that also students are asking, sir, please, sir, give discount, sir, sir. Yes, in fact, where in our class fees is very low compared to everyone else, despite giving very high quality. Still, okay, be like Koti Reddy. Clear CA. Ask for Jaguar. Ask for 10 acres. Yes or no? I decided I will also go. Okay, I will get 10 acres land. There, what we'll do is we'll grow sugarcane. So we'll start our new company, Maja Sugarcane Limited. Yes or no, everyone? Perfect. He's telling red sandalwood. You have mind only in these things. Okay? Yes. Shh, 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 shh. Okay? Whatever I'm telling is just in a fun way. Okay? My story. Other story I don't know. Okay, so tell me. Yes, we are telling, okay, boss. Yes, we are Maja Sugarcanes. Yes, we are promising our investors. Yes, every year we'll be giving you an EPS, earnings of 200 rupees. Yes, in that 50% you take it off as dividend, balance 50% will be reinvesting. Is this clear, everyone? Okay, so let me try seeing how exactly every year's cash flow is going to be. First, dividend every year, 100 dividend you will keep on getting till perpetuity. Yes, investor, Koti Reddy is an investor. He wants 10% return. So if he was getting only this dividend, how much he would have paid? 100 divided by 10 percentage, 1000. Yes or no, everyone? That is the first part of the formula. Yes or no? But here, wait, he is getting something extra. What extra he is getting? Every year, yes, 100 he got as dividend, but 200 was a total earnings. That means 100 we are retaining. Yes or no, everyone? I am telling Koti, 200 on your behalf I have earned. 100 you take. Koti is money minded person. Yes, sir, balance 100, what he'll do? I'll tell Koti, don't worry, da. I will reinvest. And I know a project wherein I can earn 20 percentage for you. So that means how much extra income Koti will be getting? 20 rupees extra he'll be getting. Yes or no, everyone? Perfect. So Koti told, okay, if you are giving me extra income means I have no problem. So tell me, first year, how much money I have retained? 100 rupees I have retained of Koti Reddy. Yes, this I will reinvest in the business. Once I reinvest in the business, every year how much return I will be in a position to generate? 20%. So if I take this money from Koti Reddy, yes, I will reinvest, and from year 2 onwards, from year 2 onwards, I will be in a position to give him every year at the rate of 20%. 20, 20, 20, so on. Yes or no, everyone? Perfect. Now, Koti is standing here and thinking, okay, boss, it is as good as at the end of first year. Yes, he is standing and thinking, from next year, how much money I will be getting extra every year? 20, 20, 20, 20, 20 extra I'll be getting. Now, how much return I want? 10%. That means if I was getting these cash flows till perpetuity, how much amount I am willing to pay today? How much amount I am willing to pay today? 20 divided by 10%, 200 rupees I would have paid today. Yes or no, everyone? So what Koti is telling, okay, boss, if we reinvest, first year cash flow, if I reinvest from second year onwards till perpetuity, every year I'm getting 20, 20, 20, 20, 20, 20, 20. Yes, to get this, today how much I'm willing to pay? It is the present value of future cash flows, 20 divided by 10 percentage. Yes, the value that I'm willing to pay. Yes, it is going to be 20 divided by 10 percentage. I am willing to pay 200 rupees. Yes or no, everyone? Perfect. Let me keep it a bit below here. Let me pull it down and keep it a bit below here. Yes, year 1 is over. Is this clear? Year 1, yes, Maja Sugarcane we are. Yes, we earned an EPS of 200 per share. We ask, what is it that you want to do? Koti told, give me 100 as dividend. Balance 100, you retain it, you reinvest. I told, okay, boss, I will reinvest and give you from year 2 onwards every year 20, 20, 20, 20 rupees. Koti told, okay, from year to 2020 I'm getting. If I'm getting that, how much I am willing to pay today? 20 divided by 10%, 100 rupees I am willing to pay today. Is this clear? First year is over. Then comes next year. Yes, la 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 la. We were standing here. The year is over, 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 over. Second year came. Is this clear, everyone? Yes. Normal, from the normal money that was there. Yes, every year how much EPS we are generating? 200. Yes, Walter doesn't assume any growth. That's a fundamental assumption of Walter. In this indirect way, growth has been incorporated. Is this clear, everyone? Yes, he is telling second year also we will earn EPS of 200 rupees. Again, second year, and I am asking Koti, okay, boss, year 2 has happened. 200 rupees EPS I earned for you. What is it that you want to do? Yes, Koti is telling, boss, 100 rupees you give it to me as a dividend. Okay, I paid 100 rupees as dividend. Yes, 100 rupees. Yes, you reinvest. I will tell 100 rupees. I will keep it with me. Koti is money-minded person. Koti is telling, boss, where am I standing right now? Year 2. Yes, this year 2, 100 rupees. That is also mine. But I'm giving it to you. What you will do? I told, boss, I have a project with me that will give me every year 20% return. I will reinvest in a way that I will generate 20% return for you. Koti told, okay. That means tell me. This is a fresh picture. Yes, I am right now standing here. Second year I am standing. Is this clear? Can I just erase these things or let it be there? Yes, second year I am standing. Is this clear, everyone? Okay. Now, I have taken 100 rupees of Koti Reddy. Yes, now I will reinvest this money. Yes or no, everyone? What is going to happen? This 100 I have taken from Koti Reddy. I will reinvest this. That means from next year onwards. Where am I standing right now? Second year. That means from next year, that is third year, fourth year, fifth year, sixth year, seventh year, so on till perpetuity. I will keep getting 20 rupees. Yes or no? At the rate of 20%, I will keep on getting 20, 20, 20, so on up to perpetuity. Is this clear, everyone? So Koti Reddy is standing at the end of second year and he's thinking, okay, boss, this second year's retained earning of 100 rupees, if I reinvest it back, they will give me 20 rupees every year. To get that 20 rupees, I will keep on getting from third year to perpetuity. To get that much today, that is second year, how much I am willing to pay? Tell me how much return Koti Reddy wants. He wants 10% return. Yes or no, everyone? So Koti Reddy will be telling, okay, boss, yes, this was value at the end of first year, value at the end of second year. He's telling, okay, boss, from third year, every year 20 rupees I'm getting. I want 10%. That means I am willing to pay 200 rupees. Is this clear, everyone? Third year, same story will repeat. Third year, normal EPS 200 we earned, 100 rupees. I paid as dividend, 100 rupees. Is retained earnings. Yes, Koti Reddy is asking, what will you do with this 100 rupees? I'll tell, I will reinvest. That means today, if I reinvest, from where onwards? From fourth year onwards, 20, 20, it will go on earning from fourth year to infinity. That means from fourth year to infinity, if I'm getting 2020, today, that is the third year, how much I'm willing to invest? It is going to be 20 divided by 10%. It is going to be 200. That means if you essentially see, yes, you are standing at zeroth year. First year, you are getting a value of 200. Second year, you are getting a value of 200. Third year, again, you will get a value of 200. Fourth year, again, you will be getting a value of 200. So on every year, because every year, yes, retained earnings is there, you will reinvest. From next year, you will get cash flow. For that, you will calculate the value. Yes, that value is the return divided by cost of equity. Yes, and all these you've got. That again you're bringing it to present value. Again divided by cost of equity. That is why it is divided by cost of equity square. Is this clear, everyone? So I'm telling, okay, boss. First year I'm having 200 value. Second year I'm having 200 value. Third year I'm having 200 value. Every year, so on, I'm having 200 value. To get this value today at t is equal to 0. Yes, first year I will get extra 200 value. Second year I'll get 200 extra value. So on up to infinity. To get this, how much I am willing to pay today? It is 200 divided by 10%. It is going to be 2000. That is why this portion is 2000. Is this clear, everyone? Perfect. Slowly, aram se, one last time, just a minute. Look at this, everyone. Yes, I have retained earnings with me, E minus D. Company will reinvest and generate return into R. Is this clear? That is one segment. Okay, yes, from that I am getting the returns. That I will capitalize. To get that, how much I will be paying, that I will capitalize. Yes, this again will give me, yes, the capitalized value. Yes, this also I will keep getting every year, because every year I am reinvesting. So I will again capitalize. That is how I will arrive at this. If you have understood, great. If you have not understood, anyways, it is not needed. Is this clear, everyone? Yes, for us, the only point which is needed is I will capitalize the dividend and I will double capitalize the returns that I'm getting from, yes, reinvesting my retained earnings. Is this clear, everyone? This is one of the most useless things from your CA final exam perspective, but still, because it was there, we've explained logically everything we have done, but ensuring that we do not take much time of that. I hope you guys have thoroughly enjoyed. With that, we have solved question of this as well. Now we'll go ahead to the next point, which is going to be P ratio based valuation in the next video. See you guys there. Bye.
Yes, everyone. So, hello, hi, namaskaram, and good morning, students.
Good morning, sir.
I hope you guys are doing really, really well. So, we are discussing chapter 1A, which is equity valuation. In that, we have successfully finished unit number 1, which is valuation of equity shares. Now, at the end of every unit, at every session, once the concept gets over, we are revising. At the end of the video, we are revising. At the start of the next video, we are revising. But still, at the end of a unit, we'll be having a comprehensive revision of that particular unit. And we'll be making it available so that any point in time you want to refer, you can keep referring to that. So we'll be revising the concepts also and important tricky adjustments also in a single video. Quickly, we will be revising. It is going to be a quick rocket revision. Is this clear, everyone? Perfect. So let us start with the chapter equity valuation. Before that, yes, we had seen unit 0, wherein we have understood value of an asset. Value versus price. Value means how much benefit I am getting, or how much price I should be paying, versus price means how much price I am actually paying. Yes or no, everyone? Perfect. I have purchased an asset. How much benefit I will be getting? I will be getting future cash flows. Yes or no, everyone? But they are in future. I want to calculate the value today. That means I will discount and bring it to present value. So value of any asset, it is the present value of future cash flows discounted at the required rate of return. Yes or no, everyone? Value of a share. From a share, what all will be getting? Will be getting dividend, sale price. So it is present value of dividend plus selling price discounted at required rate, which is going to be key. Yes, value of a bond. What I will be getting in case of a bond? I will be getting interest plus redeemable value, yes, or the sale price, whatever the case be. So it is going to be present value of interest plus redemption price discounted at the required rate, which in that case is going to be KD. Yes or no? So on and so forth. I can keep doing for any asset in the world. Perfect. Then we have told decision making framework. Simple. We will purchase only those assets where the value is greater than or equal to the price. Yes or no, everyone? Yes, if value is greater than the price, then the asset is underpriced. That means we'll be buying the asset. Yes, if value is equal to the price, it is correctly priced, we will still be buying, because how much return I want, it is giving me. But if my value is less, the price is more, that means the asset is overpriced, we will not be purchasing. If in case we purchase, we will be selling the asset. Is this clear, everyone? Perfect. Then we went into some basics of AFM. First we had seen cross multiplication, yes or no, everyone? Yes, I have told, say for example, 2 shirt is equal to 1000. That means 10 shirt is equal to how much? Cross multiplication. The pair having a question mark will come in the denominator, the other pair will be going to the numerator. So it is 10 into 1000 divided by 2. I will get my value as 5000. What is 5000? Yes, it is the amount payable for 10 shirts. Yes or no, everyone? Perfect. Say for example, 2 shirts is 1000 rupees. If I am having 7500, how many shirts I can buy? Again it is cross multiplication. The pair having a question mark will come in division. Other pair goes to the numerator. 7500 into 2 divided by 1000. It gives me 15. What 15? It is going to be 15 shirts. Is this clear, everyone? Perfect. Then we have discussed time value of money. Yes or no, everyone? Two techniques are there. Yes, either I am going front. Yes, which is going to be called as future value compounding. Yes or no? I am going front, include interest into 1 plus r, or I am coming back. Yes, it is called as a discounting. Yes or no, everyone? Yes, eliminate interest divided by 1 plus r. Using that, whatever is possible, everything we have understood just by drawing a line. Simple philosophy for you guys, life philosophy. Any question, any problem in the world, draw a line. That line should be straight, whether you are straight or wrong. Yes or no, everyone? Perfect. So with this background, let us come back. Yes, dividend based valuation. Yes or no, everyone? Then we had also seen, yes, value, time value of money in case of perpetuity. Yes, in case of no growth. Yes, we have told it is cash flow divided by discounting rate. Yes or no, everyone? Perfect. With this on the back of our mind here, let us come to, yes, concept number 1, which is valuation of equity shares. In that we had dividend based valuation, which was our concept number 1. Yes, two situations: if share is held for limited period, or if share is held till perpetuity. If share is held for limited period, say for example 3 years I am holding, what all I will be getting? All the years I will be getting dividend D1, D2, D3. At the end of third year I will be having selling price. Yes, what is value of an asset? It is a present value of future cash flows. So it is a present value of dividend plus selling price discounted at required rate, which is going to be cost of equity. Perfect. Now if share is held till perpetuity, how do I calculate? Three situations can be there. First is no growth, second is constant growth, third is going to be variable growth. Yes or no, everyone? Yes, in the regular class detailed logic we have told. Here we are not telling, we are quickly doing a rocket revision. Yes or no, everyone? In case of no growth, what is going to be the formula? It is dividend divided by KE. I am capitalizing. Yes or no, everyone? Simple example, say for example required return is 10%. And yes, if I purchase the share gives me a dividend of 10 rupees. So what I'll tell, okay boss, if I invest 1 rupee, my requirement is that I should be getting 10%, 0.1. This share is giving me a 10 rupee dividend. That means how much I should invest? 10 divided by 0.1, it is going to be 100. Dividend divided by KE. Yes or no, everyone? Yes. In case of constant growth, what is going to be the formula? Gordon's growth model. Yes, value of an asset, it is a D1 divided by KE minus G. Yes or no, everyone? Yes. Wherein how do we calculate D1? Yes, it is a next year dividend. Yes, it is a D0 into 1 plus G. Yes. Cost of equity. Yes, we have discussed in detail how to calculate. We'll come to that. Growth. If it is given in the question, great. If it is not given in the question, we can calculate the sustainable growth rate. How do we calculate the sustainable growth rate? It is the retention ratio into the return on equity. Is this clear, everyone? Yes. How do I arrive at my retention ratio? It is retained earnings divided by Patesh. Yes or no, everyone? Or else I can also tell it as 1 minus dividend payout ratio. Return on equity. Yes, it is a return divided by equity. Tell me how much profit we are generating for our equity holders. It is the Patesh divided by equity. Equity is nothing but my equity, which is equity share capital plus reserves and surplus. Yes or no, everyone? This is on a total basis. If you want on a per share basis, means Patesh divided by number of shares becomes EPS divided by total equity divided by number of shares becomes my BVPS, book value per share. Yes or no, everyone? Perfect. We had also seen the income statement and balance sheet from AFM perspective. Yes or no, everyone? Perfect. So income statement, we've told that we'll start with sales. Sales minus cost of goods sold gives me my gross margin, gross income. I will reduce my other operating expenses. I will arrive at my EBIT, also called as my operating margin. From that, I will reduce my interest. I will arrive at my EBT. It is also called as taxable income. I will reduce my tax. I will arrive at my profit after tax, also called as net income. From my profit after tax, it is for two people, equity and preference. I will reduce preference dividend. I will arrive at Patesh, profit available to equity shareholders. From that, if I reduce my dividend distributed, I will arrive at the retained earnings. Is this clear, everyone? Perfect. We had pro forma balance sheet and basic ratios not needed at all. Is this clear, everyone? Perfect. This is also over. Then comes variable growth. Very important from an examination perspective. Students think it is very difficult, but trust me, it is one of the simplest things. Now tell me, students, the simple philosophy of constant growth. Yes, it is value of an asset today. It is the next dividend divided by KE minus G. So if in case I want to calculate the value of an asset at 5th year, I am standing at the 5th year, the next dividend, it is D6 divided by KE minus G. Accordingly, for any number of years I can be doing. Perfect. In case of variable growth, what is happening is, for the initial few years, the growth will be different. Question will tell you 10%, 5%, whatever it is, question will specify. After that, my growth will stabilize. So how to do the calculations? We have told 3-step framework. Step 1, I will estimate the dividend for uneven growth. Say for example, question is telling first 5 years growth will be 10%. So first year what is dividend, second year what is dividend, third year what is dividend, fourth year what is dividend, fifth year what is dividend. Yes, I will estimate. Yes, draw a line, D1, D2, D3, D4, D5, estimate. At the end of 5th year, question will tell 6th year onwards growth will be 8% perpetuity. That means tell me 5th year onwards, that is 6th year onwards, every year growth is going to be same. That means can I calculate price at the end of 5th year? Yes boss, it is D6 divided by KE minus G. So step number 1, I will calculate dividend for the uneven growth period. Step number 2, I will calculate price at the end of uneven growth. Yes, so price at the end of uneven growth, it is next year dividend divided by KE minus G. Now I have all the cash flows. I have dividend also, sale price also. What is it I need to do? Bring it to present value. I will arrive at the value of my share. Yes, calculate value of the share. Yes, which is present value of dividend and price. As simple as that. Yes or no, everyone? Yes, additional pointers for us to be kept on the back of our mind. Yes, should we consider D0 or D1? If question specifically tells dividend paid, or if dividend is given in our income statement, we will take it as D0. Otherwise, always we will be taking it as a D1. But still, if you are having too much ambiguity, it is better to take both the assumptions, do the calculations, and accordingly give a note, or take it as a D1 and give a note in the examination. Perfect, everyone. Now additional pointers which we will have to be keeping on the back of our mind. First is calculation of cost of equity. How do we calculate cost of equity? Either it could be given in question, in that case no tension. If it is not given in question, there can be 3 different ways. Either if beta is given in the question, I know I will be calculating the required rate using CAPM model. Yes, my required rate of return, it is a risk-free rate plus beta into RM minus RF. Perfect. No, beta is not given. But all other data as per constant growth is given. Price of the asset is given. D1 is given. Growth is given. I can calculate it as a missing figure. I know price of an asset or value of an asset is D1 divided by KE minus G. Only this is missing. Yes, I will keep it as KE. Solve the equation, arrive at cost of equity. Perfect. In all other situations, this comes normally in case of variable growth. That is, there are different dividends. There is a price at the end. Today's value of the share is given. But how much return I am generating, I don't know. Yes, we will be using the concept of IRR, that is interpolation technique. That is, first a random rate I will try pulling, I will see is it the value of the asset, or else I'll change the rate. Accordingly, using interpolation technique, we will arrive at, yes, the cost of equity. Is this clear, everyone? Perfect. So this was our concept number 1, which is a dividend based valuation. Yes, next we are having concept number 2, which is going to be other methods of valuation. There we had altogether 3 points. First is earnings based valuation, next is a relative valuation, next was miscellaneous areas. First, earnings based valuation. In that we have earnings growth model. Instead of dividend, I will be taking earnings. So it is EPS 1 divided by KE minus G. Perfect. Next we had Walters model. Not important at all from an examination perspective, but I had given you guys a beautiful shortcut to build formula. Yes, what was a golden statement that I told? Yes, it is based on earnings. So you have dividend also, retained earnings also. So we have told capitalize dividend plus double capitalize the return that you are getting by reinvesting your retained earnings. Capitalize dividend, that is a D divided by K, plus double capitalize the returns you are getting by reinvesting your retained earnings. Total earnings is E. In that D, if you eliminate, you will arrive at your retained earnings, E minus D. Yes, you are reinvesting, you are getting into R, which is the return on equity. You've got the earnings. Now what we'll have to do? Double capitalize divided by KE square. Is this clear, everyone? Perfect. Next, we had a relative valuation, which is PE ratio based method. What on earth is my PE ratio telling? PE ratio is telling, yes, for 1 rupee earning, how much price I am paying. If my PE ratio is 8 times, it means to get 1 rupee EPS, I am paying 8 rupee price. Yes or no, everyone? Perfect. How much price I am paying to get 1 rupee EPS? Two formulas are there. First is a normal formula. PE ratio is P divided by E. P is the price, which is MPS divided by EPS. There is one more formula also, yes, which is PE ratio is equal to 1 divided by KE. In the regular class, I have given you the logic, yes, but it is just inverse of the required rate of return. Is this clear, everyone? Perfect. Yes, or ROE. KE will also be given as ROE sometimes in the question. Yes or no, everyone? Very simple thing. Say, for example, investors' required rate of return is 10%. That means he is telling, if I invest 1 rupee, I want to 0.1 return. Yes, PE ratio is telling for 1 rupee EPS, how much I should be paying. So it is 1 divided by 0.1. As simple as that. Is this clear, everyone? Then we had one final thing, yield-based valuation. It had its own set of limitations, but still, because the question is there, it is our duty to simplify, do it logically, so that if a question comes, we correct it. Now, before we go into yield-based valuation, two advanced ratios we should be knowing. Yes, what are those two ratios? First is interest and fixed dividend coverage ratio. Perfect. So it is telling, yes, to pay my 1 rupee of fixed financial obligation, how much profit I am having. Tell me what all fixed financial obligation I am having. Yes, financial obligation, yes, I have to pay to 3 people. One is equity holders. Is it fixed? No. Next I am having for debt holders. Next I am having for preference. What all is fixed? I am having for preference shareholders as well as for debenture holders. So what is my fixed financial obligation? It is preference dividend plus interest. Now how much profit we are earning for these people? Tell me, for preference dividend, how much profit we are earning? It is a PAT. But this profit is after paying interest. I want to know how much profit I am earning to pay my preference dividend plus interest. So I will be adding my interest. Is this clear, everyone? So the formula is PAT plus interest divided by preference dividend plus interest. So the higher it is, the better it is. It means that more profit I am earning. Yes or no, everyone? So the higher it is, the better it is going to be. Next is going to be capital gearing ratio. It is telling for 1 rupee of own fund, how much outsiders fund I am having, or how much fund at fixed obligation I am having. Yes or no, everyone? What is my own fund? It is my equity share capital plus reserves and surplus. Yes, how much fund I am having at a fixed rate? I am having preference share capital plus debentures. Yes or no, everyone? Tell me, ideally I should be having more of my fund and less of outsiders funds. So the lower it is, the better it is going to be. Is this clear, everyone? Perfect. Now once this is clear, if we are having a question on yield based valuation, how to do? First, we will prepare income statement. EBIT will be given. From there all the way till retained earnings, we will do the calculation. Chill. Step number 2, we will calculate the actual yield percentage. How to calculate actual yield? Question will specify. Actual yield is 50% of income distributed and 5% of undistributed. Question will tell how to calculate actual yield. We will calculate. We always want a return in percentage, so we'll convert it into percentage. So it is actual yield divided by, it is a yield for equity. So technically it should have been equity, but I say puts equity share capital only. So I will write divided by equity share capital into 100. Perfect. Step number 3, we will calculate the required ratios. That is interest and fixed dividend coverage ratio as well as gearing ratio. I will calculate. Step 4, I will calculate deviation in the ratio. How much is the benchmark? How much is my ratio? What is the deviation? Using that, I will calculate step number 5, required yield. What is the required yield? Yes, it is the return on similar companies plus the risk premium for not meeting the targets. Yes or no, risk premium based on the shortfall. That will be the required yield. Using this, we'll calculate value of a share. Value of a share, it is nothing but face value of a share into actual yield percentage. That gives me the actual return every year. Yes, I will bring it to present value divided by required yield. We will arrive at the value of the share. Is this clear, everyone? Perfect. We have taken 17 minutes, but in a very detailed way, we have tried covering everything. Now, quickly, tricky important adjustments of the questions also. Let us try doing it quickly, my dear students. Let us also try seeing some tricky adjustments from questions as well. First, coming to question number 2, what is happening in the question? Question is telling me the existing beta, but question is telling we have taken a decision due to which beta is changing. Calculate the existing as well as revised price of the share. Yes, I will write down existing beta, revised beta. Based on the existing beta, I will have the existing required rate. Based on revised beta, I will have the revised required rate. Using that, I will calculate the existing price of share, D1 divided by KA minus G, existing KA. Yes, I will also calculate the revised price of the share. Simple, but may come in your examination. Then we have got question number 4, wherein what is happening is, first one is a simple case. Second, they are telling, calculate the equilibrium price when the inflation premium increases by 2%. Yes, risk-free rate of return in the question given is 7%. And we have told in the class why on earth, yes, government or securities or bank is giving me risk-free rate. It is to tackle inflation. So if my inflation increases by 2%, that means my risk-free also increases by 2%. My RF becomes 7 plus 2, 9%. Yes, my market was previously giving me 13%, but boss, inflation overall everything has gone up. That means this will also give me 2% more. My RM will become 15%. Accordingly, I will be doing my calculations. Is this clear, everyone? Yes. And how institute does this? There are 3 things. Institute assumes that all 3 are done together in the same situation. That is, my inflation is increasing by 2%. Along with that, growth is increasing by 3%. Along with that, beta becomes 1.3. In that line, yes, institute is solving. Next, we are going to question number 7, my dear students. Yes, again, a beautiful question had come in the examination. Now, what is happening? Here, the most important thing is to draw a line and estimate what is happening. Yes, company is considering to purchase equity shares, market price is given. Company is proposing a dividend of 4 for the next year. What kind of dividend it is? It is a D1, point number 1. Company is expected to grow at 20% per annum for the first 4 years. That means first year, second year, third year, fourth year. Growth is going to be 20%. Is this clear, everyone? The growth will decline linearly to 16% per annum. So what is happening? Look at this, students. First year my growth was 20, second year growth was 20, third year was 20, fourth year was 20. Slowly it will linearly decrease to 16%. That means slowly 1% by 1%. Fifth year will be 19, sixth year will be 18, seventh year will be 17%, then it will be 16%. Is this clear? D1 is given as 4. Accordingly, I will add my growth and arrive at all the dividends. Now, at the end of 7th year, I know that 8th year growth is 16%. From there on, till perpetuity, my growth is 16%. So, I can calculate price at the end of 7th year. P7 is D8 divided by KE minus G. Accordingly, I will get all the values, bring it to present value. Is this clear, everyone? Then we had question number 8. This is also a similar question only, but the only difference here is that, yes, at the end of uneven growth, when we are estimating price, the constant growth rate is not given. We know that when one person goes from our life, other person will be there in our life. Whoever goes will take it as X. Yes, constant growth it is not given. I will take it as X. To compensate for that, we were otherwise calculating price. Here price is given. As simple as that. So look at this, everyone. Proposing a dividend of 6. Proposing means first year dividend. Okay. Grow at 20% for 4 years. Okay. Thereafter, over the next 3 years, it will linearly reduce by 100 basis points. That means 1% it will reduce. Okay. Thereafter, it will stabilize at a certain growth rate. How much it is not given. Okay, yes, calculate the stable growth rate at the end of 7 years. So how is it that we are going to do? Yes, we know that, yes, first 4 years growth is 20%. Okay, first 4 years we will estimate the dividends. Yes, next 19, 18, 17 it is going to be. Yes, 8th year how much is the price? Yes, sorry, 8th year how much is the dividend? Yes, at the end of 7th year what is the price? P7 is a D8 divided by KE minus G. Yes, D8 is nothing but D7 into 1 plus G divided by KE minus G. KE I don't know, either I'll keep it as KE or I'll keep it as X. Accordingly, I will arrive at P7. Yes, accordingly, I'll try calculating the present value. It will be in terms of X. I will calculate, I will arrive at growth as 16%. Perfect, everyone? Yes. Now we had question number 9. It was a very pretty simple, straightforward question. But Beta was not given directly. Now the approach to calculate beta we will be learning in detail in the chapter portfolio management. So temporarily we have one formula which we'll have to be knowing. Don't worry, in the chapter portfolio management in detail we'll be doing beta of security X. It is RXM, that is correlation between security and market, into sigma X, that is standard deviation of security X, divided by sigma M, which is standard deviation of market. If you know that, there is absolutely nothing else in the question. Perfect, everyone. Then comes question number 10, calculation of sustainable growth rate. Simple question it was, all data is given but sales is not given. But to compensate for that, asset turnover ratio is given. Tell me what is the formula of asset turnover ratio? Turnover divided by asset. Yes, it is given as 1.1. Asset is given as 600. That means my turnover is going to be 660. Once I got that, I will arrive at my all calculations all the way from sales till my retained earnings. Once I arrive at that, to calculate my sustainable growth rate, it is my retention ratio into return on equity. We know how to calculate retention ratio, yes or no, everyone? It is retained earnings divided by Patesh. Return on equity, it is return divided by equity. For my equity holders, what I am earning? It is my Patesh. Yes, divided by equity, it is equity share capital plus reserves and surplus. Once I have got that, I will arrive at my sustainable growth rate. Using that, I can be calculating price of the share as well. Perfect, everyone? Yes, everyone, there was one more adjustment which was given in question 12. Question 12 is exactly similar to question 10, only one adjustment was new. Yes, what was that additional adjustment? Yes, question has asked, when is the 10% bond issued? See the students, there are two, yes, external funds. One, I am having 8% debentures. Okay, next there is a 10% bond which is issued in the year. That means somewhere in the middle of the year. Yes or no, everyone? And question is telling me that my effective interest rate is 8% only. There are two ways for me to calculate. Yes, for how many period, yes, this loan was in force. Yes, option number 1 is, I know that my total interest, it is the total loan amount, yes, into 8%, which is 14 lakhs. In that, for the first loan, it is for the full year. That means I will be charging full 8%. For the second loan, yes, it is principal into 10% into how many months it was there. I don't know. I will take it as x divided by 12. Yes, I will solve. I will arrive at the value of x as 9.6. That means I have paid interest for 9.6 months. That means when was the loan taken? Total 12 months in a year. 12 minus 9.6. Yes or no, everyone? This is start of the year. This is end of the year. For 9.6 months, I have paid interest. That means for 2.4 months, I have not paid interest. That means after 2.4 months, I have taken the loan. This way we will be doing it. 1st April means plus 2.4 months. First month is April. Second month is May. Yes, 2.5 months is somewhere in the middle of June. Is this clear? This was a detailed approach. But to calculate this 9.6, I had given you guys a simple shortcut as well. Now this 8%, anyways, it is 8% only. Tell me, total interest is 10%. That means if I am paying interest for 12 months, it will be 10%. But I am paying 8% only. That means what is, yes, what is the period? It is 8 into 12 divided by 10. It is 9.6 months. As simple as that. Is this clear, everyone? Perfect. This is again a very simple question. We are having question number 14, where question is telling that company just declared a dividend of 2 rupees. Okay, current growth rate is given. Using that current price I can calculate. But board decided that, boss, next 3 dividends, now we are retaining and we are taking up a project. We will have to tell how this decision by the board has impacted. How will we tell? By comparing the price. In the first case, is existing position, D naught is given, growth is given, K is given. Accordingly, I will calculate price. Second case, first year, second year, third year, I am not getting any dividend. But fourth year, I will get dividend. And from there on, 7% it will keep growing. Tell me, so can I calculate price at the end of third year? Yes, boss, it is D4 divided by KE minus G. I will arrive at price at the end of third year. But boss, it is at the end of third year. I want today. So I will come back 1, 2, 3. So I will divide by, yes, 1 plus r to the power of 3. It is plus 1.08 to the power of 3. I will accordingly arrive at price after the decision. That was requirement number 1. Then we had a requirement number 2, which said that, boss, there is an investor. He wants at least a cash flow of 2,000 per annum. How he can be doing? We told, boss, next 3 years dividend we are not giving. But if he wants cash flow, there is one option. He can sell some shares, yes or no, everyone. So every year, how many shares he should sell? We'll have to be doing the calculation. Yes, we got that price at the end of third year is 250. Using this, I can keep coming back and calculate price at the end of every year. My required rate is 8%. That means divided by 1.08, I will arrive at price at the end of second year. Divided by 1.08, I will arrive at the price at the end of first year. Divided by 1.08, I will arrive at the price today. Is this clear, everyone? So if the investor wants at least 2,000 every year, first year the price is going to be 214.33. That means number of shares to be sold. Yes, 2,000 he wants, divided by 214.33, it comes to 9.33. If he sells 9 shares, he will not get full 2,000. So he has to sell a higher share. It comes to 10 shares. That means balance will be 990 shares. Second year you will do the calculation. Third year you will do the calculation. With this, the entire unit, all adjustments of all important questions we have done, students. I hope you guys have thoroughly enjoyed. This way, for the entire subject, we'll be doing a quick, rocket, effective revision of concepts as well as questions. So see you guys in the next video. Bye. Dear students.